Hey folks, welcome you all to a new session. This is CA Ganesh Bharadwaj. So, this is the part 2 of CA Inter Costing Marathon series. So, I had already uploaded part 1 of the marathon where we covered 3 big and important chapters. So, in this part 2 of marathon, we will be covering cost sheet, overheads, ABC, cost accounting systems, employee cost and direct expenses, material cost, and service costing. Literally, guys, this part itself can roughly contribute close to about 50 to 60 marks at least. At least I'm telling you, close to about 50 to 60 marks will be covered from the part 2 itself. And many of you had asked me for employee cost revision. So yes, I heard you guys. So this time in part 2, I have kept this chapter as well. So we are going to do a comprehensive revision, right? And in this revision, so the same rules which we followed in part 1 continues. By the way, for those who haven't watched the part 1 yet, I would sincerely recommend you to first watch part 1 and then come to part 2, right? And here we will also be doing some limited problems. So during our regular and exam oriented batch, every single sum we will be doing it in detail in a workout manner. I will physically be solving every single sum and doing it, but in a marathon, so I will handpick a few sums and only do that, since this is being meant for revision purpose, right? But still, if you see, some chapter like overheads is very big. So this single chapter we would have covered for close to about 3.5 to 4 hours, the single chapter itself. And even material cost comes close to about 2 hours. So all the important chapters we will be covering in this marathon. So please take your pen and paper and please, your notebook, and follow exactly what I say. And please also maintain that library of adjustments. I will dictate the nature of adjustment for every single question, right? So what is library of adjustment? I would have already discussed that in part 1. So for those who haven't watched part 1, please first watch part 1 and then continue watching this part 2. And one very important thing, the books that I have used here, they are concept decoder book, which has all the concepts, and solved question bank. You can download it from our website, right? So our website link is there below in the description. You can go and download the PDF copy free of cost. In case you want to purchase the hard copy, that can be purchased separately. Anyways, the PDF is free of cost, right, guys? So that's about the introduction. So now let's get started with the first chapter in discussion, which is cost sheet. So now let's get started with the revision of this chapter called cost sheet. Now guys, this chapter is a very, very important chapter from an examination perspective, because on an average, every single attempt, this chapter gets tested for 10 marks. So especially if you are revising this chapter, or if you're watching this marathon a week before or even the day before your exam, this is a must visit chapter, a never miss chapter for your examination purposes. At times, I've also seen they have tested one full question in cost sheet as a part of your case study based MCQs, right there, or maybe in your descriptive area also they have tested. Such is the importance of this chapter. Now guys, let's quickly go and revise this entire chapter with all the concepts and other important things. We will also be doing a couple of numerical problems from our solved question bank. So let's get started. First of all, what do you mean by a cost sheet? A cost sheet is nothing but a statement containing all the cost data. You keep on adding all the cost, and finally you arrive at the total cost that you have incurred for manufacturing and selling this product. Now, the format of cost sheet is given as follows. So this is the format: opening stock of raw material plus purchase of raw material minus closing gives you direct material consumed, add labor expense prime cost, add POH gross works cost, add opening WAP minus closing WAP gives you factory cost, then some red ink items are all there. So the entire format of cost sheet goes like this. You arrive at cost of sales, add profit, you arrive at sales. Now guys, there are many students who struggle with the format of cost sheet and they end up mugging this up. Now, trust me guys, in the next 15 to 20 minutes, we will be looking at this logic of this format of cost sheet, and by the end of this next 15-20 minutes, trust me, I will make sure that you yourself can come up with the format of cost sheet without mugging up, with full conceptual knowledge. Shall we get started now? Yes. Now, forget this format of cost sheet. Now, earlier, there was an old format of cost sheet which institute used to follow. Sir, why are you starting with this old format of cost sheet? With this, it is easier for you to get into the latest format of cost sheet. Now, what they did earlier, there were this entire cost sheet that we have seen, it was broken up into two statements. Statement number 1 was called as cost sheet. Statement number 2 was called as income statement. Now, what was this statement number 1 cost sheet? Opening stock of raw material plus purchases minus closing stock of raw material gives you something called as direct material consumed. To that, if you add direct labor and direct expense, you get something called as prime cost. To that, if you add production overheads, you arrive at gross works cost. To that, if you add opening WAP minus closing WAP, you get your net works cost, or this is also known as cost of production. To that, if you add opening FG, subtract closing FG, you arrive at cost of goods sold. Right? And statement 2 is your income statement, ulta. Sales minus the cost of goods sold, which you get in your statement 1, gives you something called as gross profit. From that, subtract administration expense and selling and distribution expense, you get something called as operating profit, which is nothing but your EBIT. Now, sir, what are all these things? Now, very, very simple and easy. Now, guys, for you to understand the concept and the logic for this format of cost sheet, now you need to understand that in a company, every company, it has 3 locations. What are the 3 locations? One is called as a factory. The other one is called as a corporate office. And finally, you have a place called the sales depot. What happens in the factory? Production activity happens in a factory. What happens in a corporate office? Administration work. Board of directors, they take decisions sitting in the corporate office. And finally, in a sales depot, this is the place where the selling and distribution activity happens. Now, further, if you zoom into the factory, inside the factory itself, there are 3 locations. What are the 3 locations? One is called as stores. Now we have entered into the factory. In the factory, you have a place called stores. In the stores area, raw material is getting stored there. Guys, correct? Next, you have a place called factory shop. This is the place where machines are located, where the raw material, we will receive it from the stores and it gets converted into finished product. Are you clear with this? Or in other words, this is the area of WIP, work in progress. And once the products are completed, it gets transferred to an area called warehouse. This is the place where your FG is being sold, FG is being stored. Is that clear, guys? Right? These are the 3 locations inside the factory. Are you all able to understand? Yes. In my factory, in my stores, first, let us talk about stores. Stores is the place where raw material is getting stored. Now, at the beginning of the period, I might be having some opening stock. Guys, correct? Let us say I have 10 kgs of raw materials already, right? And on top of this, in this period, I purchased 100 kgs of raw material. Now, I have a total of how much? 110 kgs. Now with this 110 kgs, what can I do? Maybe one portion of it, I can consume it. Means what? I can issue it to my factory shop. And the balance, it can be remained as unconsumed. That is closing stock of raw material. Am I right, guys? Now let us say out of this 110 kgs available, 80 kgs were only consumed, which means the balance 30 kgs were left in my stores area as closing stock of raw material. Guys, correct? Or in other words, this 80 kg is only being used, is being consumed for the purpose of producing my finished goods. Am I right, guys? Are you all clear with this? Hence, now this direct material consumed is ideally the direct cost, direct material cost incurred for the purpose of producing my producing my FG. Am I right, guys? Hence, the first thing you need to know is direct material cost does not mean direct material purchased. It refers to direct materials consumed, because only using this cost, right, I am trying to complete and produce my FG. Are you all able to understand? So now, how will I compute this direct material consumed? Simple. I can say opening stock of raw material plus purchases minus closing stock of raw material. The net of these three figures, if I do, I will be able to arrive at my direct material consumed. Am I right, guys? That is, the total raw material available minus what I didn't consume will give me the balancing figure of what I have consumed. Is that clear, guys? Are you all able to understand? That is the logic for the first line item, which is direct material consumed. Opening stock plus purchases minus closing stock gives you direct material consumed. Is that clear, guys? Now I enter into this area called as a factory shop. Now, will the raw material get converted into FG automatically? No. Now, on top of this raw material, direct material, I need to incur direct labor. Then I need to incur direct expense. Guys, correct? Now, sum total of direct material, direct labor and direct expense, three direct costs, right? The sum total of these three is called as prime cost. What is it called as? Prime cost. Is that clear, guys? Right? So prime cost is nothing but sum total of all the direct costs. Direct cost means what? The costs which are readily available on a per unit level, traceable to every unit produced. Is that clear, guys? Now, on top of this, there could also be some indirect costs incurred in the factory. They are not incurred on a per unit level. They are incurred in bulk total, but they are incurred in the factory only. So I will still continue to use that for the purpose of valuing every unit of stock. These are called as a production overheads. Is that clear, guys? Now POH is also incurred in the factory only. Guys, correct? So now what do? These three is called as prime cost. To that, if I add production overheads, now I will be arriving at the full, all the total costs incurred in the factory. Am I right, guys? Right? Are you all able to understand? Now, you should know one thing. In the WIP area also, at the beginning of the period, you can have some opening WIP. And at the end of the period, you can have some closing WIP. First of all, what do you mean by WIP? WIP means units I have started to produce, but at the end of the period, I didn't turn it into a completed product. It is still remaining as incomplete. Am I right, guys? Are you all able to understand this? Are you all able to understand this? Yes. So now what I do, so direct material plus direct labor plus direct expense gives me prime cost. To that, if I add production overheads, I call it as, look at this, prime cost plus production overheads, I call it as gross works cost. Why, sir, gross works cost? Obviously, to this, I should add opening WIP and subtract closing WIP. If I do that, I will arrive at the value of completed products. Guys, correct? Or in other words, guys, whatever cost I incur here, using this cost, some units can be completed and transferred to FG. Some units, I have started the work, but it is not yet completed. Guys, correct? Hence, it still remains in my WIP area as closing WIP. Guys, correct? So now, what is the value of units completed and transferred? Simple. The sum total of all the costs I have incurred here, I call it as gross works cost. To this, add opening WIP minus closing WIP, you will arrive at the cost of production. Are you all able to get this? Is everyone able to follow this? Right? This is what they have mentioned here. So direct material plus direct labor plus direct expense gives you prime cost plus POH, call it as gross works cost. Why gross? Because we are yet to net off what? We are yet to net off opening and closing WIP. Add opening WIP, subtract closing WIP, you arrive at net works cost, also known as a cost of production. Are you all able to understand this? Yes. Now, this cost of production enters into my FG area, warehouse. Guys, correct? Now, this is the value of units completed and produced in this period. Guys, correct? Now, in my FG area, obviously, I can have some units already produced in the previous period, but it was not sold in the previous period. That is called as opening FG. Guys, correct? In the previous period, it was closing FG. This period, it becomes an opening FG. Am I right, guys? Let us say I have 100 units in opening FG, right? Current year I produced 1000 units. Overall, how many units are available? 1100. Am I right? Now, out of this 1100, let us say I have sold 900 units, which means the balance 200 units are lying in my closing stock. Am I right, guys? Now, this is, can I say, first I get this cost of production now. To my cost of production, if I add opening FG, this will give me the total value of goods available for sale. Out of that, if I reduce the closing FG, which means what? The value of goods unsold, I will arrive at what? The cost incurred in respect of units sold, popularly called as cost of goods sold. Or in other words, now what will be, how will you arrive at it? Cost of production plus opening FG minus closing FG will give me cost of goods sold. Are you all able to understand this? Logical, no? Guys, correct? So now what happens? Now the goods move outside my factory. Is that clear, guys? So now what is the formula here? Cost of production plus opening FG minus closing FG gives you cost of goods sold. Are you all able to understand? So now in this statement 1 of the old format, whatever we are seeing is actually, it captures whatever happens inside the factory area. Is that clear? So now how does it start? Opening stock of raw material plus purchases minus closing stock of raw material gives you direct material consumed. To that add direct labor, add direct expense, wait, subtotal, call it as prime cost. Now add production overheads, call it as a gross works cost. Now to that add opening WIP minus closing WIP, you get cost of production. To that add opening FG minus closing FG, you get cost of goods sold. Is that clear, guys? Are you all able to understand? Yes, that's about it. That's about it. Now what happens in your statement 2, income statement, right? Now what you do, you start from the reverse. First, sales revenue minus cost of goods sold. You subtract this figure, right? How did you get this figure? Just now we got it. Correct? Right? You arrive at your gross profit. Basically, guys, cost of goods sold only consider the cost incurred in the factory. Now, if you were to prepare a trading and a P&L account, right? Ideally speaking, all the costs incurred in the factory are considered only in trading account. Guys, correct? Now, sales minus cost of goods sold gives you gross profit. Am I right, guys? Now, from the gross profit, you reduce the costs incurred outside the factory in 2 other locations. What are the 2 other locations? Corporate office and your sales depot. Cost incurred in your corporate office is called as administration overheads, administration cost, and the cost incurred in your sales depot is called as selling and distribution expense. So, from your gross profit, you subtract P&L items AOH and SOH. You arrive at operating profit, which is nothing but earnings before interest and taxes. Is that clear, guys? So literally all the costs incurred in the factory are trading account items, and any costs incurred outside the factory, namely your corporate office AOH and sales depot, which is SOH, these are P&L account items. Am I right, guys? So these two will come only in your income statement. In your cost sheet, statement 1, you will only get your factory related expenses. Is that clear for everyone? Right? Are you all now able to understand? This was earlier followed under the 2-statement approach of cost sheet. Is that clear, guys? Now, sir, this old statement should we write in exam? Now they have arrived at the new statement. Now with this old, if you get into the new, you will get a complete hold and control of the new format of cost sheet. Now, new format of cost sheet. If you notice in the new format of cost sheet, 2 things, there are 2 changes. Change number 1. They have merged these 2 statements into a single statement. That is number 1. Number 2, if you notice, they have added certain other line items. What are they? We will be seeing it. Is that clear? Shall we get started, guys? Yes. Now, first, what have they said? First is your stores area. What is your stores area? Opening stock of raw material plus purchases minus closing stock of raw material gives you direct material consumed. Now you enter into your factory shop. Direct material consumed plus direct labor plus direct expense, weight, call it as prime cost. Now to this prime cost add production overheads incurred inside the factory, all the indirect manufacturing costs incurred in the factory. Example, factory rent, repairs and maintenance, supervisor salary, depreciation, any indirect cost incurred in the factory which is not directly traceable on a per unit level, park it under POH. Now subtotal, call this as gross works cost. Why gross? Because we are yet to adjust opening WAP and closing WAP. Visualize whatever I taught you there in that account format. Ideally that is called as flow of cost, right? You should understand the flow of cost. With that you can write the format of cost sheet by yourself. Is that clear? Now from this, add opening WAP minus closing WAP. Now call that as factory cost. Now this is where there is a small change. What is it? I will tell you. Now there, if we subtotal net of these two, we call it as a factory cost. Am I right, guys? Now here we are not calling it as a factory, there we call it as a cost of production. We are calling it as a factory cost. Now sir, what are the differences? Now 4 additions and 1 deletions were newly introduced by ICAI. Right, sir? When, sir? Before 2018, they were following 2-statement approach. Now, for a very long period of time, now this new approach is only there. But that old approach will give you the reasoning to enter into the new approach. Now, 4 addition, 1 deletion. What are the 4 addition, 1 deletion? Number 1, quality control cost. What do you mean by quality control cost? Now, the moment a product is produced, inspection should be carried out. Am I right, guys? Now, you might have noticed in your plastic articles and all, there is a sticker called tested OK or QC passed and all, quality control passed. So what they do is, so they hire some, they have an inspection team that will inspect the quality of the product produced. Is that clear? Now you tell me, where is the inspection happening? In which location? In the factory only. Guys, correct? Now, ideally speaking, this is an indirect manufacturing cost incurred in the factory. So, ideally speaking, this is a part of your production overheads only, but Institute wants you to specifically mention it as a line item on the face of cost sheet. That's all it is. Ideally speaking, all your indirect manufacturing costs should be coming under a single line item called production overheads, but ICA wants you to mention it on the face of cost sheet. Is that clear, guys? Right? That is the first line item. What is that, everybody? Quality control cost. Next, second, there is another cost called research and development. Right? Let us say I am Maruti Suzuki. Right? I'm planning to come up with an innovative technology where cars will run on salt water using some hydrogen technology. Right? So it will run on salt water and all. Maybe I'm coming up with this kind of research. Now this is related to production. Right? Now what I will do, whatever is the cost relating to R&D, that will also form part of your cost sheet. Right? Ideally speaking, it is an indirect manufacturing cost. Should have been a part of POH, but Institute expects you to present it on the face of cost sheet. Is that clear? So what is the second line item, everyone? Research and development. Third line item, administration overheads related to production. Sir, what do you mean by administration overheads related to production? I will give you guys an example. Now guys, let us say there is a worker, right? Assembly line worker. Now I am a car manufacturing company. Okay. Now there is a worker who needs to fit the doors of a car. Right? Now let us say a car has 6 doors. 4 doors, 1 bonnet, 1 dicky. And let us say to fit 1 door, the worker will take 1 hour, right? Which means for 1 car, he will take how many hours? 6 hours. Let us say I pay labor cost I pay at the rate of 100 rupees per hour, which means per car, I know that the worker has to work for 6 hours. Per hour, I need to pay 100. So, which means the labor cost per car is going to be 600 rupees. Now, any wages paid to this worker, I treat it as a part of direct wages, directly traceable on a per unit level. Am I right, guys? Yes. Now, this worker has a boss. His name is supervisor. Now, what will the supervisor do? That guy, he will be standing like this and he will be monitoring the work that is happening in the office, right, in the factory. Now, for every hour he stands, now 50 cars will be manufactured. Can I come up with this kind of relationship? No. This guy, he is basically required to make sure that these workers are working. Hence, no doubt it is incurred in the factory for the purpose of production, but it is not direct in nature. It is indirect manufacturing cost. Hence, I park it under production overheads. Is that clear, guys? Now, this supervisor also has a boss. Who is he? He is called the plant manager. Okay. Now, this plant manager, he will not be standing and supervising the workers and all. In the factory only he will be sitting, but he will be sitting inside an AC room. But this AC room is in the factory. Is that clear? It is not in corporate office. If it is in corporate office, any expense incurred in corporate office will be taken to administration overheads. Is that clear? Now this guy is sitting in the AC room in the factory. Is that clear, guys? Now in this case, what I call this is any salary paid to this person is administration overheads related to production. This is not general administration overheads. This is AOH related to production. Is that clear for everyone? Is that clear for everyone? Now ideally speaking, any plant manager salary as well as supervisor salary, both are indirect costs incurred in the factory, ideally POH. Yes, but institute wants you to take this separately and mention it as a line item once again. Is that clear for everyone? Right? That is exactly what they have mentioned here. Administration overheads related to production. Are you all able to understand? Yes. So 3 items you have seen till now. What are they? Number 1, quality control costs. Number 2, research and development costs. Number 3, administration overheads related to production. Last one, 4th line item. What is it? Primary packing cost. Primary packing cost. Now guys, for this you should understand what is a primary packing, secondary packing. Guys, packing cost can be classified into 2. One is primary packing, the other one is secondary packing. Now sir, what do you mean by primary packing, secondary packing? As usual, I will give you guys an example. Recall the example I have given you in our regular batch, if you guys are aware of that. Yes. Now let us say I am in the business of manufacturing soft drinks, very healthy drink called Coca-Cola, right? Now guys, now in this Coca-Cola, right? Now how can this Coca-Cola be sold to you? I will have to necessarily bottle it and sell it to you. Guys, correct? Now this bottle here is called as a primary packing. Without the bottle, can I sell it? Now can you go to the factory and say, you pour, I will? No, it's not possible. Guys, correct? Hence here, what? The primary packing here, what is the primary packing here? That water bottle is, the PET bottle, the plastic bottle, that is basically what? That comes under primary packing. If it is a primary packing, they are asking you to treat it as a separate line item on the face of cost sheet. This is incurred for the purpose of manufacturing the product. Is that clear? Now, secondary packing, what do you mean by that? Once they bottle it, now for the purpose of ease of distribution, what they do, they put it in cardboard boxes, seal it properly and all. This is called secondary packing. This secondary packing is not required to make the product usable. It is actually meant for distribution purpose. Are you clear with this? From the manufacturer, it will reach the distributor. From distributor, it will reach the wholesaler. From wholesaler, it will reach the retailer. And from him, it will reach you. When you are buying, he will only give you the bottle. Guys, correct? Because these guys deal in bulk quantity, it requires to be packed in a certain way. This is called a secondary packing. Any secondary packing cost should be taken as a part of selling and distribution cost. Is that clear, guys? It is not a part of your production overheads. Is that clear, guys? Or it is not a separate line item. Is that clear, guys? So what is the 4th line item we have seen here? The 4th line item is primary packing cost. So ideally speaking, all these 4 are originally a part of what? Your production overheads, but institute wants you to mention them on the face of cost sheet. Is that clear, guys? Are you all able to understand? Hence, remove these costs from POH and pluck it separately as line items here. Are you all able to understand? And apart from that, there is something called as less minus credit for recoveries or scrap income. Why do we do that? Very simple. Very simple. Now let us say I incur the cost and I produce 100 units. Out of these 100 units, let us say generally 2 units will always go waste. Is that clear? So effectively, how many units do I get? 98 units. But the cost is incurred with respect to 100 units. Guys, correct? Now these 2 units, what will I do? I will just try to scrap it off. And now if because of scrapping of these 2 units, if I am able to generate any scrap income, you have to reduce it here. Why? Because the cost incurred in respect of 2 units is included here. Guys, correct? Effectively, I get only 98. But I have considered the cost of 100 units, which means the cost of these 2 units are included here. and it's been borne by 98 units. Now, any benefit that you get out of these 2 units should also go on and should also be passed on to this good units. Basically, how will I do that? So, you subtract any benefit or scrap income that you generate out of these units scrapped. So, that also needs to be netted off while arriving at the cost. Is that clear, guys? Are you all able to understand? So, 4 addition, 1 deletions. What are they? Number 1, quality control cost. Number 2, research and development cost. Number 3, administration overheads related to production, AC room in a factory, plant manager. And number 4, primary packing cost, lesser scrap income, that is credit for recoveries. Is that clear, guys? Ideally what we do here is, now in this case, if you notice, guys, so first your stores area, what is it? Opening stock of raw material plus purchases minus closing stock of raw material gives you direct material consumed. You enter into your WAP area, guys, correct? Direct material plus direct labor plus direct expense weight gives you prime cost. To that add production overheads, you will arrive at gross works cost. Why gross? Add opening WIP minus closing WIP, you arrive at something called as factory cost. This is where institute is changing. Why? 4 addition, 1 deletion, they want you to add. Is that clear, guys? To this factory cost, add 4 addition, 1 deletion. Guys, correct? 4 addition, what are they? Quality control cost, everybody. Research and development cost, administration overheads related to production, primary packing cost, remember, minus scrap income, credit for recoveries. Then you arrive at cost of production. Now you enter into your FG area. Now in your FG area, what will you have? So to this cost of production, add opening stock of FG minus closing stock of FG, you will arrive at COGS, cost of goods sold. That is what they are saying. Cost of production, add opening minus closing, you get cost of goods sold. Now the product moves outside the factory, guys, correct? No. In the earlier statement approach, now cost sheet stops here. Am I right, guys? Then your income statement and all they did. Now here they are saying, wait. Don't take income statement. Single statement itself, continue. Now this is the cost incurred till what? Inside your factory. Now the product goes outside the factory. Here continue adding the cost. Outside the factory you have corporate office. So cost incurred in corporate office is called AOH, general. This is not related to production. And then you have sales depot, add SOH. Now you arrive at something called as cost of sales. What do you mean by cost of sales? The total cost incurred, right, to sell this product. Is that clear, guys? It's called as cost of sales. So to this cost of sales, add profit, you will arrive at the sales figure. Is this clear, guys? Only a single statement approach. Very simple. Is that clear? Is that clear? Now one last time, can you tell me the format without looking at it? Yes, come on, tell me, guys. Everybody start. Now once again, visualize that flow of cost which I have taught you. And just now I told you, easily you can do it. Do not mug up. Come on, everybody. Opening stock of raw material plus purchases minus closing stock gives you direct material consumed. Go to your WIP area. Add direct labor, direct expense gives you prime cost. Add POH, call it as gross works cost. Why gross? We are ready to adjust for WIP stocks. Now, add opening WIP minus closing WIP gives you factory cost. 4 addition, 1 deletion. What are the 4 additions? Quality control cost, R&D, research and development, admin overheads related to production, primary packing cost, lesser scrap income, credit for recoveries. Now you get something called as cost of production. Enter into your warehouse area. Add opening stock of FG minus closing stock of FG. You get cost of goods sold. Move outside the factory. 2 guys are waiting. Administration overheads, general AOH, then selling and distribution overheads, you arrive at cost of sales. To this add profit, you get your sales. As simple as that, guys. Now you tell me, is there anything to mug up here? Right? No. Half an hour with background logic. We have seen the format of cost sheet itself. Beyond that, what you want? You tell me. This is all it is. I'm telling you, guys, mugging up is not even a sin. It's a crime. You can't mug this up. It's so easy, provided you understand the flow of cost. Is that clear, guys? Yes. Now, one more thing. In exams, they can give you something like this. So prepare a cost sheet clearly stating the cost heads in a cost sheet. Sir, cost heads means what? Don't worry, the subtotal. Prime cost, cost of production, cost of goods sold, cost of sales. These four are called as cost heads. The main the subtotals, the main subtotals, these four are called as cost heads. We have already seen, no, prime cost is nothing but direct material, direct labor, direct expense. Put together is called prime cost. Guys, correct? Then you have cost of production. Cost of production is what? Factory cost plus 4 addition, 1 deletion. Am I right? COGS is cost of production plus opening FG minus closing FG is COGS. And COGS plus AOH plus SOH gives you cost of sales. That's about it. Are you all able to understand this? Any problem here? No. Are you all able to get this, guys? Yes. Now, one more thing. In this cost sheet, now, there are a few things that you need to know. First of all, guys, this cost sheet is nothing but your trading and P&L account in a statement format. Agreeing with me on this? Yes. Basically, up to your cost of goods sold, you have your trading account. Am I right, guys? And after that, you have your P&L account. Basically, your AOH and SOH. Are you all able to understand this? Yes, that is number one. Number two. Now, guys, when I say purchase cost of raw material, what are all the costs I need to consider? All the costs incurred to bring my raw material to my present condition and location. Is that clear, guys? Right? Now, for example, purchase cost, I will take it. Let us say I purchase by paying 100 rupees. Now, let us say 12 rupees is the GST. Now, GST, can I take it as a cost? The answer is, if on this GST, if ITC is allowed, right, input tax credit is allowed, then in that case, it is not a cost. It is actually an asset for you. It is like a cashback treatment. You pay it now and you can adjust it against your outward liability later. Basically, if credit is allowed on GST, it is not a part of cost. If credit is not allowed on GST, yes, then consider this 12 rupee also as a cost. Is that clear? Yes. Next, carriage inwards means what? The transportation cost incurred to bring your raw material to your stores. So that should also be added as a part of raw material. Is that clear, guys? Any problem, any issues here? No. So in your raw material, all the costs you incur to bring your raw material to your present location should be considered as a part of your raw material cost. Is that clear for everyone? Right. And in case of GST and all, if ITC is not allowed, only then you can take that as a credit. Is that clear, everyone? Yes. Now the next one is regarding direct expenses, direct labor, direct expenses. There is one intricate discussion here. Direct expenses. What forms part of direct expenses? The list is given by ICA. Cost of utilities, stress, power and fuel. Right? Power and fuel will come under direct expense. Now guys, what do you mean by direct expenses? It is basically all the costs which can be traced on a per unit level. However, it should not be direct material or direct labor, because we have separate line items for direct material and labor. Is that clear? Example, power and fuel. Now, if I am producing 1000 units, example, let us say every unit requires 1 hour in the machine, which means my machine should be turned on for 1000 hours, which means 1000 hours proportionately there will be a power cost for me. Am I right, guys? Right? So this moves proportionately with respect to the number of units. Am I right, guys? Right? So power and fuel is an example of direct expense. Royalty paid. Example, Maruti is entering into a joint venture agreement with the Suzuki Incorporation. The agreement is, for every car produced, let us say Maruti needs to pay Suzuki Incorporation 50,000 rupees. Now, this is a direct cost. No? Yes, it is directly traceable on a per unit level. For every car, pay 50,000. But this is not a material cost, not a labor cost. Hence, I park it under direct expense. Is that clear, guys? Next, there are a few other costs here. Direct hire charges, fee for technical services, then product or service specific drawing designs, product or service specific this is for software. These 4 costs, I'm bracketing it, plugging it under one bucket, and these 4 also are an example of direct expense. How, sir? For example, let us say I am L&T, right? I have multiple projects like Chennai Metro Rail, Hyderabad Metro Rail, Cochin Metro Rail project. 3 projects I have. Now, especially for this Cochin Metro Rail project, I am hiring a specific equipment on big crane, right? Now, and for that I'm paying higher charges. Now, this is exclusively incurred for that job, no? Guys, correct? It is a direct expense. Is that clear? And for that job alone, I invite some technical people, right? Machine related technical people, and I ask for the services because the terrain is different there, right? Hilly terrain and all. Let us say example. Now for them I pay some technical services. It is exclusively incurred for that particular job. Am I right? It's a direct expenses. Then specific product specific design or drawing. So before I start digging the tunnel, first I will put it on a paper and I will see, fine, this is going to be the design, this is going to be the route map where I'm going to dig the tunnel. Am I right, guys? Right? Now for that, if I am incurring some cost, that is also specific for one particular job. Right? Correct? Right? Then cost of any product or service specific software. If I use a particular software exclusively for that particular project, that is also an example of direct expense. Basically, direct expense means what? It is exclusively incurred per unit or for one particular job. Is that clear, guys? That's what they are saying. Amortized cost of molds, patterns, patents, etc. Molds, patterns and all. For example, now I've given you one example before. Let us say during Ganesh Chaturthi, right? They want to make this clay, right? With the clay, they want to make this, Lord Ganesha's idol. Now, for that, they use a mold, a plastic mold of Lord Ganesha. There, they will put all this clay, and then once they put it like this, that clay will take the shape of that mold, right? That mold, ideally, let us say, with using one mold, they can make 1,000 idols. Right? The cost of that mold is, let us say, 1,000 rupees. So 1,000 divided by 1,000. So they will take 1 rupee as the cost per unit. Right? That will be taken as a direct expense. Is that clear, guys? Very strictly speaking, this should not be treated as a direct expense. It's a part of production overheads because it is not directly traceable on a per unit level. But still, Institute is taking a stand that this should also be a part of amortized cost of molds, patterns, patents should also be a part of your direct expense. Is that clear, guys? Are you all able to understand? Yes. Now, one more very important thing that you need to remember. Now, in our subject, we only consider the costs incurred in these three locations. Am I right? The cost should be incurred in factory, or it should be incurred in corporate office, or it should be incurred in sales depot. Incurred in factory, basically, it could be direct material, direct labor, or direct expense. Basically, your prime cost component or any other indirect cost incurred in the factory is called as POH, right? But for the face of cost sheet, some 4 addition, 1 deletion alone separate it from POH and mention it on the face of cost sheet. You guys are aware of that? Just now we saw. Guys, correct? And cost incurred in corporate offices, AOH. Cost incurred in sales depot is SOH. Is that clear, guys? Any cost incurred outside these three locations are not a part of our subject. Example, interest paid on funds borrowed, dividend paid on equity or preference shares, these are never a part of our subject. Why? That's why I said our subject reports only operating profit. It doesn't report final profit. Hence, that's why we call it as EBIT. Is that clear, guys? Earnings before interest and tax. From here you subtract interest, from here you subtract tax, you'll arrive at earnings after tax, earnings before tax or after tax. Is that clear, guys? So we are not bothered about all the other costs. We are only bothered about the 3 costs incurred in the factory. Is that, it incurred in these 3 areas. That is factory, corporate office and sales depot. Is that clear, everyone? Right. Now, one more thing I want to tell you. In this connection, I want to tell you something very important. Now, bank charges, remember, they are treated as AOH. They are not finance cost. Why? The moment I say bank charges, you think bank is charging me for raising fundraising activity. The bank is actually giving me some money. No. Here, bank charges refers to. Now, in the bank, I open an account. Now, for maintenance of this bank account, right? Every year they will charge me, AMC charges, annual maintenance charges, or this SMS charges and all they will do. Guys, correct? That is for the purpose of carrying out my operation. That is administrative purpose. I need a bank account. Are you all able to understand? Right? This has nothing to do with the fundraising activity. Are you all able to get this? Right? Hence, bank charges are treated as what? AOH. Are you all able to understand this? Is there any issue here? No. One more thing. If in the question they have given, my supplier gives me a trade discount, you can subtract that. Whereas if they have mentioned supplier is giving me a cash discount should never be considered in our subject. Why? Cash discount is as good as a finance cost. Why, sir? Because why does he give me cash discount? He says if you pay today, you will have to pay full. If you pay, ideally you can pay after 30 days. Suppose if you pay today itself, I will give you a 2% discount. Example, now he's asking you to pay 30 days early. Now, literally, he's doing this because now if he gets the money for the next 30 days, he can put it in his bank account or somewhere in an investment and earn interest out of that. Guys, correct? Now, how does he motivate you to pay it early? Only by passing on some of that interest to you. Are you all able to understand? Ideally, that comes by way of discount. Hence, ideally speaking, cash discount is a finance cost. It is never considered in our subject. Are you all able to understand? These are some fine points that you need to know. Are you all able to get this, guys? Right? And one more thing, in the question, if they give you conversion cost refers to all the costs incurred in the factory except material cost. Guys, that's why I said it is labor, direct expense, production overheads. In my factory, what are the costs I incur? Direct material, direct labor, direct expense, and all the indirect manufacturing costs is production overheads. Now, conversion cost means what? The cost of converting material into FG, which means what? Material cost will be there, plus I incur the conversion cost. Means what? All other costs incurred in the factory except my material cost, right? Only if I incur the conversion cost on the direct material, it becomes an FG. Are you all able to understand? So in the question, if they are giving you conversion cost, it stands for what? It stands for direct labor plus direct expense plus POH. Is that clear, guys? Now, if the question is silent, maybe direct expense will not be there. In that case, if direct expense is 0, then conversion cost is direct labor plus POH. Are you all able to understand? Is this clear, guys? Now, with this background, let's go and do one question from our solved question bank. So please take your solved question bank. It's there on our website. Please download it. Now, question number 7. Question number 7. Now, let's do this question number 7. It's a very important question. This one's came in your RTP May 24 as well as in September 24 attempt. Now, I am handpicking this sum in this marathon for a specific reason. This is an important question. And this covers a variety of adjustments. That's the reason why I wanted to cover this. So now, let's get started. Shall we, guys? Yes, come on, everyone. Now, P Limited has gathered the cost information from ledgers and other sources for the year ended 31st of December 2023. The information are tabulated as below. They have given a lot of information. Finally, they have given the board meeting is scheduled to be held next week, and you being an associate, the chief controller, cost controller, has been asked to prepare what? Cost sheet. Now, basically, what you need to do with this data, you need to prepare cost sheet. Now, basically, guys, cost sheet format, you guys know. Now, one last time, can you tell me the format of cost sheet? Everybody, make this as a revision. That's all. Come on. Opening stock of raw material plus purchases minus closing stock of raw material gives you direct material consumed. 1 second, wait. Now, when I say purchases, I will include all the costs incurred to bring my raw material from my supplier location to my stores. This will include freight, everything. Are you all able to understand? Yes, very good. Continue. Direct material consumed. Direct labor, direct expense, prime cost. Add production overheads, gross works cost. Add opening WAP minus closing WAP, factory cost. 4 addition, 1 deletion. Quality control, R&D, admin overheads related to production, AC room in a factory, then primary packing cost, less credit for recovery, scrap income gives you cost of production. Now you enter into your warehouse area. Add opening FG minus closing FG, you get cost of goods sold. You are going outside the factory also. 2 friends are waiting. AOH, SOH. You add the 2, you get cost of sales. Add profit, you arrive at sales. Is that clear? Suppose sales is given, you arrive at cost of sales. Balancing figure will be profit. Are you all able to understand? Excellent. Now, with this background, now guys, I want you all to do this. Of course, we did all these things during our classroom discussion. I mean, during our regular batch. Anyways, now. First, raw material purchase. Where will it come? Raw material purchased, right? Freight inward. Add to raw material purchase cost. There itself you can add it. Next, wages paid to factory workers. Direct wages. Royalty paid for production. Direct expense. Just now we saw. Next, amount paid power and fuel. Direct expense. Now, job charges paid to job worker. Many students struggle in this area. Now, what do you mean by job charges paid to job workers? I will tell you. Now, let us say I'm getting on big order to manufacture something, but all my workers are busy with the current workload itself. Now, what I do, I call my another friend who is in the same business. Maybe he has some idle capacity, basically, which means he has his workers are not fully occupied. Now, I tell him, look, boss, I will supply the raw material. You use your workforce to convert this into a finished product and supply it to me. I will sell it to my customer. Is that clear, guys? So literally, my raw material cost is mine. I use his conversion cost, get it converted into FG, and he supplies to me. Now I ask him, look, I will supply the raw material. You don't add raw material cost. Now for you, your duty is what? Convert RM into FG. Correct? Now for this conversion process, per unit, how much will you charge? He says, sir, per unit I will charge you 5 rupees. Now this is a direct cost, traceable on a per unit level. For him to convert every unit, he'll charge me 5 rupees. But this is neither material nor labor. I call it as what? Direct expense. Are you all able to understand? So yes, mark this as important area which many students are prone to commit a mistake. Hence we call it as direct expense. Next up, stores and spares consumed. Stores and spares, basically your nuts, bolts, hammers and all these things. Stores and spares. Now it is in the factory but not direct. Any cost incurred in the factory which is not a direct cost is an indirect manufacturing cost. Put it under POH. Is that clear? So this is going to be POH. Next, depreciation of what? Office building. Office means what? Your corporate office, hence it is AOH. Suppose depreciation on factory office, factory building, POH. Depreciation on sales depot, SOH. Depreciation on delivery vans, SOH. Selling and distribution cost. Is that clear? Next, repairs and maintenance. Now don't immediately come to a conclusion, sir, POH. Where it is incurred, you see that. On plant and machinery. Plant and machinery is located in factory, so POH. Sales office building, SOH. Insurance premium for what? Plant and machinery, POH. Factory building, that is also POH only. Are you all able to understand? Next, expenses paid for quality control check activities. Quality control, separate line item after factory cost. 4 addition, 1 deletion. Very good. Next, R&D cost paid for improvement of production process. Separate line item. Now, another thing, popular area where students commit a mistake is this line item. Expenses paid for pollution control and engineering maintenance. Now guys, what is this? Now there are some environmental laws which tell you, now in factory they can't just like that they can't release the waste into the environment. Some wastes are let into water bodies, some waste pollution, air pollution and all. Now environmental laws, what they do, they actually have specific conditions where first these losses, whatever is the waste, that needs to be treated and only then it can be let out in the environment. Guys, correct? Now let us say in a factory, where will the pollution happen? In a factory. In a factory, they have a pollution control equipment. Right? Now, any harmful gases will be first treated by this equipment and only certain gases will be released. Not all gases will be released. Is that clear, guys? Now, this equipment, some repair or expenses were incurred. You tell me, where is this equipment located? In the factory. Is it a direct cost? No. Hence, indirect manufacturing cost. Put it under POH. That's all, guys. Are you all able to understand? So, visualize which part of the company this cost is being incurred. Now, if it is corporate office, AOH, if it is sales depot, SOH, if it is incurred in the factory, see whether it is a prime cost component or if it is indirect, put it under POH. Are you clear with this? And certain items of POH alone, separately Institute wants you to mention as 4 addition, 1 deletion. This is about the entire chapter of cost sheet, guys. What is the big deal here? Are you all able to understand? Of course, in our regular batch, we do multiple number of sums where we see different varieties of adjustments and concepts, but this is the base and I wanted to cover most important area in this particular marathon. Next one. Salary paid to sales and marketing managers, treated as SOH. Then salary paid to general manager, AOH. He is a general manager, Packing cost for primary packing necessary to maintain Quantity. What is quality? What is that? Coca-Cola, that bottle. Yes, separate line item. For redistribution, secondary packing, it will come under SOH, selling and distribution cost. Next, fee paid to independent director. Where will the director sit? Corporate office, so AOH, very good. Performance bonus paid to sales staff. Don't worry about performance bonus or basic or DA. Any salary paid to sales staff is SOH. Any salary paid to your office staff is AOH. Any salary paid to supervisor or indirect workers comes under POH. Any salary paid to your direct workers comes under direct wages. This is the rule. Are you clear with this? So it is location dependent. Are you all able to understand? Next one, value of stock as on 1st Jan, RMWAP FG. Specific opening stocks are there across the cost sheet, guys. Correct? Right? In your stores area, you have opening and closing RM. In your factory shop area, you have opening and closing WAP. In your warehouse area, you have opening and closing FG. That's about it, right? Oh, and the closing values are also given. Next, amount realized by selling scrap and waste generated during the manufacturing process, 48,000. What is this? So this is a separate line item. What is that? Less credit for recoveries or scrap income. Directly you do this 48,000, and that's about the sum, guys. Nothing beyond that. I have given the solution also here. We discussed it. It is just a matter of plug and play. That's about it. Are you all able to understand this? Is there any issue here? Fine, guys. Right. Now please go to your library of adjustments and update. So write down new format of cost sheet hyphen components of direct expenses, semicolon, production overheads, semicolon. So components of direct expenses had multiple components. Similarly, POH also had multiple components here. So write on semicolon POH, semicolon QC, semicolon R&D, semicolon admin related to production, semicolon expenses for pollution control and maintenance, any other thing, semicolon scrap income, right, guys? That's about this particular question. This can come as a full-fledged 10-mark question. Here, what was the test? Just format of cost sheet where you just had to plug and play. That's about it. Are you all able to understand? Now, I will also discuss a few more things here. 1 second. So, now guys, in this sum, everything was same. I mean, more or less similar. There was one thing that you had to know. I mean, a unique adjustment here. Heat, light and power. How much is the amount? 65,000. Now, generally in the absence of information, you will take the entire amount as incurred in the factory. You will take it as POH. But read the question. They have specifically given. What is that? They have given heat, light and power should be distributed to factory, office and distribution in the ratio of 8:1:1. What is the meaning of this? Which means out of this cost, apportion it in the ratio of 8:1:1. So 8 plus 1 plus 1 is 10. So 8/10 will go to POH. 1/10 will go to AOH. 1/10 of this will go to SOH. Is that clear, guys? That's all. Nothing great here. Are you all able to understand? That is only extra adjustment that you can see here. One more thing. Interest on borrowed funds. They have given some amount 2,000 and outstanding is also another 2,000. What will you do? This amount should not be considered in our subject. Are you clear with this? Now I think they might have considered this. I'm not sure. They have not considered. Yes, they have said alternatively interest may be added to arrive at cost of sales. No, please ignore interest because it is a finance item, not a part of our subject. Is that clear, guys? I think everything else is easy, not a problem at all. Next one, question number 7B. Now, in this question, there is one unique adjustment. What is it? Now, look at this, guys. administrative cost for factory and production for others. Admin cost others. This amount is your general AOH. Admin cost for factory and production should be treated as a separate line item. What is a separate line item? Administration cost related to production. As simple as that. Are you all able to understand? Beyond this, there is nothing great in this area. Fine, guys? Are you clear with this? Yes, I think that's about this one as well. The next one, one second. Yes, they have mentioned one thing here. This is a past MTP question. Now here, if you see, cost of website for online sale, the website maintenance cost, this is meant for sales, am I right? So this is an SOH. GST credit allowed. This is not a part of your cost at all. Very good. Next, audit and legal fees. Audit fees and all, legal fees. Your board of directors, along with them only auditors will sit and do all the work, right? Of course, they will also come to production area, but generally it's administration related. That's the assumption we take, and it's a valid assumption. Now, there is something here. There are something called guards, right? Guard salary. Guard means what? Security personnel, 20,000 rupees. Now, they have mentioned guard salary should be apportioned between factory, office and distribution in what ratio? 7:2:1. Is that clear? You guys understand? So don't take this entire amount to POH alone. So you need to apportion it between these three locations in the ratio of 7:2:1. Is that clear, guys? So it's partly POH, partly AOH, partly SOH. Is that clear? Yes. Next one. What is it? AMC means annual maintenance charges of CCTV. How much is the AMC cost? 10 lakh rupees. Sir, CCTV cost, any cost incurred on CCTV, where should I take it? It depends on where the CCTV is present. If it is in factory, take it to POH. If it is in your corporate office, take it to AOH. If it is in your sales depot, take it to SOH. Sir, I'm talking about overall all CCTV, sir. Then they have given a meaningful way of apportioning it. 6:2:2. Are you all able to understand? Maybe 60% of the total CCTVs are in the factory, 20% are there in your corporate office, 20% are there in your sales depot. So they are asking you to apportion it this way, apportion this figure. Are you all able to understand? Nothing great here, no? Guys? Yes. Now, one more thing. The company paid EPF at the rate of 12% over and above the basic pay. However, the guards will not receive any incentive or EPF. Now, what should you do here? If you look at it, now, guard salary is 20 lakh. So on this 20 lakh, extra PF not applicable. Director's salary 60 lakh. On this, PF will be applicable. Apply how much percent? 12% on this. That will be taken to AOH. Simple. For directors, any kind of salary that you pay, be it your PF, ESI or basic DA, anything, you take it to AOH. Is that clear? Now, many students had this doubt. Sir, except guards, all other employees are entitled to PF. You said directors, correct. Then how about direct employees, sir? On this also, I should apply 12% or not? No. Reason, read this word. Direct employees' wages, allowances, etc. So this indicates that all PF, ESI, everything has already been included in this line item. Once again, don't add 12% on this. Are you all able to understand? Had this not been given, then what you would have done? On this, apply 12%. Take it to direct expense. Are you all able to, direct wages. Are you all able to understand? Guys, you guys are able to understand? PF paid to direct workers is direct wages. PF paid to if indirect factory workers is POH. PF paid to your directors is AOH. PF paid to sales personnel is SOH. Are you all able to understand? But in this question, you will apply only on director's salary. Guard salary, no. Why? Specifically given. Direct employees, no. Why? Because they have given it includes all allowances. Are you all able to understand? A small observation which can actually make a difference in your answer. Is that clear, guys? Right? I think everything else is quite simple. not a problem at all. One more thing, hiring of cars attracts GST under RCM at the rate of 5%. RCM means reverse charge mechanism. RCM or FCM, we are not bothered about that. We are only bothered whether credit is allowed. They have mentioned credit is not allowed, 5%. Now, hiring of cars, for whom are they hiring? For whom are they hiring cars? The car is hired for transportation of employees and guests. Have they given anything? This is used exclusively for selling. They have given, where have they given? Where, ma? Hiring of cars is used only for selling and distribution. So, which means 25 lakh is the higher charges. This will come under SOH. On this 25, I need to pay 5% GST. Now, this amount, if it is eligible for credit, I don't consider it as a part of my cost. If it is not eligible for credit, in that case, I will definitely consider it as a part of my cost. Apply that 5%, take it as a cost. Which cost is it? Take it under SOH. This is also SOH, means GST on this figure should go to SOH. Is that clear, guys? Right? And that's about this particular question number 7C. And 7D. One second. Here, this figure, amount paid for purchase of molds and patterns, life is equivalent to 4-year production. Now, what you need to do, this amount divided by 4, you take it under direct expense. Just now we saw, no, direct expense list we saw, right? So, molds and patterns should be taken to direct expense. Look at this. Under direct expenses, they have taken molds and patterns. 784,000. How did they get the figure of 784,000? How much is it? Yes, 31,36,000 divided by 4, you get the same figure. 7,84,000. Are you all able to understand? Guys, I am just focusing on adjustments. Look at this. Major question number 7 we did fully. Now, A, B, C, D, I am hand picking the tricky areas and doing it. That's all, guys. Beyond this, nothing is there. Are you all able to understand? Guys, any issues, any problem here? No. Next one, job charges paid, we already saw. This is direct expense. Next, guys, this is one really good adjustments which many students miss this out. Now, salary paid to functional managers. Sales manager salary goes to SOH. Finance and accounts manager salary goes to AOH. Production control manager, many students take it to POH. No. This is that separate line item. AC room in a factory. What is that? Administration overheads related to production. So, they have silently kept this adjustment. Many students actually commit the mistake. That's the reason what we have done is I have neatly put all these similar questions under a same category. 7A, B, C, D, E, F, whatever it is. So, now when you are doing this new format of cost sheet, all the sums with all the adjustments, you can revise it in a single place. That is how this entire question bank has been drafted. Are you all able to get this, guys? Now, this is all about it. Hence, make sure that the production control manager's salary is taken where? To your administration overheads related to production. Is that clear for everyone? Guys, are you all able to understand? Yes. That's one thing. I think beyond that, there's nothing great here. That's about it, guys. That's about it. So that's about the significant chunk of this particular chapter. Of course, there are also certain other aspects, but predominantly, guys, this is one major area in this particular chapter which you definitely need to do. The format of cost sheet, which is very, very important, and based on this format only, right, the entire chapter revolves around. One last time, can you guys tell me the format of cost sheet? And with that, we'll conclude the chapter. Opening stock of raw material plus purchases minus closing stock of raw material, you get direct material consumed, add direct labor, add direct expense, gives you prime cost, add production overheads, gives you gross works cost, add opening WAP minus closing WAP net, you call it as factory cost. Now, 4 addition, 1 deletion, what are they? Quality control, QC cost, research and development, R&D cost, admin overheads related to production, AC room in a factory, primary packing cost, minus credit for recovery, scrap income, you arrive at cost of production. Now enter into your FG area. Now here I already have opening stock of FG minus closing stock of FG. I get cost of goods sold. Move outside the factory. Two friends are waiting. Add administration overhead. General AOH, Gen SOH. Arrive at cost of sales. To this add profit. Arrive at sales. As simple as that. Is that clear, guys? Fine. And with this entire chapter of cost sheet has been properly revised. Right, now let's move on to the next one. So now let's get started with the revision of a brand new chapter called as overheads. Now, before we get started with this chapter, first I want to tell you all that this is a common chapter in your CA Intermediate Paper 4 Cost and Management Accounting and in your CMA Intermediate Paper 8 Cost Accounting. So for both CA and CMA students, this particular chapter is common, exactly the same, right? So for this particular marathon purpose, right? So it is a common marathon or a revision with respect to this chapter, but please be very clear. So we have separate books. I have prepared separate concept decoder as well as solved question bank for CA Intermediate, your cost and management accounting paper 4, as well as for CMA Intermediate. Separate books are prepared, and even in our paid courses, be it your regular or exam oriented classes, the recordings are separate for CA and CMA Intermediate, right? For marathon purpose alone, this particular chapter, which is common, right, I am making it as a common recording. Now on this note, let's get started with this particular chapter overheads. Now guys, our subject cost and management accounting, costing, right, has three objectives. What are the three objectives? Number one, stock valuation profit computation. Number two, decision making. And number three, control, right? Now this particular chapter overheads helps us achieve the first objective, which is stock valuation and profit computation. This is the objective which this overheads chapter helps us achieve. Clear with this, guys? And to put it even more precise, this chapter, the objective of doing this chapter is to calculate the overhead cost per unit. This is what we are going to calculate in this chapter. Sir, why, sir? Now, every unit we know is valued at full manufacturing cost, right? So manufacturing cost basically represents what? Your direct material, direct labor, direct expenses, right? These three collectively is called as prime cost plus production overhead. If you add up, you get your total manufacturing cost. Now, while the first three components, which are called as prime costs, are readily available on a per unit level. Sir, to manufacture 1 unit of, let us say, a pen, I know how many grams of plastic or refill I need, right? And what is the rate per gram? So which means this direct material cost can be readily available on a per unit level. Direct labor, so to produce 1 unit of pen, I need 1 hour of labor. For 1 hour of labor, I pay 5 rupees. So 1 into 5, 5 rupees is the labor cost per unit of output. Direct expense, sir, for every unit of pen, I pay 7 rupees as the royalty. So direct expense is also available. So all these prime cost components are readily available on a per unit level, whereas the production overhead figure is not readily available on a per unit level. It is actually an indirect manufacturing cost which is available only in bulk. For example, your factory rent, repairs and maintenance, depreciation, supervisor salary, etc. These are all costs available in bulk. Clear with this, guys? Now, only if I arrive at the per unit cost, what can I do? So out of the overall units produced, I can segregate the total manufacturing cost into, right, my cost of goods sold and closing stock. Cost of goods sold will be units sold into the manufacturing cost per unit, and closing stock will be units unsold into manufacturing cost per unit. Or in other words, I need to calculate the manufacturing cost per unit. Only then I can classify my cost into cost of goods sold and closing stock, and only if I do that, I will be able to achieve my objective of stock valuation and profit computation. Or in other words, for me to arrive at the full manufacturing cost, the prime cost components are readily available on a per unit level, whereas the production overheads alone is not available on a per unit level. Hence, the objective of this chapter is to first calculate the overhead cost per unit. If we calculate the overhead cost per unit, anyways my prime cost components are available on a per unit level and waiting for me. To this, if I add the overhead cost per unit, I'll get the full manufacturing cost per unit. With this, I can segregate my overall manufacturing cost into cost of goods sold and closing stock, by which I can achieve my overall objective of stock valuation profit computation. So first, place yourself right and understand why you are studying this particular chapter overheads. Clear with this, guys? Now, you might have a question, sir. Perfect, sir. We understood. So the objective of this chapter is to calculate production overheads, overhead cost per unit. By the way, remember, whenever we say overheads in this chapter, overheads represents your production overheads, right? Sir, fine, sir. So we need to calculate the overhead cost per unit. Perfect, sir. Now, for this, why do we need a full-fledged chapter, sir? What do? Take the total overheads divided by the total units. You will get the overhead cost per unit. For this, why do we need a separate chapter called overheads? And why are you actually troubling us with a big chapter? No, it's not that simple. Now, what you are saying is right, provided a company is dealing in only one product. Let us take an example of a company like Titan. Okay. Now, let us say the full overall production overheads incurred by Titan is, let us say, for example, it is going to be 1 lakh rupees. Now, it is incurred in a factory. Now, in this factory, Titan produces, right, watches. Titan also produces, they have this eye gear, that is Titan Eye Plus. They have the spectacles, right? So they have this eye gears. And let us say they also produce, example, I'm telling you, wallets. Now, using the common factory facility where they have incurred 1 lakh rupees, for example, let us say Titan has produced 4,000 watches, right? And 3,000 units of eye gears, and let us say they have also produced another 3,000 units of wallets. Now, you guys tell me, can I add 4,000 watches plus 3,000 eye gears plus 3,000 wallets, and then I will say, sir, 4,000 watches plus 3,000 eye gears plus 3,000 wallets is equal to 10,000 what? No, or in other words, basically, can you add dissimilar items? 4 donkeys plus 5 monkeys is equal to what? You can't add dissimilar items, right? In this case, you can't say I have produced 10,000 units totally. 1 lakh divided by 10,000 units, it is going to be 10 rupees per unit. Give all these products 10 rupees share of overheads. It doesn't work like that, because these are all dissimilar items. They cannot be added as such. Are you guys clear with this? So which means I need to have a proper system in which this particular 1 lakh rupees, the bulk figure, needs to be meaningfully apportioned, and I use a procedure called as overheads absorption costing system, through which what happens at the end of the day, I find out what is the overhead cost per unit of watch, what is the overhead cost per unit of eye gear, and what is the overhead cost per unit of wallet. Or in other words, the objective of this chapter is to calculate the overhead cost per unit of each of the type of product the company deals in. Once I do that, then obviously I will be able to achieve the objective of this particular chapter. Are you guys clear with this? So this is the big picture of this particular chapter. Sir, how do we do this, sir? That's why this chapter actually seeing, right, I'm taking the concept decoder of your CA intermediate concept decoder. Separate concept decoder is there for CMA intermediate, but for the purpose of marathon, I'm using CA intermediate concept decoder. Do not worry. Whatever we are seeing here is equally applicable even for CMA intermediate students. So look at this. This is what it is. Overheads are the expenditure which cannot be conveniently traced or identified with any particular cost unit, and such expenses are incurred for the output generally and not for a particular work order. And it also represents expenses that have been incurred in providing certain ancillary facility or services which facilitate or make possible the carrying out of the production process. Overheads are incurred occurred not only in the factory but also in administration, selling, distribution. These are separate, it's just an introduction which has been mentioned here. Now, what are the steps involved in overhead absorption costing? The name of the chapter itself is overheads hyphen absorption costing method. So we use a procedure called as absorption costing system. Now guys, basically this entire chapter is divided into three. This entire chapter, overheads accounting system, is divided into three. The first one is called as primary distribution. The second phase or the step is called as secondary distribution. And the third phase or the step is called as absorption. Clear with this, guys? So overall, there are three steps involved in this overhead accounting process: primary distribution, secondary distribution, absorption. Right? That's about it, sir. Now, once these three steps are over, the absorption costing system, right, gets completed, but there are certain advanced levels of absorption which we will be seeing here. If you notice here, right, we have primary distribution of overheads, then another concept, secondary distribution of overheads, then we have another concept, absorption of overheads. And then once absorption is done, we will also be seeing there are 6 types of absorption rates. This is another learning objective of this chapter. Predetermined rate versus actual absorption rate. Then treatment of under or over absorption. Then we will also be seeing blanket rate versus departmental rate. Then machine hour rate method. These are all, and of course one more theoretical thing, capacity determination, then core theory topics. Literally whatever I have mentioned here, right, in this particular font, these are all the different concepts we are going to see. Of course, in this revision of this particular chapter, we will also be doing certain numerical problem. All the concepts will also be covered, and with the help of some numerical problems also we will be doing, right, in our regular and fast track, or regular and exam oriented batches. Basically what we will be doing is every single sum we will be doing, right? For marathon purpose, I have handpicked a few questions. I just didn't want to do only the concept part. So concept with some numerical problems, I've handpicked some questions which will represent predominant portion of the concept. That will also be done so that even if you're watching this the day before your exam, you can effectively revise the entire chapter along with me. Now guys, now let me just get back here. Now sir, primary distribution, secondary distribution, absorption. Sir, how does it look like? Quickly, let me just recapitulate this. Now, first of all, the first step is I should identify what are all the line items of production overheads that are available, right? So the first thing I do is maybe some 20-30 line items will be there. For example, I'll be having factory rent, right? Then I'll be having supervisor salary, repairs and maintenance, depreciation on machine, so on like that. I will be having multiple line items, right? Now what will I do with these line items? So first what will I do is that now I will identify, sir, in our company how many departments are there. For example, let us take an example of Tirupur textile belt, right? We have a textile industry. Let us say in our textile company, right, manufacturing company, I have the following departments: spinning department, right, I call this as P1. Why P1? I will tell you. Then I have weaving department, this is P2. Then I have printing department, this is P3. Then let us say I also have a factory canteen. So canteen, I call this as S1. And let us say I also have stores, right? I call this as S2. Now these are all the departments available in my factory. Clear with this, guys? Now spinning department, what do? I'm a textile company. Basically raw cotton is there. We spin this cotton and take the threads. Now once I take out the threads, what will I do? I will weave it and make it into a t-shirt or a pant accordingly. Once the weaving is done, what will we do? Now we give that coloring and printing and all. That is done in the third department, P3. So these three are production departments. What do you mean by production departments? The departments through which every product actually passes through. Clear with this, guys? So every product passes through spinning, weaving, and printing department. Clear with this, guys? That's why I call it as P1, P2, and P3. Now, out over and above these production departments, I also have two service departments. What do you mean by service departments? These are the departments which are present in the factory only, but my products will not pass through the service departments. These departments are meant for providing service to the production department. For example, here, canteen. My products will not pass through the canteen, but this canteen will provide food for all the workers working in the production departments. So only if this canteen is there, my production department can run smoothly. Similarly, stores. Stores is basically a place where whatever material they're asking for, the production department are asking for, I will give it to them. Clear with this, guys? So my products don't necessarily pass through them, but stores is required for providing services to the production departments. Clear with this, guys? So now, under the first phase of this overhead accounting procedure, which is basically primary distribution, right? So now what we do in primary distribution is that, so every single line item of expense, why do we incur all these line item of expense? Because we have all these departments in our factory. So now, for example, factory rent, I will allocate, I will distribute or apportion it to all the departments of the factory. Next, supervisor salary, once again, apportion it to all the departments of the factory. Repairs and maintenance, apportion it to all the departments of the factory. Depreciation, apportion it to all the departments of the factory, and so on. So every single line item of expense, indirect manufacturing cost, gets apportioned to all the departments of the factory. Clear with this, guys? Why? Because I incur this expense for the benefit of all these departments of the factory. Are you guys clear with this? This procedure of apportioning the line item of expenses to all the departments is called as primary distribution. Sir, why do we do this, sir? Fine, because all these line items of expenses are incurred only for the benefit of departments. Okay, sir, on what basis will I do? For example, factory rent. Use some reasonable basis of apportionment. In a common factory, one area is their factory. Inside this, only all these departments are there, right? On the basis of square feet occupied by each and every department, you apportion the entire factory rent. Clear with this, guys? Sir, supervisor salary, sir. How will I apportion? Maybe on the basis of number of workers working in each of these departments, you apportion. Or in other words, use a reasonable base to allocate or apportionment the respective line item to all the departments of a particular factory. Clear with this, guys? Now, at the end of primary distribution, what will happen? This 20 line items of expenses will vanish and it will turn into just 5 figures. P1 overhead, P2 overhead, P3 overhead, S1 overhead, and S2 overhead. So 20 line items will vanish and become into just 5 figures. Clear with this, guys? In our example 5. Now, companies can have 4 production departments and 10 service departments also they can have. It could be anything. In our example which I took, I've just taken 3 production departments and 2 service departments. Clear with this, guys? So, apportioning your line items of indirect manufacturing cost to all the departments of the factory is called as primary distribution. Clear with this, guys? Next, the second phase or the second part of overheads accounting is called as secondary distribution. Now, what do we do in secondary distribution? Now, if you notice here, now P1 department, first all these line items of expenses vanish. Now I have P1 department overheads, P2 department overheads, P3 department overheads, and S1 department overheads, S2 department overheads. Now you tell me, this S1 department and S2 departments are basically present only for the purpose of providing services to these 3 production departments? Yes. Hence, what we need to do is, we need to reapportion back the S1 department overheads and S2 department overheads back to the production departments P1, P2, P3. Clear with this, guys? So in the secondary distribution, what we need to do, S1 department and S2 department would have got a share of overheads that needs to be redistributed back to the production departments. Sir, in what ratio, sir? In the ratio of the services provided by each of these service departments. Clear with this, guys? For example, canteen provides services on the ratio of the number of employees working here. Are you guys clear with this? So accordingly, on the basis of services rendered ratio, what I will do is I will reapportion back the service department overheads to the production department. Are you guys clear with this? So literally here in secondary distribution, what happens? S1 overheads, S2 overheads, these two will be reapportioned back to P1 department, P2 department and P3 department. Are you guys clear with this? So, or in other words, at the end of secondary distribution, now what happens? Beginning I had 5 figures, now these 2 figures will vanish and I will redistribute this back to the production department. So at the end of secondary distribution, in our example, we will only have P1 overheads, P2 overheads and P3 overheads. Clear with this, guys? See how gradually we are reducing the line item, but the total figure will remain to be the same. The sum total of 20 line items here will be equal to the sum total of the 5 line items here at the end of primary distribution. Why? Because all these costs have been apportioned here. The manner of apportionment alone is different. Now, at the beginning of secondary distribution, you have 5 figures. Now, S1 and S2, we are reapportioning it back to the production department. So here, at the end of secondary distribution, the total will continue to be the same, but now it is being shared only by 3 people. Are you guys clear with this? So, secondary distribution, what we do, the secondary department, the service department overheads are reapportioned back to the production department overheads using the services rendered ratio. But remember, secondary distribution, you have different methods of redistributing the the service department overheads back to the production department. What it is at the relevant point of time, I will just tell you. So clearly understand, look at this, in the concept decoder book itself, I've clearly mentioned secondary distribution, that is service department overheads, I need to redistribute it back to my production departments, right? There are broadly 3 different methods of apportionment of service department overheads back to my production department. What are the 3 methods? One is called as a direct redistribution method. The second one is called as step ladder method, also popularly called as non-reciprocal method, and the third one is called as reciprocal services method. And under reciprocal services, you have 3 different methods: simultaneous equation, repeated distribution, and trial and error method. Sir, when to use which method, I will come to this, do not worry. We will also be doing numerical problems in the marathon itself. Clear with this, guys? But understand, I'm just giving you guys an overview right now. Secondary distribution, sir, how do I distribute service department overheads to my production department overheads? Broadly, there are 3 different methods: your direct redistribution method, step ladder method, and reciprocal services method. And under reciprocal services method, you have 3 different methods: simultaneous equation method, repeated distribution method, and trial and error method. What are they? When to use which method? I will come back to it with a numerical problem. Right now, I'm just giving you guys an overview. Clear with this, guys? I will do sums for each primary distribution, secondary distribution, absorption, everything. I will be doing some numerical problems in the marathon itself. Nothing to worry about that. Clear with this, guys? So now what happens at the end of secondary distribution? I have all production department overheads, P1, P2, P3 overheads. Clear with this, guys? Now comes the last phase called as absorption. Now in absorption, now what do? The starting point is obviously the secondary distribution, right? So P1, P2, P3 overheads I have. Now, what is the objective of this chapter? I need to calculate the overhead cost per unit of each of the product the company deals in. Let us say this is a textile company, right? So let us say this particular company deals in, let us say, 4 different products: men's wear, ladies wear, kids wear, and footwear. Let us say the company deals in 4 different types of products: men's wear, ladies wear, kids wear, and footwear. Now, on one side I have P1 department overhead bulk figure, P2 department overhead another bulk figure, P3 department overhead bulk figure. Now I need to convert these 3 bulk figures into, so overhead cost per unit of menswear, overhead cost per unit of ladies wear, overhead cost per unit of kids wear, and overhead cost per unit of footwear, right? How do I do this is the subject matter of the third and the last step in this overhead accounting process called as absorption. How do we do that? I will come back to that with one numerical example. Right now I am just giving you guys a broad overview for the purpose of understanding this particular chapter. So primary distribution, what do? We list out all the line items of expenses. Every line item is apportioned to all the departments using what? The ratio of benefits derived, or what we do is we use a reasonable basis, right, to apportion every single line item to all the departments. Clear with this, guys? This is called as primary distribution. After this we do secondary distribution. In secondary distribution, what do? We take the service department overheads and redistribute it back to the production department, right, using services rendered ratio. How do we do it, sir? We have different methods. When to use what method we will be seeing under secondary distribution. And finally, now we have P1, P2, P3 overheads now, and we need to convert this into overhead cost per unit of menswear, ladies wear, kids wear, footwear, all the products a company deals in. How do we do is a subject matter of study in the third step called as absorption. Clear with this, guys? What to do, how to do is what we are going to study and revise in this particular chapter. With this, let's get started with the first step called as primary distribution. Now, in primary distribution, what do? List out all the line item of expense, and now we need to apportion all the line item of expense to all the departments using a reasonable basis. Correct? That is what I have mentioned here in our concept decoder. Look at this. Primary distribution. Here, what do? The basis of primary distribution of overheads, rent and other building expenses. Sir, what is the basis of apportionment? Floor area or a particular volume of a department. Right? Now let us say labor welfare expenses, supervisor salary, all these things. How will I apportion, sir? Maybe on the basis of number of workers. Sir, please don't mug it up. Sir, should I mug up all these things? Absolutely not. In the question, based on the data given, you know which line item has to be apportioned using which base. Whatever you find reasonable, use that. Clear with this, guys? Right? General overheads. Suppose if they have given general overheads, generally, guys, we use direct wages or direct labor hour as the base. Why? If it is general in nature, we always assume human beings are the reason for that expense. So hence we apportion it on the basis of direct wages or direct labor. Depreciation on the basis of capital values of the or the asset value in the respective department. Clear with this, guys? Like this, it just goes on and on. Clear with this, guys? So this is the format of primary distribution, right? Do not worry, we will just go and do a numerical problem. With the help of this numerical problem, right, we will clearly be able to summarize and we will clearly be able to revise and understand the concept of primary distribution. Now, please go to your solved question bank of your CA intermediate syllabus, solved question bank of CA intermediate, and please take question number 1. It's on page number 49. So please take question number 1. Now, the following figures are extracted from the accounts of a manufacturing concern, right? From the accounts of a manufacturing concern of the month of September 20x1. What have they given? Particulars. Now, indirect materials in department P1, P2, P3, S1, S2. Department wise, how much is the indirect material cost? This is not a common cost. Department wise, readily they have given us the figures. Clear with this, guys? Generally, what do? One line item common cost will be that we need to apportion between multiple departments, but we need not apportion the indirect cost, the indirect materials. Why? This is readily available department wise. Clear with this, guys? Right? This figure is given. Next, indirect wages. This is also readily available, sir. P1 department indirect wages is so much. P2, P3, S1 and S2 department wise indirect wages figure is also available here. Clear with this? So indirect material, indirect wages, these two figures are readily available department wise. Next, power and light. this amount, how much is it? 6,000 rupees. Now, this amount needs to be apportioned between all the departments P1, P2, P3, S1, S2 using a reasonable basis. Insurance on assets 1,000. Common cost needs to be apportioned between all the departments. Rent and rates 2,800. Once again needs to be apportioned. Meal charges 3,000 rupees needs to be apportioned between all departments using some basis. Now, depreciation on capital value of assets is 6% per annum. Right? So now look at this. Over and above these line item, they also have depreciation, which is charged at the rate of 6%. From the above information, prepare a primary distribution summary with the following departmental data. First one, what have they given? Now look at this. Look at this. They have given area in square meter. Department wise, how much is the area given? Now, area for what purpose will we use? Rents and rates 2,800 rupees. It's a common cost incurred for all the departments put together. Now, if we have to apportion this 2,800 rupees of rent and rates to all the departments, now the most reasonable base using which we should apportion the rent cost is going to be area. Clear with this, guys? So area is useful. These figures are useful for apportioning my rent cost. So the rent and rates should be apportioned on the basis of 4:4:3:2:1. Clear with this, guys? That's all it is. Nothing more. Next one. Next. Capital value they have given. So capital value, first, for the purpose of insurance, 1,000 rupees, right? I can use capital value as the base. So 100 is to 120 is to 80 is to 60 is to 40. And also for the purpose of depreciation, capital value can be used. Next one. Kilowatt hours is given. Now for what kilowatt, for what will be used is power and light, right? Power consumption, power cost and lightings. Kilowatt hours is the basis for apportionment. Next, number of employees is also given here. Number of employees. Now yes, meal charges is available, right? 3,000 rupees the total meal charges incurred for all the departments put together. So department wise, how much, sir? Use number of employees as the base to apportion. 90 is to 120 is to 30 is to 40 is to 20. Are you guys clear with this? As simple as that. Now use these bases and apportion. Your line item of expense now gets converted into departmental overheads P1, P2, P3, S1 and S2. Clear with this, guys? As simple as that. Beyond that, nothing is there in this sum. Now these are common costs. We used some basis to apportion this, right? It is called as apportionment of overheads. Whereas indirect material and indirect wages are readily available on a department level itself. This need not be apportioned. These costs are called as allocated overheads. What do you mean by allocated overheads? If a particular cost, a line item of cost, is readily allocated or available on a department level itself, where you need not use a basis to apportion, it's called as allocated overheads. If it is a common cost that needs to be apportioned between the departments using some reasonable basis, only that is called as apportioned overheads. Clear with this, guys? So these are all some small terminologies which you can actually, which you should learn in case they might ask an MCQ or somewhere they might ask. So you should be in a position to answer, or a theory question can also come here. Apportioned overheads means a common cost that needs to be apportioned using some basis, whereas allocated overheads means what? So an overhead which is readily available on, right, departmental level. So now look at this. Look at this. So first, indirect material. So how much was the figure? The total of all these things is available department wise. Just copy paste the figure. So here the template is going to be statement of primary distribution, particulars, total. Should write on the basis also. Then list out all the departments P1, P2, P3, S1, S2. Now indirect material, indirect wages. These two are direct allocation. Now these figures you just need to copy paste. 950, 1200, 200. 1500, 400, you just need to write down here. 950, 1200, 200, 1500 and 400. Similarly, here for indirect wages, so 900, 1100, 300, 1000 and 650. The 900, 1100, 300, 1000 and 650. Copy paste. So the sum total is being written here. Clear with this, guys? Next one, power and light. So the next line item is going to be what here? Power and light. Now how much is the figure? The figure is going to be 6,000 rupees. Now, on what basis will you apportion? Kilowatt hours. So, kilowatt hours, right? What is the basis of apportionment? 4,000 is to 4,400 is to 1,600 is to 1,500 is to 500. Right, guys? Correct? So, now, literally, what we can do here, we can just remove these zeros. we can just remove these two zeros in the end. So I can say this is nothing but 40 is to 44 is to 16 is to 5 is to 5. Sorry, 15 is to 5. Right? So look at this. 40 is to 44 is to 16 is to 15 is to 5. Right? Now, so basically we need to apportion this 6000 in this particular ratio. Right? How do we do it? First add up all these things. So 40 plus 44 plus 16 plus 15 plus 5. So it comes out to how much? 120. Right? Now there is a calculated trick to do this. Right? If you've already attended my Evo classes or regular batch, then obviously I would have taught you there. You must be knowing it. If not, if you're learning this for the first time, right, or if you're looking at my lectures for the very first time, there's a calculated trick to do that. Now ideally guys, if you add this up, how much you get? 120. Right? Now literally what will you do? 6000 divided by 120 into 40 will be P1 share. 6000 divided by 120 into 44 will be P2 share. 6000 divided by 120 into 16 will be P3 share, and so on. Now simple. 6000 divided by 120 is a common figure, right? So take your calculator. 6000 divided by 120 is equal to how much you get? 50 rupees. Now this 50 rupees needs to be multiplied with 40. You get P1 figure. 50 needs to be multiplied with 44. You get P2 figure. 50 needs to be multiplied with 16. You get P3 figure, and so on. Guys, correct? So now what we need to do, instead of doing 50 into 40 is equal to, once again 50 into 44 is equal to, instead of 50 into 16 is equal to, no need. Common number 50 needs to be multiplied with multiple figures. What you can do is, 50 is there in your calculator. Yes, just click the multiply button twice. Into. Right? Then what is the first figure? 40. Type 40 and click is equal to, how much you get? 2000. Right? Now don't do anything. What is the second number? 44. Just type 44. That's all. Don't do anything. Just type 44 and click is equal to. Now you get the second figure. So 50 into 44. So 50 was there. Into you clicked 2 times. 40 is equal to, you get the first figure. Right? Next 44 is equal to, you get the second figure. Next type the third number. 16. 16 is equal to, you get 800. Next 15 is equal to, you get 750. 5 is equal to, you get 250. That's about it. So when you want to multiply a common number with multiple other numbers, just take that common number 50, click into. First number is equal to, you get the answer. Second number is equal to, you get the answer. Third number is equal to, you get the answer. Instead of doing 50 into 40, once again 50 into 44, once again 50 into 16, no need. 50 into 40 is equal to, write down. 44 is equal to, write down. 16 is equal to, write down. 15 is equal to, write down. 5 is equal to, write down. One line, you will get all the numbers. Clear with this, guys? This way you can save a lot of time in your examination. Clear with this, guys? Right? Now the third line item, what is it? Insurance on assets. How much is that? 1000 rupees. All right. Now insurance on assets should be apportioned on the basis of what? Your capital value. So 100 is to 120 is to 80 is to 60 is to 40. So you can just remove 1 0 everywhere. So it's 10 is to 12 is to 8 is to 6 is to 4. Right? So 10 is to 12 is to 8 is to 6 is to 4. So clearly mention. So what is the line item? What is the total? What is the basis for apportionment? And then you can apportion it properly. So 10 plus 12 plus 8 plus 6 plus 4. How much is it? If you add it up, you get 40. Now what do we need to do? So 1000 divided by 40 is equal to, how much you get? 25. So this 25 needs to be multiplied with all these figures. Now 25 into 10 is equal to, you get 250. Next 12 is equal to, you get 300. Then 8 is equal to, you get 200. 6 is equal to, you get 150. 4 is equal to, you get 100. Clear with this, guys? Very simple. In exam, you don't have the luxury of time. Use these small tricks and hacks so that you can maximize your time in your exam. Right? Next one, rents and rates. So what is the figure here? 2800. It should be apportioned on the basis of area. Right? So 4 is to 4 is to 3 is to 2 is to 1. So that's going to be your manner of apportionment. So look at this. It's going to be 4 is to 4 is to 3 is to 2 is to 1. So 4 plus 4 plus 3 plus 2 plus 1. How much is that? 14. Right? So now what do we do? 2800 divided by 14 is equal to, you get 200 into 4 is equal to 800, 4 is equal to 800, 3 is equal to 600, 2 is equal to 400, 1 is equal to 200. Are you guys clear with this? That's about it. That's about it. So literally I'm also sharing you the way in which you can do the calculations, use your calculated trick, and save a lot of time in your exam. So all these things are printed and given. Still I'm doing it and showing it to you so that you will be in a position to actually use these calculated tricks in your exam. Next one is the meal charges of 3000 rupees. It should be apportioned on the basis of number of employees, right? So number of employees, what is the basis here? It's 90 is to 120 is to 30 is to 40 is to 20. Right, that is the basis for apportionment. So, or you can also remove 1 0. It's 9 is to 12 is to 3 is to 4 is to 2. Right, guys? So look at this meal charges. So it's going to be 9 plus 12 plus 3 plus 4 plus 2. It's going to be 30. Right? So what do we do here? So 3000 divided by 30 is equal to, you get 100 into 90 is equal to 900. Sorry, 9 is equal to 900. 12 is equal to 1200, 3 is equal to 300, 4 is equal to 400, and 2 is equal to 200. Clear with this, guys, right? Or if you don't want to remove the zeros, you can also do it like that. Absolutely no problem. Clear with this, guys. And finally, do not miss this out. You have depreciation on capital values. So capital value of assets, how much is that? 6% has been given. So now what do we do here? Now very simple, the capital value of all the assets are also given here properly. So now what do we need to do? Be very, very clear, guys. Be very, very clear. Here we are calculating all the overhead costs for the month of September. So 1 month's depreciation is what we need to calculate, or in other words, it is going to be 6%, right, into 1 by 12 into the respective capital value. This is 100,000, means 1 lakh, right? 1,20,000, 80,000, 60,000, 40,000. You will be getting the depreciation. I mean, you will be getting the depreciation figures. Are you guys clear with this? So how much will be the monthly depreciation? It is going to be 6%, 0.06, right, into 1 by 12, right? You get 0.005 into the respective values of assets. You will arrive at the figure, guys. Correct? Right? So how we did 0.06, right, into 1 by 12 is equal to, you get 0.005. Now that amount we need to multiply the respective value. So into 1 lakh, 100 means 100,000. 1 lakh is equal to 500. Here 120,000. So 1,20,000 is equal to 600. 80,000 is equal to, you get 400. 60,000 is equal to, you get 300, and 40,000 is equal to, you get 200. Are you guys clear with this? So literally the depreciation amount for the month of September we have calculated department wise: 500, 600, 400, 300, 200. Look at this: 500, 600, 400, 300, 200. The respective capital value into 6% into 1 by 12, right? If you want, you do it separately also, but that takes a lot of time. That's why I said very simple. So take 6% into 1 by 12. This is a common number that needs to be multiplied with the respective capital values of every single department. You will get the answer. Clear with this, guys? So now if you total it up, P1, P2, P3, S1 and S2, if you total, you will get what? P1 department overheads is how much? 6,300. P2 department overheads is 7,400. P3 department overheads 2,800. S1 department overheads is 4,500, and S2 department overheads is going to be how much? 2,000 rupees. Clear with this, guys? So with this, what has happened? The multiple line items of expenses have lost their identity. In turn, each and every line item has been now converted into P1, P2, P3, S1 and S2 overheads. Are you guys clear with this? So now literally, guys, the total of these line items was how much? 23,000. If you want, you total all these things. This will also be equal to 23,000. 6,300 plus 7,400 plus 2,800 plus 4,500 plus 2,000. If you calculate exactly, this will also be equal to how much? 23,000. Are you guys clear with this? So literally the total overheads will not change. The apportionment is what we are doing here. So at the end of primary distribution, all the line items of your indirect manufacturing costs will lose their identity, and it will now become what? It will now turn into all departmental overheads. Clear with this, guys? That is the objective of primary distribution, successfully achieved. Clear with this, guys? With this, please go and update your library of adjustments. Write down Write down primary distribution. That's all. Please write down primary distribution. That's about it. Clear with this, guys? Now, let's move on to the next one. Let's move on to the next question. The next concept, which is secondary distribution. So that is the second concept that we are going to do. Secondary distribution. So what do we do in secondary distribution? Now, the service department would have got their share of, overheads that needs to be given back to the production departments. Why? The service department exists only for the purpose of providing services to the production departments. So whatever is the share of overheads they receive should be given back to my production departments. Clear with this, guys? Now, there are broadly three different methods. Right? In your concept decoder book, I've clearly mentioned at the end of primary distribution, the overheads are totaled for all the departments. The next step is to distribute the service department overheads back to the production departments. This is referred to as secondary distribution, or also known as redistribution of overheads, which can be broadly done under three methods. What are the three methods? The first method is called as direct redistribution method. The second method is called as step ladder method, and the third method is called as reciprocal services method. Under the reciprocal services method, you have three methods: simultaneous equation method, repeated distribution method, and trial and error method. First, these are broadly the three methods. First, you should know, sir, how to do is one thing, but you should know, sir, when to use which method. Many students do not know this. They randomly use any method. No, you have a rule here. There is a rule of when to use what method. That is very, very important for you, and that is always that is purely conceptual. Clear with this, guys? What is this, sir? When should we use what method? Now, the first method called as what? Direct redistribution method. Now, let us say for example, okay, I will write it down here. So broadly, we have three methods of secondary distribution: direct redistribution method, step ladder method, and finally you have reciprocal services method. Under reciprocal services, you have three different methods. That is fine. First, when to use which method, I will tell you. First one, direct redistribution method. Now, when will I use this particular method? Now, let us say, guys, I have three production departments, P1, P2, P3, and I have two service departments, S1 and S2. Let us say S1 is actually a maintenance department, right? And let us say S2 is a stores department. Clear with this, guys? So S1 is what? A maintenance department. S2 is what? A stores department. Clear with this, guys? Now, what will happen here? Now, you guys tell me, maintenance department, what is their job? Wherever machines are located, whenever there is a breakdown in the machine, this particular S1 department will go and do some repairs and maintenance, correct? Or literally, S1 will provide services only to P1, P2, P3, no? Correct? That is, S1 will provide services only to the production department. It will not provide services to S2. Why? Because only where the machines are located, S1 is going to provide the service. Or literally, S1 is going to provide service only to P1, P2, and P3. So there is no service provided by S1 to S2. Guys, are you guys clear with this? Hence, here in this example, this S1 provides services only to the production departments. How about S2? Stores department, what do? They issue raw material. Obviously, S2 also provides services only to P1, P2, P3. Guys, clear with this? S2 will not provide any service to your S1. Why? Because simply here, sir, S2 is a stores department. It provides services only to the production department. That is where the raw material is required. Why will S2 provide any services to S1? Clear with this, guys? Or in other words, in this particular scenario, S1 does not provide any services to S2. S2 also in turn does not provide any services to S1. I mean, S2 does not provide any services to S1. Or in other words, between the service departments, there is no give or take. Clear with this, guys? Or in other words, each of the service departments are meant only for providing services to the production department. In this case, I will use direct method. Are you guys clear with this? Or in other words, when there is no relationship or give or take between two service departments, in this case, I will use my direct redistribution method. Are you guys clear with this? Clear with this, guys? Right? Now, what is the second method? The second method is called as step ladder method. Right? Step ladder method. When will I use this second method called as step ladder method? Let us say I have three production departments, P1, P2, P3, and two service departments, S1 and S2. Clear with this, guys? Now, let us say S1, let us say is maintenance department, and let us say S2 is canteen department. Now, you guys think and answer. S1, anyways, it provides services. All the service departments, they provide services to production departments. I'm not bothered about that. Anyways, it is meant for that. Now, we are more concerned about the relationship between the service departments. Will S1 provide services to S2? No. Why? Sir, it's a maintenance department. I will maintain only where machines are located. In canteen, machine is not located. Clear with this, guys? So, S1 does not provide any services to S2. Guys, correct? So, S1 does not provide any services to S2. But look at S2. What is S2? Canteen. Now, will S2 provide services to S1? Yes. Why? Canteen. What is the purpose of a canteen? To provide food. Now, will the canteen say, if you are from the maintenance department, I will not provide food? Absolutely not. For all the people in the factory, including the workers working in the maintenance department, the canteen provides food only. Guys, clear with this? So, or in other words, in this case, S2 provides services to S1. Are you all able to understand? In this case, what happens? There is a one-way traffic. I call this as a one-way traffic. There should either be a give or a take between two service departments. Or in other words, look at this here. S2 provides services to S1, but in turn, it does not receive services from S1. Clear with this, guys? So between any two service departments, there should either be a give or a take. Are you guys clear with this? Or in other words, if there is a one-way traffic, traffic, in that case, I will go and use this second method called as step ladder method. How to do, sir? We will be seeing. Don't worry. One numerical problem, all the different variants or the varieties of secondary distribution methods will be seeing. You just listen here right now. So when to use step ladder method? When between any two service departments, there is either a give or a take, or in other words, there is a one-way traffic. In that case, you use your step ladder method. Are you guys clear with this? Right now, let me give you a scenario. You guys tell me whether you will use a step ladder method or not. P1, P2, P3 are there. Let us say I have S1, S2, S3. I have three service departments. Here, S1 provides services to S2. Right? S2 provides services to S3. Right? And S3 provides services to S1. Now tell me, is this a case of one-way traffic? And can I use step ladder method? Think and answer. Now, if you notice, some of you might feel, sir, there is no one-way traffic. Why? Look at this, sir, S1. The problem is with S1. S1 provides a service and it also receives service. Two-way traffic is there, sir. So you cannot use this method. No. Understand one thing. Between two service departments, there should either be a give or a take. Here, if you see, S1 provides services to S2, but S1 receives services from a different department, S3. So between S1 and S2, there is only a give. Right? Between S2 and S3, here there is only a give. And between S1 and S3, there is only a take here. S1 is not giving anything. So between any two departments at a time, there should either be a give or a take, or there has to be a one-way traffic between any two service departments at a time. Clear with this, guys? Hence, this is very much a one-way traffic method only, so you can use your step ladder methodology of apportionment or reapportionment of service departments. Guys, are you all clear with this? A very, very trick question here. Clear with this, guys? Are you all able to understand? So step ladder method will be used when you have a one-way traffic. And the third and the last method of secondary distribution is called as reciprocal services method. Reciprocal services method. Now, let us say I have P1, P2, P3. Three departments and three production departments, and S1, S2, two service department. Sir, S1 is, let us say, housekeeping, right? They will sweep the place, they will do the cleaning and other works. And S2 is, let us say, a canteen department. Now, anyways, S1 provides services to the production departments. S2 also provides services to production departments. Now, I'm not bothered about that. To understand which method to use, we are more concerned about the relationship between the service departments. Now, here, will S1 provide services to S2? Sir, housekeeping, will they go and clean canteen? Yes, they will have to go clean the canteen. And will S2 provide services to S1? Sir, S2 is a canteen department. Will they provide food for the housekeeping staff? Yes. Or in other words, here, there is S1 provides services to S2 and S2 also provides services back to S1, or in other words, guys, there is a two-way traffic. Correct? There is a true two-way traffic when there is both a give and a take between two service departments. In this case, you will go on to use your reciprocal services method. Are you guys clear with this? Under reciprocal services method, you have three different methods. You can use any of the three methods. All the three will only give the same result. Are you guys clear with this? So we are in secondary distribution, where the objective is to reapportion the service department overheads back to the production departments. So we have broadly three methods of redistributing back the service department overheads to the production departments. Direct redistribution method, when will you use? When there is ideally a no traffic. No traffic means what? Between the service departments, there is neither a give nor a take, or in other words, all the service departments provide service exclusively to the production departments. Between the service departments, there is no give or a take. Only then you will use direct method. Step ladder method, between the service departments, you take any two service departments at a time, there should either be a give or a take, or in other words, if there is a one-way traffic, use step ladder method. And when there is both a give and a take between two service departments, that's when we use the two-way traffic, which is nothing but your reciprocal services method. Clear with this, guys? Now, with this clarity, you can just go around and crack any kind of sum. Look at this. This is what I have mentioned. Everything here, whatever we've seen, direct redistribution. So I have clearly condensed and put it here in your study material. It is, everything is there, but it is not in in a very, very structured format. There are things, it runs into paragraphs. I've neatly condensed and look, put it here. So the day before your exam, you're revising direct redistribution, no traffic. Step ladder, one-way traffic. Reciprocal services, two-way traffic. And under reciprocal services, you have simultaneous repeated distribution, trial and error method. I've quickly explained what is what, but how to do that, clearly we will just go and look at one numerical problem. Are you guys clear with this? So on that note, let's get started with one more numerical problem. This is there in your CA Inter solved question bank. It's in volume 1. So please go and take question number 2. Yes, there are all methods here. Okay, guys. Yes. Now, look at this. Question number 2. Now, A Limited manufactures a number of products. It has two production departments, P1 and P2, and the service departments are S1, S2. Clearly, guys, understand, two production and two service departments. The estimated overhead costs for 20x1 and the interdepartmental relationship matrix are as follows. Now, what have they given? Now, look at this. P1, P2, S1, S2. Four departments overall. Two production, two service. S1, service provided by. S1 provides services to P1, P2 as well as S2. Clear with this, guys? What is the ratio of providing service? Sir, overall, sir, S1 department, right? Overall, It provides 40% of its service to department P1, 50% of its service to department P2, and the balance 10% service it provides to whom? Department S2. Clear with this, guys? Now, how about S2? S2 provides 50% of its service to P1, 30% to P2, and 20% of its service to S1. Now, wait. S1, it provides services to S2? Yes, sir. 10% of its overall services is being provided to S2. How about S2? Does it provide services to S1? Yes, sir. 20% of the entire department S2 is actually provided. I'm providing service to actually S1. Or in other words, S1 provides services to S2. S2 also provides services to S1. So clearly there is both a give and a take. This is a clear case of two-way traffic. Ideally, this sum you need to redistribute back the secondary distribution. The secondary distribution, that is the service department overheads, need to be redistributed back to the production department using which method? Reciprocal services method. Under the reciprocal services method, you have three methods. You have your simultaneous equation method, or your repeated distribution method, or your trial and error method. Using any of these three methods only, you should apportion, or in other words, this is a clear-cut case of two-way traffic. Right, so you should only use reciprocal services method. Right, now what are they given? Estimated overheads: P1 department overheads, P2 department overheads, S1 department overheads, S2 department overheads. Or in other words, they themselves have done the primary distribution here. Sir, multiple line items have now been converted into all department overheads. So the primary distribution is actually the starting point for secondary distribution. So right now they have given all these departments. Right now they have given what? They have given all departmental costs. Right now P1, P2, S1 and S2 has been given. What is the objective here? After we conduct the secondary distribution, now S1 and S2 should vanish and I should redistribute it back to P1 and P2. At the end of secondary distribution, I should have only P1 department overhead and P2 department overhead. S1 and S2 should vanish. Correct? That is the objective of secondary distribution. Whatever is the service department overheads should be redistributed back to my production departments. Now, ideally, this sum needs to be solved under what method? Under reciprocal services method. Now, look what they've asked. You are required to calculate the overhead cost for P1 and P2. Or in other words, at the end of secondary distribution, you only have production department overheads, right? Now, using first direct apportionment or direct redistribution method. So first, sir, this is a two-way traffic, sir. Direct method, I will use only when there is no traffic. You are absolutely right. But still they have asked you, despite it is a two-way traffic question, they have still asked you to use direct method, right? Since it is asked, we will do. Single question, all the methods are covered. How to do it, we will be seeing. Next, using stepladder method. And stepladder method by apportioning S1 department overheads first, and number 2 by apportioning S2 department overheads first. How to do that, I will tell you. Next one, reciprocal services method. And under reciprocal services method, you literally have repeated distribution, simultaneous equation, trial and error. So ideally, guys, these three come under your reciprocal distribution method. Your reciprocal services method. Ideally, these are all subcategories of reciprocal services method. Clear with this, guys? Or in other words, one question, all the different varieties of your secondary distribution will be done here. Shall we get started? Yes. First one, guys, direct redistribution or direct apportionment method. What should you do? Very simple. Now, the starting point is what? Primary distribution summary. Sir, how much is the departmental overhead, sir? 7,000, 6,000, 18,000, 8,000. So 7,000, 6,000, 18,000, 8,000. Clear with this, guys? P1, P2, S1, S2. Now, what they are saying, sir, ideally, when will I use, sir? When will I use my this one, direct redistribution method? When there is no traffic between your S1 and S2. That is, there is no give or take between your service departments. Only then I will be using direct redistribution method. In this case, what we need to do, sir, S1, what is the cost? 18,000. Now we are saying, look, direct redistribution method, we only assume in direct redistribution method, we only follow it when my service departments exclusively provide services to production departments. So here, sir, S1, sir, it has provided its services. Overall, this 18,000 ideally should be apportioned in the ratio of 40:50:10, right? But here, since we are doing this sum under direct method, we will just ignore the inter service. The services provided between the service departments will be ignored. Why? Because in direct method there is no traffic, no. So forget this. Ideally, what we need to do, sir, 18,000 rupees is the departmental overheads of department S1. Apportion it between P1 and P2 in the ratio of 40 is to 50. As simple as that. Why? Because direct method is used only when there is no give or take between the service departments. Clear with this, guys? Sir, this is ideally a two-way traffic sum. Yes, this is a two-way traffic sum. Still, they have asked you to actually do the sum under direct method. In that case, you should ignore the services provided between the service departments. Are you guys clear with this? Or in other words, this 18,000 needs to be apportioned in the ratio of 40 is to 50. Right? So, what happens here? Look at this. 18,000 you subtract, apportion it in the ratio of 40 is to 50. So 4 plus 5 is 9. So 18,000 divided by 9 is equal to, you get 2,000 into 4 is equal to, you get, second. So 18,000 divided by 9 is equal to, you get 2,000 into 4 is equal to 8,000. 5 is equal to 10,000. So what we did here, so S1, we removed 18,000 and distributed it between P1 and P2 in the ratio of 4 is to 5. Now what has happened? S1 department overhead has become 0. Clear with this, guys? Next, go on to S2. How much is S2 department overheads? 8,000. Now apportion it between P1 and P2 in the ratio of 50 is to 30. This is to be ignored. Why? We are using direct method, and under direct method the services provided between the service department should not be considered. Clear with this, guys? So apportion this in the ratio of 50 is to 30. Clear with this, guys? So here what do we do here? 8,000 minus 8,000 we need to do should be apportioned the ratio of 50 is to 30. 5 is to 3. So 8,000 divided by 8 is equal to, you get 1,000 into 5 is equal to 5,000. 3 is equal to 3,000. So now at the end of this secondary distribution, what happens? S1 also becomes 0. S2 also becomes 0. And P1 and P2 will now get the share as well. So P1 value will be 7,000 plus 8,000 plus 5,000. How much is that going to be? 20,000 rupees. And how much is P2? 6,000 plus 10,000 plus 3,000. It is going to be 19,000 rupees. So at the end of secondary distribution, what has happened? The service department overheads, service departments have lost their identity and they have become 0, and whatever was the service department overheads have been redistributed back to the production departments. Are you guys clear with this? That was the objective of secondary distribution, and we have completely done it. So direct method is fairly simple. What you need to do, apportion your service department overheads between the production departments only. If there is a service between the service departments, ignore it and directly do it. Are you guys clear with this? As simple as that. Next one, sir. What is the next one? The next one is called as step ladder method. Now what have they asked? First apportion S1 department cost. Very simple. P1, P2, S1, S2. Clear with this, guys? So now what do we do? First apportion what? S1 department cost first. So first, sir, I'm going to apportion, right? S1 department. How much is S1 department cost? 18,000. You reduce it from S1. Right? Now it needs to be S1 provided services to whom? P1, P2 as well as S2. Correct? So it provides services to P1, P2 and S2. But before that, first you tell me, when will we use step ladder method? When there is only a give or a take. Correct? Or in other words, there is a one-way traffic. Only then we will be using step ladder method. Clear with this, guys? Now they have asked us to apportion S1 cost first, which means first S1, sir, I am reducing it. What will we do? So S1 should be apportioned between P1, P2, P3 in the ratio of 40 is to 50 is to 10. Clear with this, guys? Let's go and do it. Right? So 40 is to 50 is to 10. So 18,000 divided by, so 40 plus 50 plus 10, literally you get 100. So 18,000 divided by 100 is equal to 180 into 40 is equal to 7,200. 50 is equal to 9,000. 10 is equal to 1,800. Clear with this, guys? Now what has happened? S1 became 0. Now what happened to S2? S2 had its own share of 8,000 plus now it's got how much? 9,800 rupees. I mean 1,800 from S1. Now what do I do? Totally from S2 I need to apportion how much? 9,800 rupees. Guys, clear with this? Clear with this? Now I will reduce 9,800. Now, guys, understand, this is very important. Now, S2 right? This is S2. Now, once again, actually seeing S2 provide services to P1, P2 as well as to S1, guys, correct? But in stepladder method, what do? We follow stepladder only when, right, there is a give or a take. So S1 has already received from S2 has already received something from S1, so it cannot provide back to S1, guys, correct? If you are following stepladder, so what we do, since we apportioned S1 department overheads first, now when we are redistributing S2 department overheads, we will ignore this 20%. Why, sir? Because S2 has received from S1. If you are following stepladder, you can only receive or give, guys, correct? Since I have received, I will not give anything, so I will ignore this. So whatever is the share of S2 will now be redistributed back to P1 and P2 in the ratio of 5:3. Are you guys clear with this? Why do we do this? Because ideally speaking, guys, this is a two-way traffic sum, but still they asked us to follow one-way traffic. Hence, first we apportion to S1, but S2 received from S1, so it can't give back anything to S1. That's why this 20% now we need to ignore. And whatever is the balance in S2 needs to be apportioned between P1 and P2 in the ratio of 5:3. Clear with this, guys? That's what we are going to do. So now here we have 9,800. It needs to be apportioned between P1 and P2 in the ratio of 5:3. So 9,800 divided by 8 is equal to, so 5 plus 3 is 8, 1225 into 5 is equal to 6125, 3 is equal to 9635. So now what happens at the end of S1, at the end of secondary distribution, S1 18 minus 18 0, S2 8000 plus 1800, right? So you get what? Totally 9800 minus 9800, so this becomes 0. So S1 and S2 becomes 0, and P1 gets a value of how much? 7000 plus 7200 plus 6125, you get 20,325. S2 6000 plus 9000 plus 3675, you get 18,675. This is the value of P2. Are you guys clear with this? So now we have P1 and P2 value only, which means at the end of secondary distribution, the service departments will lose their identity and all the costs are given to production departments. Now, the same question, now we will do it once again under stepladder method, but this time we will apportion S2 first. Clear with this, guys? Now what happens? P1, P2, S1, S2, the primary distribution summary is available. First, you distribute what? S2, right? So first we need to distribute S2 and then only we will distribute S1. So now first let us distribute S2. What will happen here? Sir, S2 we are going to distribute, right? Which means S2 provides services in what ratio? To P1, P2 as well as S1 in the ratio of 50:30:20. So right, so 5:3:2 is the ratio. Now what do I do? 8,000 rupees I have. Reduce this 8,000 and redistribute it to P1, P2 as well as S1 in the ratio of 5:3:2. Right? So how much you get here? 5 plus 3 plus 2 is 10. So 8,000 divided by 10 into 5 is equal to 4,000. 3 is equal to 2,400. 2 is equal to 1,600 rupees. Are you guys clear with this? So the S2's cost has been apportioned between P1, P2 and S1. Now I have to distribute S1's share of overheads. S1, how much is it going to be? 18,000, it had its own share. Plus now it has received 1,600 rupees, which means overall it would have received 19,600 rupees. So this 19,600 rupees needs to be apportioned. But since I have already received from S2, now I cannot give back anything to S2. Why? Because I'm following one-way traffic method, which is stepladder method. Hence what we do here, S1 now, so though it provides services to P1, P2 as well as S2, we ignore this because since we are following stepladder method, I can either give or take. I have already taken from S2, so I cannot give anything to S2. So whatever is the balance lying in S1 needs to be apportioned only between P1 and P2 in the ratio of 40:50 or 4:5. So now this 19,600 should be apportioned between P1 and P2 in the ratio of 4:5. So 19,600. So 4 plus 5 is 9. So divided by 9 is equal to, you get something, 2177.7777 into 4 is equal to, you get 8,711. And 5 is equal to, you get 10,888.8888, or it's rounded off to 10,889. Clear with this, guys, right? And with that, S1 and S2 will be 0, and literally you will only get your P1 and P2 value. But remember, the answers will be different. So why our answers are different? Ideally, guys, this sum should not be solved under your step ladder method, only because this ideally is a two-way traffic. But a two-way traffic sum, we are solving it under a one-way traffic method. Hence, we had to take this particular assumption. First, if you apportion S1, what will happen? Because the second apportionment we are ignoring this S1 value. Here, if you are apportioning S2 first, right? Here we are actually, here we are ignoring S1's services provided to S2. Guys, correct? So that needs to be ignored. Whatever you are actually apportioning next, the last, that needs to be actually ignored for the purpose of calculation here. Clear with this, guys? All these things are happening here because a two-way traffic sum is being solved under one-way traffic. But here, ideally, I wanted to do a single sum that covers everything and show it to you how this works. Are you guys clear with this? And one more very important thing, it's called a step ladder because, can you see this step here? Right? As and when you apportion, look at this. Can you see the step? It forms a step as and when you keep apportioning, and that's the reason why this method is called as step ladder method. Now, let's go on to the third and the most important part of this particular question, which is reciprocal services method. Guys, what do you mean by reciprocal services method? Basically, when there is both a give and a take, reciprocity as they call it, right? You use reciprocal services method. Now, under reciprocal services method, you have repeated distribution, simultaneous equation, trial and error method. There are three different methods under reciprocal services method. In this question, is there a give and a take? Yes. Is there a one-way traffic, two-way traffic, or no traffic? There is a two-way traffic. So the correct method is going to be reciprocal services method. So reciprocal services method can be solved under either of these three methods, right? All the three methods will give you the correct answer only. Right, guys? Now let's go and solve this particular question under the first method of reciprocal services, which is called as repeated distribution method. Shall we go and solve it? Yes. Let's get started here. Let's get started. Repeated distribution method. How do we do it? Very simple, guys. P1, P2, S1, S2. Right? We have these things. Now, this is the question given. This is given in the question. Primary distribution summary is already given. 7,000, 6,000, 18,000, 8,000. These figures are all given in the question. Now, first, what do we do? Now, look at this. Sir, S1 provides services to P1, P2 and S2 in the ratio of 40:50:10. Correct? It provides services in the ratio of 40:50:10. Right. First, apportion the cost of S1 department overhead should be apportioned, remove it and distribute it back to these three guys in the ratio of 40:50:10. Let's do that first. So first, what we need to do here, so this 18,000 we need to subtract and apportion in the ratio of 4:5:1. So 4 plus 5 plus 1 is going to be how much? 10. So 18,000 divided by 10 is going to be 1800 into 4 is equal to 7,200. Right? 5 is equal to 9,000 and 1 is equal to 1800. Clear with this, guys? I have distributed my entire amount of S1 department overheads. So literally 18,000 minus 18,000, S1 value becomes 0. Right? I have given my share to P1, P2 and P3. Clear with this, guys? Now let's go to S2. Now what happens with S2? Sir, S2 provides services to P1, P2 as well as S1 in the ratio of 50:30:20. Right? This is what happens here. So 5:3:2. Now what we need to do, S2 department, it had 8,000 plus now it has received 1,800. Overall it has how much? 9,800 rupees here. Clear with this, guys? So this 9,800 needs to be apportioned between P1, P2 as well as S1 in what ratio? In the ratio of 5:3:2. So 5 plus 3 plus 2 is 10. So 9,800 divided by 10 gives you 980 into 5 is equal to 4,900, 3 is equal to 2,940, 2 is equal to 1,960. So which means what happens at this point, what happens? S2, it had totally 9,800. It gave away the entire 9,800. S2 became 0. Now if you notice what happened, S1 was earlier 0, 18 minus 18. It was happy, but now once again it got a share of how much? 1,960. Clear with this, guys? Right? S1 was happy that it gave away all its cost to the other departments, but once again it has received back a share from S2. Why? Because there is both a give and a take. right? So S1 gave to S2 initially. Now S2 gave something back to S1. Clear with this, guys? Now S2 value is 0, but S1 got a share of how much? 1960. Are you guys clear with this? Now what do we need to do? Sir, we can't have this 1960. Once again, repeat the distribution. Right? Once again, sir, S1 now got a balance, redistributed once again to all the departments in the ratio of 4:5:1. That is your services rendered ratio. So once again, redistribute 1960 in the ratio of 4:5:7. This is why it's called as repeated distribution method. Clear with this, guys? So 1960 divided by 10 is equal to 196 into 4 is equal to 484, 784. 5 is equal to 980, 1 is equal to 196. So now what happened at this point? Now whatever I had with me, S2, S1, 1960, I redistributed back. Now I became 0. But what happened? Now once again, S2 got a share. S2 was 0. Now it got how much? 196 rupees. Guys, clear with this? Now what should I do? Sir, since S2 got 196, once again repeat the distribution back. S2 provides services once again to P1, P2 and S1 in what ratio? 5:3:2. So once again, apportion this 196 rupees back to each of the other three departments in the ratio of 5:3:2. So 196 divided by 10 is equal to 19.6 into 5 is equal to 98. 3 is equal to 58.8 rounded off to 59. 2 is equal to 39.2 rounded off to 39. Now what happened? S2 became 0, but S1 got a share of how much? 3.9 rupees, 39 rupees. Once again, this 39 rupees needs to be apportioned. So S1 provides services to P1, P2 as well as S2. Right? So in what ratio? 4:5:1. Go ahead, repeat the distribution. That's why the method is called as repeated distribution. You need to keep on doing it, right, till you arrive at a minimum value. It can never be 0 because there will always be a give and a take. So I will always, there is a loop here. S1 gives services to S2, it will receive something back. Once again, that you should give it back to S2. Once again, you'll receive something back. It keeps on going till the amount is very small. Once it becomes small, then you can give all the amount to the production departments and close it. Now, in this case, 39 rupees, apportion it back in the ratio of 4:5:1. 4 plus 5 is 1 is going to be 10 rupees. So 39 divided by 10 is going to be 3.9 into 4 is equal to 15.6 rounded off to 16 rupees. 5 is equal to 19.5, right? They have kept it as 19 rupees. And then 1 is equal to 3.9. They have rounded off to 4 rupees. Clear with this, guys? So now, finally, S2 got a share of 4 rupees. Now what they did, so this 4 they subtracted and they are giving it to P1 and P2 equally. Meager amount. Or if you want to, once again, one more iteration you can do. S2, sir, it will also provide services in the ratio of 5:3:2. Once again, you do. If you do that literally, so 5 into 2 by 10, if you do, 0.8 is what you will get as S1's share. That anyways, you can give it off to the production department. Finally, if the amount is small, it can be apportioned between your production departments and you can close it off. Right? Are you guys clear with this? So should I do it equally? No, if you want, you can also apportion it in the ratio of 5:3 and close it off. This rounding off is not a problem. It will not take much of a difference. So finally, what happens in the last part, when the amount is minimum, we actually close it off between the production departments. We don't give anything a share because it is a meager amount. So now what happens? S1 and S2 become 0, right? If you notice here, 8,000 plus 1,800, so 9,800 minus 9,800, it became 0. But once again it got 196 and that 196 was apportioned back. Once again it got 4 and this 4 was apportioned back. Literally it is 0. Similarly here, 18,000 I had, I gave 18,000, became 0. Once again I received a 1960 that I gave back. Right, it became 0. I received 39. Once again, I gave back 39. So literally, there was a give and a take, give and a take, give and a take, and we kept on doing this repeated distribution. So literally, in the process, P1 and P2 got getting something or the other. Guys, clear with this, guys. So now overall, if you see, P1's share of overheads was 20,000 rupees. P2's share of overheads was 19,000 rupees. S1 and S2 became 0. This is called as repeated distribution method. So ideally, the correct way of doing this particular sum with a two-way traffic is only reciprocal services method. And under the banner of reciprocal services method, the first method we saw is repeated distribution method. Simple. Keep on repeating the distribution till the service department overheads become minimum. Once it becomes minimum, apportion everything to your production department and close it off, round off. Clear with this, guys? Are you all able to understand this? So now P1 department share is 20,000, P2 department share is 19,000, S1 and S2 each are left with how much? Nil and nil. Are you guys clear with this? This is called as your repeated distribution method. The next method is called as simultaneous equation method. The next method is called as what? Simultaneous equation method. In my opinion, this is the best method to be followed because it saves a lot of time in your exam. Repeated distribution is also the correct. It gives the same answer only, but it takes a lot of time in your exam. Now, simultaneous equation method. How do you do this? First, it's a three-step approach. Step number one, forming of equation. Now, guys, if you see, originally as per the secondary distribution, primary distribution summary, S1 department had a share of how much? 18,000 rupees, the S1 department overheads. S2 department overheads is how much? 8,000 rupees. Clear with this, guys? Right? Now, let us say S1 departments, let us keep it as X. S2 department, let us keep it as Y. Right? So S1, let S1 be X and let S2 be equal to Y. This is for the purpose of framing an equation. Now guys, think and answer. Can I say X, that is S1 department's total overheads, how much is it? Can I say it is going to be 18,000 rupees plus it will receive 20% of Y, that is S2 department overheads, guys, correct? Or S1 department's total overhead is going to be its own share 18,000 plus the share it's going to receive from Y, so 18,000 plus 0.2 Y. Guys, clear with this, right? So can I say here S1 is what? X is equal to 18,000 plus 0.2 of Y. Guys, agreeing with me? Because I have my own share plus I don't know, I will also be receiving 20% of Y. Okay, perfect. So then what is Y, sir? Y is equal to its own share 8,000 plus it will receive 10% of S1, so 0.1x. Guys, are you clear with this? So here literally, sir, what is S2 department? Y's overheads, how much is it? Sir, its own share 8,000 plus it receives 10% of S1 department overheads. Are you clear with this? So now for me to get the X value, I need to know the Y value. Okay, so how much is the Y value? For me to know the Y value, I need to know the X value, or in other words, it is a loop. That is why we kept on doing this repeated distribution. Now, instead of wasting the time, if we frame the equation and solve it, we will now be able to clearly arrive at how much is the X value, how much is the Y value. Directly, it can be apportioned. Sir, how to do that? I will tell you. Do not worry about it, right? So now, these two are the equations which you first need to form. So X is equal to 18,000 plus 0.2 Y. Y is equal to 8,000 plus 0.1 X. Are you guys clear with this? So the first step here is to frame the equation. X is equal to 18,000 plus 0.2 Y and Y is equal to 8,000 plus 0.1 X. Are you guys clear with this? Now, sir, how can I solve the equation, sir? Simple. This is the first equation. Let us take this as the first equation and let us take this as the second equation. Now simple, X is equal to what? 18,000 plus 0.2 Y, correct? Right? And Y is equal to what? 8,000 plus 0.10 X. Guys, now instead of X, I will rewrite, sir, X is equal to anyway, sir, 18,000 plus 0.2 Y only, no, sir. So I will substitute the equation 1 in equation 2. If you want, you can also substitute equation 2 in equation 1. So equation 2 is what? Y is equal to 8,000 plus 0.1 X, right? Instead of X, I will know that X is equal to 18,000 plus 0.2 Y. So instead of X in the second equation, replace it with 18,000 plus 0.2 Y. So here, so the second equation will look like Y is equal to 8,000 plus 0.1 of X. No, instead of X, I will write it as 18,000 plus 0.2 Y. Are you guys clear with this? So now Y is equal to 8,000 plus, so 0.1 into 18,000 becomes 1800 and 0.1 into 0.2, it becomes how much? 0.02 Y. Are you guys clear with this? So literally y is equal to 8000 plus 1800 plus 0.02y. So the entire equation is written in terms of y. So now solve and arrive at the y value. So literally guys, 8000 plus 1800 gives you 9800, right? And y you have here 0.02 y you have here. So 0.02, if it goes to the other side, it becomes minus 0.02. So y minus 0.02 y, or 1 minus 0.02 becomes 0.98. So 0.98 y is equal to 9800, or y is equal to 9800 divided by 0.98. You get how much? 10,000 rupees. So y is equal to 10,000. Clear? Now we got this value. Sir, what is this 10,000? Wait, I will tell you. Don't worry. Right? So y is equal to 10,000. Now, how much is x? X is equal to 18,000 plus 0.2 of y. Now, anyways, y value we got. So, x is equal to 18,000 plus 0.2 of 10,000. So, 0.2 of 10,000 is 2,000. So, x is equal to 18,000 plus 2,000, which is equal to 20,000 rupees. So, literally, we got y value 10,000, x value 20,000. Sir, with this, what should I do, sir? Now go to the last and the final step, apportionment. Step 1, forming the equation. Step 2, solving the equation. Step 3, now go to the apportionment sheet. Simple, guys. Now what do we do? P1, P2, S1, S2, primary distribution summary, given figures. Now first, S1, you need to distribute, right? S1 provides services in the ratio of 4:5:1. Now here, how much is the S1 value? 18,000. You don't distribute 18,000. You distribute, what is the X value we found out? 20,000. That 20,000 you now need to distribute in the ratio of 4:5:1. How much is it? So 20,000, 4 plus 5 plus 1 is 10, divided by 10 is equal to 2,000, into 4 is equal to 10,000, 8,000. 5 is equal to 10,000, 1 is equal to 2,000. So you distribute this 20,000 rupees, right, between P1, P2 and S2. Clear with this, guys? Next, S2. Now, what is the S2 value? 10,000 rupees. Now put this 10,000. Now actually seeing 8,000 plus 2,000, exactly it is matching with 10,000, right? How? That's why by doing this equation, we predicted that, look, y is 10,000, means what? It has its own share of 8,000, plus it will be receiving 2,000 from x. We predicted. How? Mathematically we calculated with the equations. That is the y value. Clear with this, guys? So now we are going to distribute 10,000 and apportion to the ratio of 5:3:2. So that's nothing but 5,000, 3,000 and 2,000. Clear with this, guys? Now look at this. S1, it originally has how much? 18,000, plus it receives 2,000 rupees from S2 in future. Guys, correct? Now this 2,000 rupees which it is going to receive from S2 in future was already predicted using these equations, and that's why initially itself we actually distributed how much, guys? 20,000 rupees. Are you all able to understand? So overall, S1 we had to distribute 20,000. Why? It has its own share of 18, plus this equation, mathematically it predicted that it is going to receive 2,000 from S2. This way we calculated, and straight away one apportionment we actually distributed S1 and S2 and arrived at the P1, P2 value. Are you guys clear with this? How much is P1 and how much is P2? 20 and 19,000. This was the same answer we got under repeated distribution method. Or in other words, guys, very simple. Here x is equal to 20,000, no, right? What is this 20,000, sir? I will tell you. This 20,000 is nothing but very simple. Look at this. Or let me just take y. Y is equal to how much? 10,000. This 10,000 is nothing but, look at this, the sum total of all the repeated distributions here. S2, 9,800 plus 194 plus 4. I did 3 distributions, right? Right? So 9,800 plus 196 plus 4. How much is it coming out to? 10,000 rupees. So totally, look, first I distributed 9,800. I received back something. Once again, that 196 I redistributed. Once again, I received 4. That 4 rupees I redistributed back again. Guys, clear with this? So whatever I'm going to redistribute it, get back, and once again redistribute and get back. All these things were predicted through this equation, and directly it said, look, you have 8,000. Plus totally you are going to get 2,000 from your S1. So overall you need to distribute 10,000. Directly you distribute. Similarly, x value is 20,000. How did you get this 20,000? Look at this. Look at this. 18,000 first we distributed, right? Then we distributed 1960. Then we distributed 39. Add up 18,000 plus 1960 plus 39. How much you get? 19,999. This 1 rupee round off was there. Actually, this is 20,000. Or in other words, this equation, simultaneous equation method predicted, look, S1, I know you have 18,000 rupees as your share, but in future you will be receiving something from S2 also. I am factoring everything in no account and clearly telling you, look, totally 20,000 is the amount you are going to apportion as a whole. Right now itself you distribute it in a single line item. Are you guys clear with this? So what is going to be the total amount that I have to redistribute is what we calculate with the equations, and a single shot we actually go ahead and do the apportionment. Are you guys clear with this? And that is exactly what your simultaneous equation method does for you. Clear with this, guys? Answer is going to be exactly the same. Clear with this, guys? So that is all about it, right? Now this trial and error method is actually one mocha method, right? It is not a very great method and all. Why? Because this is nothing but a mixture of your repeated distribution method and your simultaneous equation method. I will tell you what they do. Trial and error method, what they do? They do the repeated distribution only on what they do. They carry out the repeated distribution on your service departments. What are the service department? S1, S2. Now you guys tell me, what is the share? S1 has a share of 18,000. S2 has a share of how much? 8,000. Correct? Now look at this. S1 provides services to S2. How much? 10%. S2 provides services how much? 20%. Guys, correct? So look at this. We know here. So between S1 and S2, S1 provides 10% of its services to S2. S2 provides 20% of its services to S1. Right? Now what we did? First, now S1, right? What is the share of service that S1 provides to S2? So 10% on 18,000. So S2 will get how much? 1800 rupees. Or in other words, overall, literally, I will reduce 18,000 here in S1, right? And I will give S2 a share of how much? 1800. Balance I will give to P1, P2, P2. Yeah, that I am not bothered here. In trial and error, I am only capturing S1 and S2 first. Clear with this, guys? So I actually apportion 18,000, and how much S2 will get a share? 1800. Now S2 would have got how much? 8,000 plus 1800, 9,800. Out of this 9,800, 20% once again goes to S1. So 9,800 into 0.2. How much is it? 1960. So now S1 gets how much? 1960. Now once again, out of this 1960, what happens? S1 will give 10% to S2. Guys, so 10% of 1960 is 196. Are you all clear with this? So now once again, what happens? This 1960 gets reduced, right? And out of this 10% goes to S2. Here also S1 we had 9,800. We reduce it. Clear with this, guys? So out of this 20% we gave to S1. Now S1 got 1960. Out of this, the entire amount we reduce, apportionate to P1, P2 and S2, right? But S2 share alone we are capturing. P1, P2 we separately do it, right? How much is the share? 196. Now once again, 196 who has received? S2 has received. Now out of this 196, so 20% they will give it to whom? They will give it to S1. So S1 gets how much? 39.2 rupees roughly here. I mean, it's not it's not approximate, it is the correct figure, right? So 196 gets removed and S1 gets a share of 39.2. Now once again, what happens? 10% of this 39.2 I remove. 10% of that, what happens? I receive back. S2 receives back from whom? S2 receives this back from your S1. Guys, clear with this? And once again, on this 3.92, what happens? 20% I provide. So roughly it's 0.784. So roughly it's around 0.8. Clear with this, guys? And here you round off and give back the remaining to your production departments. Or in other words, overall, if you notice, what is the sum total that you need to redistribute S1? 18,000 plus 1960 plus 39.2 plus 0.8. If you add, overall you will get how much? 20,000 rupees. Clear with this, guys? How about S2? 8,000 plus 1800 plus 196 plus 3.92 plus 0.08. Literally you get how much? 10,000. So here, using repeated distribution, they first calculate how much is the amount of S1 and S2, right? So calculating the amount of S1 and S2, it is like X and Y value. This is a concept actually similar to your simultaneous equation method, but the manner of calculating S1, S2 is through repeated distribution method. Are you guys clear with this? Right here, first they calculate what? Under repeated distribution method, they calculate the S1 and S2 value. Guys, clear with this? And having found this, they apportion it and they'll say, okay sir, finally I now found out S1, though it has 18,000, right? It will give and take, give and take, give and take. Finally, S1 has a share of 20,000 rupees, sir, right? And S2 has a share of how much? 10,000. This is what we calculate there. X is 20,000. Y is 10,000. This is nothing but S1 and S2 value. Here we used mathematical equation, algebra to calculate. Here they are using repeated distribution to calculate the X and Y value. And once they calculate, now they apportion it. Clear with this, guys? What do they do? Simple. P1 and P2 has how much? 7,000 and 6,000. Guys, clear with this, guys? Right? Now, what happens here? Now, how much is S1 value? 20,000. Now, out of this 20,000, right, literally 10% will be given to S2. Only the 90% component will go to the production departments. Guys, correct with this? So the 90% of the 20,000 is apportioned in the ratio of 4:5. Where did you get this 4:5? This 4:5 is the services rendered ratio here. Are you guys clear with this? This is one roundabout method. Guys, instead of this a time waste method, look, you did all these things, right? In your trial and error method, while doing this under repeated distribution, you could have added 2 more columns, P1, P2. Whenever you are distributing, calculate parallelly P1, P2 value also. By the end here itself, you would have got a P1 value, P2 value. But they are saying they will do the repeated distribution only on S1, S2, arrive at the S1, S2 value, then they will do the apportionment. It is one waste method. Literally, it's one waste method, right? But anyways, in exam, my preference, I would tell you, please follow simultaneous equation method if the question is silent, because two-way traffic, any of the three methods under your reciprocal services can be used. In my opinion, I would suggest you to use your simultaneous equation if the question is silent. So literally, how much is this? 90% of 20,000. So 20,000 into 0.9 is 18,000, right? In the ratio of 4:5. So how much does that come out to? So 4 plus 5 is 9. So divided by 9 is equal to 2,000 into 4 is equal to 8,000. 5 is equal to 10,000. You get this. Similarly, S2. Sir, 10,000 rupees is the value of S2. Out of this, so 20% I will give to S1, which means the remaining 80% is only available for my P1 plus P2. So, which means 80% of 10,000 is 8,000. This 8,000 should be apportioned in what ratio? In the ratio of 5:3. Look at this, the ratio of 5:3. Clear with this, guys? So 8,000 in the ratio of 5:3 is how much? 5,000, 3,000. So 5,000, 3,000. You add up. So P1 share is 7,000 plus 8,000 plus 5,000. It's 20,000. P2 share is 6,000 plus 10,000 plus 3,000. It's going to be 19,000. So literally P1 and P2 gets a share of 20 and 19. That is exactly what we calculated under the previous method, 20 and 19, which is going to be what? Your simultaneous equation. And once again, the same is the answer under your repeated distribution method also. Guys, clear with this? So under the 3 different models of your secondary distribution method, right, you only get the same answer. Are you guys clear with this? So with this single question, we have covered all the different methods of secondary distribution, and that's about the area of your secondary distribution. So please go and update your library of adjustments. Write down, please write down secondary distribution hyphen all methods. Secondary distribution hyphen all methods. Now, let's move on to the next and the last part of our overhead accounting process, which is called as absorption. Now here, what do we do? Now, on one side, we have all the production department overheads, P1, P2, P3, right? And on the other side, we have all the products. In our example, it was menswear, ladies wear, kids wear, and footwear, right? I'm just going back to the example which I had given you. So at the end of secondary distribution, I have all the production department overheads using a procedure called absorption. I need to convert these bulk figures into overhead cost per unit of menswear, overhead cost per unit of ladies wear, overhead cost per unit of kids wear, and overhead cost per unit of footwear. Clear with this, guys? How am I going to do this is what we are going to see in this particular third phase called as absorption. Now guys, now let me just take a different example, right? A numerical example with figures. Now, let us say at the end of secondary distribution, this was the figure which I had, that is secondary distribution summary. So line item of expenses got distributed to all departments, primary distribution. Then the secondary, the service department overheads got reapportioned back to my production department, secondary distribution. Now at the end of secondary distribution, I got, sir, P1 department overhead was, let us say 20,000, and P2 department overheads was, let us say 15,000 rupees. Now, in my P1 department, what is the total share of P1 department's overheads? 20,000. P2 department overheads, what is the total share of your overheads? It was 15,000 rupees. Now, let us say I noticed that the total labor hours spent in department P1 was 5,000 labor hours. And let us say in department P2, I spent a total of 3,000 labor hours, right? Now, can I say, right, sir, for every hour spent in department P1, what is my overhead cost? 20,000 divided by 5,000. How much is it? It is going to be rupees 4 per hour. And here it was 15,000 department P2 divided by 3,000. It was rupees 5 per hour. Clear with this, guys? Sir, how can we do like this, sir? Simple. Now guys, in department P1, I noticed that overall 20,000 rupees is the cost incurred in, overhead cost incurred in department P2. I also noticed, sir, department P1, I'm sorry, I'm talking about department P1, 20,000 rupees the cost incurred in department P1, and 5,000 hours were actually spent in department P1, right? Now, somewhere I have to use some reasonable basis to actually apportion these P1, P2 costs to my and arrive at my overhead cost per unit. So now first I identify labor hour as the base, because as we saw here, now look at this, we have P1, P2, P3, or in other words, we have production department overheads. These are bulk figures which needs to be converted into overhead cost per unit of the products I deal in. Now, for me to bridge this gap, I need to use some basis to actually convert these bulk figures into per unit figures, right? Now, let us say this company, this particular company feels that labor hours, let us say they are labor centric, they are more driven by labor hours. So manual labor is more that drives the overhead cost for this company. They find labor hours as the basis for incurring your overheads. So they are saying, sir, in department P1, I incurred 20,000 rupees, and totally in department P1, 5,000 hours were spent, which means for every hour spent, I should apportion, or I should give a share of 4 rupees as overheads, which means for every hour spent, 4 rupees is the overhead cost which is charged. Guys, clear with this? Now, sir, exactly, sir, every hour 4 rupees is only incurred. It's not like that, but I'm using some basis to arrive and express overhead per something. Clear with this, guys? When you are expressing overhead per something, it is called as absorption rate. Are you all able to understand? So absorption rate means what? Expressing your overhead per something, it is called as absorption rate. Now in this question we used labor hours as the base, or as the base quantity as we call it. Now please understand, overall, sir, can I only use labor hours? No, there are 6 different base quantities that can be used as your basis for absorption rate, right? What are they? We will be seeing it in a few minutes from now, but as of now you just understand labor hours was one example I took. It could be machine hours, or you can even take material cost, labor cost, prime cost, or you can take units. There are 6 methods. What are they? We will be seeing it in a few minutes from now. But first of all, this company identified labor hours as the basis, or the base quantity for apportionment of overheads. And P1 department, they are saying, sir, for every hour a product spends in P1, I will give it a share of 4 rupees. For every hour a product spends in P2 department, I will give it a share of 5 rupees. Clear with this, guys? Now, what we do here is, now let us say I manufacture two products, A and B. Now, every unit of A passes through both P1 and P2. Let us say every unit of A spends 3 hours in department P1 and 2 hours in department P2. Clear with this, guys? Now, what will I do? Sir, product A, it spends 3 hours in department P1. Every hour spent in P1 will be given a share of how much? 4 rupees. Guys, correct? So I will give it a share of 4 rupees, and every hour spent in P2 will be given a share of how much? 5 rupees. So which means product A, what is the overhead here? P1 overhead is 3 into 4, which is 12 rupees. P2 overhead is 2 into 5, which is 10 rupees. Or in other words, overall, the overhead cost per unit of product A is going to be 12 plus 10, which is going to be 22 rupees. Now, how about product B? Sir, every unit of product B, this also passes through both the departments P1 and P2. But let us say it spends 2 hours in P1, 3 hours in P2. Simple. Every hour spent in P1 will be given a share of 4 rupees. Every hour spent in P2 will be given a share of how much? 5 rupees. So it's going to be 8 here, 2 into 4, and here it's going to be 3 into 5, which is going to be 15 rupees. Overall, your product B will be given a share of how much? 23 rupees is the overhead cost per unit. Are you guys clear with this? So now what we did, we took labor hours as the basis. Step number 1, we calculated the absorption rate. Guys, are you clear with this? Now we calculated the absorption rate and found out, right? So overall, production department P1 overheads is 4 rupees per hour. P2 department is 5 rupees per hour. Step 1, we calculated absorption rate. Step 2 was charging of overheads to products. Now, product wise, I knew how many hours they spent, every unit of product, how many hours they spent in the respective department. I charged it with the respective absorption rate, and this way I calculated the overhead cost per unit of A. With this, the objective of this chapter has been achieved. Guys, are you all clear with this? So now what we did, the bulk figures now got converted into overhead cost per unit. Clear with this, guys? And with this, the objective of this chapter is to calculate overhead cost per unit. So I calculated the overhead cost per unit of A, overhead cost per unit of B. Like if suppose they have 4 products, menswear, ladies wear, kids wear, footwear. For each of the 4 products, we would have calculated. Are you guys clear with this? And that's about this particular process of absorption, which is the third phase here. So please understand here, in this case, what we do, absorption is a 2-step procedure. Step number 1, calculating the absorption rate. Step number 2, charging of overheads to the products. How do you charge it? Sir, product A spent 3 hours in P1, 2 hours in P2. So 3 into 4 plus 2 into 5. Overall, I get the share of overhead cost per unit of the respective products. Are you guys clear with this? As simple as that. Beyond that, there is nothing great here. Now, sir, why did we use labor hours here as the basis? If you notice, this figure was readily available both in bulk total as well as it was also readily available on a per unit level. Now, in absorption, what was our objective? We had to convert these bulk figures into overhead cost per unit. Now, we used it using a particular bridge, right, which was readily available both in bulk as well as on a per unit level. In this case, labor hours was readily available both in total as well as on a per unit level. We use that as a base to charge the overheads to the product. So in this case, labor hours was used as a base to charge your overheads to products. Are you guys clear with this? So now, labor hours only, sir, is labor hours the only base that can be used? No, there are overall 6 different base quantities that can be used for absorption of overheads. What are they? I will be telling you in a few minutes from now. But understand, this is the third step of overhead procedure, which is going to be your absorption, wherein first, step 1, you calculate the absorption rate, and step 2, you charge the overheads to the products. This is what I have clearly explained in our concept decoder. Absorption of overheads. Absorption is the last step in overhead accounting and is the process through which overheads in the production department is given to the products produced. I've neatly condensed and put it here. Now look at this. The absorption process has 2 steps. Step number 1, calculation of absorption rate. What is this? Overheads divided by base quantity. And step number 2, charging of overheads to products. What is that? Absorption rate into the base quantity consumed by the respective product. Simple, absorption rate into the base quantity consumed. So product A spends 3 hours in department P1 and every hour should be charged with an overhead cost of 4 rupees. So 3 into 4, 12. Here it's going to be absorption rate is 5 rupees and every unit spends 2 hours in department P2. So 2 into 5 is going to be 10 rupees. Guys, are you all clear with this? So here step number 1, calculation of absorption rate. Step number 2, charging of overheads to products, which is nothing but absorption rate into your base quantity consumed for this particular product. Instead of labor hours, it could also be machine hours. In that case, overall, sir, what do I have? So your departmental overheads divided by your base quantity, machine hours, you will arrive at the absorption rate per machine hour. Guys, clear with this? And then you will absorb it accordingly to the product. So product wise, how many machine hours I spend in the respective departments, based on that you apportion it. Are you guys clear with this? And that's about the concept of absorption. Are you all able to understand? Yes. Now clearly, guys, product A, let us take. Now product A's full manufacturing cost is what? Material, labor, direct expenses and the production overheads. Now the first 3 are prime cost components readily available on a per unit level. They are waiting with the figures. Now to this, if I add this 22 rupees, I will be able to get my full manufacturing cost. And once I get my manufacturing cost, now with this I can properly value every unit of my stock and apportion my total manufacturing cost into cost of goods sold and closing stock. With this I can achieve the overall objective of stock valuation and profit computation. Similar thing goes for product B also. So product wise, you will be able to arrive at your stock valuation and all, and overall you will be able to compute what is the profit for the company. Are you guys able to understand? This is the third step of your overhead accounting, which is called as absorption. Are you all able to understand? Yes. Now one very important thing that I want to tell you here, this overhead absorbed, right, this figure that we saw, this is the figure. Absorbed overheads is actually the figure that ideally appears in your cost sheet. So this is what I have kept in this particular segment called as doubt busters. It should be noted that production overhead absorbed and not the production overheads incurred is considered while preparing the cost sheet. Clear with this, guys? So the overhead absorbed, is only considered in your cost sheet. More details about that we will be seeing in the next segment of discussion, wherein I will be talking about your predetermined rate, actual rate and all. What is that? We'll be seeing quickly. We will recapitulating that. Clear with this, guys? With that, we have completed the third step of the overhead accounting process, which is called as absorption. So 3 steps in your overhead accounting process. What are they? Step number 1, this is going to be your step number 1, which is your primary distribution. Line items of all your indirect manufacturing costs are apportioned between all the departments. Then step number 2, secondary distribution, where the service department overheads are redistributed back to the production departments. And step number 3, your production department overheads are apportioned to all the products. We calculate the overhead cost per unit by using a base quantity, which can be any of the 6 base quantities which we are going to see. Clear with this, guys? It's a 2-step procedure. The last step is called as absorption. We have a 2-step procedure. What are they? Step number 1, calculate the absorption rate. Absorption rate, how will you calculate? Your overheads, departmental overheads divided by the base quantity, right? Where you get the absorption rate. And step number 2, your absorption rate into base quantity consumed. So this way you charge it to the products and you arrive at the overhead cost per unit of the product. Now for each of the products, the prime cost components are readily available. To this you add your overhead cost per unit, you will arrive at the full manufacturing cost, and with that you are achieving the objective, the first objective, which is going to be what? It is going to be the first objective of this entire subject, which is stock valuation and profit computation. As simple as that. Clear with this, guys? Right? Now technically speaking, procedural aspect, this is about it. But now when it comes to absorption, there are some advanced level, there are some advanced concepts with respect to absorption. What are they is what we are going to see here. This is where the concept of absorption costing comes into picture, which is very important and critical from an examination perspective, as well as this forms as one of the backbone for this entire subject. Right? Now before that, first I told you this base quantity in our question, we took it as labor hours in this example. Now can we only take labor hours? I told you instead there are 6 different base quantities which can be used for the purpose of absorption. What are they? We will clearly go and see this in our concept decoder book. Now look at this. 6 different base quantities that can be used. Labor hours, machine hours, material cost, labor cost, prime cost, production units. Now what I will do is, I will put a bracket here, labor hour, machine hour. These two are hours. Material cost, labor cost, prime cost, these three are figures, rupees, and production units, it is in units. Now guys, what is it? Labor hour rate. How will you calculate the absorption rate? Very simple. So just now we saw overheads, right, divided by labor hours. You will arrive at what? The absorption rate. 5 rupees per labor hour is what you will get. Guys, clear with this? Right? Next, sir, instead of labor hours, I want to use machine hours. Yes. Who will use? Maybe if a particular company is heavily mechanized, they have advanced the level of production where they use robotics and all. Sir, manual labor is less. Significant portion of my overheads is actually driven by my, by your machine hours, sir. Right? In that case, I use machine hour as the appropriate base quantity for charging overheads to products. In that case, how will I calculate my absorption rate? Overheads divided by machine hours. I arrive at the absorption rate per machine hour, 5 rupees per machine hour, or so on. Right? Let us say every product spends, let us say product A spends 3 hours in my department. So 3 into 5, 15 rupees will be the overheads I will charge. Are you all clear with this? So in this case, how will you charge your overheads here? Simple. So first you will arrive at the absorption rate per machine hour. Right, and this needs to be charged to the overheads, so to the particular charge the products by using the appropriate base quantity, which is the machine hour. So if a particular product spends 10 hours in my department, 10 machine hours, so what I will do, for each of the 10 hours I will charge it with my absorption rate. Are you guys clear with this? Exactly the same what we saw here, exactly the same. Instead of labor hours, you can use machine hours. Right? Basically guys, only one thing, whatever you use as the base quantity should be available both in total as well as on a per unit level. If it is available, it can bridge the gap of converting these bulk figures into per unit figures. As simple as that. That is the logic. Next one, guys. Next one. Now, material cost, labor cost, prime cost. What is this? You can also calculate the absorption rate as a percentage of material cost. In this case, what will you do? Simple. How will you calculate this overheads? It's going to be overheads divided by material cost. Now, how do we do it, sir? For example, let us say it is just an example which I am giving you, right? Let us say in P1 department, right? Now, I'm just giving you guys an example of one department, P1 department. Let us say the secondary distribution summary, or in other words, the overheads, right? I'll put it as overheads here. Overheads of this department was 20,000 rupees, right? And let us say, sir, in this department overall, sir, the cost is significantly driven by material cost. Example, I'm telling you. So the overall material cost spent in this particular department is, let us say, 10,000 rupees. Clear with this, guys? Now, I want to use material cost as the basis for apportionment of this particular overheads. Now, what will I do? I will calculate the absorption rate. Absorption rate is overheads divided by material cost. Now, the numerator is in 100. The denominator is also in, the numerator is in rupees. The denominator is also in rupees. Guys, correct? So when you use the same expression, the numerator and denominator, then you will express it as a percentage. So I will say, sir, overheads is 20,000 when my material cost is 10,000. So which means the absorption rate is 20,000 divided by 10,000 into 100. So I will say, sir, overheads is going to be 200% of my material cost. Are you guys clear with this? This is how I express my absorption rate. How much is it going to be? 200% of my material cost. Now, let us say I have a product A. Now, product A, the direct material cost per unit of product A is, let us say, 6 rupees, which means the production overheads, right, of department P1 share is going to be 200% of material cost, which means for this product A, what is the material cost? 6 rupees, sir. So its share of overheads is going to be 200% of 6, which is going to be 12 rupees. Are you clear with this? Or in other words, literally here, the bridging factor, the base quantity that I used was material cost. This figure is readily available in total as well as available on a per unit level. So using this, I expressed the absorption rate, and I found out absorption rate is generally, sir, P1 department overhead is 200% of the material cost, which means what will I do, right? I arrive at the absorption rate. So product wise, how much ever is the material cost, apply 200% of that. That is going to be the product wise share of overheads. As simple as that. Are you all clear with this? And this is how we need to calculate. Clear with this, guys? Since both the numerator and the denominator are in rupees, we express this as a percentage. Look at this. So material cost rate, how will we calculate? My overheads divided by material cost into 100. So the expression is percentage of direct material cost. No sir, suppose my company is labor driven, right? In that case, I want to use labor cost as the basis. Perfect. What will be the formula? Overheads divided by labor cost into 100. So you will say absorption rate is 200% or 100% or 150%, whatever it is, of your direct labor cost. On a per unit level, you have the direct labor cost also. On that, you apply this percentage, you will charge the overheads to products. Are you guys clear with this? Or, sir, I want to use both material plus labor as the base quantity. Why? Because my overheads is driven by both material and labor. If you add that, you get prime cost. You can also use prime cost as a base quantity. In that case, how will it look like? Overheads divided by prime cost into 100, and you will arrive at the absorption rate, which is expressed as a percentage of your prime cost. Clear with this, guys? So literally, these three are expressed as a percentage of rupees. Are you clear with? Are you guys clear with this? Are expressed as a percentage of material, labor, or prime cost. Reason being that you use the same unit of measure, which is being rupees, in both the numerator and denominator. As simple as that. And finally, you can also use production units method, which means what? Sir, I don't want all these things. Units itself is the base quantity. Perfect. You can use simple instead of this. Let us say in department P1, the total overheads is 20,000 rupees. 20,000 rupees. Let us say the total units that I manufacture in department P1 is going to be, for example, I am telling you, for example, let us say it's going to be 2,000 units. Which means per unit, how much is going to be my absorption rate? So 20,000 divided by 2,000. So 10 rupees per unit is going to be my absorption rate. So every unit that passes through my department, I will charge it with an overhead cost of 10 rupees. So here directly the absorption rate is expressed as per unit. Are you clear with this? As simple as that. So there are 6 different base quantities that can be used for your absorption purpose. What are they? The first 2 are in hours, machine hour and your labor hour, machine hour rate. Then 3 rupees, what are they? Material cost, percentage of material cost or labor cost or prime cost. And finally you have production units method. Are you guys clear with this? With this, you can actually perform your absorption. You can perform the third step, which is your absorption. So there are 2 steps inside this absorption. What are they? Step number 1, calculating of absorption rate. Step number 2, charging the overheads to products. And as simple as that. Clear with this, guys? Now on this note, let us go and do one numerical problem. Right? So in your CA Inter solved question bank, so please take question number 7. Please take question number 7. See, for marathon purpose, I'm selectively picking and doing only a few sums which are kind of comprehensive, or maybe which represents the concepts, right? I think it's 1 second. Sorry, question number 6. Question number 6. Right? So please take question number 6. So in our regular and exam-oriented batches, we do all the questions. So here we are doing some selective questions just for the sake of revision. I take some good questions which cover the concepts predominantly, right? Now look at this. AC Limited is a small company that undertakes a variety of jobs for its customers, right? And the budget P&L statement for the year ended 31st of December is as follows. Sales figure is given. Cost, material, wages, subtotal, prime cost, fixed production overheads, you add it, you get your production cost. That if you add your selling, distribution and admin, you get your total cost. Sales minus total cost gives you your profit. Now budgeted data is available. Labor hours for the year, machine hours for the year, number of jobs. Basically, it could be a unit or a job costing. Basically, it's number of units or jobs, 300 units or 300 jobs. An inquiry has been received and the production department has produced estimates of the prime cost involved and of the hours required to complete one particular job, A57. Right? So now what are they asking? Now guys, now this is the total data, right? And for one job, they are giving this data. For this particular job, how much the material, direct wages, subtotal, prime cost, and for this job, how much the labor hour required, machine hour required, and all is given. Step number 1, you are required to A, calculate by the different methods 6 overhead absorption rates. What are the 6 methods or 6 base quantities we have? So labor hour, machine hour, then percentage of material cost, labor cost, prime cost, and production units method, right? And number 2B, calculate the cost estimate for this job A57 using in turn each of the 6 overhead absorption rates which we computed in A. So first one, guys, what we need to do here is that we need to compute this absorption rate. Now, first method is what? Labor hour rate. What is that? Overheads divided by labor hour. Now, what they have, so the total data is available, sir. What is the total overheads here? Total overheads is 3 lakh rupees. Now, I want to calculate, sir, how much is the overhead attributable to the single job? Now, I want to convert a bulk figure into a per unit figure or a per job figure. How will I do that? Using this absorption only, right? Now, how do I do that? How do I do that? Now, using any of the 6 different absorption rates. Now, in this particular question, so the first thing we need to do is what? In all the cases, the overheads amount is going to be 3 lakhs. Now, what is the first method? So, it is going to be labor hour rate. So, how will you calculate the absorption rate? So, 3 lakh divided by 25,000 hours, I get the absorption rate expressed per labor hour. So how much is this? 3 lakh divided by 25,000. So 3 lakh divided by 25,000. How much you get divided by 25,000? You get 12 rupees per direct labor hour. So if I use labor hour as the base quantity, the absorption rate is 12 rupees per labor hour. Okay. If you are using machine hour as the base quantity, so divide 3 lakh with 15,000 machine hours. So 3 lakh divided by 15,000 machine hours, I get how much? 20 rupees per machine hour. Clear with this, guys? Now a company can follow any one of these 6 methods at a time. Clear with this, guys? I can't use everything, right? But this is like your different methods of depreciation. It's an accounting policy. Here it's a cost accounting policy, right? So you can't use SLM and WDV. You can either use SLM or WDV. Clear with this, guys? Similarly here, you can either use labor hours or you can use machine hours or you can use material cost as a basis or whatever it is, any of the 6 base quantities. Next, sir, if I want to use my direct materials as the base quantity, then it's going to be 3 lakh divided by 1 lakh into 100. Clear with this, guys? So production overheads divided by direct material cost into 100. 3 lakh by 1 lakh into 100, which is going to be overheads is going to be 300% of my direct labor cost. This is how we compute it. Yes, 300% of direct labor cost. The next one, labor cost. How much is that going to be? Now, if I'm going to use labor cost as the basis, so 3 lakh divided by 50,000 into 100. How much is that? 3 lakh by 50,000 into 100 is 600% of labor cost. Clear with this, guys? Or if you want to use prime cost as the base quantity, 3 lakh divided by 1 lakh 50 into 100, I will say overhead, sir, is 200% of my prime cost. Look at this, 200% of prime cost. Or directly, if you want to use production units method, your overall production overheads divided by the total number of units. Here it's not units, it's jobs. So 3 lakh divided by 300, sir, per job, how much is it going to be? 1 lakh rupees per job. Are you guys clear with this? 1 lakh rupees per job is going to be your absorption rate. So using the 6 different base quantities, now we have computed what? The 6 different absorption rates. Any one only the company can follow. Now what have they asked? Sir, for this particular job, A57, I have given how much is the material, how much the wages. Prime cost components are readily available. To this, if you add the particular job's share of overheads, you will arrive at the total cost of this job. Guys, clear with this? Now they are asking us to calculate what the total cost estimate for this job using each of the 6 different rates calculated above. Right? Now how do we do it? So simple. First one, guys. So charging of overheads to this job, right, and calculating the total cost of this particular job A57. Now, whether I use labor hour rate or machine hour rate or material cost, labor cost, prime cost or production units method, it is not going to change my prime cost component. So how much is my direct material? 250. How much my direct wages? 200. So total prime cost is 250 plus 200, 450 rupees. So now this 450 rupees will not be changing. Why? Because all these 6 different base quantities are used only on my indirect manufacturing cost, namely my overheads. So my overheads calculation will never impact my prime cost components. Clear with this, guys? Now only my production overheads figure will change. Now first, if I use labor hour as the base quantity, right? Now, in that case, what is the absorption rate? Sir, for every labor hour, you should charge the product with, you should charge it with 12 rupees. Now, this particular job used how many labor hours? 80 labor hours. So the overheads for this particular job is going to be 80 labor hours into 12 rupees. So 80 into 12, it's going to be how much? 960 rupees is the cost, overheads cost for this particular job. So 960 plus 450, how much you get? 1410. Are you guys clear with this? So here I get what? 960 rupees. Clear with this, guys? Next one. Next one. Machine hour rate if I use. Now in this case, what is the absorption rate? 20 rupees per machine hour, and this job used how many machine hours? 50 machine hours. So here it's going to be, so absorption rate 20 into the actual base quantity consumed, which is 50 hours. So it's going to be 15 to 20 is 1000. So 1000 plus 450. Overall, if I use machine hours as the base quantity, the total cost of this job is going to be how much? 1450. Clear with this, guys? Next, sir, no sir, I'm using material cost as the basis, percentage of material cost. How much is my absorption rate? 300% of the material cost. Sir, for this job, how much is going to be the material cost, sir? 250 rupees. Guys, correct? So 250 into 300% is 3 times of 250. So now the overheads for this particular job in this case is going to be how much? 750 rupees. So what will be the total cost? Prime cost 450 plus 750 of production overheads. It comes out to 1200 rupees. Are you guys clear with this? Next one. Sir, I'm going to use labor hour as the base quantity. I mean labor cost, percentage of labor cost as a base quantity. How much is it? 600% of my direct labor cost. How much my direct labor cost? 200 rupees. So 200 into 600%, that is 6 times of 200 is going to give me how much? 1200 rupees. Are you guys clear with this? So in this case, it's going to be how much? 1200 rupees. So 450 plus 1200. 450 plus 1200, you get how much? You get 1650 as the total cost of this particular job. Suppose I am using 200% of prime cost as a base quantity. So the absorption rate is 200% of prime cost. Simple. What is the prime cost for this product? 450. So 450 into 200%, that is absorption rate into base quantity, right? So 450 into 200%, it's 900, and 450 prime cost plus my production overheads of 900 gives me how much? 1350. Are you all clear with this, guys? And finally, you get your production units method. So now in this case, directly, how much is that going to be? Sir, per job, 1000 rupees the cost. Directly, this is for one job only we are calculating. So 1000 into 1 is going to be 1000. So 450 plus 1000, you get how much? 1450. Are you guys clear with this? Right? So now, depending on what method you use as the base quantity, it affects the total cost of this particular job. Guys, are you clear with this? So you have to be very, very careful while picking the method. You need to provide the justification. Randomly, you can't use methods. I'm talking about real life. So companies need to disclose this in their cost audit report as to why they are using a particular method of absorption and doing it. For example, if I'm using machine hours, I need to justify, sir, I am a company which uses a lot of machines and I have a lot of mechanization, automation that happens. Manual intervention is less. Hence, for me, it makes sense to use machine hours. Like this, they need to give a justification because the selection of method will affect the cost of the product. Are you guys clear with this? Hence, look at this. If I use labor hour as the basis, it's 1410. If you use labor cost as the basis, it's 1650. If I use prime cost as the basis, it's going to be 1350. So randomly, all these costs are changing. But remember, the costs will change not because of the prime cost. It remains same. But purely because of what? It changes purely because of production overheads, which is actually calculated depending on the method of your choice. Are you guys clear with this? Hence, it needs to be clearly disclosed on the face of your cost sheet. I mean, on the face of your cost audit report. Are you guys clear with this? Yes. And with this, literally, we have also completed the 6 different types or the 6 different types of base quantities. So please just go and update your library of adjustments. Write down 6 types of absorption rates. 6 types of absorption rate. So in our regular and in our exam oriented batches, I'll actually be doing an even more in-depth explanation and also solving more number of sums. Every single sum we'll be solving here. But here in a marathon, since we are revising, this is meant for revision, right? I am condensing it and presenting it. There also, I'm trying to provide you every single concept, right? And I'm not providing any kind of dilution here. I'm not making any dilution. I'm trying to condense it and present it. So predominantly the assumption here is that you would have already studied it once. Still, wherever possible, I'm starting from the scratch and I'm building the subject. So with this marathon itself, right? So a lot of complicated concepts we are covering, because overheads is not a straightaway easy area, right? It has a lot of other complexities, especially the ones we are going to see, after the sum, right? Whatever we are going to see, predetermined rate versus actual rate, under or over absorption. That's a very critical discussion of overheads, which we'll be seeing, right? So please go and update your library of adjustments. Write down 6 types of absorption rate. 6 types of absorption rates. Right? So with this, we will now move on to the next segment of discussion in this particular chapter. Now, the next concept is predetermined rate versus actual rate. Now, one of the most important aspect of this chapter. From here, the chapter gets very technical. In fact, in our regular and exam-oriented batches, right? This is a very detailed discussion. However, I will condense it for the purpose of revision without diluting on the core concept. Now, guys, what is the next concept that we are going to talk about? Predetermined rate versus actual absorption rate. Simple. What do you mean by predetermined rate? What do you mean by actual absorption rate? Absorption rate, how do you calculate? Overheads divided by the base quantity. Let us take, for our example purpose, labor hour. But remember, it can be any of the 6 base quantities. Now, predetermined rate, or it's also known as budgeted rate, means if I use budgeted figure in the numerator and budgeted figure in the denominator, it is called as budgeted absorption rate or predetermined absorption rate. Are you clear with this? Predetermined means what? Already fixed, budgeted. That is, predetermined rate is equal to budgeted overheads divided by budgeted base quantity. Clear with this, guys? That is what I've mentioned here in our concept decoder. Budgeted overheads divided by budgeted base quantity. Whereas actual absorption rate means what? Actual overheads divided by actual base quantity. Simple, guys. Now, your absorption rate is what? Your overheads divided by the base quantity. If you calculate the absorption rate using the budgeted data, it is called as predetermined rate. Clear with this, guys? And if I calculate the absorption rate using the actual data, it is called as actual absorption rate. Sir, what is the big deal here, sir? Now, let me give you guys an example, and with the help of this example, we will understand the issue here in this particular concept. So, predetermined rate versus actual rate. Let me take you an example. Let me give you guys an example. Let us say the budgeted overheads is equal to rupees 3 lakhs. Okay, and the budgeted labor hours, let us take labor hours as the base quantity. The concept is equally applicable for all the 6 different types of base quantity. Let us say I budgeted to have 20,000 labor hours in this period, right? So this data is available before the start of the year itself. Now, which means the predetermined absorption rate, which means the absorption rate calculated using my budget data is equal to 3 lakh divided by 20,000. How much is that going to be? Rupees 15 per hour. Clear with this, guys? So the absorption rate calculated on the basis of my budgeted data is going to be equal to 15 rupees per hour. Let us say once the period is over, I got to know, sir, actual overheads was how much? Actual overheads was rupees 3,20,000. Let us say actual overheads was rupees 3,20,000, and in this period actual labor hours spent were 16,000 hours. Clear with this, guys? Which means the actual absorption rate, overheads per labor hour, actual overheads per labor hour is equal to how much? 3,20,000 divided by 16,000. How much is that going to be? So it is going to be, so 3,20,000 divided by 16,000, it gives you how much? Rupees 20 per hour. Clear with this, guys? So with this we can say, look, sir, the budgeted rate or the predetermined rate, or it is also called a standard rate. These are interchangeably usable terminologies, or in other words, the absorption rate calculated using the budgeted data is going to be 15 rupees per hour. Whereas, sir, actually, I plan to incur 15 rupees per hour. That is the overheads. Whereas, actually seeing, I ended up incurring how much overheads? 20 rupees per hour. Are you guys clear with this? Right? So this is called as predetermined rate. This is called as actual rate. Fine, fine, perfect. Now, let us say I am a pen manufacturer, right? Now, I have to produce every unit of a pen. Let us say to produce 1 unit of a pen, let us say it takes 2 hours, right? So to produce 1 unit of pen, it takes 2 hours. Now, for this, every hour, I need to charge the product with an absorption rate, correct? Yes. Now, you guys tell me, will I charge or will I use my predetermined rate for charging the overheads to products, or will I use my actual rate for charging overheads to products? Sir, every time I produce 1 unit of pen, it takes 2 hours, sir. So for every hour actually taken by this pen, should I charge it with an overhead of 15 rupees or should I charge it with an overhead of 20 rupees? Right? Now, many of you will be thinking that, sir, we should charge it only with 20 rupees actual rate. Why? Sir, because 20 rupees was the figure which was actually incurred. Guys, clear with this. 20 rupees was the amount which was actually incurred. So for every hour taken by the pen, I should charge it with the 20 rupees of overheads. Guys, clear with this. This is what many of you might think. But the answer is no. You should always use predetermined rate only. Clear with this, guys? Sir, why, sir? Why should we use the budgeted rate or the predetermined rate for the purpose of carrying out absorption? Right? Now, there are 3 reasons. Now, let us not get too technical. One main reason I will tell you, right? And that is the core of the concept of absorption costing. Very, very important. Only if you know this, you can move on to the next concept of under or over absorption. Now, first, guys, we are in what subject? We are in cost and management accounting. Right, guys? Now, in costing, what is the objective of this chapter, of this entire subject? We have 3 different objectives, right? Stock valuation, profit computation, decision making, control, and all these things. Now, always remember, our subject, costing, cannot wait till the year end, right? Costing is a concurrent process, right? Whereas financial accounting, that is a post-mortem work. Once the year gets over or once a transaction happens, I record it, because the objective of financial accounting is completely different. Whereas in our subject, costing is a concurrent process. Sir, what do you mean by concurrent process? Simple, guys. Now, the moment this particular raw material is fed into my machine and my raw material gets converted into FG, the moment my FG comes out of my machine, now I should be valuing every unit produced. I should charge it with an overheads also. Prime cost components are readily available on a per unit level the moment my pen or the product FG comes out of the machine. Whereas now my overheads is the only figure that is not readily available on a per unit level. That's why we use the concept of absorption. Now, concurrently, as and when a particular product comes out of the machine, now will I be having my actual rate? No, I will not be having my actual rate, because actual rate is what? Actual overheads divided by actual hours. Now, if I charge it with actual rate, I need to wait till the end of the year, because only then this total actual overheads is known and only then the actual hours is known. If I divide the two, only then I will get my actual rate. But costing cannot wait till the end of the year. Then and there, whenever a product is moving from stores to WAP area, from WAP to FG area, wherever it is moving, it has to move along with the cost. Hence, costing is a concurrent process, and I need to value every unit of my stock produced then and there. Hence, since costing is a concurrent process and it cannot wait till the end of the year, the only solution for me available is to mandatorily use my predetermined rate. Sir, how will I use predetermined rate? Simple. Budgeted overheads divided by budgeted hours. these two are already readily available as and when my particular output comes out of my machine. Yes, so this 15 rupees per hour is readily available, right? I need not wait till the end of the year to arrive at this figure. Hence what I do is, so I can definitely use this amount. Predetermined rate can be used, and using the predetermined rate I charge my overheads to the products. Are you guys clear with this? So always remember, this is a very, very important and a critical understanding of this entire overheads chapter. Sir, it is wrong, sir. I have actually incurred 20. How can I charge it with 50? Wait, at the end of the year, we do some rectification of error. Ideally, it's not called rectification of error, but for you to understand, I'm using the word rectification of error. That is only called as under or over absorption. We compare it with the actual and we do the adjustment. Do not worry. Right now, what is the figure available? 15 rupees, sir. Every time a product passes out of my machine, right, what I do is I charge every hour with the predetermined rate of 15 rupees. Are you guys clear with this? This is a very, very important discussion here. Are you guys clear with this? So literally guys, always remember, when absorption, I told you, is a two-step process. Step number one, calculation of absorption rate. When we say calculation of absorption rate, it is always the predetermined rate that we calculate. Clear with this, guys? So 15 rupees is what we calculate. In our example, we never calculate the actual rate. Now, having calculated the predetermined rate, so what is step 2? Charging of overheads to products. So what is the formula there? Predetermined rate into actual base quantity consumed. Now this 15 rupees, I actually multiply it with 2 hours. Sir, this 2 hours, this is budgeted? No. When I am charging to the product, step 2, here I use the actual base quantity consumed. Sir, every unit, sir, it has come out of the machine. We know how many hours it has actually spent inside the machine. Yes, sir. So that actual data, actual base quantity consumed is readily available. Yes. So predetermined rate into actual base quantity consumed is what is your overhead absorbed. Are you guys clear with this? If you just look at it, look, this is what they say here. If you notice the previous thing here, step number 1, calculation of absorption rate, which we saw earlier. This absorption rate always refers to what? Predetermined rate, right? And having calculated the predetermined rate, we charge it to the products, right? So what is the formula here? The absorption rate, predetermined rate into the base quantity consumed, right? Which means it's the past tense, which means actual base quantity consumed. Or in other words, sir, I produced one product, sir. Every unit requires 2 hours. Actually, it has spent 2 hours. For every hour it has actually spent, I will charge it with the predetermined rate. In our example, 15 rupees. Clear with this, guys? Like this. As and when I produce a product, I charge it with a predetermined rate. Are you guys clear with this? This is a very, very important and a critical understanding that you need to have. So in absorption, right, so 2-step procedure. Step number 1, calculation of absorption rate. It is always the predetermined rate that we use. We never use the actual rate, right? And step 2, while charging of overheads to the products, it is predetermined rate into the actual base quantity consumed by the respective product. So here, sir, 1 unit of FG has actually consumed 2 hours. For every hour it has actually consumed, I should charge it with how much? 15 rupees. So the overheads absorbed will be 30 rupees per unit. Clear with this, guys? Like this, let us say at the end of the year, overall, all the units put together has actually consumed totally how many hours? Sir, 16,000 hours is what all the units put together have actually consumed. So I will say, sir, the overheads absorbed or the absorbed overheads is equal to, how much will I say? Each and every unit, right, put together all the units have consumed a total of 16,000 hours, and for every hour actually spent, I would have charged it with a predetermined rate of how much? 15 rupees. So 16,000 into 15, how much you get? So the total absorbed overheads is going to be 2,40,000 rupees. And please be very, very clear, this absorbed overheads 2,40,000 is the figure that appears in your cost sheet. In your cost sheet you have this format, right? So your direct material plus direct labor plus direct expense gives you prime cost. These prime cost components are actual figures. Why? They're readily available on a per unit level as and when a product comes out of the machine. plus production overheads I had. So production overheads is always, the figure is absorbed overheads. Clear with this, guys? So it is not a budgeted overheads, it is not an actual overheads, also it is an absorbed overheads. Are you guys clear with this? So it is always the absorbed overheads that gets recorded in your cost sheet. So that's why we call absorbed overheads as nothing but overheads accounted. This is the figure that has been considered in costing. This is a very critical discussion in our entire chapter of your overheads. Clear with this, guys? Or in other words, now at the end of the year, now we have three figures. So what are the three figures we have? One is budgeted overheads, then we have absorbed overheads, and then we have actual overheads. Sir, budgeted overheads, how much is it? Simple, budgeted hours 20,000 into budgeted rate or the predetermined rate, correct, right, which is nothing but 3 lakh rupees. Guys, literally we have 3 lakh rupees of budgeted overheads, right? How did you get this? This is nothing but budgeted hours into predetermined rate or budgeted rate. Clear with this? This is how you get it, 20,000 into 15, right? Whereas on the other side you have actual overheads. How much was that? Rupees 3,20,000. Or you can say actual overheads 3,20,000 is nothing but, sir, actual hours into actual rate, 16,000 hours into 20. This way also you can say it's actual hours into actual rate, right? And in between you have absorbed overheads. We got it. How much was it? 2,40,000. So 2,40,000. So now how did you get this 2,40,000? Simple, sir, we use the budgeted rate, predetermined rate, right? Predetermined rate we applied on the actual hours consumed. So here into actual hours. Clear with this, guys? That's what we did. We took the predetermined rate and applied it on the actual hours, right? So for every hour actually spent in the factory, I charged it with how much? 15 rupees. Or in other words, a hybrid thing. I take the rate from the budgeted data and multiply it with the actual base quantity consumed. This way, this is nothing but 2,40,000 of overhead accounted for. Clear with this, guys? So now literally budgeted overheads is nothing but overheads planned. Actual overheads is nothing but overheads incurred, and absorbed overheads is nothing but overheads accounted. Are you guys clear with this? Are you guys clear with this? So now, guys, what happens? So as and when in our example I told you, sir, one unit takes 2 hours, right? Let us say at the end of the year overall I have produced 8,000 units, right? 8,000 into 2, that's why we consumed a total of 16,000 hours. Clear with this, guys? So now what happened? Every unit took 2 hours, right? And every time I consume 1 hour, I was charging the product with 15 rupees of overheads. Like that, at the end of the year, actually I produced 8,000 units, and these 8,000 units put together actually consumed 16,000 hours. And for each of the hours actually consumed, I charged it with 15 rupees, 15 rupees, 15 rupees. And like that, overall, I accounted for an overheads of how much? 2,40,000. So our subject costing would have accounted for an overheads to the extent of how much? 2,40,000 rupees. Now at the end of the year, so this kept on going, and every time a product got produced, for every hour spent we were charging it 15 rupees. Like that, we kept on accumulating, and we overall at the end of the year we noticed that we have accounted a total overheads of how much? 2,40,000. Now at the end of the year I also got my actual figures. Actual overheads incurred was how much? 3,20,000. Now I can't just leave it like that. I have till now accounted only for 2,40,000, but look at it. Actually, I have incurred how much? 3,20,000 rupees of overheads, which means this difference now needs to be accounted for. Guys, clear with this, guys? Yes. So now the difference between absorbed overheads and actual overheads is what we call as under absorption or over absorption. Are you guys clear with this? So in order to calculate the under or over absorption, you need to compare absorbed overheads, which is the overheads accounted, with the actual overheads, which is the overheads incurred. I have accounted only for 2,40,000, but at the end of the period, I noticed that I've actually incurred how much? 3,20,000 rupees. Are you guys clear with this? So now, what do we do with this? Now, in this case, you should have accounted an overheads of how much? 3,20,000. You have only accounted for how much? 2,40,000. So your absorbed accounted overheads is less than the actual overheads. So I call it as under absorption, because the absorbed overheads is less than the actual. So here it is called as under absorption. So in this case, how much is the under absorption? 3,20,000 minus 2,40,000. Overall, the under absorption amount comes to 80,000. I have accounted overheads less to the extent of 80,000 rupees, which I now need to bring it into the books. Are you guys clear with this? Now, that could also be a case of over absorption. Yes, absolutely. Suppose based on the predetermined rate and all, I kept on charging more. Right, let us say at the end of the year I noticed that the actual overheads absorbed was 4 lakh rupees. Right, overheads absorbed is 4 lakh, actually incurred is only 3,20,000. In this case, there is an over absorption to the extent of 80,000. 4 lakh minus 3,20,000. So now I need to reduce or bring down my overheads. It's called as over absorption. Clear with this, guys? So now, how are we going to treat this under or over absorption is the subject matter of study in the next upcoming concept, which I'm going to do right now. But for you to understand this, first you need to understand the concept of predetermined rate versus actual rate, and you need to know that necessarily I need to use predetermined rate because costing cannot wait till the end of the year. Costing is a concurrent process. As and when a product gets produced, I need to charge it by using the predetermined rate. If I want to use the actual rate, I necessarily have to wait till the end of the year, which cannot be done in costing. Clear with this, guys? That defeats the objective of our subject, because that's how we are able to value the stock. The stock movement, the cost needs to move or flow along with the products. Clear with this, guys? Hence, costing is a concurrent process. It cannot wait till the year end. Clear with this, guys? And because of usage of predetermined rate, I use my absorbed overheads is different from my actual overheads. Hence, at the end of the year, I compare my absorbed with the actuals. If my absorbed is less than actual, now I need to add the cost, right? I would have accounted less by 80,000. I need to introduce this cost. If my absorbed is more than actual, it's called over absorption. Now I need to go and reduce the cost which I have already accounted for. Are you guys clear with this? That is the concept of under or over absorption. Now, guys, now how are we going to treat the under or over absorption? But before that, here I have clearly mentioned in our concept decoder as well. So under or over absorption is nothing but you need to compare the actual overheads with the absorbed overheads. Don't think positive, negative and all. Don't do it like that. If my absorbed is more than actual, it's over absorption. If my absorbed is less than actual, it's called as under absorption. Now we are going to study, right? Look at this. If my actual is more than absorbed, which means absorbed is less, it's an under absorption. If my absorbed overheads is more than actual, then it is called as over absorption. Clear with this, guys? Now, how are we going to treat the under or over absorption is the subject matter of study right now. Now, let's get started. So, treatment of under or over absorption, the most critical point here. So once we do this, literally this entire chapter's core concept is now getting over. So this is the most important part of discussion in this entire chapter. Now guys, now I told you that this 2,40,000 rupees is nothing but the overheads accounted, correct? Or in other words, if I were to prepare the cost sheet of this company, we have direct material, direct labor, direct expense. This gives us the prime cost. Now all these prime cost components are actuals, right? Plus production overheads. Now how much is my production overheads? Now I would have only accounted for 2,40,000 because absorbed overheads is the figure that is getting accounted. 2,40,000 rupees. Clear with this, guys, right? Now at the end of the year, I noticed that, look, your actual overheads is how much? 3,20,000, but the overheads absorbed is only 2,40,000, which means you have under accounted or under absorbed to the extent of how much? 80,000 rupees, right? Now I need to now account for this 80,000 rupees, right? Now guys, the question is, should this 80,000 rupees be treated as a product cost or should I treat it as a period cost? Clear with this, guys, right? Or in other words, simply put, this cost sheet, if I were to present this in a trading and a P&L format, right? Now this 2,40,000, right, appears in your trading account because it is a product cost considered for the purpose of stock valuation. Now the question is, this 80,000 rupees of under absorption here, right, which means I need to introduce this 80,000 as a cost. My actual was 3,20,000, but as of now I've accounted only for 2,40,000. This 80,000 I need to account right now as cost. Should I take it to my trading account or should I take it to my P&L account, or in a format of cost sheet, should I add it here itself, right, before my cost of goods sold, or should I treat it at par with my AOH, SOH and all, is the subject matter of discussion here. Sir, what is the big deal, sir? If I treat it as a product cost, it will impact my stock valuation. If I treat it as a period cost, P&L item, it will not impact my stock valuation. Directly it gets transferred to my costing P&L account, so no problem at all. Clear with this, guys? Now the subject matter of discussion is what? How do I deal with my under or over absorption? Clear with this, guys? Now globally there were two arguments. One set of people said, look, production overheads is a trading account item, it is a product cost item, so any under or over absorption of this particular production overheads should be treated as a product cost only. This was globally one argument put forth, but it is not a very logical argument. Clear with this, guys? Why? I will tell you. There was another set of argument which said, look, always under or over absorption should be treated as a P&L account item, or in other words, it should be treated as a period cost. This is what another set of people globally, they argued. It should always be treated as a period cost taken to your P&L account, or in other words, in a format of cost sheet, it should be taken along with AOH, SOH, then one more line item which is under or over absorption of your production overheads. Why this seemed to be more logical? Sir, why, sir, this was more logical? Now, you understand, I'll tell you one example. I'll give you an example. With the help of this example, let us understand. Let us say on the 1st of January of a particular year, right, on 1/1, a board meeting happened where they finalized the budget. Let us say the budgeted overheads was 3 lakh rupees, right, and the budgeted hours were, let us say, 20,000 hours, which means how much is the predetermined rate? 3 lakh divided by 20,000. For every hour spent, I will charge it with an overheads of 15 rupees per hour, right? Now what happened? The board meeting got over. First 1/1 of this year, right? The board meeting got over. Now what happened? The moment these guys stepped out of the board meeting, they noticed that the entire factory was on strike. Some labor issue was there. Entire factory was on strike. Now the strike continued so long and it got over on 31st of December, which means at the end of the year, one full year, zero production. All the workers were on strike on 31st of December at 11 p.m. in the evening. Now what happened? In the night, 11 p.m., what happened was, sir, finally this board and all this board members and the workers and all, somehow they peacefully agreed for a wage rate and all these things, some wage related problem. So the workers also got convinced and they said, okay sir, now the dispute has been resolved. From tomorrow, new year onwards, the next year, fresh year, sir, we will start our production. Now our managing director asked, look, this year, right now it's already 11 p.m. One more hour is left. Now, I don't want to close this year without producing anything. Sentimentally, please send one worker, ask him to produce only one unit and give it. That's all, right? Because let us not close this year without producing anything. So what happened during this year? What has happened? The actual overheads, let us say, was 3 lakh rupees. right? Let us say this 3 lakh rupees was factory rent. Whatever they budgeted, it was incurred because irrespective of actuals, the rent needs to be paid. Now, what is going to be my actual hours spent? Only 1 hour was actually worked, guys. Correct? Right? Now, if I calculate the actual rate, how much is my actual rate? 3 lakh divided by 1. Right, that's going to be 3 lakh rupees per hour. Anyways, forget it. We are not bothered about this. We are convinced that we need to use predetermined rate. Now, what would have happened? Now, during this year, in my trading account, what is my production overheads absorbed? Sir, predetermined rate for every hour actually worked, I will charge it with 15 rupees. So 15 into 1, my overheads absorbed would have been 15 rupees. Guys, correct? Now, absorbed overheads was how much? 15 rupees. Actual overheads is how much? 3 lakh rupees, which means how much is my under absorption? Sir, I have actually incurred 3 lakh, but overheads accounted was only 15 rupees. How much is my under absorption? My under absorption is 2 lakh 99,985 rupees. This is my under absorption, right? Now, suppose if I treat this also, under absorption also, as a product cost, now what would have happened? I will take it to my trading account. I will consider the under absorption 2,99,985 as a part of my product cost. Now what would happen? Now this is the total cost of production. I have not sold anything, so my closing stock will be valued at 15 plus 2,99,985. I will value my closing stock at 3 lakh rupees. Now, how many units of closing stock is there? 1. So now what happens? 1 unit will be valued at 3 lakh rupees. Are you guys clear with this? Now, at the end of the year, the auditor, right, he is coming for a stock audit, stock count. Now, the manager, this particular manager of the company saying, sir, you don't come, sir. I will bring the stock to your location. So, this particular manager goes to the auditor's office, right? And the auditor saying, what, you have come empty-handed? Where is the stock and all, right? What is the lorry waiting outside? Our manager will say, no, sir. Only 1 pen has been produced. Carefully count and give it back. Now, the auditor will be shocked. What? Only 1 pen has been produced. I mean, only 1 pen is there in closing stock. But why is the closing stock valued at 3 lakh rupees? Guys, are you understanding the issue here? Now, if I treat this under absorption, right, as a product cost, under or over absorption, as the case may be, my stock valuation will go for a toss. 1 unit of stock gets valued at 3 lakh rupees. Or in other words, my actual overheads incurred might be having my efficiencies or inefficiencies. Guys, clear with this? There could be inefficiency that gets captured in my under absorption. Now, if I treat my under absorption as a part of product cost, inefficiencies will get into my stock valuation. Hence, always remember what they are saying. Stock is not valued at actual cost. It should only be valued at standard cost. Are you guys clear with this? Hence, for this purpose, the correct thing to do is that now what you need to do globally, this is what they follow. So they don't take the under absorption here. Look, what they do is only 15 rupees, right? Absorbed overheads is only taken to your, considered as a part of your product cost. Any under or over absorption, 2,99,985 in our example, is taken to your P&L and always treated as a period cost. In this case, my stock gets valued only at 15 rupees, that gets carried forward the next year. Sir, this difference 2,99,985, sir, it's a benefit lost. Don't consider it as a part of your stock, right, and value your stock more. This gets knocked off. I will book a loss of 2,99,985 in this year. This cost should die. It should expire in this year itself. Are you guys clear with this? Hence, globally, what they say is they treat under or over absorption as a part of period cost. They take it as a P&L account item. Are you guys clear with this? Now, sir, is this what we need to do? No. Now, always remember, in India, we Indians are extremely clever and we are extremely intelligent. In India, we follow a slightly different approach. What do we do? Now, extraordinary treatment, this is covered in your cost accounting standards, right, which is ideally a part of CMA intermediate syllabus. Cost accounting standards are prescribed by your CMA institute. Now, in India, what we follow is, now, how much is the under or over absorption, right? Forget this particular question. Now, going back to our original example, sir, under or over absorption, how much is it? 80,000 rupees, in this case under absorption. Now globally what they do, they treat it as a period cost. In India, what they do is, okay, 80,000 rupees in our example is under absorption, similar treatment for over absorption. Now they don't jump to a conclusion and say, look, this 80,000 should be treated as a product cost, or this 80 should be treated as a period cost. They don't do that. Now what they do, they classify this into two. Now tell me, out of this 80,000, now let us say for example 5,000 rupees, sir, right, has been actually incurred because of normal price level changes, inflation. Look, how much was the overhead absorbed? Going back to our original example, only 2,40,000. But actual was how much? 3,20,000. Sir, why was the actual more? What is the difference between overheads absorbed and overheads actually incurred? 80,000, which means actual is more. Guys, correct? Now, by 80,000, now out of this 80,000, they are saying, sir, to the extent of 5,000 rupees, genuinely, sir, on account of price level changes, inflation was there. When we budgeted, the inflation we didn't factor. Suddenly in this year, this inflation also happened. So 5,000 rupees increase in actuals was genuinely on account of inflation, sir. The balance 75,000 rupees of difference is because of any abnormal reasons, or maybe because of inefficiencies in the management. Are you guys clear with this? So hence a strike or other example. Clear with this, guys? So out of this 80,000 rupees of difference between my absorbed and actual, or in other words, actual was more, the 5,000 rupees was genuinely because of inflation, right? And the balance 75,000 rupees was purely because of any abnormal reasons. Are you guys clear with this? Abnormal reasons. Are you all clear with this? So now in India, what they are saying, to the extent of 5,000 rupees, you treat it as a product cost. To the extent of 75,000 rupees, you treat it as a period cost. Are you guys clear with this? Right? Why? Sir, 5,000 rupees genuinely on account of price level changes. So if there is genuinely a price increase, it should go and impact my stock valuation. Whereas the 75,000 rupees is because of inefficiency, strike and all, there is an under absorption, over absorption. No, take it to your P&L account. It should fully expire in this year itself. A classic treatment is what we follow in India. Are you guys clear with this? This is the most intricate part of discussion in the entire subject, in fact, right? And once again, generally in our regular and exam oriented batch, I take a lot more examples, explain, and we do a lot more sums. But since we are doing a marathon here for revision purpose, still I didn't want to dilute. Wherever possible, I'm still taking examples and figures and explaining it. Trust me, guys, I'm trying to condense a very complicated and a very big area. So this is for the purpose of revision. Clear with this, guys, right? So what they are saying, so first, if there is an under or over absorption, split it into two. If it is because of normal reasons, it should be treated as a product cost, or to put it in understandable words, take it to your trading account. We don't have a trading account and all in our subject, but I'm telling you for your understanding, to the extent of 75,000, you take it as a product cost. It's a P&L account item. Clear with this, guys? Or in other words, if I were to put this on your cost sheet, if I were to put this on your cost sheet, right, you have direct material, direct labor, direct expense, gives you prime cost, right? To this add production overheads. Till now we would have accounted for 2,40,000, right? Now here itself you can add your under absorption due to normal reason. How much is it? 5,000 rupees, right? And this gives you your gross works costs and opening WIP, closing WIP, all these things you do it, right? And finally you arrive at your cost of goods sold, right? All the stock gets valued and all, add opening FG minus closing FG, everything. And finally here, what do? We add our AOH, SOH, right? Along with that SOH, now you can add one more line item, under absorption due to abnormal reasons, 75,000. Clear with this, guys? Are you all clear with this? So here, this 5,000 is treated as a product cost, the 75,000 is treated as a period cost. Or if you want to put it in trading P&L account format, literally, guys, in this case, what I do, so here I add 5,000, right? and here I will be adding 75,000. So to the extent of normal reasons, I will treat it as a product cost. It should impact my stock valuation. To the extent of abnormal reasons or due to inefficiencies, it should be taken to my P&L account. Are you guys clear with this? Now the final touch to this area. Now there is no problem with respect to this 75,000. That is, if I am treating it as a period cost, there is no problem at all. P&L, the entire amount will tie in this year. Clear with this, guys? But suddenly, if I am introducing a line item of cost at the end of the year as a product cost, now there is one big problem. Sir, what is the problem, sir? Now, recall the flow of cost concept which we have studied in cost sheet. Now, guys, in your WIP area, right, this is where all your line items of cost will appear, right? You have direct material consumed, you have direct labor, direct expenses. Now here is where you will be incurring production overheads, guys, correct? Now having incurred all these costs, now what will happen? Some units will be produced and completed, some units will be completed and transferred to FG, right? Units completed and transferred to FG. Some units will lie in your closing WIP, guys, correct? Now in your FG area, ideally whatever units that got completed, right, now it could either be sold, right? You have cost of goods sold, it could either be sold or it could remain unsold, closing FG. Guys, are you clear with this? Or in other words, if I suddenly add one line item here, it is going to impact my closing WIP and my units produced, correct? Now whenever I say units produced, the units produced could either be sold or it can remain unsold. Or in other words, suddenly if I impact one line item here, three figures will take a hit. What are they? The value of units sold, that is cost of goods sold, the value of units unsold, which is your closing FG, and the value of units incompleted. Are you guys clear with this? Because basically whatever I do here will impact units completed and units incomplete, and units completed are represented by either units sold. Whatever units I produce can either be sold or it can remain unsold. Or in other words, suddenly if I introduce 5,000 rupees as a cost here, now this cost now needs to be shared or borne by my units sold, units unsold, and units incompleted. Literally, I need to apportion this cost between these three guys. Are you all clear with this? Are you all clear with this? So now, in this case, our under absorption due to normal reasons is how much? 5,000 rupees. Now this I need to apportion between three guys. Who are they? So goods sold, right? Then goods unsold, that is closing FG, and goods incomplete, WIP. Guys, clear with this? Let us say I have a total of 4,000 units sold, right? And I have a total of, example, 800 units of closing FG, and let us say I have a total of 200 units of WIP, right? Or in other words, 400 units, 50% complete, right? Equivalent units. Sir, 400 units were there, 50% complete. 400 units, 50% complete is equivalent to 200 units fully complete. Guys, clear with this? So now what I need to do, this 5,000 rupees, I need to apportion it between this goods sold, closing FG, and closing WIP in the ratio of 4,000 is to 800 is to 200. Guys, clear with this? Sir, what about that 75,000 rupees of under absorption attributable to your abnormal reasons? No problem at all. That you can directly take it to your costing P&L. That will not impact anything because it's a period cost. Only if I am having an impact on the product cost, three figures will take an hit. Simple. This 5,000, you apportion it between these three figures in the proportion in which they have actually, the units are there. Guys, clear with this? So ideally, I can say 5,000, I need to apportion it between these three in the ratio of 4,000 is to 800 is to 200, right? Ideally, if you do this, this is over. But our institute, they want to do it in a structured format. What they are saying is, first, you compute something called a supplementary rate. What do you mean by supplementary rate? It's nothing but under absorption or over absorption. In this case, under absorption divided by total units. Now, what is under absorption here? 5,000 rupees due to normal reasons divided by what is the total units? 4,000 plus 800 plus 200. How much is it? 5,000 units. So literally you get how much? 1 rupee per unit. Now this 1 rupee per unit you get as a supplementary rate that you multiply with these respective figures. So you get how much? So 4,000 into 1, right? So you get 4,000 into 1 and 800 into 1 and 200 into 1. Literally you get all these line items right now. So you get how much? It's going to be rupees 4,000. You get rupees 800, and here you get rupees 200. Clear with this, guys, right? Or in other words, sir, directly if I do it 5,000, if I apportion it in the ratio of 4,000 is to 800 is to 200, directly I would have got the same answer only. No, sir, 4,000, 800, 200. Yes, but our institute, what they are saying, separately they want to actually compute this, and they want to show that it is a supplementary rate, and then they want you to apportion, right? There is one movie comedy in Tamil. They say இதுக்கு பருத்தி மூட்டை கோடவுன்லயே இருக்கலாம், right? Literally instead of doing all these things directly, you could have done it, right? But institute wants you to show your supplementary rate, பருத்தி மூட்டை godown, right? Supplementary rate, and show that it is 1 rupee per unit, and then apportion it to the respective units. So now literally what happens, sir, 5,000 rupees I'm treating it as a product cost. Because of this, my cost of goods sold will increase by 4,000 rupees. The value of closing FG will increase by 800 rupees. The value of closing WAP will increase by 200 rupees. Are you all clear with this? And all these issues, sir, why are they arising? Because I am forced to use my predetermined rate. Clear with this, guys? Quickly I will summarize. Predetermined rate versus actual rate we saw. So literally, guys, a company or every company needs to necessarily use predetermined rate, because costing cannot wait till the year end. Costing is a concurrent process. Every time as and when a product gets produced, I need to charge it with an overheads. Because of using that, what happens? Absorbed overheads at the end of the year, you compare it with actual, will not be the same. So absorbed overheads, if it is less than actual, I call it as under absorption. If it is more than actual, I call it as over absorption. Now how do I treat it, sir? This under or over absorption is like a rectification of error. Now we need to introduce it into the books. Yes, how will you do that? Simple. Now overall under absorption, whatever figure is there, classify it into two. If it is happening because of normal price level changes, right, to that extent you treat it as a product cost, and whatever it is, you actually apportion it between three people: units sold, closing FG, and closing WAP, using something called as supplementary rate, பருத்தி மூட்டை godown, right? And on the other side, if it is due to abnormal reason, you should treat it as a period cost, directly take it to costing P&L account. Clear with this, guys? And this is the story of your overall absorption, the concept of absorption costing. With this, the concept of absorption costing completely gets over, even from an accounting perspective. A very important and a technical discussion, right? And generally in a marathon purpose, for marathons, I'm sure not many will explain this in a marathon itself, because it's the core piece of the entire subject, to be very honest, right? But I wanted to once again give you guys the perspective and complete this also, so that you have a complete conceptual clarity as to why we do it here. Fine, guys. Now with this, we will just go and do one numerical example, numerical question. Please take your solved question bank, right? So please take question number 7. Please take question number 7. I think this was a past exam question, right? So it came in for about 7 or 8 marks. So it was a past exam question, a very good question. But for you to crack this, you should have all the knowledge that we have seen till now, whatever we've seen till now. So quickly, it's being summarized in this particular numerical example. Let's get started. So question number 7. ABC Limited manufactures a single product and absorbs the production overhead at the predetermined rate of 10 rupees per machine hour. So 10 rupees per machine hour. So here, simple. Look at this. Predetermined rate they have given. So budgeted rate, this is the absorption rate per machine hour. So the base quantity used is machine hour. See, whatever we have learned, we are literally applying in this question. It's a past exam question, by the way. At the end of the financial year, it has been found out that the actual production overheads incurred was 6 lakh rupees, and it included 45,000 rupees on account of write-off of obsolete stores, and 30,000 rupees being wages paid for a strike period under award. Clear with this? So now basically actual over at 60,000, that included 45,000 and 30,000 in it. Now, literally, guys, this 45,000, 30,000 and all, they are not production overheads, they are some abnormal items. So, ideally, you should reduce these two figures from this, right? And only the net amount you can call it as overheads actually incurred, because these two are not overheads incurred, they are write-off of obsolete stores. Obsolete means they are non-usable, right? Obsolete stores written off. Then some wages paid for strike period and all. These are some abnormal items which should ideally not form part of your overheads. Clear with this, guys? So it should be removed. Next one, we will see how to do it. The production and sales data for the year are given below. FG produced was 20,000. Be careful. WIP stock 8,000 units, and each of these 8,000 units were 50% complete, which means 8,000 units 50% complete is equal to 4,000 equivalent units. Goods sold was 18,000. Be very careful. How many units were produced? 20,000. So literally out of this, they have sold 18,000 units, which means the balance 2,000 units are lying in your closing stock. So closing FG is 2,000 units, 18,000 units were actually sold, and 4,000 equivalent units are lying in your closing WAP. This clarity you should have. Next one, the actual machine hours worked during the period was 48,000 machine hours, and it has been found that 1/3 of the under absorption was due to lack of production planning, and the rest were all attributable to normal increase in the cost. You are required to number one, calculate the amount of under absorption and show the accounting treatment for under absorption. A full-fledged past exam question. Now, first one, what is the actual overheads? What is the actual overheads incurred? Sir, 6 lakh rupees. Don't say 6 lakh is the overhead. That included this two items which were ideally not production overheads. They are some, extraordinary items and all. Remove that. 6 lakhs minus 45,000 minus 30,000. Literally, 5,25,000 rupees is the amount of overheads actually incurred. Clear with this, guys? This is the actual. Now, to compute the under or over absorption, you should compare what with what? You should compare your under absorption with your, you should compare your absorbed overheads with your actual overheads. Right. So now, what do we do here? Absorbed overheads needs to be compared with actual overheads. So now, actual we know it is going to be, 5,25,000. So how much is the absorbed overheads? Simple. Predetermined rate was 10 rupees per machine hour. And actually, how many machine hours were consumed? 48,000 machine hours, which means 48,000 into 10, 4,80,000 rupees is what that is going to be your absorbed overheads. Are you guys clear with this? Absorbed overheads. So now I would have accounted for overheads of how much? 4,80,000. But at the end of the year, I noticed how much was actually incurred? 5,25,000. The difference between the two, how much is it? 45,000. What is that? It's going to be under absorption. Clear with this, guys? So the first part of the question, clearly we have computed. Sir, it is an under or over absorption? It is an under absorption. Clear with this, guys? Now, having computed the under absorption, the next thing, what should we do right now? Treatment of under absorption. Now, clearly in this question, they have mentioned, look at this. Look at this. They have clearly mentioned 1/3 was due to lack of production planning, and the balance was due to normal increase in the cost. Which means 1/3 of this under absorption should be, it is due to lack of production planning, inefficiency, treated as a period cost. Right, and the balance you should treat with 2/3 should be treated as a product cost. Look at this. So 45,000 out of this 1/3, 45,000 into 1/3, that is going to be how much? 15,000 rupees should be treated as what? Should be treated as a period cost. Okay, it's given here. Period cost. Right, now the balance 2/3, that is 30,000 rupees, should be treated as a product cost. Now, period cost 15,000, what will you do? You will take it to costing P&L account, right? And now, with respect to the balance 30,000, what will you do with this? This needs to be apportioned between three items. This is a product cost. Now, I'm introducing it. It will impact my stock valuation. Three items. Who are they? So, units sold. Right, units unsold, closing FG and WAP. Clear with this? And how will I do it? Using something called as supplementary rate. By the way, guys, each and every solution here, so in your study material, all this chart they have not done. So I have personally improvised a solution in your solved question bank. These were actually done by me so that the presentation is enhanced and you can quickly absorb the concept and practice it the day before your exam, and even during your practice, right? Maybe if you are even 4-5 months away from your exam, even then, right, this book is actually super sufficient. That's how we have actually come up with this particular book, and all these things, the solutions are all actually improvised personally. Clear with this, guys? Now what do we need to do with respect to this 15,000? I don't have a problem. With respect to this 13,000, what should I do? I should apportion it between my units sold, closing FG, and closing WAP. Simple. How many units were sold? 18,000. And how many units were lying in my closing FG? It's 2,000. And how many equivalent units in my closing WAP? 4,000 units. That is 8,000 into 50%. If you add up everything, so 18,000 plus 2,000, that's going to be 20,000, plus 4,000, it's going to be 24,000. Guys, clear with this? So now what we need to do, so overall look at this, FG sold, FG unsold, closing stock, and WAP. If you add 24,000 rupees, it's coming out to, so 30,000 divided by 24,000. So how much you get? So it's going to be 1.25 per unit. So 1.25 into 18,000 is equal to, you get 22,500. 2,000 is equal to, you get 2,500. 4,000 is equal to, you get 5,000. Are you guys clear with this? So now if you add up, you get 30,000, or in other words, this 30,000, since I'm introducing it as a cost, now my cost of goods sold increases by 22,500 rupees, my closing stock of FG increases by 2,500 rupees, and my closing stock of WAP increases by 5,000 rupees. Are you guys clear with this? So now the accounting treatment, how will I do it? This is by way of journal entries, right? Ideally, we cover this journal entry in our cost bookkeeping or your cost accounting standards, right? In the cost bookkeeping, that chapter, the cost accounting standards chapter, cost accounting systems chapter, sorry, cost accounting systems or cost bookkeeping chapter, we do it. So now what was the total under absorption here? 45,000. So here, 45,000 I account, right? Now out of this 45,000, 15,000 rupees is a period cost taken to my costing P&L. So what do? 15,000 rupees should be taken to my costing P&L. Now I incur more cost, hence it gets debited, right? And the balance, look at this, 22,500 increases my cost of goods sold. Ideally, my cost of goods sold goes to my cost of sales account only, right? More details about it we'll see in a cost bookkeeping or cost accounting systems area, right? So 22,500 gets debited because it increases my cost of goods sold, right? Then closing stock of FG value increases by 2,500, so FG account debit 2,500, and my WAP value increases by 5,000, so 5,000 rupees debited to your WAP account. Are you guys clear with this? So these three are because of your product cost, this one is because of period cost. The two put together is your total under absorption now being accounted for. Are you guys clear with this? Now what happens literally, so because of this under absorption treatment, sir, what is the impact on profit? Very simple. Now my profit falls by 22,500 plus 15,000, right? So because of this, so 22,500 plus 15,000, how much is this? 37,500. So my profit reduces or falls by 37,500. How, sir? Simple. Cost of sales is an expired cost, yes, and this period cost component, that is also an expired cost, fully expires, right? These two actually increases my stock valuation only. So literally these two are unexpired cost, it escapes the next year. Are you guys clear with this? So only these two are expired, right? In the current period, these two remain unexpired, so only that cost which expires in the current year gets knocked off against your revenue, hence my profit falls by the sum total of this, 37,500 rupees. Are you guys clear with this? A very good numerical problem, but for us to do this numerical problem, we had to see a background concept for the last 1 hour in this marathon itself. Clear with this, guys? That is the beauty of this particular chapter, the most technical area of this entire subject itself, I can say. Not just this particular chapter, the most technical area, not only in this chapter, of the entire subject, in my opinion, is this particular concept of absorption, right? Fine. Anyways, so that's about this particular question. Please go and update your library of adjustments. Write down treatment of under absorption. Please write down treatment of under absorption. Treatment of under absorption. Clear with this, guys? Now with this, Let's move on to the next one. Look at this, all this explanation I've given here. Treatment of under or over absorption due to normal price level changes should be treated as a product cost. Apportion it to the entire production using supplementary rate. If it is due to inefficiency, take it to your costing P&L, treat it as a period cost, right? What is supplementary rate? How to compute? All these things I've given, and even the journal entry I've given it here. All these things have been neatly summarized, and it has been properly given in your concept decoder book. The question and answers for that I have given it in your solved question bank. Here, that too, solutions personally improvised. Literally beyond this, you don't need anything at all. Trust me, if you do this properly, that is super sufficient in exam. Out of the entire 120 or whatever marks, including the choice questions they ask, literally everything you will be able to solve. Right? That's my open challenge to you, because literally I have not omitted anything. Every single thing has been covered here. Clear with this, guys? The next one, the next concept, this is called as blanket rate versus departmental rate. Sir, what is this, sir? Now, I will give you guys an example here, and with the help of this example, quickly we will understand or revise this area. Blanket rate versus departmental rate. What is this particular concept? What is this particular concept? Now, I'm giving you guys an example. Let us say I have two departments in a factory, P1, P2. Departmental overheads, let us say P1 department 20,000, P2 department 15,000. This is the overhead. Let us say the labor hours, I'm using that as the base quantity. Department 1 labor hours is 5,000 hours. Department 2 labor hours is 3,000 hours. Right? Now, I have two products, product A and product B. Right? I have two products, product A and product B. Right? Now, product A, it spends 2 hours, right? Sorry, it spends 3 hours in department P1 and 2 hours in department P2. Product B, this also passes through both the departments, but it takes 2 hours in department P1 and 3 hours in department P2. Now, first, if I use something called as a blanket departmental rate, now, how will I calculate the absorption rate? Blanket rate is nothing but another way of calculating the absorption rate. What do? I take the total. Look, I am not bothered in which location or in which department of the factory how much is incurred. In the factory, totally blanket. If you put a blanket, what happens? Inside it, what is there is not known, right? So the identity is not known. So totally in this factory, what is the total overheads? 20,000 plus 15,000, sir. 35,000 rupees the total overheads. Okay, fine. And in this factory, what is the total labor hours? 3,000 plus 5,000 plus 3,000, 8,000 labor hours, sir. So now, what is going to be the blanket absorption rate? So 35,000 divided by 8,000. So for every hour spent in the factory, I'm going to charge the product with how much? 4.375 rupees. Clear with this, guys? Now, whether that hour is spent in P1 or in P2, I am not bothered about it. Every unit, right, for every hour that a product spends in the factory, it should be charged with an overhead of how much? 4.375 rupees per unit. Are you guys clear with this? So now, in this case, if I use a blanket rate, you tell me, product A spends a total of how many hours in the factory? Forget P1, P2. Totally it spends how many hours? 5 hours in the factory. Every hour I will be charging it with how much? 4.375. Right? So how much is the overheads? 4.375 into 5. How much is that? So 21.875 rupees the overhead cost per unit of A. How about product B? Sir, product B also overall it spends 2 plus 3, 5 hours in the factory. Right? Every hour I charge it with 4.375. So how much is that? Once again the same, 21.875 rupees is the overhead that I'll be charging for every unit of product B. So whether it is product A or product B, both the products are going to be charged with an overhead cost of 21.875 rupees per unit. So in a blanket rate system, what we do is we don't retain the identity of departments. We take the total factory overheads divided by the total base quantity, arrive at a blanket or a single absorption rate, and using that we charge the absorption to the product. Clear with this, guys? If I do the absorption procedure in a total basis, that is called as what? That is called as blanket rate system. Whereas if I follow a departmental rate, what happens? department wise I compute the absorption rate. Sir, P1 department overheads divided by P1 department labor hours. How much is it? So 20,000 by 5,000, it is going to be 4 rupees per hour, right? Which means for every hour a product spends in P1 department, it should be charged with 4 rupees. For P2, it's going to be how much? 15,000 by 3,000. So how much is that going to be? It's going to be 5 rupees per hour. Clear with this, guys? So for every hour spent in department P2, the product should be charged with how much? It should be charged with 5 rupees. So here I will say, sir, product A, it spends 3 hours in P1, 2 hours in P2. So multiply this with 4 and 5 respectively. How much you get? So 3 4s are 12 and 5 2s are 10. So overall, the overhead cost per unit is going to be of A is going to be 22 rupees. How about product B? So here I will multiply this with 4, here I will multiply this with 5, so here it's going to be 8, here it's going to be 15. So overall, the overhead cost per unit of B is going to be how much? It is going to be 23 here, and it's going to be 22 here. Clear with this, guys? Whereas if I use a blanket rate system, both the products are charged at a same overhead rate in the overhead cost in this particular question. Clear with this, guys? So, or in other words, calculating the absorption rate department wise is called as departmental rate, whereas calculating the overheads on a total basis, factory basis, is called as what? It is called as blanket rate. Now you tell me, between the two, departmental rate versus your departmental rate versus blanket rate, which is a better way of computing overheads? Now obviously departmental rate is better to compute overheads. Why, sir? There are multiple reasons. Reason number one, if I use departmental rate, right, the overheads is accurately charged to the product. Why, sir? Now you guys tell me, for every hour spent in P1, what is the overhead rate? 4 rupees. Every hour spent in P2, what is the overhead rate? 5 rupees. Now between the two, which is a costlier department? Obviously P2. Now product A spends lesser time in a costly department, or in other words, product B spends more time in a costlier department, right? Obviously, hence it has to be given a more share of overhead cost, right? That is the reason why if you use departmental rate, product B has a more overhead cost per unit, 23 rupees, whereas product 2 has only 22 rupees. Why? Because B spends more time, 3 hours instead of 2 hours, it spends 3 hours in a costlier department. Clear with this, guys? Whereas if I use a blanket rate, I am not bothered about where it is incurred. I just total and say, look, A also spends 5 hours in the factory, B also spends 5 hours in a factory. Every hour I should actually charge it with 4.375 rupees, and I do it here. So both the products get a same share of overheads, while ideally product B spends more time in a costlier department. It should ideally get a more share of overheads, which has been properly captured only in your departmental rate, not in your blanket rate system. Are you guys clear with this? This is reason number one. And the most important is reason number two. If I use departmental rate, I have the flexibility to choose a different base quantity for every single department. Clear with this, guys? For example, department P1 is a machining department, right? Now for department P1, it makes more sense for me to use machine hour as the basis to apportion my overheads. Whereas if department P2 is an assembly department, it makes more sense to use labor hours as a basis. So if I use departmental rate, I can appropriately pick that particular factor which drives my cost, right? And I can use the appropriate base quantity to apportion my overheads properly. Clear with this, guys? Whereas if I use a blanket rate system, I necessarily have to use only one denominator. Clear with this? Because I don't retain the identity of the departments, so I don't have the flexibility to choose a department wise base quantity that actually drives the cost of the respective department. I necessarily need to use only one particular base quantity. Clear with this, guys? Right? So because of these broad two reasons, right, it is better to follow departmental rate than following your blanket rate system. Clear with this, guys? Right? So this is the concept of departmental rate versus blanket rate system. Clear with this, guys? So this was something that I wanted to revise once again here. Look at this. When a single overhead absorption rate is calculated for the entire factory, such an absorption rate is called as factory-wide rate or plant-wide rate or blanket absorption rate. The formula is total overheads divided by total base quantity. Suitable for multiple products requiring different resources and costly but accurate. When overhead absorption rate is calculated for each production department using the appropriate absorption base, it is called as departmental rate. So what is the formula here? Departmental overheads divided by departmental base quantity. Clear with this, guys? Which is more better? Obviously your departmental rate is better than your blanket rate system. Are you guys clear with this? Right? So, and there is one more thing here, which is called as machine hour rate. Machine hour rate is nothing but, it's nothing but your overheads divided by machine hours. Clear with this, guys? There's something called as a direct machine hour rate. There's something called as comprehensive machine hour rate. Now let us take and do one sum in this concept of comprehensive machine hour rate, and that would be the final discussion in this particular marathon for this particular chapter. Now please go and take question number 9. Please go and take question number 9. We will do something called as comprehensive machine hour rate. Directly we can get into this sum. Comprehensive machine hour rate means what? The total overheads divided by the total machine hours. That's about it. That's about it. So numerator by denominator you need to compute. Look at this. Question number 9. So let's get started here. Let's get started here. So, yes. Now, a machine shop has 8 identical drilling machines manned by 6 operators. There are 8 drilling machines, and 8 machines overall is being managed only by 6 operators, machine operator. The machines cannot be worked without an operator wholly engaged in it. Means what? So only if an operator is engaging, right? Only if an operator is there, the machines will run. Else, the machines will not run without an operator engaging on it. The original cost of all these 8 machines works out to 8 lakh rupees is the total cost. Next, these particulars are furnished for a 6-month period. What are they? Normal hours available per month. In a month, how many hours are available? 208 hours. Absenteeism without pay. So how many hours are leave without pay, for which I am not going to pay them? 18 hours. Leave with pay, how many hours are there? 20 hours, which means 20 hours they don't work, but I have to pay them for this 20 hours. Normal idle time, unavoidable, 10 hours. These are normal idle time, like lunch break, etc. Right? Then average rate of wages per day of 8 hours. How much is it? 20 rupees, which means 20 rupees the labor cost per day of 8 hours, which means per hour how much is it? 20 divided by 8. Clear with this, guys? Next, production bonus estimated on wages. 15% on the wages will be the bonus. Value of power consumed, the figure is given. Supervision and indirect labor, figure is given. Lighting and electricity, figure is given. All these are for a period of 6 months. Now, the following is for a period of 1 year. Repairs and maintenance, 3% of the value of machines. Insurance, 40,000. Depreciation, 10%. Other sundry expenses works out to, work sundry expenses is 12,000 rupees. The general management expenses allocated 54,530. You are required to work out the comprehensive machine hour rate for the machine shop. Basically, what do you mean by comprehensive machine hour rate? The total costs of this running this particular machine, right? That includes the salary payable to whom? This machine operators. We need to pay the 6 operators, right? So the total cost. So machine operator salary plus power, supervision, lighting, repair, insurance, everything put together, right? Divided by the total hours for which the machine is running. Now, guys, now there are 2 things involved here. First, now the total time for which the machine hours, the total machine hours, how will we compute? Simple. They've clearly given the machines cannot be worked without an operator wholly engaged on it, which means the effective working hours, the effective time for which the 6 operators work is equal to my machine hours. Guys, clear with this? Which means normal hours minus absenteeism without pay, with pay, normal idle time. We subtract all these things. The effective time I get is equal to the machine hours. Clear with this, guys? However, for the purpose of computing how much is the amount salary that I need to pay to them, now for that purpose I need to separately compute the hours for which I need to pay them, no? Because leave with the pay means what? For these hours they are not working, however I need to pay them for this. Clear with this, guys? So we need to compute the hours for which I'm going to pay them and the hours for which effectively they have worked. Why do I need to compute the hours for which I'm going to pay them? Because in the numerator, one of the costs is going to be my machine operator salary. Why do I need to compute the effective hours for which they have worked? Because this is equal to my machine hours. Are you guys clear with this? Which is useful for my denominator. You need to have this clarity. With this, you can crack this sum. Clear with this, guys? So first, now first, what is the normal available hours, right, for 6 operators in 6 months? Now, look at this. Look at this. The normal hours available per month is how much? 208. It's given per month. So, which means you need to do what? 208 hours are available for one operator, right, for 1 month, which means 208 hours are available, right, for 6 months, right? So 208 is the machine hours, the total hours available per operator per month. So into 6 months, 1248 is the total hours available per operator, but 6 operators are working on it. So into 6 once again, so the total normal hours available is how much? 7488. Now clear with this, guys. Next, what have they given? Absenteeism without pay. How much is it? 18. Now understand here, have they given per month? No. Which means totally every operator takes 18 hours for this 6-month period put together, which means totally how much is the absenteeism without pay? 18 hours into 6 operators. So 18 into 6, it's going to be 108. Clear with this, guys? Now, so this normal hours minus absenteeism without pay, if you subtract 7488 minus 108, you get how much? 7380. So I need to pay them. The paid hours is going to be 7380. I will have to pay them for 7380 hours. Clear with this, guys? From this, further subtract leave with pay. Means what? Sir, 20 hours. Every operator will not work for a span of 6 months put together. So 20 into how much? So 20 into 6 operators, 120 hours I need to subtract. Wait, for this 120 hours also I will pay them. Clear with this, guys? That's why I already calculated paid hours. From the paid hours, further I am subtracting leave with pay and normal idle time to arrive at the effective working hours. Means what? This is the number of hours for which I am going to pay them, useful for calculating my machine operator salary. Whereas the 7200 hours is the effective working time, which means this is equal to my total machine hours. Are you guys clear with this? Right? This is why we are computing it after the paid hours. Clear with this, guys? So leave with pay is 20 to 6. And what is the normal idle time? Sir, 10 hours, sir. In a span of 6 months, every worker, normal idle time, unavoidable is 10 hours. So 10 hours into 6, it is going to be 60. So 7380, I'm going to pay them for 7380. Minus 120 minus 60, effectively you get they work only for 7200 hours, which means for only the hours effectively worked, the machine will be functioning. So this is equal to the machine hours. However, I need to pay them for 7380 hours. Why, sir? For these two components, though they are not working, I have to necessarily pay them the labor cost. Are you guys clear with this? Right? So now, as the machine cannot be worked without an operator wholly engaged on them, therefore the effective working hours of the 6 operators for 6 months are the hours for which the machines can be used. Hence 7200 hours represents machine hours. This note clearly indicates the understanding of concept here. Now next one, what is going to be my operator's wages? Simple. I am paying them 20 rupees for every 8 hours worked. Correct? 20 rupees for 8 hours worked. So 20 divided by 8. So that's going to be 2.5 rupees per hour. This is the wages that I'm going to pay him. Guys, clear with this, guys? Yes. So which means totally I'll have to pay them how much? So for all the 6 operators put together, I have to pay 7380 into 2.5. How much is that? That is going to be 18,480. So 18,480 rupees is actually my machine operators wages for 6 operators put together for a period of 6 months. Are you guys clear with this? The first line item is sorted. Clear with this, guys? Next, what have they given? Production bonus is 15% of wages. So on this 18,450, apply 15%, you get 2767.5. That's rounded off to 2768. Clear with this, guys? The next one, all these figures: power 8050, supervision 3300, lighting and electricity 1200. These 3 line items have to be updated as it is. So these are all the costs incurred for 6 months directly given. Next one, repairs and maintenance is going to be 3% of the value of machines. How much is this? 8 lakh. So 8 lakh into 0.03. How much is it? 24,000. But be very, very careful. It is for 1 year. We are only doing the computation for 6-month period. Guys, it's given on the top for 6-month period, so which means half of 24,000, which is 12,000 rupees. Look at this, 3% on 8 lakh into 6 by 12 is going to be 12,000 rupees. Similarly, insurance, how much is insurance going to be, guys? 40,000 per annum. So which means for 6 months it is going to be half of this. It's only going to be 20,000 rupees. Look at this, insurance 20,000. Next, depreciation. How much is depreciation? 10% on the original cost. So 8 lakh rupees, the total cost of all the 8 machines put together. So 8 lakhs into 10% is 80,000. On this 80,000, only for half a year, it's going to be 40,000 rupees is the depreciation for this period. Clear with this, guys? Why is it 6 months? Because the denominator also we are going to take the effective machine hours for 6 months. In the numerator, take only the cost incurred for 6 months. Clear with this, guys? Then, what other thing is given? Sundry expenses works out to 12,000 per annum, which means 6,000 per year. I mean 6,000 for the 6 months, right? And general management expenses they have given 54,530 for this year. So 54,530, right, by 2, or you can say 6 by 12 into 6 by 12, you get 27,265. Add up all these costs, you'll get the numerator. How much is it? 1,39,033. This is the total overheads that you need to actually that needs to be charged, right? Divided by the total machine hours. So what is the total machine hours? 7,200. So this needs to be divided by 7,200. So 139,033 divided by 7,200. You get what? 19.3101 something. So 19.31 approximately is going to be the machine hour rate. So the absorption rate per machine hour is going to be the total overheads divided by the total machine hour, which comes out to 1,39,033 divided by machine hours, which is the effective working time for of these the machine operator, which comes out to 7,200 hours. So now it's going to be how much? 19.31 machine hours. Are you guys clear with this? And as simple as that. For us to do the sum, what happened? We had to do this this is one variety of question. There's no separate concept as such. This is machine hour is just one of the 6 base quantities, but separately they are testing this area alone, where the catch is with respect to the wordings of the problem, nothing beyond that. Clear with this, guys? Right? There are many other questions with respect to comprehensive machine hour rate. It's not concept driven, it's just about the catch, the wordings of the question, which we do all the sums in our regular and exam oriented batches. But here in a revision purpose, I wanted to take one representative question for this concept and solve that also. And with this question is over. So please go and update your library of adjustments. Write down comprehensive machine hour rate. Comprehensive machine hour rate. Clear with this, guys? Clear with this? So with this, we have literally completed all the concepts of this particular chapter, right? So primary distribution is done. Then we did secondary distribution. Look, the format also I've given here. Once you do that and come back, it's easy for you to revise, right? So we have done secondary distribution. Then the different methods and all of secondary distribution I've mentioned here. Absorption. What are the steps involved? We have seen 6 types of absorption rate, base quantities. Predetermined rate is actual rate. Then under or over absorption. We have seen this as well. Then blanket rate versus departmental rate, then machine hour rate problem also, and we have also solved about 5-6 numerical problems, and I've also given many numerical examples as well for the purpose of this particular chapter, and that's a comprehensive revision of this overheads chapter. Guys, clear with this, right? So with this, we have completed this entire revision of this overheads chapter. Now let's move on to the next one. So now let's start the revision of a new chapter, activity-based costing. Now the prerequisite for this chapter is overheads chapter. That is, you should have an idea about your overheads chapter. So it is better to watch your overheads chapter first before you enter into activity-based costing, because this chapter, activity-based costing, is nothing but an extension of overheads chapter. As simple as that, right? Now guys, one more thing, this chapter is a common chapter for CA Intermediate Costing as well as CMA Intermediate Paper 12 Management Accounting. The very same exact chapter is there for both CA and CMA Inter in Paper 12 Management Accounting. It is there. So this is also something I want to mention before we get started into this particular chapter. So on this note, let's get started. Now guys, what is the objective of this particular chapter, activity-based costing? The objective of this chapter is to calculate the overhead cost per unit of the product. Sir, what sir? In overheads chapter only, we saw the objective of overheads chapter is to calculate the overhead cost per unit, right? But once again, we are going to compute the overhead cost per unit only under activity based costing. Yes. Why, sir? Because there are some serious drawbacks in your traditional costing method, basically your overheads chapter. Now, first we will understand what those drawbacks are, and that is only being overcome under this chapter called activity based costing. So the drawbacks of your traditional costing method is being overcome using your activity based costing. If you understand this concept, right, this entire chapter is going to be super easy for you, as simple as that, right? We will also do one numerical problem and we'll close off. It's a very simple chapter provided you have a right application of mind. Clear with this, guys? Now, first, in overheads chapter, we saw that first we have multiple line items of indirect manufacturing cost, right? Let us say, for example, supervisor salary, your factory rent, repairs and maintenance, your depreciation on machinery and all that. Now, first what we do primary distribution, and we distribute all these line items to all the departments of this particular factory. Example, P1, P2, P3, S1, S2. Correct? Then what we do? We redistribute back the service department overheads back to the production department. This is what we do. So we redistribute back the overheads incurred in the service department back to the production department. So at the end of secondary distribution, we only have P1, P2, P3 overheads, right? This is called as secondary distribution. And finally, from this, the third step is called as absorption. What we do is that using the concept of absorption, so we convert these bulk figures into overhead cost per unit of the products. The products could be, let us say, product A, product B, product C, product D, and so on. So using the concept of absorption, we calculate what? So we convert these bulk figures into overhead cost per unit of each and every product. This way, we achieve the objective of converting these bulk items into overhead cost per unit of each of the products, and we actually come up with the final objective. This helps us to achieve the overall objective of stock valuation and profit computation. This is what we used to do in our overheads chapter, correct? Right? Which we call it as a traditional costing system. Now, activity based costing system says the starting point, correct, line items of all your indirect manufacturing cost. The destination is to calculate your overhead cost per unit of each of the product, right? So the starting point and the ending point are same in ABC as well as in traditional costing method, but what is different is only the journey. Activity based costing says this journey is absolutely wrong, right? Now what we did in traditional costing system, now we apportioned all the line items of expenses to all the departments. Why? Because we took a stand that, look, I incur cost because I have departments, so distributed back to all the departments. From here, the service department were reapportioned back to the production departments, and from the production department we charge it to the product, right? Now ABC says this particular methodology unfollowed under the traditional system follows a serious limitation. What is it? Now, to understand this, let us go back and revisit one concept in overheads which we saw, which was called as your blanket overhead rate versus departmental rate system. We saw that, right? So I will quickly revisit that. From there, if you actually take it forward, that is when the activity based costing concept will be appreciated in a better manner. Now, we saw this in the concept of blanket rate versus departmental rate, right? Let me refresh your memory with respect to this particular example. Let us say a factory has two departments, P1 and P2. The overheads incurred in department P1 was 20,000, overheads in department P2 was 15,000. And let us say in department P1, the labor hours were 5,000 hours, and P2 department, the labor hours were 3,000 hours, which means the absorption rate for department P1 is going to be 20,000 by 5,000, 4 rupees per hour. And the absorption rate for department P2 was 15,000 divided by 3,000, which is 5 rupees per hour. Right? So suppose I am following a departmental rate, means what? Calculating the absorption rate department wise. Right? In that case, how will I apportion or charge the overage to the product? Let us say I produce a product A which spends 3 hours in department P1, 2 hours in department P2. What will I do? For each of the 3 hours, I will charge it with 4 rupees. For each of the 2 hours, I will charge it with 5 rupees. This way, I end up with an overhead of 22 rupees for product A. Product B, let us say, spends 2 hours in department P1 and 3 hours in department P2. Right? So now what do I do? For each of these 2 hours, I charge it at the rate of 4 rupees, and for these 3 hours, I will charge it at the rate of 5 rupees. So if I multiply that, finally, I get an overhead cost of 23 rupees per unit. Right? Now, suppose if the company is following a blanket overhead rate system, which means single overhead rate for the entire factory, what will I do? Total overheads for the factory, which is 20 plus 15, 35,000, divided by total base quantity, 5,000 plus 3,000, 8,000 hours, which means a single rate is what I use. 35,000 divided by 8,000 hours, it comes out to rupees 4.375 per hour. Now, how will I charge the overage to the product? Simple. Product A spends how many hours in the factory as a whole? I'm not bothered about department-wise breakup. 3 plus 2, 5 hours it spends the factory. Each of the 5 hours, you give it a share of 4.375 rupees. Department product B, it spends how much? 2 plus 3, totally it spends 5 hours. I'm not bothered about where they spend the hours. Right, into a single rate. So you arrive at the overhead per product. Clear with this, guys? Now, between the departmental rate and the blanket rate, which rate is better? We saw that departmental rate is absolutely a better method as compared to the blanket rate system. Why? There were a few advantages. One of the most important advantage is that, look, suppose let us say P1 department is a machining department, P2 department is an assembly department. Now, if I follow a department-wise overhead rate system, then I have the flexibility to choose the appropriate base quantity. For example, department P1 is a machining department. Then to absorb my P1 department's overhead, now it makes sense to use machine hours as the base quantity. Suppose department P2 is an assembly department. Here it makes sense to use your labor hours as the appropriate base quantity. Guys, correct? So I have the flexibility to choose the appropriate base quantity based on the factor that drives my cost. Guys, clear with this? This was one of the biggest advantages of your departmental rate. Whereas if I use a blanket rate, single rate for the entire factory, I necessarily have to use only one. Base quantity. Now that need not be ideally the correct factor that drives my entire cost. Are you guys clear with this? So this was one of the reasons why we saw department-wise absorption rate is better than a single overhead rate for the entire factory. Guys, correct or not? Yes. Now. Let me take an example. Let us say departmental rate is correct. This is where ABC comes and says, even your departmental rate is not correct. Why? I will give you guys an example. With the help of this example, you will have a crystal clear clarity. Let us say department P1, one of the departments in the factory, is a machining department. Clear with this, guys? What does departmental rate, method of absorption rate, what does it say? Simply it says, so take a respective department. For that department, whatever has to be the appropriate base quantity, use that as the base quantity to absorb your overheads. This is what your departmental rate says. Yes. Now, let us say P1 is a machining department. So we'll say the entire P1 department overheads should be absorbed taking the base quantity as machine hours. Right? This is what your departmental rate says. Yes. Now, I will give you guys an example. Let us say department P1, right? This is going to be your machining department, right? Let us say this department's overhead was rupees 1 lakh, right? Which means this is a machining department. Machines are available here, and this departmental overhead is going to be how much? 1 lakh rupees. Now, how, sir, 1 lakh you have incurred? I am giving you guys the breakup. Now, out of this 1 lakh, I'm talking, this is 1 lakh is what? Departmental overheads. I'm not even talking about the entire factory overheads. In this entire factory, there is one department called P1 department, which is a machining department. So here the overhead is how much? 1 lakh rupees for this department. Now, how have they incurred 1 lakh rupees, sir? I'm giving you guys the breakup. Now, out of this 1 lakh, right, 60,000 rupees pertains to machine running activity. How much? 60,000 rupees. Then there is another activity incurred inside this department called setup activity. Let us say 15,000 rupees is actually the cost incurred for your setup activity. Let us say I carry out another activity called inspection activity, right? For this inspection activity, in this department, I incur a cost of 25,000. So literally, this department overhead is how much? 1 lakh. The breakup for 1 lakh is 60,000 rupees machine running activity, 15,000 rupees setup activity, 25,000 rupees inspection activity. Clear with this, guys, right? If you add up, you get 1 lakh. Now, logically think, had you used a departmental rate, right, as we studied in overheads chapter, this entire 1 lakh, right, for this entire 1 lakh, we would have taken the base quantity as what? Your machine hours. But however, if you notice, now only this machine running activity, 60,000 rupees is driven. This cost is only driven by your machine hours, guys, correct? Sir, only for the purpose of machine running activity, machine hours can be taken as an appropriate base quantity. Why? Setup activity, 15,000 rupees you have incurred. Setup activity is actually incurred not for your machine time, not based on the machine hours, but setup activity is driven, or it is incurred based on the number of setups you have, or in other words, number of batches you have. Guys, what do you mean by setup activity? Before I start a particular batch, right, I need to set up my machine, and only then I can start my production. For example, let us say I'm starting this video, this session. Before I start up this session, I need to turn on the camera, I need to turn on my MacBook, I need to turn on the lights and other thing, right? Once this particular lecture gets over, I will turn it off. Now, the duration of the lecture is not relevant, right? Here, the number of times I open and close my laptop is when actually I have to once again redo the setup. Clear with this, guys? So here, this setup activity is not driven based on your machine hours. It is completely driven based on a separate base quantity, which is number of setups. Similarly, inspection activity cost is how much? 25,000. It is not driven by machine hours. This cost is actually incurred based on the number of inspections carried out. Are you guys clear with this? Or in other words, right, even your departmental rate is wrong. It said entire 1 lakh, they are assuming it is driven by machine hours, while only 60% of this entire departmental cost is actually driven based on your machine hours, which is your machine running activity, because there could also be certain other activities which are incurred because of certain other reasons which could not be your which could not be your machine hours. Are you guys clear with this? So literally what your activity based costing says is, first of all, I agree with your starting point, I agree with your destination, but this journey is where I do not agree with what it says. Look, you do not incur the cost because you have departments. Clear with this, guys? So basically, what activity based costing says is that, look, you incur cost because you have activities, or in other words, activity based costing clearly says, look, you have multiple activities. You have multiple activities in your factory. Now, because you have multiple activities, you start consuming resources, and because you start consuming resources, you actually incur the cost. Are you guys clear with this? Hence, what our activity-based costing says is that, now, do not apportion your cost to all the departments by saying that, sir, I incur the cost because I have a machining department, because I have a production department, I have an assembly department. No. Zoom in further. It is not because of the department that you incur the cost. It is because of activity activities, right, within every department, that is the reason why you incur the cost. Hence, the correct way of doing is these line items of expenses should be apportioned to all the activities. First, list out what are all the multiple activities in your company, right? And try to allocate and arrive at the cost for every activity, and for every activity from here charge it to the products. Or in other words, here we use departments as the basis to actually transfer the costs to all the products, whereas activity based costing says, look, you don't incur all these line items of cost because you have a department. You incur these costs because you have activities, and activities, right, results in consumption of resources, and because you consume resources you incur cost. Sir, what is it? Example, setup activity. I have, because I have setup activity, right, the resource consumption is the number of setups I have, right? Because I have this activity, there will be multiple number of setups, and since I have multiple number of setup, let us say I am hiring a guy and I am saying I will pay him 100 rupees to actually set up every time I start a session, right? He should come, fix the camera, I mean turn on the light, turn on the camera, connect, and give me all this iPad, MacBook, everything he should connect and he should give it to me, right? He should turn on the mic and everything. Every time I start a session, I will actually hire this guy, and let us say I'm paying him 100 rupees. Now I actually do one setup. Now he is set up and he is gone. Now after one setup, whether I record 1 hour or I record for 10 hours in the day, it really doesn't matter, right? Here, this setup cost is not driven by the duration of the lecture. It is driven by the number of times I ask him to come and set up. Guys, clear with this? Or in other words, here the setup activity is an activity, right? The resource consumption is the number of setups, and because you have a resource consumption, it results in what? Incurrence of cost. So this is actually a game changer in the way in which cost gets looked at. Are you guys clear with this? So activity based costing was a game changer in the industry with respect to the perspective at which cost has been looked at. Literally in everyday real life scenarios also, you can actually use the concepts of activity based costing. Clear with this, guys? Now in this particular chapter, what we are going to do, we have multiple activities. On the starting point and the ending point, we need to calculate the overhead cost. We should calculate the overhead cost per unit of A, B, C, D, or overhead cost per unit of the product. Now how are we going to do it? Basically, we have multiple line items of expenses on one side, and we have the products on the other side. Now what we do is we arrive at what is the cost incurred for respective activity, and from there, for every activity, we will find out what is the appropriate cost driver. So what do you mean by cost driver? The factor that drives my cost is called as a cost driver, or in other words, in overheads chapter we called it as base quantity. In this particular chapter we are going to call it as cost driver. Some terminology difference. For example, machine running activity. What is the cost driver? The factor that drives the machine running activity is what? Machine hours. Setup activity, the cost driver is number of setup, because the cost is driven by the number of times you set up. Inspection activity, number of inspections. Clear with this, guys? That is called as cost driver. So first we list out the activities. For every activity we arrive at the cost driver, then we calculate the absorption rate, right, per unit of cost driver. What it is and all, we will be doing it with the help of one numerical example. And typically in this particular chapter, the exam question, how it will come like is that they will give a data and they will ask you to compute, right, apportion the overheads, calculate the overhead cost per unit of a product using the traditional costing system, that is overheads chapter, and under ABC. Clear with this, guys? This is how they actually test this particular chapter, and this is what is all the chapter about. Clear with this, guys? So in our concept decoder, all these things I have clearly explained in a very neat manner, right? I have also given you guys the format that needs to be used for our numerical problem. All these things I have separately done, just so that it's easy for you to quickly revisit the day before your exam. What is what? Do not worry. Clearly, we will take up one numerical example, and with the help of this example, we will completely finish this particular question or this particular chapter. Clear with this, guys? Now, please take your question number 1 in your, the CA Inter your CA Inter solved question bank. Please take question number 1. Now, look at this. The indirect expenses expended by a machine shop in a factory during a period amounted to rupees 1 lakh. The machine running time for the period is 10,000 rupees. What are they saying? In a machine shop, right, in a factory, The overall total overheads incurred is how much? 1 lakh. The machine running time, machine hours is how much? 10,000. The details of the utilization of machine time are as under. I produce two products A, B, right? How many units? I produce 200 units of A, 100 units of B, and A, totally these 200 units of A consumed a total of 5,000 hours and 100 units of B consumed a total of 5,000 hours, right? 5 plus 5 overall 10,000 hours was the total machine hours incurred in this factory. Trace the overhead cost per unit to the two products using traditional overhead absorption costing system. We need to calculate the overhead cost per unit under the traditional absorption costing system, right? How do you do? Very simple. Calculate the blanket overhead rate. Sir, 1 lakh divided by 10,000 hours. So how much is it? 10 rupees per hour, and accordingly you apportion it to the two products. You will arrive at the overheads attributable to A, attributable to B, divided by the respective units. You will arrive at the overhead cost per unit of A and B. We will do it, don't worry. Next, the company collected more details relating to the activity performed by its machine shop to enable tracing the indirect costs by using activity-based costing system. Now, what have they given? Sir, this 1 lakh, sir, what is the breakup of this 1 lakh? Now, out of this 1 lakh, 60,000 rupees is pertaining to machine running activity. 15,000 rupees is pertaining to setup activity. 25,000 rupees is pertaining to inspection activity. Guys, literally, right now I gave you guys an example, no? This example, whatever I gave you was nothing but I picked the figures from this first question only. Are you clear with this? Right? Now, what they have said, the cost driver means what? The base quantity, the factor that drives the cost. Machine running activity is driven by machine hours. Setup activity is driven by setup time. Instead of number of setups, they are using setup time, right? And inspection activity is driven by inspection time, the number of hours for which the inspection activity was carried out. Clear with this, guys, right? They have given in the question. And the cost driver consumption is given here, right? Totally, sir. Product A consumed total of 5,000 machine hours, B consumed 5,000 machine hours. How about setup time? The product A consumed total of 3,000 setup hours, B consumed total of 2,000 setup hours. How about inspection time? A consumed total of 1,500 hours, B consumed total of 3,500 hours. Clear with this, guys? Now, trace the overhead cost per unit of the two products using activity-based costing system. So, literally, this is how your exam question comes like. So, you need to calculate the overhead cost per unit under the traditional costing system and once under your activity-based costing system. Now, under the traditional costing system, how will you do that? That is the first part of discussion. So, calculating the overhead cost per unit using the traditional costing system. Now, what do you do? Simple. Take the total overheads divided by your total hours, right? Machine hours. So, it's going to be 1 lakh divided by 10,000 hours. It's going to be 10 rupees per machine hour. So, now what do I do? Sir, product A consumed a total of 5,000 machine hours. B consumed a total of 5,000 machine hours. So what is going to be the total overheads that I'm going to apportion? So 5,000 into 10, which is going to be 50,000 rupees of overheads is attributable to A. 5,000 into 10, 50,000 is attributable to product B. Clear with this, guys? 5,000 into 10, 5,000 into 10. So 50,000 rupees of overheads to A, 15,000 rupees of overheads to B. Now, how many units of A and B have been produced? 200 units and 100 units respectively. So how much is the overhead cost per unit of A? Sir, 50,000 rupees, the total overheads pertaining to product A. How many units of product A have been produced? 200. So 50,000 divided by 200. The overhead cost per unit of A is going to be 250 rupees. Clear with this, guys? Right? So it's going to be, one second. So it's 50,000 divided by 200. Yes, it's going to be 250 rupees per unit. How about product B? So product B share of overheads is 50,000 rupees, right? And this is the cost pertaining to 100 units of product B. So divided by 100. So literally you remove two zeros, you get what? 500 rupees per unit. Clear with this, guys? So under the traditional costing system, what you have is that so 250 rupees is the overhead cost per unit of A and 500 rupees is the overhead cost per unit of B. Are you clear with this? As simple as that, guys. Beyond this, there's nothing there. Beyond this, this is all it takes. Clear with this, guys? The next one. Now let's go on to activity-based costing system. Guys, use this format. This is a beautiful format and you can easily crack the sums with this format, right? So this is a format which I generally use for solving all the sums, right? This is the best format because It is a foolproof approach, meaning you cannot make mistakes easily. Now look at this. First, what you need to do. There are, in activity based costing system, you have a two-step procedure. Step number 1, calculating your cost driver rate. This is similar to your absorption rate. And step number 2, apportionment of overheads, or in other words, charging of overheads to product. Basically, guys, your absorption, that is the third phase of your overhead accounting, has two-step procedure. Step number 1, calculating your absorption rate. Step number 2, charging of overheads to product. Similarly here, instead of absorption rate, we call it as cost driver rate. Clear with this, guys? And step number 2 is apportionment of overheads to the products. Now, first list out the activities. What are the activities? Machining, setup, and inspection. These are the three activities available: machining, setup, and inspection. Now, these are the three activities, right? Now, activity wise, how much is the cost? Now, sir, machine running activity cost overall is 60,000, setup activity 15,000, inspection activity 25,000. Clear with this, guys? So this is called as cost pool. Clear with this, guys? What is it called as? Cost pool. Cost pool is similar to there in your overheads chapter. These are all departments. That's how we call it. And we call this as departmental overheads. Here we list out the activities, and the costs pertaining to every activity is called as cost pool. Clear with this, guys? Next, you need to write down what is the cost driver name. Clear with this, guys? So what is the cost driver name needs to be written down. So what is the cost driver name here? Now, sir, machine activity is driven by machine hours. Setup activity is driven by setup time. Inspection activity is driven by inspection time. Clear with this, guys? Cost driver name needs to be written. Next, what is the cost driver quantity? This is similar to the base quantity. Sir, overall, this machine running activity is driven by machine hours, right? The 60,000 rupees is incurred for total of how many machine hours? Read the question. 5,000 of A plus 5,000 of B. Overall, sir, in this factory, I have how many machine hours? 10,000 machine hours. Clear with this, guys? So now you can just put it up here. So it's going to be 10,000 machine hours. Similarly, setup time, how much is it? 3,000 plus 2,000. Overall, sir, the cost is incurred for 5,000 setup hours. So you can just write down here 5,000 machine hours. Right? Sorry, setup hours. Then how about inspection? 1,500 plus 3,500. Overall, you get how much? 5,000 inspection hours. Clear with this, guys? It's going to be 5,000 inspection hours. Clear with this, guys? Yes. So now, what do you have here? Simple. So now the cost pool, the respective activity cost pool divided by the cost driver quantity, if you do, you will arrive at the cost driver rate. There we call this as absorption rate. Here we call it as cost driver rate. Now 60,000 rupees divided by 10,000 machine hours gives you how much? 6 rupees per machine hour. So literally, guys, 6 rupees per machine hour is the cost driver rate. Are you guys clear with this? Similarly, 15,000 divided by 5,000 hours gives you how much? So 3 rupees is the cost for every hour of setup, for every setup hour. Clear with this, guys? So 3 rupees per setup hour. Similarly, inspection, 25,000 divided by 5,000 inspection hours for every inspection hour, right? So for every hour spent for inspection, the cost is going to be 5 rupees. Clear with this, guys? So this way, literally, we have found out the cost driver rates for the respective activities. Clear with this, guys? Now, once you do that, now what do you need to do? Apportionment of overheads to the respective products. Yes. Now, what is it going to be here? So what are the two products the company deals in? Product A and product B. So what you need to do? Particulars, product A, inside that 2 column, cost driver quantity amount, and product B under the 2 column, cost driver quantity and amount. So this is not P1, P2. Ideally speaking, this is product A, this is product B. Now product A, so what you need to do? You need to list out what are all the different activities. Machine activity, setup activity, inspection activity, right? Now, product A, what is the cost driver quantity? So, sir, product A, sir, it consumes 5,000 machine hours, 3,000 setup hours, and 1,500 inspection hours. Just write it down here. 5,000, 3,000, 1,500. Then, how about product B? Sir, it consumes 5,000 machine hours, 2,000 setup hours, and 3,500 inspection hours. Just listed out here. 5,000, 2,000, and 3,500. Clear with this, guys? Right? So now what do you need to do? Sir, for every machine hour, I should charge the product with how much? 6 rupees. So 6 rupees into 5,000 is equal to, you get 30,000, right? And 5,000 is equal to 30,000. So for every machine hour, I should charge it with 6 rupees. Similarly, setup time, guys. Setup activity. For every setup hour, I should charge the product with 3 rupees. So 3 into 3,000 gives you 9,000. 3 into 2,000 gives you 6,000 rupees. So out of this, overall 9,000 rupees is the setup cost attributable to product A. 6,000 rupees is setup cost attributable to product B. Clear with this, guys? So the total setup cost was 15. Out of this, I properly apportioned 9,000 to A and 6,000 to B based on the setup hours consumed by the respective product. This is a more fair and a rational way of apportioning your indirect cost, because you list out the activities. For every activity, you find out the cost driver, right? And based on that cost driver, you apportion it to the respective product. It is not a random base. You find out for every activity the factor that drives the cost, called as the cost driver, and you calculate the cost driver rate, using which you rationally and properly apportion it to the product. This is a more meaningful way of charging your indirect costs to your product. So this will result in a better and a fair costing. Are you guys clear with this? Similarly, your inspection. So for every inspection hour, I should charge the product with 5 rupees. So 5 into 1500, 7,500. 5 into 3,500, it's going to be how much? 17,500. So literally, we have calculated the activity wise share of costs for both the products. So now 30 plus 9 plus 7,500 is 46,500 rupees for A. 30 plus 6 plus 17,500, 53,500 rupees is the cost of overheads attributable to product B. Clear with this, guys? So now what do you need to do? So this is the total cost of overheads for how many units of A? 200 units of A, which means how much the cost per unit? 46,500 by 200 gives you 232.50. Right? This is the overhead cost per unit of A. How about B? It is going to be 53,500 divided by 100 units. Similarly, just simply remove 2 zeros, get 535 rupees per unit. Clear with this, guys? Right? Now, if you look at it, had you used your traditional costing system, the overhead cost per unit of A was how much? 250. Whereas here it is how much? 232.5. It is ideally less. Clear with this, guys? Now based on this only, you value your stocks, because your stocks are valued generally at full manufacturing cost. Prime cost components are at actuals, right? On top of this, you had overhead cost per unit. Now if you use your traditional absorption costing system, it results in a wrong costing of product, whereas this 332.5 rupees is a more appropriate and a more accurate way of charging your overheads to the product. This will result in wrong costing if you follow your traditional costing methodology. This is what your activity based costing says. Clear with this, guys? So 232.5 for product B. Under the traditional system, it was how much? 500 rupees. Now it becomes 535. Ideally speaking, every unit of B should get 35 rupees more share of cost of overheads. Clear with this, guys? Had you followed your traditional costing system, you would have undervalued or undercosted your product B, and product A, you're giving a share of 250, while actually you should be giving only 232. You are overcosting your product A. Are you guys clear with this? This will result in wrong costing of products, so wrong valuation of stocks, wrong fixation of selling price, because cost plus profit is equal to selling price. Literally, this entire company will get into a mess because of a wrong way of apportioning your indirect cost to the products. Are you guys clear with this? And this is what your overheads, this is what your activity based costing pinpoints and rectifies. Clear with this, guys? Basically, this chapter is nothing more than a refined version of your activity based, of your traditional costing system, right? So please go and update your library of adjustments. Write down question number 1. Please write down question number 1. Write down. Write down. Question number 1. Calculation of overhead cost per unit. Overhead cost per unit under traditional costing system. If you want, you can use the short form TCS. This is just for our understanding. Traditional costing system, TCS, and activity based costing, ABC. Under TCS and ABC. Clear with this, guys? Right? That's about it. Right? So overall in this chapter there's only this concept. Based on this, there are multiple variety of problems which we generally solve in our regular and exam oriented batch, but here for the marathon purpose I explained the concept and one representative sum we did here. And one more thing I want to tell you, the difference between your traditional costing system and your activity based costing system in the terminologies. So traditional costing system, activity based costing system, there we use departments to apportion your overhead cost. Here we use activities, right, to apportion your overhead cost. Number 2, there we call it as departmental overheads. Here we call it as activity cost pool. Clear with this, guys? In the overheads chapter we use the word base quantity. Here we use the word cost driver quantity. In your traditional costing system, your overheads chapter, we use the word absorption rate. Here we use the word cost driver rate. That's all it is. So here this chapter says your cost is not incurred because you have departments. It is incurred because you have the activities, and activities, if you have activities, it results in consumption of resources, and consumption of resources results in incurrence of cost. Hence, just because you have a name board saying department 1, department 2, department 3, don't think because of the department the cost has been incurred. Zoom in and see inside the department there are multiple activities. It is because of these activities that the costs are incurred. List out the activity. For each activity, arrive at the cost pool, that is the cost associated with the divide for that activity. Find out what is the factor that drives the cost, called as cost driver. For each and every activity, calculate the cost driver quantity, divide the cost pool with the cost driver quantity, arrive at the cost driver rate, and using this cost driver rate, charge it to the product using the base quantity consumed. Correct? Or in other words, your cost driver quantity consumed. And with that, this will be a meaningful way of apportioning and charging your overheads to products. Clear with this, guys? And that is all this chapter says. It's fairly a small chapter, but there are multiple varieties of problem based on the concept which we have revised right now. Clear with this, guys? So with this, we have fully completed this particular chapter. Generally, this chapter gets tested almost every attempt, and this is definitely an important chapter. So on that note, so this particular chapter is over. So now let's move on to the next one. So now let's get started with another chapter called as cost accounting systems, right? Now this chapter is a common chapter for CA and CMA students. In CMA, this chapter is called as cost bookkeeping. In CA intermediate, they call it as cost accounting systems. That's all is the difference. But for that, the content is exactly the same for both the courses. Now, shall we begin, guys? Yes, let's get started. Now, in this particular chapter, overall you have 3 different segments. Segment 1 is called as non-integrated system. Segment 2 is called as integrated system. And segment 3 is called as reconciliation of costing profits and financial profit. Sir, first of all, sir, what is this chapter talking about? Now, quickly, we will just revise this entire chapter, right, with all the concept and every single discussion. Now, guys, first of all, this chapter talks about preparation of your costing books, right? Preparation of your costing books of accounts. Now, or in other words, I can say that this chapter is exactly same as your cost sheet chapter with only one difference. there we prepared the costing records in a statement format. Here we are going to prepare the costing records in a ledger format with a formal accounting system of debit and credit, right? Now, before that, first, who needs to maintain books of accounts? Let's say your father is a salaried person. Now, will he prepare P&L balance sheet and all? No. Why? Because the law does not require your salaried individuals to maintain books of accounts and all. Then, sir, if I'm running a business, right? So, am I required to maintain books of accounts? Yes. Where is it maintained? Where is it mentioned? More specifically in the Companies Act. There is a section called Section 128 of the Companies Act that says every company needs to maintain books of accounts at the registered office, right? Now, what do you mean by books of accounts? That is defined in Section 2, Clause 13 of the Companies Act. It says every company needs to maintain records with respect to their income and expenses. That is called as P&L account. Then receipts and payments. That is called as cash flow statement. Assets and liabilities. That is nothing but your balance sheet. And it doesn't stop there. It also continues to say, there is a fourth clause here that says every class of company as prescribed by the central government should maintain records with respect to utilization of material, labor and all other expenses, right, related to production and sale of their goods and services. Basically, they refer to utilization or consumption based entries, which is nothing but they refer to cost records. Are you all able to understand this? Who needs to maintain cost records? Only certain class of companies as prescribed in section 148 of the Companies Act. Is that clear, guys? Now, this might look like a law session, but you need to understand the reasoning why you are actually studying this subject itself. Is that clear, guys? Right? Hence, under section 148, they say that they have prescribed that certain class of companies who meet the threshold, the turnover threshold and all, right, as prescribed by the central government, they need to maintain their cost records in a manner prescribed. There are forms like form CRA 1, CRA 2, CRA 3, CRA 4. There are 4 forms and all. And guys, this costing records, now if you see, the first 3 are financial records. Guys, correct? Yes. Now, your financial accounts need to be maintained as per accounting standards prescribed by ICAI. Am I right, guys? Our institute, CA Institute. Am I right? Similarly, your cost accounts, basically your costing records, need to be maintained as per cost accounting standards prescribed by the CMA Institute, that is the Institute of Cost and Management Accountants of India, and accordingly they have prescribed 24 cost accounting standards as on date. Is that clear, guys? Ideally, whatever you are studying as a part of your syllabus, for example, treatment of overheads, under or over absorption, whatever it is that you have studied, all these things are as per CAS, cost accounting standards. Are you all able to understand this? Yes. Next one. Now, financial accounts get audited by your chartered accountant. Guys, correct? Cost accounts needs to be audited by a qualified cost and management accountant, CMA. Are you all able to understand? Now, our subject has 3 objectives: stock valuation, profit computation, decision making and control. And this chapter squarely comes within the ambit of objective A of our subject, stock valuation and profit computation. And ideally, guys, the first objective, stock valuation, profit computation, is called as cost accounting. Objective 2 and 3, decision making and control, put together is ideally called as your management accounting. Is that clear, guys? Right? Now, guys, what the law says is that every company which meets that threshold or criteria as prescribed by the government needs to maintain cost records. Am I right, guys? Yes. Now, these companies, they have been given a choice, right? They can maintain their cost records either under non-integrated system or under integrated system. There are 2 ways in which your costing records can be maintained. What are they? Non-integrated system and integrated system. Non-integrated system means what? Now, you will have a separate team to maintain your financial accounts, separate team to maintain your cost accounts. Are you clear with this? Or in other words, your cost records and financial records are kept separately by two different teams. Is that clear? And at the end of the period, the finance team will report financial profit. The costing team will report costing profit. Is that clear, guys? Will both the profits be same? No. Why? In costing, we saw in cost sheet chapter, we only report operating profit. Now, certain other non-operating expenses, any cost incurred outside the three locations, are not considered in our subject. Non-operating incomes like your rental income, FD, interest, dividend received and all, these are not considered here, right? Certain other parameters are also there. These are not considered here, but they will be considered in financial accounts, guys, correct? Hence, these two profit will be different. Am I right? Hence, at the end of the period, you need to prepare something called as a reconciliation statement. Are you all able to understand this? Yes. Now, understand this will arise when the company is following non-integrated accounting system. Non-integrated system means what? Your costing records, financial records are kept separately. Whereas, if the company is deciding to maintain their costing records in an integrated system, it means that your financial accounts and the cost accounts are maintained together in an interlocked manner. Is that clear for everyone? Now, in this case, there is one team. It prepares a single set of books, hence they report only a single profit. Are you all able to understand? Now, in this case, now I don't have any two profits. Where is a question of reconciliation? Are you all able to understand? Hence, always remember, reconciliation arises only when the company maintains their accounts under non-integrated system. Hence, these are the three learning objectives of this chapter: non-integrated system, integrated system, and reconciliation of costing profit and financial profit. This is applicable only when the company follows non-integrated system. Are you all able to understand the background of this chapter? Now, with this, let's get started with the first segment called as integrated accounting system. Now, guys, for you to do this integrated accounting system, what is non-integrated accounting system? I'm sorry. The first segment is a non-integrated accounting system. Now, basically, guys, in this case of non-integrated accounting system, what do? Costing records and financial records are maintained separately. So here, costing records is completely outside the purview of your financial records, maintained separately by a separate costing team. Guys, correct. Now, in this case, now what do we need to do? We need to maintain our costing ledgers. It is nothing but you need to open some ledger accounts, debit and credit. You need to do the posting and all. Clear with this, guys? Now, this is a very simple area, provided you have some fundamental knowledge of your accounts. You guys have fundamental knowledge of accounts? Yes. Now in accounts, what do? Now, there are modern way of accounting. They say there are 5 different items: expense, income, assets, liability, and capital. Guys, correct? Now, expenses and asset, increase of an expense or an asset will get debited, and decrease will get credited automatically. Guys, correct? Now, with respect to income, liability, and capital, increase gets credited, a decrease gets debited. As simple as that. You guys know this? Yes. Now, this is the knowledge that you need to have in accounts. Now, under non-integrated accounting system, costing records are maintained separately. Yes. Now, I will tell you the rules of the game. Now, you need to follow these rules. And overall, in non-integrated accounting system, we will only maintain 11 ledger accounts, which means debit or credit of a particular journal should come only within these 11 ledger. Are you all able to understand? There are only 11 ledgers in cost accounts. That is basically your non-integrated accounts. Is that clear? Now, what are the 11 ledgers? First, stores ledger control account, called as SLC. Then you have WIP control account. We call it as WIP for classroom discussion. FG control account, we call it as FG. These 3 are asset ledgers, stock ledgers. Is that clear? Next, you have wages control account, right? Then you have production overheads account, administration overheads account, selling and distribution accounts. These 4 are expense ledgers. Is that clear? Next, you have a ledger called abnormal loss account. If there is any abnormal losses, you park it in this ledger. Guys, clear with this? It is a loss account. Means what? Any increase in this ledger will be, increase in loss will be debited. Increase in loss will be debited. Guys, correct? Next, you have a cost of sales account. Guys, this is nothing. Recall your cost sheet area. Cost of goods sold plus AOH plus SOH. If you add these three, you get your total expired cost. That is the total cost incurred. This is called as cost of sales. Guys, correct? This cost of sales should be knocked off against your sales to arrive at the profit. Am I right? Now what I do, this cost of sales is like a truck ledger. Here I will load it with cost of goods sold. I will load it with AOH. I will load it with SOH. Collect all the costs, and from here I will take it to my costing P&L account. Is that clear, guys? Right? The next ledger is costing P&L. This is where sales will be on the credit side, and on the debit side all the expenses will be there, and I will arrive at the profit. Is that clear, guys? So these are the 10 ledgers, right? There is 11th ledger called as General Ledger Adjustment, GLA, or this is also known as Cost Ledger Control, CLC. What is this ledger? We will see. Is that clear, guys? Right? So basically there are 3 stock ledgers, RMWPFG, then 4 expenses, wages, POH, AOH, SOH, then abnormal loss, cost of sales, costing P&L, and 11th man is called as a GLA or a CLC. Is that clear, guys? Now with this, what we will do? Now we will see segment wise. I will narrate you the transaction. Within these 11 ledgers, I want you all to tell me the journal entries. Will you guys do that? Yes. Online folks, please participate. Assume I'm standing in front of you and teaching, right? Just attempt, and that's all it is. Shall we get started? Now guys, first, please take your concept decoder book. Now, first, all these things I mentioned here. First, we will see journal entries related to purchase of raw material related entries. Now raw material is getting tracked under which ledger? Stores ledger control, SLC ledger, guys, correct? Now let us say first transaction, I am purchasing raw material. What will be the journal entry? Now if I purchase raw material, asset will increase, so SLC account gets debited. 2, I purchase it from a creditor, let us say to creditor account. Now you tell me, do we have creditor account here? No. Since this creditor account, it is a financial ledger, I don't have a creditor account. If you can't find this ledger within the first 10 ledger, park it under the 11th man called General Ledger Adjustment account. Is that clear? Or this is also cost ledger control, whichever name you want you can use. Is that clear, guys? So, or in other words, these 10 ledgers are what? Your cost ledger. Now suppose if a credit or a debit is coming from your financial ledger, we do not maintain that ledger, simply put it under General Ledger Adjustment account, or it is also known as cost ledger control account. Is that clear, guys? That's all it is, right? So what is the first transaction that we saw? Purchase of raw material entry, SLC account debit. 2, creditors is not there, hence I will take it to GLA. That's about the first line item. Second line item, materials issued to production. What happens? From my SLC, the product gets into my factory shop, WIP. Now what happens? WIP value will be more, so WIP account credit. Now SLC will be, balance will reduce to SLC. Is that clear, guys? So WIP account debit to SLC. Is that clear? Logic, both are assets. Increase in asset gets debited, decrease in asset gets credited. Logic also I'm telling you right now in the marathon itself. Is that clear, guys? Next one. Now maybe there could be a scenario where now these guys, the factory manager, he took some extra materials. Now he's returning it back to the stores. Now visualize what happens when he's returning back to the stores. What happens? Stores value will increase, SLC account gets debited. Now WAP value gets reduced, WAP account gets credited. Is that clear? Entry SLC account debit to WAP, as simple as that. Next one. Now suppose purchase returns, raw material gets returned back to the supplier. Now what will be the entry? Now you guys tell me. When I return back raw material to the supplier, my stores balance will reduce. Am I right? So SLC will get credited. Now SLC will get credited. Now what should be debited? Now when this happens, my creditor value will reduce. Reduction in a creditor, a liability will be debited. Am I right, guys? So I will debit the creditor account, but do we maintain creditor account here? No. Hence, instead of creditor, we will park it to GLA account or CLC account. Is that clear? So the entry will be GLA account debit to SLC. Are you all able to understand this? As simple as that. Please do not mug this up. Please do not mug this up. It is basic, your basic accounts inside costing. That's why it's called cost accounting. Is that clear, guys? Right? Next one. The next line item is direct materials purchased by factory. In exam, they will give you special orders. Sir, what is this, sir? Yes, you guys remember in regular batch we did? Yes, biryani example. Very good. How can we forget biryani? Now, I will explain this example. Now, guys, let us say in your house, there is a place called kitchen, right? And near the kitchen, there will be a storeroom. Now, from the storeroom, generally, your mom, from here only, she will take your rice and pulses, vegetables, whatever required, and she takes it to the production area, which is basically the kitchen. Guys, correct? Now, what happened one fine or not so fine day? Your guests came home and they said, only if there is biryani, we will eat. Now, there is the biryani rice got over. What mom asked, she called you and she asked you to go buy biryani rice. Right? Already what she did, cooker, she turned it on with water and all she has put inside. So water is boiling. So the moment you bring that biryani rice, maybe with that she will turn on the cooker and everything else can be done. Now what you did, you went and purchased biryani rice and you came back to home. What will you do? Option number 1, directly give it to your mom. She will cut the packet, put it here. Or option number 2, you will tell, no, I will put it in the store area. You go and take it. Which one will you do? So first, directly you will say, it is an urgent order. Now you please take it and start the manufacturing. In this case, start cooking that right away. Guys, correct? That's what we do. Similarly, in case of some urgent orders, now what happens? I will tell the supplier, look, don't come from this gate. This gate is stores area. I will open another gate for you. There you directly deliver to the factory shop. Why? It might be an urgent order. Guys, clear with this? In this case, what will be the entry? I am receiving raw materials, but directly to my factory shop. Entry, WAP value increases. So WAP account debit to creditor is not there. Hence GLA. Are you all able to understand? That is called special order. WAP account debit to GLA. Are you all able to understand? As simple as that. Next one. Indirect materials issued for production. What is this, sir? Example. Yes, cotton. Let us say I am operating in Tirupur cotton mill or Tirupur cotton textile industry. For me, raw material is cotton used for converting it into t-shirts or maybe apparels, wearing apparels. Now what I do? Suddenly, some Ayudha Puja. There was a puja celebration in our factory. Now what happened? We had to clean all the machines. What I did? One bunch of cotton I took, not for converting it into t-shirt, but I used this for cleaning my plant and machinery. Is that clear? Now what I bought as a direct material gets converted into indirect material. Guys, correct? Hence the entry will be what? Production overheads account debit to SLC. SLC gets credited. Why? Stock balance reduces. And this turns into an indirect manufacturing cost. Hence, the entry will be what? Production overhead account debit. Increase in expense gets debited. Reduction of asset gets credited. Is that clear, guys? Logic, you remember. That's about it. POH account debit to SLC. Next, abnormal raw material loss. Obviously, abnormal loss. Let us say there's a theft of theft or any fire. So now, your stock gets stolen and all. What is the entry here? Now SLC gets credited because stock balance reduces. Now there is a loss that gets created. So abnormal loss. The entry will be abnormal loss account debit to SLC. Is that clear, guys? That's about it. Finally, transfer of raw material from one job to another job. Now what happens? The entry is transferee job account debit to transferor job account. Now, sir, can you give us an example? What is this? Simple. Let us say I am operating in a job costing sector. Let us say I am operating in a job costing sector. Now, what happens? I have stores area. Here I have a WAP area. In a WAP area, what happens? Multiple jobs are, being in process. Multiple jobs are being in process. Let us say there are two jobs, job A, job B. Both these jobs require, let us say, a common material. Let us say screws, nuts and bolts. Now, from the stores, I actually originally issued these bolts to whom? Job A. Now, suddenly job A has excess nuts and bolts. Job B says it wants some nuts and bolts. Now, two option. Option number one, from here itself, A can transfer it to B. Or option number two, B is asking A, please supply. A is saying, no, I will return it to the stores. You go and take it from the stores. Now, if this returning and taking back comes in, it is a waste of lot of time, and remember, for every movement there will be a cost incurred, guys, correct? Now, what is the ideal thing to do? Here itself, A will transfer it to B, guys, correct? Now, the entry will be what? B is also a WAP, A is also a WAP, all these are WAP subledgers, guys, correct? So, job B value will increase. So, job B account debit, receiving job, transferee means the recipient, transferee job account debit to transferor job, the value of A will reduce. Is that clear, guys? Right? Now, you might have a doubt. Sir, transferee job, transferor job are not within the 11 ledgers given, no? Guys, understand. Now, let us say you are making sales to Mr. A. He is a debtor. There is another debtor called B. There is another debtor called C. Right? You are making different sales to different people. The entry, though you say, is debtors account debit to sales. Ideally, you will actually say it is not debtor account. You will say A account debit to sales, B account debit to sales, C account debit to sales. That's what we do. Guys, correct? ABC value put together, I call it as debtors. Or here, debtor is a main ledger, ABC are sub-ledgers. Similarly, in this case, WAP is a main ledger, job A, job B, job C are sub-ledgers. Hence, these are all sub-ledgers inside WAP. Hence, the entry will be the receiving job value increases, hence debited, to giving job, so the value reduces, hence credit. Is that clear, guys? As simple as that. That's the reason why we have kept this entry, transferee job account debit to transferor job account. Is that clear, guys? So now with this, we have finished all the journal entries relating to raw material. Shall we move on to the second discussion, which is what? Your wages. Yes, shall we get started? Yes. Now, with respect to wages, there are only two entries. Entry number one, incurrence of wages. Entry number two, utilization of wages. What is it, sir? First, I paid wages. Entry will be wages control account debit to cash or bank. I don't have cash or bank, hence put it in GLA. Is that clear? Now, let us say I paid 100 rupees. Now, out of this 100 rupees paid as wages, let us say 20 rupees is direct wages. Let us say 30 rupees is indirect manufacturing wages. That is basically your supervisor's salary, production overheads. Let us say another, I said 20 direct wages, 30 is production overheads. Let us say another 25 rupees is paid for administration overheads, right? Maybe your office boy salary. Another 25 rupees is paid to salesmen, so it comes under SOH. Now, from my wages account, I need to take these figures to the respective ledgers. Guys, correct? The first entry is what? I build my wages account, wages control account debit to GLA 100. Guys, correct? Now, what will I do? From here, direct wages, I will take it to WAP because it is incurred there only. Direct wages should be taken to WAP. Yes, so I will say WAP account debit. How much? In our example, 20. Then, sir, supervisor salary was 30. Take it to POH account debit. How much? 30. Then, sir, office boy salary we paid. AOH account debit. How much? 25. Then, sales staff salary, SOH account debit. Another 25 to wages control account 100. Are you all able to understand? This is what we saw here. So, your WAP account debit, POH account debit, administration overage account debit, selling overage account debit. Now there could also be some abnormal idle time. If there is an abnormal idle time, means what? I paid the amount but I couldn't derive any benefit out of that account. That amount you need to take it to your abnormal loss account. Guys, clear with this? Take it to your abnormal loss account to wages control 100. Is that clear? So basically what happens? Wages control 100 debit, wages control 100 credit, it gets knocked off. It's just a via media ledger. So wages control account, you will have 100, I'll say 2 GLA, and then by I will be having what? WIP, direct wages, right? POH, AOH, SOH, and maybe abnormal loss. I will have the breakup of this 100. So this 100 and 100 gets tallied. Wages control will always tally. Is that clear, guys? Next one, that's about it. Are you all able to understand? Now with this, we have completed entries relating to material, entries relating to direct wages also. Now you might be wondering, sir, direct expense is also one of the components of cost, but here we can't see any direct expense ledger, only wages. After that you've gone to POH, AOH, SOH. Where is direct wages, sir? Now guys, let us say direct wages account was there. Now in that case, what will be the entry? I incur direct wages. Direct expense. What will be the entry? Direct expense account debit to cash or bank. I don't have, hence I put it to GLA. Am I right? Now, whatever direct expense cost I incur, I should transfer it to WAP. Guys, why? Because that is where the conversion of RM into FG happens. So, entry will be what? WAP account debit to direct expense. Ideally, direct expense and direct expense gets knocked off. Direct expense ledger, even if you open, you'll create the expense, transfer it to WAP. Guys, correct? Hence, one debit, one credit. What is the need for you to have a ledger? Hence, the net of entry is what? WAP account debit to GLA. Hence, directly, any direct expense, you take it to your WAP ledger itself. So, journal entry will be what? WAP account debit to GLA. Is that clear, guys? Hence, there is no need for you to maintain something called as a direct expenses account. Is that clear for everyone? Are you all able to understand? So, with this, we have finished what all components? Material, direct labor, material, wages, and then direct expense is also done. Is that clear, guys? Now, the main part of discussion in this chapter revolves around overheads chapter. Now, recall our discussion in overheads chapter. It's very, very important. Shall we begin? Yes. Now, overheads, there are three types of overheads. What are they? POH, production overheads, AOH, admin overheads, SOH, selling overheads. Now, as we all know, AOH and SOH are your P&L account items. Period cost means it does not enter into your stock valuation. Whereas POH, this is considered as a product cost, right? So it needs to be considered for the purpose of stock valuation. Is that clear, everyone? Yes. Now, guys, understand, in each of these three types of overheads, there are three phases of overheads accounting. What are they? First, actual overheads. Then you have absorbed overheads. Then at the end of the period, you compare actual with absorbed. You have under or over absorption. A very technical discussion. For you to know this, you should have a complete clarity on your overheads chapter, absorption, how it gets carried out and all. Is that clear, guys? Which you have already seen. Now, first, let me open this production overhead account and show it to you. Now, guys, POH account, how does it look like? First, POH account, indirect materials. For example, that cotton used for cleaning my machines, right? What was the entry? POH account debit to SLC. I would have got it from SLC. Guys, correct. That is an actual POH incurred. Similarly, supervisor salary paid, POH account debit to wages control. I would have received some amount there. Is correct. Next, let us say factory rent paid. That is production overheads I am paying out of my pocket. Entry, POH account debit to cash or bank is not there, hence to GLA. So to GLA, some indirect expenses I pay. Guys, correct? Indirect material plus indirect wages plus, indirect labor plus indirect expenses put together gives you your total production overheads. Am I right, guys? Now, Now, let us say the total production overheads incurred was how much? 60. Now, this amount of debit, it will be happening throughout the year. Am I right, guys? As and when I incur, I will be debiting this amounts. Put together, the sum total of debits comes out to 60. Guys, correct? Now, can costing wait till the end of the year? No. Now, what do I do? Parallelly, as and when a product comes out of the machine, what will I do? I will have to charge these products with with my absorption rate. What absorption rate? Predetermined rate into actual base quantity consumed. We've already seen that, guys, correct? So now, based on a predetermined rate, I keep on charging the products with what? With my absorption rate, with my overheads, guys, correct? Let us say at the end of the year, I notice till date throughout the year, the sum total of all the overheads absorbed was how much? 50 rupees. Now, entry for absorption of overheads. What will happen? Absorption is charged to the product. Where is the product getting manufactured? In my WAP area. Entry will be what? Now, WAP value will increase. So, WAP account debit to POH account. Guys, correct? Are you all able to understand? So, the entry will be WAP account debit to POH. Why? Because now I remove it as an expense and then I use this to value my product asset. Is that clear, guys? Are you all able to understand? Guys, any problem here? So, incurrence entry will be what? POH account debit to GLA. Guys, correct? Now, next one. My absorption entry will be what? WAP account debit to POH. Is that clear, guys? Now, at the end of the year, what I do? I have incurred 60, but till now I have recorded only to the extent of 50. The balance 10 rupees is treated as an under absorption in this case. Guys, suppose on the contrary, actual incurred was 50, but absorbed was 60, there would have been an over absorption. Whatever we are doing here, it could have come on the debit side. Is that clear, guys? Now, this 10 rupees, what will you do? Under or over absorption? In this case, under absorption. Manner of treatment of under absorption, we have already seen that in our overheads chapter. Now, because of normal reasons, in that case, using supplementary rate, you will apportion it between three guys. Who are they? Units sold, that is cost of sales. Units unsold, that is FG, and units incomplete, WIP, using supplementary rate. Guys, correct? If it is attributable to any inefficiencies or abnormal reasons, take the entire amount as a period cost. Take it to costing P&L. You guys are aware of that? Yes, that's what you need to do. Are you all able to understand? So, three phases of accounting are there. Phase number 1, actual overheads. Phase number 2, absorbed overheads. Phase number 3, under or over absorption. Is that clear, guys? So, now we saw with respect to production overheads. Now, shall we do with respect to administration overheads? Guys, AOH. Similarly, in AOH, any indirect materials used for materials, if I'm using it for, let us say, corporate office purposes. So, entry will be AOH account debit to SLC. Am I right, guys? Guys, correct? Then any director's salary or office boy wages, salaries paid and all. So, entry will be AOH account debit to wages control. I would have already got these two figures. We already saw this in material labor related entries. Now, I am incurring some, let us say, office rent. Entry will be AOH account debit to yes, GLA, cash or bank. I'll call it as GLA. Guys, correct? So, here also I'll be having actual incurred. Guys, correct? Guys, are you all able to understand? Now, parallelly, what will I do? I will be absorbing my administration overheads. Guys, correct? But remember, AOH is what? AOH is actually a period cost. Should not be considered for the purpose of stock valuation. Am I right? Hence, I will take it to costing P&L. Guys, correct? But wait. Instead of directly taking to costing P&L, I have a truck waiting. For example, let us say, guys, you are shifting your house. Old house is there, new house is there. In your house, you have so many articles, right? So many articles, utensils you have. Now, two options. Option number 1, take one by one on your head and go and come back and transport it. Or option number 2, call a truck, transfer everything into this truck, single shot, take it to your new house. Which one will you do? Option 1 or 2? Option 2, you will transfer everything into a truck. Similarly here, whatever cost that needs to be taken to my costing P&L, I load it into the truck called as cost of sales. Basically, what will come? What will come here? Cost of goods. So we saw there, no? Remember, recall, format of cost sheet. Cost of goods sold plus AOH plus SOH. I will load it here the truck. This single shot, I will take it to my costing P&L. Are you all able to understand? Hence, what I do, AOH absorption, what will I do? It should be taken entry. Cost of sales account debit to AOH. Are you all able to understand? Is there any issue here? No. Now what happens here? So if there is any under or over absorption, take it to your costing P&L. There is no multiple treatment here. It is fully treated as a period cost. Is that clear, guys? Right? Similar treatment for SOH. Actuals gets debited. Guys, correct? Absorbed SOH should be taken to SOH account. Any under or over absorption should be taken to your costing P&L account. Is that clear for everyone? Are you all able to understand? So each of the three overheads, we saw three phases. Actual overheads incurred, absorbed overheads, and under or over absorption treatment. We have seen it. Are you all able to understand? Is there any issue here? No. Now, guys, there is one small issue as well. What is it? What is it? Now, guys, till now we have seen that AOH should be treated as what? Period cost only. Guys, correct? Which means, is it considered for the purpose of stock valuation? No. However, in some cases, some people, they consider AOH as a part of. They consider AOH as a part of product cost, right? For example, CA Inter, we take it as period cost, but in CMA Inter, Institute takes a stand, treat it as a product cost. Not very logical, but yes, this is the method they follow. Is that clear? Now, in this chapter, in CA Inter also, I am saying in this chapter, in some questions they would have mentioned AOH is treated as a product cost. Now, in that case, what will you do? There is one small difference. What is it? I will tell you. Shall we get started? Now, if you look at the format of cost sheet, how does it look like? Now, direct material consumed plus labor plus direct expense gives you prime cost plus POH gives you gross works cost. Add opening WAP minus closing WAP gives you factory cost. Guys, correct? Now, what they are saying, now, guys, here they are asking you to add AOH. Ideally, those 4 addition, 1 deletion will come now. In this chapter, 4 addition, 1 deletion and all will be a part of POH only. Guys, are you clear with this? Right? 4 addition, 1 deletion is only for the purpose of cost sheet. Here, they are not keeping all those things. There, they wanted to present. That's all. Here, everything is a part of POH. I told you. Now, what they are saying, they want, in case you are treating AOH as a product cost, they are saying, add it here. Are you all able to understand? Right? Now, with this, you will arrive at a cost of production. Guys, correct? To this, add opening FG minus closing FG, you will arrive at cost of sales. Or in other words, if you notice in your WAP area, whatever cost you incur, guys, correct? Now, one portion, that is cost incurred in respect of units completed and transferred, called as factory cost. The other one is closing WAP. Am I right? Now, what happens? This factory cost, this enters into your FG area. Am I right, guys? So, in FG area, you have factory cost. Now, if at all you are treating administration overheads as your product cost, they are asking you to add it here. Are you all able to understand? So, this will give you the cost of production. Guys, clear with this? To this, add opening FG minus closing FG. You will arrive at what? Cost of goods sold. Are you all able to understand this? Now, why, sir? This is a treatment. They want to do it. And one more thing, the treatment is different. If you notice, production overheads, if you're absorbing, you take it to WAP account. Whereas AOH, if it is being treated as a product cost, it is taken only to FG account. Why? Because they are saying AOH should be considered to value only your FG. If you take it to your WAP account, it is used for valuing WAP as well as FG. Guys, correct? Are you all able to understand? Hence, here there is a small difference in a way of treatment. Are you all able to understand? And now, if you're preparing that income statement, recall two format statement, two format approach. In that case, sales minus COGS gives me gross profit. From here, I will subtract only SOH. Why? AOH is already considered as a product cost. Is that clear, guys? I will arrive at the operating profit. So, if AOH is treated as a product cost, the treatment will be different. AOH absorbed should be taken to your FG ledger. Are you all able to understand? If that is the scenario, in that case, what will you do? AOH account, whatever you incur, actuals are debited. Absorbed AOH, don't take it to cost of sales ledger, take it to FG account. Is that clear, guys? And any under or over absorption, take it to your costing P&L. Are you all able to understand this? This is a very, very important treatment and adjustment. Is that clear, guys? Since this is a marathon, I am quickly brushing up all the concept. Still, we are doing every single entry and concept here. Are you all able to understand this? Right? So now, first one, your POH actuals here, absorbed is taken to WIP. Under or over absorption, two treatments can be done. If it is normal reasons, distributed between these three guys using supplementary rate. Abnormal reasons, inefficiency, take it to costing P&L. AOH, what is the issue? Now, actuals are there. Now, absorbed, AOH absorbed. Now, if AOH is treated as a period cost, take it to cost of sales. If it is treated as a product cost, take it to FG account. Any under or over absorption, always taken to P&L, costing P&L. SOH, no problem, always same approach. What is that? Debit actuals. On the credit side, you will be having absorbed SOH taken to truck, always cost of sales. It's always a period cost. Balancing figure is going to be your costing P&L. You need to take it. Is that clear, guys? Right? And that's about the treatment here in this area. Are you all able to understand? Is there any issues here? No. This is what I have mentioned here with respect to overheads. If you look at this overheads, production overheads, AOH, SOH, incurred entry, respective overheads account debit to GLA. Clear? Absorption, POH absorbed will be taken to WAP. AOH absorbed will be taken to cost of sales, or if it is a product cost will be taken to FG ledger, and SOH will be taken to cost of sales. Is that clear? Under or over absorption, these entries we have seen already. Now doubt busters, look at this, very important. In case of over absorption, the journal entry will be exactly inverse of under absorption. Sometimes AOH may be considered as a product cost for valuing your FG. In that case, under or over absorption, this case will impact the FG account instead of the costing P&L account. Just now we did this. Is that clear, guys? And finally, you should also have some other transaction, that is transfer entries. Remember, in our subject, any movement or flow of cost should be tracked. Am I right, guys? Hello? Yes, guys. Are you all clear with this? So now, what will I do? First, now in my WAP, now RM to WAP, units are getting transferred now. That we saw the entry in RM area itself. What was the entry? WAP account debit to SLC. Now, from WAP area, some goods can be completed and transferred to your FG area. What will be the entry? FG value will increase, WAP value will decrease. FG account debit to WAP. So this is the journal entry for completed goods. Is that clear? These are transfer entries. Next. Now guys, what happens? Sale can happen. Now always remember, for sales, there are two entries. One entry is for recognizing the revenue. The other entry is for flow of cost. Why is there flow of cost? Now when I'm selling, from my FG, the product goes out. Guys, correct? I need to track the value, cost of goods sold. Am I right, guys? Are you all clear with this? Right? And I should also recognize my revenue. Guys, correct? So for sales, two entries, cost side entry and sales side entry. Now, you look at this. This is very, very important. Let us say the cost of goods sold is 100 rupees and the selling price was fixed at how much? 120. Now, first you tell me what happens with respect to this 100 rupees worth of stock is actually moving out of my FG area. Am I right, guys? What is the journal entry here? Now, first FG account value will reduce. FG gets credited. Am I right, guys? Right? Now, two. Now, there is no cost of goods sold account. Truck is waiting outside. Guys, correct? All the expired costs can be loaded onto the truck. The entry will be what? Cost of sales account. Is that clear, guys? Entry will be what? Cost of sales account debit to FG. That is, there is now an expired cost. Guys, correct? That is cost of sales account to FG. Why FG gets credited? Reduction in asset. Are you all able to understand? Is there any issue here? Guys, you guys are able to understand this? Yes. Next. Now, sir, 120 rupees, sir, is the selling price, I realize. What will be the entry? Logically think. Now, the entry will be, one second, I will tell you. First, normal financial accounts, what will be the entry? I'm making sales. Entry. Debtors account debit to sales. 120. Am I right? Debtor account debit to sales. And at the end of the year, sales account will be transferred to P&L. Am I right? So sales account debit to costing P&L. Am I right? Now, if you knock off sales, one debit and one credit is there. So the net entry will be what? Debtor account debit to costing P&L. Now, in our subject, do we have debtor account? No. Hence, put it under GLA. Net sale revenue recognition entry will be GLA account debit to costing P&L. Is that clear? Are you all able to understand? This is revenue recognition entry. This is a movement of cost entry. Are you all able to understand? That's what I have mentioned here. So cost of sales of completed goods is going to be cost of sales account debit to FG account. And the sale of completed goods is going to be GLA account debit to costing P&L. Is that clear, guys? Now, with this, all your journal entries in your cost accounting, in your non-integrated accounting is over. Now, once again, guys, I will give you the big picture. Now, sir, I've passed all the entries, sir. Now, how will my ledger look like? How will my ledger look like? Now, guys, please focus. This is a closure. This is a closure, gives you a full-fledged closure here. Now, I have 3 asset accounts. What are they? SLC, WAP, FG. Then I have 4 expenses: wages, POH, AOH, SOH. Then I have abnormal loss. Then I have truck, cost of sales. Then I have costing P&L. Now, finally, if you are closing, these 3 are assets. They will be having a closing balance. Am I right? Debit side will be more, credit side will be less. Guys, correct. This is the total raw material available, out of which some I would have consumed. The balance is the closing stock of raw material. Guys, correct. Debit is more than credit. Hence, I balance the credit side. This becomes by balance brought down. So this is ideally debit balance. Am I right, guys? So I have debit balance in my SLC. This is nothing but value of goods unconsumed, raw material unconsumed. And WAP is nothing but value of goods incomplete. And FG, value of goods unsold. Are you all able to understand? All the 3 will be what? All the 3 will be what? Closing stocks, basically, guys. Closing stock comprises of 3 components. The 3 components of stock: RM, WAP, FG. Are you all clear with this? Next, wages account. Already it gets knocked off, right? One entry for incurrence and utilization. I take it to the respective ledgers. Your WAP, POH, AOH, SOH, abnormal loss and all. Guys, correct? POH account. Actual, absorbed. Any under or over absorption, I take it to costing P&L. Guys, correct? Similarly, AOH, actual, absorbed, under or over absorption, costing P&L. SOH, actual, absorbed, under or over absorption, costing P&L. Guys, correct? Abnormal loss. Now, material abnormal loss, labor abnormal loss. Abnormal loss in labor is abnormal idle time. Whatever is there, I collect it, take it in a single shot to costing P&L. Guys, correct? Next, cost of sales ledger. What will it have? First, it will have the value of goods sold, cost of goods sold. It will get from FG plus AOH plus SOH gives you cost of sales. Take it fully to costing P&L. Is that clear? Now this ledger also gets closed. All are nominal accounts. Now, first in my costing P&L, I have by GLA. This is nothing but what? Revenue recognition entry. By debtors. Instead of debtors, I put GLA. Am I right, guys? Guys, correct? Now, this is my revenue. What is a cost? Cost of sales. I get all my expired cost. Guys, correct? That's nothing but cost of goods sold plus AOH plus SOH. Guys, correct? Then not just this. In this case, we had under absorption. So, in under absorption of AOH, POH, SOH comes here. If it is an over absorption, it will come on the credit side. Is that clear? Then, abnormal loss. Whatever was there, that also gets debited. Guys, correct? Now, overall, I have a profit, a revenue minus all the costs. I will get a profit. So, if the credit is more than debit, there is a profit. If the debit is more than credit, there is a loss. Guys, correct? Now, this loss, where will I transfer? Generally, in accounts, what do? Any profits you have, you transfer it to reserves. Entry will be costing P&L account debit to reserves. Now, here, reserve account do I have? No. Take it to GLA. Are you all able to understand? Hence, I will say to GLA, this balance. Now, if you notice, this GLA account, what happens? All these things, debits and credits, this GLA, what is the meaning of this GLA? It is not a single ledger. It is a summary of all your financial ledgers. Every other ledger except the first 10 ledgers is called as GLA. Is that clear, guys? And GLA will always have a credit balance. That is, the credit will be more than the debit. That's why you have this on the debit side. It will be 2 balance brought down. Is that clear, guys? Now, if you want to prepare a trial balance, now you will be having 3 debits. What are they? SLC, WIP and FG. Guys, are you clear with this? Right? And this is corresponded with one credit item called as a GLA. Is that clear, guys? Is everyone able to understand? Hence, now what happens? Your trial balance will tally. The total of debit will be equal to the total of credit. Is that clear, guys? And that is all predominantly this chapter says. Is that clear, guys? This is the first segment called as non-integrated accounting. Now, integrated accounting also is over. Sir, how, sir, it is over? Exactly same as a non-integrated accounting system with only one difference. What is that? Now, instead of GLA account, you take it to the respective financial ledger. For example, purchase of raw material entry, SLC account debit to bank or to creditor. Is that clear? So don't take GLA. Are you all able to understand this? Is there any issue here? Wages paid entry, wages control account debit to bank. Is that clear, guys? So instead of GLA, if you use a respective financial ledger, that is called as a integrated accounting system. So the journal entries in integrated accounting systems are same as a non-integrated accounting system, except that instead of general ledger adjustment account, the respective financial accounts are debited or credited. Is that clear, guys? And that's about the first two segments of discussion, which is a non-integrated accounting system and integrated accounting system. So now shall we move on to the third segment, which is reconciliation of costing profit and financial profit. Yes, so let's get started. Now, guys, let's move on to the third segment, which is reconciliation of your costing profit with your financial profit. Now, guys, this reconciliation holds good only if the company is following non-integrated system. Yes. So 1 second, let me just take this up. Yes. This reconciliation applies only when the company reports two sets of profits. And when will the company report two sets of profit? Only when the costing records and the financial records are kept separately. That is basically in case of non-integrated accounting system. Now, guys, in that case, the costing profit and the financial profit, they both need to be reconciled, right? We saw that these two will not be the same. They need to be reconciled, right? Now, before we move on to this reconciliation of costing profit and financial profit, there is one very important thing that you need to know. This is with respect to treatment of under or over absorption of overheads. Right, guys? Now, with respect to under or over absorption of overheads, now till now we have seen two methods. Method number one, if this under or over absorption is due to normal price level changes, we have studied this in our overheads chapter, then in that case, what should you do? It has to be apportioned between your cost of sales, then your FG and WIP using something called as supplementary rate and all of that. Guys, correct? Right? So the first method is basically what? Basically, it is treated as a product cost. Guys, correct? The second treatment is what? Now, if it is attributable to any inefficiencies or abnormal reasons, treat it as a period cost. Is that clear, guys? Now, there is also a third method of treatment of under or over absorption, right? So, we have done a lot of sums in this method as well during a regular batch and even exam oriented batch. But here, for the sake of marathon, now I'm setting you the context right before we get into this concept. Now, what is the third method? Eat 5-star, do nothing, right? Basically, what you have to do, don't pass any accounting entries. For example, let us say POH, let us say POH incurred actual is 60,000. Let us say absorbed is 50,000. What is the balance? Under absorption 10,000. What should you do? You don't take it to costing P&L, or you don't apportion it between those three guys using supplementary rate. Just carry it forward by as a by balance carried down. Is that clear? Suppose an over absorption will be 2 balance carried down. Is that clear, guys? That's all. So in this case, what happens? The difference between my under or over absorption will never get accounted. Is that clear, guys? Are you all able to understand? This is another method. Logic for all that I have explained during our regular batch and all. Right now, the logic is not required. This is a method which people follow. So what is the third method? So it's going to be carry forward. Guys, correct? Now, this is the third method of treatment of under or over absorption. Is that clear, guys? Now, if I follow the first two methods, what happens? Actuals I incur. Absorbed overheads is the overheads accounted in costing. Actual will be the overheads accounted in your financial accounts. Absorbed is the overheads accounted in your cost accounts. At the end of the year, I compare the actuals with absorbed. Any difference, I now account it. Guys, correct? That is called as treatment of under or over absorption. Am I right? If I follow the first two methods, the difference is now being accounted. Guys, correct? Hence, if I follow the first two methods, the overheads accounted under financial accounts and under cost accounts will be the same. So because of overheads, there will not be any difference in profits. However, if I follow the third method, what is that? Eat 5-star, do nothing. That is carry forward. In that case, overheads accounted in my financial accounts would have been actual figure. Overheads accounted in costing will be absorbed figure. This under or over absorption never gets accounted at all since it escapes. Hence, this figure is going to be a reconciling item because in my costing, I would have only accounted for 50,000. In financial accounts, I would have accounted for 60,000. This difference, it never enters into my P&L. Hence, this would be a reconciling item if the company is following the third method of treatment of under or over absorption. Are you all able to understand this? Are you all able to understand this? Now, coming back to the main concept, what is this? Reconciliation of costing profit with financial profit. Now, guys, why will the costing profit and financial profit be different? Broadly, it can happen only because of three reasons. Reason number one, in costing, we do not consider non-operating items. When I say item, it can be both income and expense. Do we consider any rental income? Do we consider any FD interest received? No. Similarly, do we consider any kind of interest paid, tax paid, dividend paid? No. So all these non-operating items could be a credit or a debit item are considered only in your financial accounts, not in your cost accounts. Hence, this is one reconciling item because of which my costing profit and financial profit could be different. Am I right, guys? Hello, guys, please respond. Yes. Now, the second reason is absorption of overheads. Please be very, very careful. This absorption of overheads can be a reconciling item only when the company follows third method, that is carrying forward. Is that clear, guys? Are you all able to understand this reason we just saw? Is that clear, guys? And finally, stock valuation. Sir, how can stock valuation be a reconciling item? Your financial accounts, the stock figure, we only give them. Costing only provides for the stock figure in financial accounts, guys, correct? But remember, in your financial accounts, AS2, it says your closing stock should be valued at cost or NRV, whichever is lower. Now, the cost figure we give them. Suppose if there is an NRV value and the NRV is lower than cost, then in financial accounts, stock will be valued at NRV. Guys, correct? Hence, the stock valued under financial accounts and cost accounts will be different. Am I right, guys? Are you all able to understand? In that case, stock can be a reconciling item. Are you all able to understand this? Right? So, broadly, there could only be three reasons for reconciliations. What are they? Reason number one, consideration of non-operating items. Reason number two, absorption of overheads if carry forward, if you under or over absorption is carried forward. And third, stock valuation. Now, with this, let us directly go and do reconciliation statements. Now, guys, you guys have done this bank BRS, bank reconciliation statement, right? So, you compare, you start with the bank book, arrive at the passbook, or you take the passbook, do addition, deletion, arrive at the bank book, guys, correct? Correct. So, now, in this case, what we are going to do, you can either start with costing profit, add less, arrive at financial profit, or You can start with financial profit, add less, arrive at costing profit. Whichever way you want, you can do. Now, with this background, shall we go and do the next sum here? Question number 7. This is an RTP question. So, I just want to take this one question and explain the concept of reconciliation statement. Shall we get started, guys? Yes. A manufacturing company disclosed a net loss of rupees 3,47,000 as per their cost accounts for the year ended March 31st, 2024. The financial accounts, however, disclosed a net loss of 5,10,000. Guys, correct? Now, the following information was revealed as a result of scrutiny of the figures of both the sets of accounts. They have given so many line items of reconciliation. Prepare a memorandum reconciliation account. Forget reconciliation account. Now, let's prepare reconciliation statement. Shall we, guys? Shall we, guys? Just follow what I say. That's more than enough. Now, guys, let's do this sum under the statement approach. Okay, shall we get started? Hello? Shall we get started? Yes. Now, what do we need to do? We need to start with either costing profit and add less, arrive at financial profit, or you can start with financial profit, add less, arrive at costing profit. Both are allowed. Now, in this sum, let's start with costing profit. Okay, guys? Yes. Now, what is my costing profit? What is my costing profit? 3,47,000. Yes. Now, I am just taking it here. 1 second. Yes. My costing profit is going to be 3,47,000. Okay. We'll do something, guys, since we have already done it before. 1 second. Now, we will start with financial profit. Okay. Shall we do that? We'll start with financial profit. How much is my financial profit? Everyone, 5,10,000. So my financial profit is how much? 5,10,000. Right? Now, to this, what do we need to do? Certain line items need to be added. Certain line items need to be subtracted. Now here, if you look at this net loss as per financial accounts, this amount is there. Certain items need to be added. Certain items need to be subtracted. If you do the net adjustment, you will arrive at the profit as per cost accounts. Guys, correct? Now, line by line, let us read and do this. First line item, what have they mentioned? Factory overheads under absorbed 40,000. Now, wait. Now, how do you do it? I will tell you a hack. Now, guys, you can have this as, maybe in your rough sheet, you can do this. Working note need not be done in exam. Now, what you need to do is put the transaction here. What is the starting point? We start from financial profit. First column, you put financial profit. Second column, costing profit. Starting point, destination. And the next column is TBD. TBD means to be done. What needs to be done? What is the first line item, guys? Guys, everyone. Factory overheads under absorbed. Under absorption of factory overheads. Now, logically think. Under absorption means what? Absorbed is less. Actual is more. Now, actual gets debited in your financial accounts. Actual is more means in financial accounts there is more debit. When the debit is more, financial profit is less. Am I right, guys? Relatively, costing profit is more. This is my starting point. I'm starting from financial profit. I need to reach a higher point, which is costing profit. Now, in this case, you will have to add. Are you all able to understand? Guys, is this clear? Very simple, isn't it? Yes. Next line item. So now this is add. So what we do, under add we do under absorption of factory overheads 40,000. Is that clear? Very, very simple. That's all. Next one. What is the next line item? Administration overheads over absorbed. Over absorbed means what? Absorbed is more. Actual is less. Actual is less means in my financial accounts I would have debited less amount, hence my financial profit will be more. Are you all able to understand? Financial profit will be what? Financial profit will be more. Costing profit will be less. Why costing profit is less? Absorbed is more. More debit, which means I would have debited more amount of the costing P&L, which means profit reported is less. From a higher point, you now need to reach a lower point. Subtract this amount. Is that clear? Some students they do, sir, over absorption mean add, either under absorption means subtract. Guys, no. It depends on the starting point and the ending point. Logically, you think. Is that clear, guys? Right? In this case, you will subtract this figure over absorption of AOH. Are you all able to understand? Is that clear? Next line item. What is it? Depreciation charged in financial accounts, depreciation charged in cost accounts. In financial accounts, 3,25,000 was debited. In cost accounts, 2,75,000 was debited. Now subtract, the difference between the two is how much? Guys, everybody, 50,000. Now you tell me, financial accounts charged more depreciation. Cost accounts charged less depreciation. The difference is how much? 50,000. Financial accounts charged 50,000 rupees more. More debit in financial accounts means lesser profit. Financial profit is less. I need to reach costing profit, which is more. From a lower point, reach a higher point. Add. Are you all able to understand? Difference in depreciation. Financial profit less. Costing profit more. Low to high. Add. Is that clear, guys? So we can just mark it here. Difference in depreciation should now be added. Are you all able to understand? Very simple, isn't it? Logically think and do. That's about it. And guys, in the marathon itself, I'm doing this sum. Now, these kind of questions you can expect in an exam. Next one. Interest on investments not included in cost accounts. 96. Tell me, what should you do? Financial profit will be lesser. Interest on investments mean I receive. So, credit item there in financial accounts. Hence, financial profit is more. Costing profit, no credit, sir. Hence, it is less. Higher point to lower point. Subtract. Simple. Look at this. Interest received on investment. Financial profit is more. Costing profit is less. Higher to low. Subtract. So, this comes under a subtraction item. Are you clear with this? Next line item. Income tax provided. Now, in our subject, do we do we create an expense for income tax? No. But income tax is debited in your financial accounts, which means more debit in financial accounts refers to lesser profit. So financial profit less, costing profit is more. Lower point to higher point, add. So add this amount. Are you clear with this? Income tax comes under add. Is that clear? Next one. Interest on loan funds in financial accounts. Do we in costing, do we consider interest? No, EBIT only we report. Operating profit, right? It's a finance cost, not considered. So financial profit will less. Exactly. Why? Because amount debited, guys, correct, in your P&L. So lower profit. Costing, this amount does not get debited. So it is a higher profit. Low to high, add. So what do you have here? Interest on loan comes under add. Is that clear, guys? Next one. Transfer fee. What do you mean by that? We don't know. They have given it is credit in financial books. Means what? Some non-operating income. Your financial profit will be more. Costing profit is less. High to low, subtract. That's about it. So look at this. Transfer fee comes under less. Next one. Stores adjustment. What is that? We do not know. Credit in financial books. So financial profit is more. Costing profit is less. High to low, subtract. That's about it. Clear? Next one. Dividend received. Once again, non-operating income. So financial profit, more credit. Costing profit less. High to low, subtract. 32,000 here comes under less. Is that clear, guys? Now what do? Add all the sums. Get 3,89,000. Add all the subtractions. You get 2,26,000. So existing financial accounts loss is negative 5,10,000. From this, add this figure. Subtract this figure. Now the net amount you will get is exactly a loss of 3,47,000. This is as per cost accounts. If you want, you can go and check. It is exactly matching with the 3,47,000. Is that clear, guys? You arrive at the figure and compare it with this. Is that clear for everyone? Is that clear for everyone? Guys, are you all able to understand? Any issues, any problem here? No. No. Once again, we did it under statement format, no? Now, suppose they are asked you to prepare a memorandum reconciliation account. Don't worry, nothing great. What you need to do, simple. You put it in a statement format. Debit, credit. Guys, correct? Now, you can start with anything. Same thing. Here we started with financial profits. There, in the question, they have started with the costing profit. No problem. Guys, correct? Now, let us say the same question. We have to do it under statement approach. Simple. First, you're starting with the financial profit. No. Profit or loss? It is a loss. Had it been a profit, this is as good as a nominal account. It's like a P&L account only. Had it been a profit, you would have credited it. Since it is a loss, you will start here. Guys, correct? All additions will be credited. All deletions will be subtracted. And whatever is the balancing figure, it will be the profit or loss as per the other one. Are you all able to understand, guys? In this question, they started with costing profit, arrived at financial profit. Hence, our addition will be deletion for them. Ulta no completely. They would have started with costing and they would have reached destination is what? Financial profit. Simple. If you start from costing and reach financial profit. Now, instead of low to high, it would have been starting point to ending point, high to low. Guys, correct? Whatever is addition becomes a subtraction there. Whatever is subtraction becomes addition there. Guys, ultimately the answer will change. Answer will be the same. Are you all able to understand? Guys, starting and ending point can be anything. Simple. The same question, if they are asking you to prepare it under the statement approach, what will you do? Since it is a loss as per financial accounts, you will start it from here. All additions, put it on the credit side. All deletions, you put it on the debit side. The net loss will be here. Are you all able to understand? As per cost accounts, are you all able to understand? Why loss? That is the reason why you have debit is more than credit. That's the reason you have here. Are you all able to understand? Is there any problem here? Are you guys able to understand? So statement approach means instead of plus or minus, it is credit and debit. Is that clear, guys? And that's about this entire segment of reconciliation statement. Please go and update your library of adjustments. Write down reconciliation of costing profit and financial profit. That's all. Reconciliation of costing profit and financial profit. Right, guys? Fine. So with this, literally the revision of this entire chapter, cost accounting system or cost bookkeeping, is completely over. We have seen all the 3 segments of discussion in this chapter. Segment number 1, your non-integrated accounting system. Segment number 2, your integrated accounting system, which is nothing but non-integrated accounting system. Instead of GLA, put it in the respective financial ledger. And number 3, we saw what? Reconciliation of costing profit and financial profit. This is applicable only when the company follows non-integrated system. And that's about this entire chapter, guys. Fine. So with this particular chapter is over. Let's move on to the next one. So now let's start the revision of the next chapter, employee cost and direct expense. So this is a much awaited chapter because I've seen so many students who have commented on the comment section, like asking me for the revision of employee cost chapter. So yes, so then I considered, fine, let's do a full-fledged revision of this chapter, employee costs and direct expenses. Now guys, once again, this is a common chapter for CA and CMA students. Now in a CMA intermediate students, this direct expense is not there. It's taken as a separate chapter. But in CA Inter syllabus, they have given employee cost and direct expense. But trust me guys, this direct expense, there is nothing great here, because ideally this is already covered in your cost sheet chapter. Anyways, in this chapter, 2 parts are there, employee cost and the second part is direct expense. In employee cost, these are the learning objectives. We'll be seeing the the components of employee cost. Basically, in your employee cost, your wages, what are all the compositions? It comprises of what? Basic, DA, PF and all of that we'll be seeing. That is a very small thing. The most important aspect of this chapter is wage payment schemes. So you have something called as a time rate system. You have something called as a piece rate system, and then you have something called as bonus plans. And there are 2 bonus plans for our syllabus. One is called as the Halsey premium plan. The other one is called as the Rowan premium plan. So Halsey and Rowan are names of 2 individuals who have given their own manner in which bonus needs to be computed. And then there is a segment called as overtime, treatment of overtime in cost accounts. And then the 4th segment deals with the labor turnover ratios. And then there is also a concept called idle time in labor. That's a very small concept. So for the purpose of our marathon, I will be covering these 4 main important objectives of this chapter. Shall we get started? Yes. Now guys, if you see, you might have studied in your school days or even earlier, there are 5 factors of productions, probably known as 5 M's. Money, machine, men, material and methods. Money, capital. Machine, plant and machines. Men basically is your human resource. Men includes women, right? But excludes children. Child labor not allowed. Okay. Then material, of course, raw material. And methods means technology, latest methodology of converting your RM into FG. Now 5 factors of productions are important. Out of this, if you notice, the only living factor is men, basically human resource. Now, the most difficult and the challenging part of any company is to handle human resource, because you do not know what motivates a person. Now, an employee can be motivated by way of monetary benefits, money, or there could be non-monetary benefits like promotions, like maybe you increase the responsibility. There could be so many things. Now we are more concerned about the monetary benefit. How do I motivate my workers to make sure that they are working at the peak of their productivity and I extract the maximum work out of them? Is that clear, guys? That's the objective of this particular chapter. Now the first part deals with your components of employee cost. Now employee cost consists of what all? Basic, bonus, allowances, overtime premium, everything you add up. This is called as your gross wages. Guys, clear with this? Now let us say the gross wages comes out to rupees 100, right? Now, sir, will I pay this 100 rupees to my employee directly? No. In reality, what happens? Government has made something mandatory. What is that? That is called as PF. Now, let us say 100 rupees is the gross wages. This is basic DA. It could also be all other allowances and all. Government says on top of this 100 rupees, the employer needs to contribute some amount towards the provident fund account of the employee. Ideally speaking, the provident fund belongs to the employee, but he can't take it today. He can take it only at the time of retirement. Is that clear? So now, government says, let us say 12% of his salary, the employer will actually transfer it to his PF account. Whose PF account? Employee's PF account, right? Which means from the perspective of the employer, because he's having this employee, what is his cost? 100 plus 12, that is employer's contribution. Is that clear? Now, how about employee? How much amount the employee will get? Now, government has made it mandatory. Whatever amount the employer is contributing to PF, employee should also contribute to the PF. Is that clear? Now, what you can do? The company can pay this 100 rupees to the employee, and then the employees can, out of this 100 rupees, they can remit their share of 12 rupees to their PF. Guys, correct? Now, government knows this. If you give 100 rupees to the employee, he will spend everything. He will not transfer his share of 12 rupees. Hence, the government says, look, Mr. Employer, you don't pay this 12 rupees to the employee. On his behalf, you deduct 12 rupees and remit that 12 rupees also on his behalf. Is that clear? Hence, what is the cash received by the employee? 100 minus 12. The employee receives only 88 rupees. Now, what will happen? The employer, on top of this 100, he contributes 12 rupees, right, to the PF. This is called employer's share of provident fund. Right, over and above that, employee's share also, he deducts from his share and he remits it. This employee share is not a cost to me. This is ideally a part of 100. Instead of the employee paying it, government is asking me to pay it on his behalf. I'm reducing and I'm putting it there. Is that clear, guys? So literally, the monthly contribution will be 12 plus 12, 24. Guys, but what is the cost to the company? 100 plus employer's contribution. Is that clear? And what is the net cash received by the employee? 100 minus 12. Is that clear, guys? But what is the net amount of cash? What is the net amount of earnings to the employee? Obviously, it is going to be 100 plus 12. Guys, correct? Or you can say today he receives 88 plus 24 rupees is his savings which he will receive at the time of retirement. So 88 plus 24 comes out to 112. Obviously, the cost to the company is the earnings to the employee. Guys, obviously, one man's cost is another man's income. Guys, you go buy a pack of biscuit. You pay 10 rupees to the shopkeeper and you're buying it. For you, it's a cost. Correct? For the shopkeeper, it's an income. Guys, correct? That's the rule of world. Right? So here, that is a cost, but I'm talking about net cash received. Cash received, he will only receive 88. Is that clear, guys? Now, basically, that's what I have kept it here in the concept decoder book. Look at this. Cost the company will be what? The gross wages 100 plus employer's contribution to PF, Provident Fund. There's something called ESI. ESI stands for Employee State Insurance. Now, for that also similar treatment is there. So you need to contribute some premium amount for the benefit of employee. Employee should also contribute something that gets deducted and all. Whatever you do in PF, ESI also it is there. The rate is different, right? They will give in the question. So add that whatever amount the employer is contributing and on top of it, if he is giving any other perquisite, add them. That is going to be the cost from the perspective of company. Is that clear, guys? This is going to be treated as employee cost. Now, how much is the amount that the employee will receive? This gross wages minus all this employee's contribution to PF, ESI, and professional tax, income tax, and all you deducted. This is the net amount the employee will receive in cash. Is that clear, guys? This is how you compute the wage bill. So, when you're talking about it from the company's perspective, this amount is the cost to the company. This will be treated as what? Employee cost. Are you all able to understand? If this employee cost is paid for the benefit of a direct worker, I call it as direct wages. If this is paid for a factory supervisor, I put it under POH. If this is paid for the benefit of let us say an accountant, I will put it under AOH. If this is paid for a salesman, I will put it under SOH. Is that clear, guys? Right? The treatment differs based on to whom you pay the amount. But what comprises of employee cost, that will remain the same in all the cases. Is that clear, guys? Right? That is about the first part of discussion. What is that? Employee cost computation. Is that clear, guys? Now, let's move on to the second part, the most important part. What is that? Wage payment schemes. Now, guys, wage payment schemes. Now, broadly, there are two ways in which the wages can be paid. Guys, please understand very carefully. Now, there are two methods in which I can scheme my wage payment. Let us say I am hiring workers to work in my factory. Now, there are two methods through which I can pay. There are two methods through which I can compute the wage amount that I need to pay. Is that clear? The manner of computing the wage bill can be done in either of the two cases. I can only follow one of the two. Right? Clear with this? What is that? One is called as a time rate system. The other one is called as a piece rate system. Now, what are the two? Time rate system. What is it? Simple. I hire workers. I tell them, look, sir, they will ask me, no, first thing, sir, how much you will pay, sir? That is the first question, no? I tell them, simple. Every day you come to my factory. Yes, correct. Now, whatever is the time you spend inside my factory, that time into whatever per hour I will pay you 100 rupees. Example, in a day they come and they spend 8 hours in my factory, right? I will pay how much? 8 into 100, 800. This will be your wages. Is that clear? If I compute the wages based on the time spent by employees in my factory, this is called as what? Time rate system. Under time rate system, how much will be the wages? Simple. Time taken into time rate. What is time rate? 100 rupees per hour. Are you all able to understand? It is cost is driven by what? Number of hours. Is that clear, guys? Hence, here I mentioned the rate per hour. Are you all able to understand? He spends how much? 8 hours. So 8 hours into 100 per hour gives me how much? 800 rupees. That's going to be the wages. Are you all able to understand? Is that clear, guys? Yes. Next one. No, I don't want to pay wages on the basis of time spent. Now, there is another method called as piece rate system. What is piece rate? Now, I tell my workers, look, I am not bothered about how many hours you spend in my factory, right? Simple. For every unit that you produce, let us say I will pay you 10 rupees. How much? For every unit produced, I will pay how much? 10 rupees. Now, one worker, he produced 100 units. What will I do? For every unit you produce, I will pay how much? 10 rupees per unit. So, it's going to be how much? 1000 rupees is going to be the amount I will pay him. Are you all able to understand? Here, the manner of computing the wage bill is not based on the number of hours spent by him in the factory. It is based on the number of output that he produced. Is that clear, guys? Are you all able to understand? In this case, what will be the wages? Units produced into piece rate. Piece rate, how will it be expressed as so much rupees 10 per unit? So here the cost driver is per unit, the number of units. Is that clear? The cost object here is per unit. Here it is going to be per hour. Is that clear, guys? Is everyone able to understand this? Yes. Now, so looking at the rate itself, you can find out which method the company is following. If the rate is per hour, then they are following time rate system. If it is per unit, then the company is following piece rate system. Is that clear, guys? Is everyone able to understand? Yes. Now, you tell me, between these two methods, which method will motivate the workers to work better? Piece rate. Why? Only if they work and produce a quality output, they will be able to earn more. Guys, whereas the time rate system, they will be inefficient. Come to the office, come to the factory, just like that they do something. Anyway, sir, 8 hours if I stand here, they will pay me. Guys, correct? It's not that easy. Anyway, supervisors will be there. But whatever it is, anyways, they are not motivated to perform better. No. Anyways, even if we perform better, what will you do? You are anyways going to pay me only based on hours spent in the factory. Guys, correct? Now, time rate system lacks an inbuilt motivation. Am I right, guys? Hence, when the company is following time rate system, now what has happened? They can also follow a bonus system. Is that clear, guys? Along with the basic wages, if you are paying them bonus, then the workers will be motivated to work better. Yes, are you all able to understand? Hence, you have two bonus systems. One bonus plan is given by a man called Halsey. Another bonus plan is given by a guy called Rowan. Is that clear, guys? Halsey, what does he say? Simple. First of all, understand. These two are bonus plans. When will you follow these bonus plan? Only when the company is following time rate system. Piece rate system already has the inbuilt motivation. No need for you to give you additional bonus and all. Are you clear with this? When the company follows time rate system, then a company can follow either Halsey plan or Rowan plan for paying bonus. What does Halsey say? Simple. You pay the basic wages under time rate system. How much is that? Time taken into time rate. On top of that, bonus, how much will it be? 50% of time saved into time rate. This is the manner of computing your bonus. Whereas Mr. Rowan says you pay the basic wages, time taken into time rate, plus the bonus will be time taken by time allowed into time saved into time rate. Sir, what are all these things, sir? We don't understand. I will give a numerical example for you. Now, let us say I have produced 100 units. Guys, let us say I have produced 100 units. Let us say the time allowed is 1 hour per unit. For every unit, you are supposed to take 1 hour. Time rate is what? Rupees 10 per hour, which means what? For every hour you work, I will pay you how much? 10 rupees. Perfect. Now, in this case, what is the total time allowed for the actual output? What is the time you are allowed to take? 100 into 1, 100 hours. Let us say our guy, a worker has actually taken only 80 hours, which means time allowed was 100, time taken was 80. How much was the time saved? 20 hours he has saved. Guys, correct? Now, if I am following Halsey plan, what is he saying? Anyways, for every hour he has worked, pay the time rate 10 rupees. So 80 into 10, anyways you pay. Guys, clear? On top of that, pay bonus. Sir, how will I pay bonus? He says, how many hours he has saved? 20 hours. Now, on these 20 hours, had he worked, the company had to pay how much? 10 rupees. But he saved this 20 hours. Guys, correct? Now he says, on whatever hours he has saved, 20 hours, 50% you pay as bonus. He didn't work for 20 hours, still 50% of the bonus hours you pay. So he says 50% of time saved into time rate. So 50% of 20 into 10 is the amount of bonus. Is that clear, guys? So 80 into 10 is going to be 800. 50% of 20 into 10, how much is that going to be? 100. So overall, he will be paid how much? 900 rupees. Is this clear? Guys, are you all able to understand? So, what is the bonus computed under Halsey method? Guys, come on, everyone answer. 50% of time saved into time rate. Now, Rowan says, you pay the basic wages. What is that? Time taken into time rate. 80 into 10, which is going to be 800. Now, he doesn't agree with Halsey. He says, yes, your bonus should be some percentage on time saved into time rate, because that is the total savings he has made for you. Out of that, 50% you're passing on. That is what as per Halsey. But Rowan says, what is the logic for this 50? Why flat 50%? I will give you a manner of computing the percentage that you need to pay. What he says, simple. Time taken by time allowed into time saved into time rate. Is that clear? So he has saved how much? 20 hours into 10. How much percentage? Don't take 50%. I will give you a manner of computing the percentage. What is that? Time taken by time allowed. Time taken is how much? 80. Time allowed is how much? 100. So time taken by time allowed into time saved into time rate. In this case, it comes out to 80%. Are you all able to understand? Guys, so here the basic wage is going to be 800 and bonus is going to be Bonus is going to be 80 by 100 into 20 into 10. I think this comes out to 80 into 2, it's just 160 rupees. Is that clear, guys? So the bonus paid under this system is going to be 800 plus 160. It is going to be how much, guys? 960. Is that clear for everyone? Right? So this is how you compute the bonus. Remember, Halsey and Rowan systems are followed only when the company follows a time rate system. Piece rate system, already there's an inbuilt motivation. You need not motivate them by way of bonuses. Is that clear, guys? Are you all able to understand? Now, there is another doubt which you guys might have. Now, there, you are saying that these bonus plans will motivate him to perform better. Sir, let us say time allowed is how much? 100. Let us say he actually took 100 hours, which means the time saved is 0. In that case, there is no bonus. Am I right, guys? Am I right? Because in both the cases, time saved will be 0. There is no bonus. Sir, in that case itself, what will be his earnings? 100 into 10, he would have earned how much? 1000. Now, had he taken the normal time, he would have earned how much? 1000. Now, because he is being efficient and taking less time, even under this bonus scheme, Halsey says pay 900, Rowan says pay 960. Now, sir, had he not been efficient, he would have got 1000 rupees now, sir. Then how can you say that these methods are motivating him to perform well? Guys, are you understanding the issue? Now, I will tell you the issue here. No, it still motivates them. I will tell you how. Now, let us take Halsey for example. What is the total earnings, guys, under Halsey? Everyone? 900. Suppose there is no bonus. He took actually 100 hours. 100 into 10, you would have earned how much? 1000. Now, you tell me, he earns this 900 rupees by spending how many hours? 80 hours. Am I right, guys? Whereas this 100 hours he earns by spending how many hours? This 1000 rupees he spends by earning 100 hours. Now, effectively for every hour spent under Halsey, how much he earns? 900 by 80. How much is that? 11.25 rupees he earns for every hour worked. Whereas under a no bonus plan, he earns only 10 hours, 10 rupees per hour. Now, if you look at this, he works only for 80 hours, no? For each of the 80 hours, he's earning how much? 11.25 effectively. The balance 20 hours is available. Maybe he'll work for another job. There once again he will earn some bonus and the normal wages. Are you clear with this? So definitely he is being motivated to perform well. Are you all able to understand this? So don't compare the absolute earnings. Here it might be more. Compare it on the basis of effective earnings per hour. Then you will see that these bonus systems will incentivize him to perform well. Are you all able to understand this? Is this clear, guys? Right? Now, I'm just summing it up. First, there are broadly two methods of wage payment scheme. One is called as time rate system. The other one is called as piece rate system. Time rate system. How will you pay the wages? Time taken into time rate. Right? Whereas piece rate system, units produced into piece rate. Piece rate is per unit. Time rate is per hour. Now, piece rate system naturally motivates the workers to perform well. Whereas that is not the case with the time rate system. Hence, what should you do? Introduce a bonus plan. Now, there are two different bonus plans. One is called as Halsey plan. The other one is called as Rowan plan. Halsey plan, what he says? Pay the basic wages plus 50% of time saved into time rate. Whereas Rowan says what? What is the logic for 50%? There is no logic. I will give you a manner of computing that percentage. What is that? Time taken by time allowed into time saved into time rate. Is that clear? Pay the basic wages plus this figure as bonus. Is that clear for everyone? Is that clear for everyone? Now, remember this. The first guy, Halsey, says 50%. Rowan has this different method, complicated method of computing bonus. Is that clear, guys? That's all this area says. Fine. Let's go and do one problem here. Shall we? Guys, shall we? Yes. Question number 2. A very, very good sum. This is how your exam questions will look like. Shall we begin? Yes. Now, during 1 week, the workman X manufactured 200 articles, 200 units he produced. He receives a wage for a guaranteed 44-hour week at the rate of rupees 15 per hour. Okay, guys? Yes. So what is he saying? What is he saying? In a week, this guy produced how many units? 200 units. He received wages for how much? 44 hour at the rate of 15 per hour. This 15 per hour means what? They are paid under time rate system. Very good. That is the first observation. So this 15 rupees per hour indicates that he is being currently paid under what method? Time rate system. So this is basically under time rate system. Is that clear? Next. Now currently he works for 44 hours in a week. The estimated time to produce one article is how many minutes? 15 minutes. 15 minutes means how many hours? 15 by 60 is 0.25. 1/4. 0.25 hours. So to produce one unit, you are allowed to take how many hours? 0.25 hours. Is that clear? Yes. Next. The estimated time is given. And under the incentive scheme, the time allowed is increased by 20%. Means what? Incentive means Halsey Rowan, for the purpose of computing the time allowed under Halsey Rowan, increases 15 minutes by 20%. Is that clear, guys? Are you all able to understand? Calculate his gross wages under each of the following methods of remuneration. Number 1, if he is being paid only under time rate, what will be his total earnings? Number 2, if at all he is being paid under piece rate with guaranteed weekly wage. What is guaranteed weekly wage? I will tell you. What will be his total wages? Suppose he is paid under Rowan scheme, how much? If he is paid under Halsey scheme, how much? Under these 4 systems, we now need to compute. Shall we get started, guys? Yes. Simple. If he is paid under time rate. Now, you think, guys, everyone, focus here. In a week, he produces, we are talking about 1 week. He produces how many units? 200. I am following time rate. Am I bothered about how many units he produces? No. Time taken into time rate. How much time you took? 44. What is the time rate? 15. 44 into 15. How much is that? So 44 into 15. So in a month, for this week, you will be paid how much, guys? You will be paid 660 rupees. Is that clear for everyone? Guys, are you all able to understand this? Any problem? No. No. Sir, piece rate, sir. If I am paid under piece rate, how much will it be? Now, piece rate, what is the formula? Number of units produced. Sir, he produced 200 units, sir. Into piece rate. What is piece rate? The rate that he is willing to pay per unit. Now, is the piece rate given in the question? Guys, is the piece rate given in the question? It's not given in the question. So, you need to find out the piece rate. Sir, how can we find out the piece rate, sir? Now, simple, identify this. Now, what are they saying? If at all the company is paying under time rate, they are willing to pay how much? For every hour they are willing to pay 15 rupees. Correct? Yes. Now, look at this. One more thing they have given. Now, to produce 1 unit, they are allowed to take how many minutes? 15 minutes. Or 15 minutes is nothing but 0.25 hours. Am I right? Now, for 1 unit, you are allowed to take 0.25 hours. Which means, in 1 hour, how many units can you manufacture? Simple. 1 divided by 0.25. Guys, correct? How much is that? 4. Simple, pa. For 1 unit, you are allowed to take 15 minutes. In 1 hour, you can produce 4 such units, no? So, in 1 hour, you can produce how many units? 4 units. Now, with this, you can identify the intention of the company. For every hour, they are willing to pay 15 rupees. For every hour, they are expecting you to produce 4 units. Or in other words, they are willing to pay you 15 rupees for every 4 units produced. With this, you can understand the intention of the company. So, if at all the company is scheming a piece rate system, this is how they would scheme it. Guys, correct? Are you all able to understand this? Hence, what will you do it here? So, in this case, what should you do? So, 4 units, they are willing to pay 15 rupees. Or per unit, how much are they willing to pay? 15 divided by 4, it comes out to 3.75 rupees per unit. Is everyone able to understand? This is the step. Are you all able to understand this, guys? Clear with this? Right? So what you can do is, now with this you arrive at the piece rate, which comes out to 3.75 rupees per unit. Guys, are you all able to understand? Now, if at all he gets paid under piece rate system, what would be his total earnings? 200 into 3.75. How much is that? 750 rupees. Is that clear, guys? And that's exactly what's being done here. It's going to be how much? 750 rupees. Are you all able to understand this? Are you all able to understand? Is that clear, guys? Everyone? Yes? Now, look what they have given. So then what is this guaranteed weekly wage, sir? I will tell you. Piece rate with guaranteed weekly wage. Now, under piece rate system, his total earnings comes to 750. Guys, correct? If he is paid under piece rate system, his earnings depends on what? The number of units produced, Suppose in a week, they have a very low demand. Company itself is asking him not to produce much. Now you tell me, in this case, he is ready to work, but the company doesn't want him to produce more units. Sincerely, he will get affected. No, guys, correct? So what the company will tell him is, look, don't worry. You will be paid under piece rate system. But suppose if the amount as computed under piece rate system, if it comes below the time rate system, 660 rupees, then I will pay under time rate system. Don't worry, you will not be paid less. Or in other words, you are definitely guaranteed of 660. But if the amount that comes under piece rate is more than 660, then I will be paying you under piece rate system. If the amount is coming less than 660, then you will be paid the guaranteed time rate. Are you all able to understand? Or in other words, in this case, so the amount computed under piece rate or the amount computed under time rate, whichever is higher, I will pay him. Guys, correct? Are you all able to understand? If this amount comes to just 550 rupees, example, I will be paying him 660. If it comes out to 600, I will pay him 660. If it comes to 659, I'll still pay him 660. But if this comes out to 800, then I'll pay him 800. Is that clear, guys? That's what is called as guaranteed weekly wage. Weekly means time rate. So it is piece rate with a guaranteed time rate. Are you all able to understand? Is there any issue here? That's what I've mentioned here in the book. If this piece rate wage turns out to be less than 660, then he will get a guaranteed weekly wage of 660 rupees. Is that clear? Now, next one, what is that? Rowan. Rowan is the second guy. Guys, don't get confused. I'll say Rowan. HR. In alphabetical order, if you see, A, B, C, D, E, F, G, H. H comes first. First one is a easy method, 50. R comes later, complicated method. What is that? Time taken by time allowed into time saved into time rate. Complicated method, huh? Okay. Relatively complicated method. Is that clear? Guys, correct? So the first one, H is flat 50. Simple method. And second, R, HR, human resource. Okay. Remember it like that. Okay. Now, Rowan premium. Now, how will you pay him? Now, in this case, I need to compute what? Guys, what all I need to compute? Come on, everyone. Time taken, time allowed, time saved. Time rate, I already have. Now, time taken, how much time he took? 44 hours. 44 hours. Is that clear? What is the time allowed? Now, look at this. What have they mentioned? What have they mentioned? They have actually produced how many units, guys? 200. Every unit you are allowed to take how much? 15 minutes. But wait, the time allowed is increased by 20% for the purpose of a incentive scheme. Are you all able to understand this? Which means 50 into 1.20 or 120% is going to be the revised time allowed per unit. How much is that? 18, huh? Guys, correct? So 18, you are allowed to take 18 minutes per unit. Guys, are you all able to understand this? Are you all able to understand this? So for every unit, you are allowed to take how much? 18 minutes. Or if you want to convert this into hours, it's going to be 18 by 60. Guys, correct? And actually, how many units have I produced? 200. So the time allowed will be how much, guys? It's going to be 18 by 60 into 200. How much does it come out to? How much does it come out to? This gets knocked off. 6 3s are 18. So 3 2s are 6. It's going to be 60 hours. Guys, correct? Are you all able to understand? Any problem here? So now time allowed is 60. But you've actually taken only 44 hours. Which means you've saved how much for the company? 16 hours. Is that clear, guys? Is that clear? So now if you're being paid under your Halsey or Rowan. First under Rowan. Basic wages. He will be paid. What is the time rate, guys? Time rate. No. Time rate. 15 per hour. Am I right? So anyways, 44 into 15 basic wages. Whether I'm following Halsey or Rowan, I'll be paid. Am I right, guys? So 15 into 44 into 15. How much is that? 660 rupees. Anyways, will be paid. Correct? Next, bonus alone will be different. If I am doing it under Rowan scheme, time taken by time allowed into time saved into time rate. Time taken 44, time allowed 60, time saved 16 into time rate 15. How much does it come out to? 175.9, round it off to 176. So now the total wages under Rowan is going to be how much? 660 plus 176. It works out to how much, guys? It works out to 836. Is that clear, guys? Are you all able to understand? Is there any problem here? You guys are now understanding? Suppose if the same guy is being paid under Rowan's Halsey system. Basic anyways will be the same. Time taken into time rate 15 is going to be 660 rupees. What is going to be the bonus? 50% of time saved into time rate. Now 50% of what is the time saved, guys? 16. So it's going 50% of 16 is going to be 8. So 8 into 15 rupees. How much is that? So it's going to be 120. So 660 plus 120 is going to be how much, guys? It's going to be 780 rupees. Is this clear? Is this clear? So we have got all the answers that we want. So simple time rate is going to be 660. Then straight piece rate, simple piece rate 750. If row 1 is followed 836, Halsey is followed 780. Now, sir, under the 4 methods can I follow all the 4 at a time? No. Right? Any one the company has to follow. For a worker, maybe worker wise they can have difference, but will you be paid first under row 1 and then under Halsey? 2 times they will pay salary, yeah? No, they will not pay you. Guys, clear? Are you all able to understand? The company has to choose a method. Guys, clear with this? It's a very good question to cover the entire concept of your your Halsey, Rowan and all the wage payment schemes. Is that clear, guys? Right? Of course, in our regular and exam oriented batches, we'll be doing fully all the sums, but I wanted to take one representative sum and solve it and show it to you as to how it works. Clear with this, guys? Fine, that's about the sum. Please go and update your library of adjustments. Right now, comprehensive sum on time rate, piece rate, Halsey and Rowan. Comprehensive sum on time rate, piece rate, Halsey and Rowan. Done? Right. Fine, guys. So that's about this particular question. Now, guys, let's move on to the next segment of discussion, which is regarding treatment of overtime. Treatment of overtime. So all these things we have done, every single sum we have worked out during our regular class. In fact, our regular class students are sitting happily here. Okay. Right. Now, let's start, guys. So now, let's move on to the next one, which is called as a treatment of overtime. A very important discussion. Now, guys, what do you mean by overtime? What do you mean by overtime? Overtime refers to what? Working beyond your normal working hours. Let us say my office is between 10 a.m. to 6 p.m. If they are asking me to work before 10 a.m. or after 6 p.m., that time is called as overtime. And let us say my office timing is Monday to Friday. If they are asking me to work on Saturdays, Sundays, that is also overtime. Any time beyond my office hours is called as overtime. Now, when you are making your workers work during the non-office hours, now obviously you will have to pay them a little more than what you generally pay them. Guys, correct? Now, that extra amount that you pay is called as a overtime premium. Is that clear? I will give you an example. Let us say, guys, the normal wage rate is 100 rupees per hour. For every hour the worker works, he will be paid how much? 100. In a day, generally he should work only for 8 hours. But what happened? I made him work for 10 hours, which means I made him work for these extra 2 hours. For these 2 hours, you tell me, will I pay him 100 or slightly more than 100? More than 100. Let us say I pay him 1.5 times the normal wages, which is I pay him 150 rupees. Is that clear, guys? Is that clear? Now, what will be the total amount of wages I will be paying him? Now, guys, this will be first normal hours, 8 hours at the rate of 100, 800 rupees, correct? Next 2 hours beyond the office hours at the rate of how much? 150. The amount will be how much? 300. What is the total amount? 1100. Now understand, this 800 is called as a normal time wages. This 300, which whatever amount I paid for those 2 hours extra, is called as overtime wages. Now, guys, please understand, what is the total normal wages that I'm paying? It is 10 hours into 100. 10 hours into 100 is going to be my normal wages. Sir, why, sir? Look, those 2 hours he worked beyond office hours, no? Whether he worked beyond office hours or not, whichever hour he works, definitely 100 rupees I need to pay. That goes without saying. Guys, correct? Because he worked during the after the office time, how much I paid extra? I only paid extra of 50 rupees. That 50 rupees treatment alone we are talking about here. Hence, the normal wages is total hours into normal rate. Guys, clear? And what is the overtime premium? It is that extra hours into that extra amount of 50. 2 into 50, 100 rupees. Is that clear, guys? So always understand we are talking about treatment of overtime premium, not overtime wages. Is that clear, guys? Yes. Now here out of this 1100, 1000 rupees is always treated as a direct wages. Now this 100 rupees, what is the treatment for that? Should I treat it as a direct wages, or should I treat it as production overheads, or should I take it to my costing period? What is going to be the treatment? We need to see. Is this clear, guys? Are you all able to understand this? So here we're talking about the treatment of overtime premium, not the treatment of overtime wages. Is that clear, everyone? Now, that is clear. Now let's move on to the next one. Okay, sir, fine. Now, how do you treat overtime premium, sir? What is the manner of treatment of overtime premium? There is no single treatment. Now, the treatment of overtime premium depends on the reason why you are making your workers work overtime. Is that clear? Now, there are 4 possible scenarios why you can make your workers work overtime. What are the 4 possible scenarios? Scenario number 1, overtime is a regular feature. That is, it is generally a company's policy. Second reason, overtime due to customer specific request. Third one, seasonal demand. Fourth one, abnormal reason. Sir, can you explain? Yes. Overtime is a regular feature. What is this? Let us say the company is a conjuice company. Right? Now, let us say for the workload which the company has, ideally they should have hired 100 workers. But what did the company do? They didn't want to hire 100 workers and pay wages and all. They hired only 70 workers. Now, for a work which requires the presence of 100 wages, if you want to get the same work done using just 70 workers, obviously each of these 70 workers, you will have to make them work overtime every day, right? So Saturday, Sunday, all days are Monday only for them. Every day you will make them work, guys, correct? Before office, after office, if possible, you will also give them accommodation, stay here only. Guys, now, in this case, you tell me, is it really an overtime? No. Had you employed 100 workers, you would not have entered into the situation at all. Now, you wanted to save the cost of extra 30 workers. 30 workers, full cost itself you're saving. For that, for each of these 70 workers, extra little amount you pay. That is overtime premium. Now, ideally speaking, this is not a case of overtime at all. It is because of your company's staffing policy that you are making them work overtime. This is not treated as overtime. I will treat it only as direct wages. Are you all able to understand this? Substance over form. Is that clear? You call it overtime, but ideally it's not overtime. You are saving some money. That's why you are making them work overtime. Hence, in this case, it will be treated as a part of prime cost. That is direct wages. Is that clear? Next one. Overtime is due to customer's specific request. Now, what is this? Now, let us say, guys, a particular job, right? Let us say it takes, example, it takes 6 hours to complete a job. Okay. Now, let me give you an example which you guys may relate. Income tax filing. Okay. Let us say you are an article, right? You have to do income tax filing. Okay, guys. Now, in this case, what happens? Let us say for a particular return, it takes 6 hours to file this ITR. Okay. Now, what happens? Your office time is generally 9 a.m. to 6 p.m. Okay. 9 a.m. to 6 p.m. Now, this particular work takes how many hours? 6 hours. One particular client's income tax return takes 6 hours. Okay. Now, what you did, you started this work at 3 p.m. Okay. Now, 3 p.m. to 6 p.m. today, how many hours have gone? 3 hours. Now, this job will take how many hours? 6 hours. So 3 more hours are required. What you said? Sir, tomorrow I will come and you do. Your boss also said, okay. You packed your bag and when you're about to leave, the client came inside and he said, sir, I want the ITR today itself, sir. Please file it today itself. Then your boss said, if I make him work overtime, then it will cost extra. The client is saying, customer is saying, sir, don't worry, I will pay you. Whatever is extra, I will pay you. Now, what you did, instead of completing this work tomorrow morning, your boss, his favorite job, asked you to work today itself. He asked you to stretch after the office hour. Sir, instead of 6 p.m., work for 3 more hours. What? Till 9 p.m. you work. Are you able to understand this? Now, the same work would have been done tomorrow. But the customer asked you to do it today, and for each of these overtime hours, in our example, in this case, now there was an extra premium of 100 overall. Guys, correct? Now this the customer is willing to bear. If that is the case, now what will you do? You will treat it as a direct wages, but remember, of that particular job alone, you will treat it as a direct wages. Is that clear? Why? The customer is willing to bear it. Are you all able to understand this? Next one. Suppose overtime is due to seasonal demand. What is this, sir? Example. Let us say we are talking about a sweet manufacturing company, laddu manufacturing company, right? During the month of Diwali, or before the month of Diwali, right? Why Diwali? Elections. You have elections this year, right? 2026 elections, right? Now, obviously, the sweet shop, these guys will they will get one contract from all the parties, right? One party will win, but all the party contract they will get, correct? Right? So, anyway, someone has to celebrate. Now, there will be one winner at least. Whoever is the winner, it doesn't matter for me. I will only make laddus and give it to them, guys, correct? Now, during this season, peak season, heavy demand is there. Guys, correct? Now, because of that heavy demand, every year once it will be there, right? Maybe because of Diwali or something like that. 1 or 2 months, there will be heavy demand. Now, because of that, I make my workers work overtime. Now, this is not a regular feature. This is also not due to one customer's request. This is my general nature of business. So, I will treat it very much as a product cost only. But this is seasonal in nature. I will treat it as an indirect manufacturing cost, and I will treat this overtime premium as a production overheads. Is that clear, guys? Are you all able to understand? Reason, it is related to my business, but not directly specified to one particular job or unit. Is that clear, guys? Hence, I will take it as POH. Next one, overtime is due to abnormal reason. For example, after COVID, the staffs were asked to work extreme overtime. Now, because of that abnormal reason, rarely it happens. In that case, now take it to costing P&L, treat it fully as period cost. Is that clear, guys? So, how many reasons are there? 4 reasons. Reason number 1, company policy, conjuice, right? Treat it as a direct wages of all the jobs. We will see the treatment. Number 2, customer specific request, take it as direct wages of that particular job. Next one, seasonal demand, POH, abnormal reasons, costing P&L. Is that clear? Now I'll give you an example. Mr. X, he works for a total of 120 hours, breakup. Normal hours, 100 at the rate of 10. Overtime wages, this 20 hours at the rate of 15. Overall, 100 into 10, 1000. 20 into 15, 300. Total amount, 1300 they pay. Job A, 70 hours. This job A includes 20 hours of overtime. Guys, job B, 50 hours, all normal time. 70 plus 50, total how much is it? 120. That is the total number of hours he has worked. So, which means the entire overtime is worked on job A. Is that clear, guys? Is that clear? Now, scenario number 1. If overtime is a regular feature, now what happens? Guys, overtime is a regular feature. Now, every day I'm going to work overtime. Guys, correct? Maybe this particular day, I started in the morning with job B. I finished it during my office hours. Then, job A, 20 hours alone, I worked in overtime. Now, this was coincidental. Maybe in this day, I started with job A. Overtime hours, I would have worked on job B. Or in other words, this is not job specific. This is because of the company policy. They have made me work like that. Are you clear with this? In this case, what will I do? Simple. What is the total labor cost? 1300 divided by all the total hours. 120 hours. So, I get 10.83 rupees per hour. This is the effective wage cost per hour. Right? Job A, I spent 70 hours. job B I spent 50 hours, multiply that respectively with the average labor cost, and you will arrive at wage cost job wise. Is that clear, guys? So you take the total wages divided by the total labor hours, arrive at the labor cost per hour, and evenly charge it to all the jobs. So here, though this 20 hours was worked exclusively on job A, now it is not job specific, right? It was because of the company policy I made to work. Maybe in the morning I started job B, I finished entirely during my normal time. So the overtime was used on job A. Anyways, overtime I will work. Maybe had I started job A in the morning, job B I would have worked overtime. That's all. Are you clear with this? Hence, both the jobs were equally likely to be subject to my overtime. Hence, it is not job specific. Average everything and charge it evenly to all the jobs. Is that clear, guys? In this way, what happened? So, job A's wage cost was 758. Job B's wage cost was 542. Overall, 1300 rupees entirely treated as a prime cost. Is that clear, guys? Now, scenario number 2, what happens? Overtime is due to customer specific request. Now, in this case, am I a conjuice company? No. The overtime generally is not required, sir. Sorry, every hour, I generally pay only 10 rupees. Right? But suddenly, on one job alone, right, that is job A alone, they asked me to work overtime, but the customer was willing to bear that. Right? In this case, what will I do? Very simple. So now, this overtime premium, how much is the overtime premium? 20 into 5. Am I right? So 20 to 5 is 100. This 100 rupees has to be borne only by job A. Why this is job specific now? Are you all able to understand? Right? How will it be? Simple. So what will you do here? 70 into 10. Guys, entire 70 hours into 10. Plus on this 20 extra I pay how much? 5. Is this clear, guys? So 70 into 10 plus 20 into 5, it comes out to 700 plus 100. 800 rupees will be the labor cost charged to job A. Job B, 50 hours, everything normal time into 10, 500. So it's going to be 1300. So here also, entire amount is treated as prime cost, that is direct wages. But look at the composition, 800, 500. Whereas the previous situation, 758 and 542. If you notice the difference, here the entire job A, right, the entire overtime premium was entering into job A. Whereas in this case, the overtime premium was properly apportioned between A and B. That's why B had a cost of 542. Whereas normal time, if I take, it's only 500. Are you clear with this? Now you guys are able to understand the logic here. Ultimately, both the amount, in both the cases, entire amount was treated as a direct wage, but job-wise apportionment was different. Is that clear? This is a very, very important thing to understand. Next one. Sir, overtime is a seasonal demand, sir. Overtime is due to seasonal demand. In this case, what will you do? Sir, this overtime premium is not job specific. What will I do in this case? Simple. 20 into 5, 100 rupees of premium. I will take it to what? Production overheads account, which means every hour I will charge it only with 10 rupees. Guys, correct? Right? No. Though this 20 hours of overtime was worked on job A, once again, it is not job specific. It is season specific, guys. Correct? This season is very, very hectic. Coincidentally, today in the evening, I worked on job A. Because morning I started with job B, evening time I spent on job A. Had I started the morning with job A, right, I would have spent the evening time, overtime on job B. So in this case also, both the jobs were equally likely to have been worked on this overtime, guys. Correct? So this is not job specific. Is everyone able to understand this? Hence, in this case, what will you do? So this 20 into 5, take it out, 100. Treat it as production overheads. Now, for each of the jobs valued at the rate of 10, so 70 into 10, 700, 50 into 10, 500, that alone will be treated as what? So 70 into 10, 700, 50 into 10, 500, 1200 rupees will only enter into your prime cost component, basically direct wages. So the balance overtime premium, 100 rupees should be taken to POH account. Is that clear? And in the last situation, overtime is due to abnormal reasons. Exactly same as scenario number 3, only one difference. Instead of taking this 100 rupees to POH account, take this 100 to costing P&L. Everything else is the same. Are you all able to understand? That's about the concept of overtime premium. A very, very, very important discussion, guys. Generally, many students tend to mug this up. Please understand the logic why you're doing, and that's about this particular segment of overtime premium. Is that clear, guys? Right? Remember, we're talking about the discussion of overtime premium, not overtime wages. Right, guys? So with this, the third concept called overtime premium is also over. Now let's move on to the last concept of discussion, which is called as labor turnover. Now guys, labor turnover. Now what do you mean by labor turnover? Labor turnover refers to the rate of change in the workforce. So what do you mean by this? I have a company. Now every month some people will come in, new people will come in, existing people will go out. Next month some more new people will come in, some more existing people will go out. Guys, correct? So there is a poem, for men may come and men may go, I go on forever. Right? Alfred Lord Tennyson, in his poem called The Brook, he says this, very famous. Now similarly the company goes on forever. Correct? Right? For men may come and men may go, the company keeps on going forever. Now this labor turnover, this is one, we will be seeing about 3 ratios, labor turnover ratios. It captures the rate of change in the workforce. Is that clear, guys? Are you all able to understand this? Are you all able to understand this? Yes. Now in this labor turnover segment, now for your examination purpose, now there are 2 types of questions which you can expect. One type of question is about calculating labor turnover ratios. The other type of question is regarding calculation of profit foregone because of labor turnover. Now guys, labor turnover, you guys tell me, now when I am recruiting a new person, right? Now obviously there will be recruitment related cost. I will have to find the right talent, right? And I need to hire him and I need to train him, and of course during the course of his employment I need to make sure that he works properly and all that. Training is very much required. Is correct? Now suppose an employee comes, he gets trained, 3 months he stays and he leaves. Now you tell me, once again I need to find another employee, train him and do all these things. Basically if the labor turnover is high, now it results in huge amount of cost for the company. Guys, correct? Now because of a high labor turnover, what is the impact of profit is what we will be computing in the next second segment of, the second type of problems in this area called as labor turnover. Is that clear, guys? Are you all able to understand this? Yes. Now high labor turnover represents frequent entry and exit of employees. Is that good? Definitely not. It is bad. Then sir, low labor turnover, is that good? That is also bad. Why? It means there is no movement of employees, which means when a person joins, it is like on government job, he will stay there forever, right? Till 60, 65. So he will also stay along with the company. He will also keep saying this, I will also go on forever. Now old talent, you will not get fresh blood. Young talent you will not get. You will be exposed to old talent only. Now when he joined, maybe Indira Gandhi was a prime minister. So at that point he would have joined. So he would have been used to writing letters and all, right? Instead of using systems, computers, message and all. So if he still continues and he says, no sir, accounting I will put only debit, credit, no system, obviously the company cannot go on forever. So what happens in this case? Now you are not attracting fresh talent. Guys, correct? So remember, a high labor turnover represents a frequent entry and exit of workforce, which is bad. And a low labor turnover represents what? A very rare movement of workforce, which is also bad. There has to be a balance. Is that clear? Is that clear, guys? Fine. Any problem, any issues here? Now quickly let's have a look at the different labor turnover ratios available. Now one second. Labor turnover ratios. Yes. Now labor turnover ratios, there are 3 popular methods in which you can compute the labor turnover ratio. One is called the replacement method. Then you have a method called separation method. Then you have a method called the flux method. Replacement method. How will you compute your labor turnover? Very simple. Number of replacements divided by average number of workers into 100. Separation method. Number of separations divided by average number of workers into 100. Now first, what do you mean by average number of workers? Opening number of workers plus closing number of workers divided by 2. This is called as average number of workers. Is that clear? In a month, let us say opening workers were 120, closing workers were 80. What is the average workers? 180 plus 80 by 2, which is 100. Am I right, guys? Are you all able to understand? Fine. Now, replacement method, separation method, the first two methods. First, we will see what do you mean by separation. Simple, guys. Separation means the total number of people who have moved out of my company. I have a company. The total number of people who have moved out in this particular period, right? It could be a month or a year, whatever it is. Let us say a total of 50 people in this month moved out of my company. Sir, why, sir? There could be so many reasons. One, retirement, or I actually forced them to resign. I threw them out, or death. There could be so many reasons why people move out. They are saying, so under the separation method, how do you compute the labor turnover? Turnover does not sales, guys. So here what will you do? Total number of people who have moved out, separations, divided by average into 100. Very simple, no? Yes. Next, replacement method. Now replacement method, how will you compute? Simple. Total number of replacements divided by average number of workers into 100. Sir, what do you mean by replacement? I will tell you. Now, guys, let us say this month totally 5 people moved out of my company. 5 people moved out of my company, right? Now, let us say I hired 8 new people. How many people moved out? Everyone? 5. But I hired how many people? 8 people. Sir, why did you hire 8? I will tell you. Out of these 8 people, 4 people took the positions which these people vacated. That is, 5 people moved out of the company. Now, out of these 5 existing job vacations, the newcomers, 4 newcomers took the positions. Is that clear? Or in other words, 4 people replaced my existing workforce. Is that clear? So then what happened to this one? I thought this one position is not even required. I don't know why I had this guy. That's why I only sent him out. Is that clear? So in this case, the number of replacement is how much? 4. Are you all able to understand? Replacement means what? The number of people that I've hired who will replace the existing people who went out. Are you all able to understand? Sir, but you hired 8 people, no? Out of that 4 are only replacements. Who are the balance 4? Now these 4, now I hired them because I am having an expansion program. I created 4 new job positions. Is that clear, guys? Are you all able to understand? Hence, in this case, under replacement method, I will not take 8. I will only take 4 as the number of replacement. So, replacement method, what is the formula? Number of replacements divided by average number of workforce into 100. Is that clear? Separation method, number of separations divided by average number of workers into 100. Is that clear, guys? Now, understand one thing. In this case, I hired 8 people new. 4 people were replacements. 4 people were new joinees. Is correct? Are you understanding? Sum total of your replacements and new joinees, or in other words, it's going to be 8 people. This is called as accessions. Accessions means what? The total number of additions made. Is that clear, guys? That's called as accessions. Are you all able to understand? Now, let's go on to the third method. The third method is called as flux method. What is it called as? Flux method. Now, what it says, very simple. Flux method says total number of separations means what? People who have moved out plus total number of accessions means what? Replacements plus new joinees, or in other words, simple. Separation, exit, accessions, entry, total exit plus total entry divided by average number of workers into 100. Is that clear? Very simple to remember, guys. Correct. So flux method captures both the entry and the exit. Separation method captures only the exit. Replacement method captures only the entry of those people who exited. Is that clear? Not the total entry also. Is this clear, guys? Are you all able to understand? That's all, guys. Now, with these 3 methods, sir, so I get some percentage ratio, no? So, what is the meaning of that? It has no meaning by itself. So, you compute your company's ratio, compare that with your industry's ratio. So, generally, in this industry, this much is allowed. Now, compare your ratio with the industry ratio and see whether your employee turnover is more or less, or more or less the same. Is that clear, guys? For that purpose only, we do this employee turnover ratio calculation. Is this clear? Guys, are you all able to understand this? Right? And that's about this particular segment called as employee turnover ratios. Is that clear, guys? Now I put a doubt buster here. The accessions represents the total number of workers joined, including the replacements. Is this clear? Fine, guys. That's about this particular segment called as labor turnover ratio. Now, let's move on to the second part of this labor turnover ratio, which is profit foregone. Now, this has some marginal costing related concept. We've already revised marginal costing. So now let's get started here. Now, profit foregone. Because of the change in the workforce, now what is the impact on my profitability? We will be seeing it here. So please take, I think it's question number, one second. I think it's question number 14, if I'm not wrong. 14, no? Yes, question number 14. Now, guys, a very important question. Now, the management of BR Limited is worried about their increasing employee turnover in the factory, and before analyzing the causes and taking remedial steps, it wants you to have an idea of the profit foregone as a result of employee turnover last year. Now, what are they saying? Last year, the sales amounted to 83,03,300. The PV ratio was 20%, which means how much is the contribution? So 83,03,300 into 0.2. How much is that? Yes, it's going to be how much? So the contribution made was 16,60,660 rupees. Correct? Yes, in the previous period. Right. Now, what are they saying? The actual number of hours worked by the direct employee force was 4.45 lakh hours. Means what? In the last year, the total number of actual hours worked was how much? 4,45,000 hours. The actual direct employee hours included 30 hours attributable to training new recruits, out of which half of the hours were unproductive. Now, what are they saying? Now, in the last year, the actual direct labor hours were how much? 30,000 hours. Now, out of this 30,000 hours, 50% of the time were unproductive. Means what? They actually worked for 30,000 hours. Since I was training them, they were slow. They obviously initially they will be very slow, right? So ideally 50% of the time was unproductive, which means whatever they took, whatever time they took, that is 30,000 hours, ideally speaking, the job could have been done in 15,000 hours, which means the balance 15,000 hours were actually unproductive. Is that clear, guys? Is that clear? Which means this 4,45,000 hours included 15,000 unproductive hours. Am I right, guys? Which means in the last year, effective productive hours were how much? Just 4,30,000 hours. Is that clear? By spending 4,30,000 hours, they were able to generate a contribution of 16,60,660. Am I right, guys? Fine. Have this in your mind. Next. As a result of the delays by the personnel department in filling the vacancies due to employee turnover, 1 lakh potentially productive hours, excluding the unproductive training hours, were lost. What are they saying? Now, whenever an employee went out of my company, immediately my HR team should have hired someone new. Had I hired someone new, then I would have put them to work immediately. Now, but these guys, what they did, there were some delays in filling the vacancy. Because of that, I lost 1 lakh potentially productive hours. Means what? This 1 lakh is not included here. This 1 lakh was never worked at all. Had they properly and hired them timely, what would have happened? I would have got 1 lakh hours more. But I didn't get these 1 lakh hours because of this delay in recruitment and all. So literally because of the delay in recruitment, I've lost 1 lakh potentially productive hours, guys. Correct? Had I employed this, maybe for every hour I'm making them work, I would have generated some contribution. Am I right, guys? Now, the costs incurred consequent on employee turnover revealed on analysis the following. Over and above all these things, now for whoever is exiting, I need to pay them settlement cost, then fresh people recruitment, selection cost, training cost, which means all these four are extra costs that I will incur because of employee turnover. Assuming the potential production lost as a consequence of employee turnover could have been sold at prevailing prices, find the profit foregone last year on account of employee turnover. Now, what should you do? Simple. Last year, they were able to generate a contribution of how much? 16,60,660 by effectively spending how many productive hours? 445,000 minus 15,000, that is 30,000 out of 0.5. 30,000 is 0.5. It's 15,000 hours. 4,45,000 minus 15,000 gives you 4,30,000, which means for every hour spent, what is the contribution they can generate? 16,60,660 divided by 4,30,000. How much is that? For every hour they make their workers work productively, they will be able to generate a contribution of how much? 3.862. But because of all this labor turnover related issue, what is the total number of hours they lost? One is this 1 lakh, plus out of this 30,000 also 50% was lost, so 15,000 hours were lost. Overall, how many hours were lost? 1,15,000 hours are lost. Had there not been this labor turnover, I could have saved this 1,15,000 hours, and on each hour I would have generated a contribution of 3.862. So 3.862 into 1,15,000 gives me how much, guys? So I could have generated a profit, extra profit of, or contribution of 4,44,130. Is that clear, guys? So this is the total contribution foregone. Guys, correct? Not the total profit foregone. This is the total contribution foregone. Guys, correct? And on top of that, I am also incurring these 4 expenses. Add up all these things, you will get the total profit foregone. Is this clear, guys? So 443,130 is the contribution foregone. On top of this, add all the extra costs that you spend. Add it up. This is the total amount of profit foregone. Is this clear, guys? It comes out to 5,57,930. I'm not getting into the calculation, but this is what it is. Are you all able to understand? Isn't this simple, guys? Isn't this simple? So what you need to do, arrive at the contribution per effective productive hour, right, and multiply that with what the total productive hours lost. So you will arrive at the total contribution loss. On top of that, add all the extra costs that you will incur. So you will get what? The total amount of profit foregone. Is this clear, guys? Are you all able to understand? And that's about this particular area of your employee turnover. And in fact, that's about this particular chapter also. And one more thing, guys. Then you have this one, direct expense. Nothing great. We have already done this. We have already done this in in our cost sheet area, right? Direct expenses. This is nothing but expenses other than direct material and direct labor, which can be directly traced, right, per unit. Now examples we've seen: royalty, higher charges for specific equipment, then product specific design drawing, product specific software, even your job charges. You've seen those sums as well, right? All those things will come under direct expenses. That's about it, guys. Nothing beyond this. They just wanted to keep one more area on the face of your syllabus. That's the reason why ICAI has done this. As simple as that. Is that clear, guys? Fine. With this we have completely covered and revised this particular chapter of employee costs and direct expenses. Fine. So now let's get started with the revision of yet another important chapter called material cost. Now guys, generally from this chapter, around 5 to 10 marks gets tested in your exam. And once again, this particular chapter is a common chapter for CA and CMA Inter students. Now guys, this particular chapter is very important, not only from an examination perspective, but also from a real life perspective. Hence, now quickly, we will revise this entire chapter, right, in a proper manner. Now guys, if you see, in this chapter, you have multiple concepts, right? Components of material cost, economic order quantity, EOQ with price discount, stock levels, issues valuation, stockout cost, ABC analysis, inventory turnover ratio, treatment of losses. These are all the list of concepts covered in this particular chapter material, right? Now, our subject as a whole has 3 objectives. One is stock valuation profit computation. Then you have decision making, and then you have control. The reason why we study this subject, cost and management accounting, is because it goes on to achieve 3 objectives. Now this chapter fits into which objective? Now there are some concepts in this chapter which go on to achieve the first objective. There are some concepts which go on to achieve the second objective, and there are some concepts which go on to achieve the third objective. For example, the components of material cost, treatment of losses, issues valuation, all these things come under the first category, that is stock valuation profit computation. Whereas for the purpose of decision making, you can take EOQ, That's for the purpose of decision making. Even stock levels, all these things come under the category of control. Even EOQ, you can say, it achieves both your decision making and control perspective. Clear with this, guys? So which means this chapter has so many concepts. Some of the concepts go on to achieve objective A, some of the concepts go on to achieve objective B, and some other concepts go on to achieve objective number C. Is that clear, guys? Yes. Now with this context, now let's go and do the first learning objective, which is components of material cost. Now, when I say material cost, right, in my cost sheet, this is the first line item. Am I right, guys? What forms part of material cost? Simple. Now, whatever cost you incur to bring your raw material from the supplier's location to your location include all the costs. Is that clear? This includes the amount you pay to the supplier, purchase cost. This includes freight inwards, transportation cost. All these things you can add it up. Is that clear, guys? Now, treatment of some special items. If they are giving a trade discount, you can subtract it. Quantity discount, subtract it. Suppose cash discount is given, no, this should be ignored. Why? We saw this earlier in cost sheet. Cash discount is in the nature of finance cost, should be ignored. Any subsidies or grants or incentives, so any benefit that I get should go on to reduce my material cost. Any duties and taxes, right? Road tax, toll tax and all, yes, these are the costs I incur to bring my material to my present location. Yes, add it up. GST should be added only if ITC is not allowed. If GST should be added only if ITC is not allowed. If ITC is allowed, then it is ideally not a cost. Hence, it should be excluded. Is that clear, guys? Right? Next, customs duty. Yes, customs duty should be added because there is no credit on customs duty. Any kind of penalty and charges. One popular adjustment is demurrage. What do you mean by demurrage? Demurrage is basically a penalty which the transporter will charge his customer. Let us say I am arranging a transport facility. For some reason, documents are missing. So that GST officer, what he did, he stopped my vehicle for 3 days and then he left it. Now what happens? For this transporter, there is a huge loss, right? Now the transporter will ask me to pay something called as a demurrage. Is that clear? So if the government charges, it is called as fines, penalties and all. Other people, if they charge, it's called as a demurrage. Is that clear? Now, any kind of abnormal expenditure like demurrage, detention charges, fines, penalties and all, they are abnormal in nature, should not form part of your material cost. Take it separately to costing P&L. Is that clear, guys? Yes. Any other expenditure. Insurance, freight insurance, right? So for the freight, during the freight insurance, yes, added to the cost. Commission brokerage paid for identifying the supplier, added to the cost. Freight inwards, added to the cost. Cost of containers, what will you do? Now, if they are non-returnable nature, the supplier says, look, you need to pay for the container, that's all non-returnable, then in that case, container cost, I should add it. It's a cost I incur. Suppose they are returnable containers, right? In that case, he's saying maybe you pay a deposit. This is like your water can. You pay a deposit. Once you return back the containers, I will refund the amount to you. This is not a cost only. Just an advance you pay and you get back. In that case, it should not form part of cost. Let us say he took an advance of 100 rupees, but when I returned back the containers, he repaid only 80. In this case, the net amount of 20 should be treated as a container cost, should be added to your raw material cost. Is that clear, guys? These are all the different types of adjustments you can see in this area. Is that clear, guys? So technically, what forms part of material cost? All the costs which are incurred to bring my raw material from my supplier's location to my own factory, to my present location. Is that clear, guys? Remember, most importantly, any kind of abnormality should be excluded. GST, if ITC is allowed, should be excluded. And one very important thing, cash discount should be excluded. Are you all able to understand? These are all the catches here. That's why I have kept it here in our concept decoder book. Is that clear, guys? Right? Now, let's move on to the next concept called as economic order quantity. Economic order quantity. Now, what do you mean by this concept of economic order quantity? Now, guys, let us say in a year, I need to purchase a total of 1,20,000 kgs of raw material. I have two options. What is 1,20,000? The annual consumption requirement of raw material. Let us say I have two options. Option number one, place a single order, right? Buy the entire 1,20,000 kgs. Or option number two, no sir, not a single order. 12 times I will order, which means per order I will order only for 10,000 kgs. I'll buy 10,000 kgs. Once it gets over, another 10,000 kgs. Like that, 12 times I will order. Now, in both the cases, 1 into 1,20,000 is 1,20,000. 12 into 10,000, this is also 1,20,000. In this case, annual consumption will not change, but the manner in which I buy it, that alone changes. Is that clear, guys? Now, between the two alternatives, which one is better? Now, you can't come to a conclusion directly because each of these alternatives will have one advantage and one disadvantage. Sir, what are you talking about? How can there be one advantage, one disadvantage? Now, for the purpose of this segment, economic order quantity, now overall raw material cost is bifurcated into three. One is your purchase cost. Then you have something called as ordering cost, and then you have something called as carrying cost. What do you mean by ordering cost? Ordering cost means the cost that you incur whenever you place an order, which means the cost driver here, we have seen in activity based costing, the cost driver here is number of orders. It is not number of units. Every time I place an order, I will incur this cost. Sir, example, sir. Now large companies, before they place an order, bulk orders they will place, right? They will first make a newspaper advertisements. Now they will invite suppliers to give quotations. Now once for that newspaper advertisement is required, cost you incur, no? Number one. Number two, upon receiving the quotes, they will have a team and they will have to select the best supplier, the vendor. Now once the supplier is selected, they will place an order. It gets transported to my location. Guys, so transportation cost is every time I place an order only I incur, guys, correct? And once I receive it, I need to break it will be in bulk, right? I need to break the bulk and properly I should store it in my stores area. Is that clear, guys? Now all these process involves costs, and these costs are linked to the number of orders. Every time I place an order, only then I will incur these costs. Is that clear, guys? Now on the other hand, I have something called as carrying cost. What do you mean by carrying cost? Carrying cost also refers to storage cost. Right? Now, basically your warehouse rent, warehouse keeper salary, the insurance on the stock which you are holding with you. Are you all able to understand? Right? Opportunity cost, it also comes here. Right? Opportunity cost means what? Sir, when you and I go to a go down, let's say there are 50,000 units of a particular raw material. We will say there are 50,000 units of raw material. But when a supplier, when the businessman comes and sees, he'll say, sir, I have 5 lakh rupees worth of stock, sir. Because every unit costs me 10 rupees, let us say. So he will say, I have 5 lakh rupees worth of stock. Now I have blocked 5 lakh rupees of my funds in this stock. Now, had I not blocked it here, maybe I would have put it in an FD and I would have generated some interest. Because I've purchased this particular stock right now, I'm losing out on that interest, guys. Correct? That is an opportunity cost of carrying or holding this inventory. Is that clear, guys? So always remember, for the purpose of EOQ discussion, what happens? Stock is classified into three: the purchase cost, which you pay to the supplier, ordering cost, and carrying cost. Now, guys, I gave you two scenarios here, option 1, option 2. In both the scenarios, I end up purchasing the same 1,20,000 kgs. Guys, correct? So because of this decision, that is what decision? Order quantity. Per order, should I place an order for 1,20,000 or should I place an order for 10,000 kgs 10 times, 12 times? Are you clear with this? Now, because of this order quantity decision, does my total consumption change? No. When my total consumption is not changing, right, obviously my purchase cost will also not change. Am I right, guys? Because whether you place an order for 1,20,000 kgs as a whole in a single order or 10,000 kgs per order, now he does not give you any discount. Guys, clear with this? Hence, in this case, your purchase cost is not affected by your order quantity decision. Am I right, guys? So, now what gets impacted is only your ordering cost and carrying cost. How, sir? Now, if I increase the order quantity, you look at this. In this case, per order, I increase the order quantity. Now, what happens to the number of orders? The number of times I need to order is going to be less, which means the ordering cost will reduce. Guys, correct? But on the quantity, what will happen? Since I have 1,20,000 kgs with me, I'm purchasing. Now, the quantity of stock that I hold, the average inventory size will be more. Guys, correct? Hence, because of this, what will happen? Your carrying cost, that is the cost of holding your inventory, will increase. Is that clear? So here the advantage is by way of low ordering cost, but disadvantage is by way of high carrying cost. Suppose if I reduce my order quantity, what will happen? The number of orders will increase. Correct? Now, because of this, the total ordering cost will go up. Guys, correct? But what happens, sir, at a time I used to hold only maximum of 10,000 kgs. So average inventory is coming down. Because of this, my carrying cost will come down as a whole. Guys, are you all able to understand? Hence, now if I have a more order quantity, example, scenario 1, advantage is by way of lower ordering costs. Whereas if I reduce my order quantity, the advantage is by way of a lower carrying cost. Now, which will give you, which alternative is better? Sorry, which alternative is going to be better for you? Now, you can't come to a conclusion directly. This is where they are saying the economic order quantity means what? The best order quantity is going to be root of 2 into A into O divided by C, where A stands for annual consumption, O stands for ordering cost per order, and C stands for carrying cost per unit per annum. Remember, carrying cost is driven by two things, per unit per annum. Is that clear? Per unit. Basically, this talks about your quantity, and per annum, this talks about your duration. Whenever I'm saying, sir, the carrying cost is going to be 3 rupees, I will say, sir, it costs me 3 rupees to hold 1 unit for 1 year. Is that clear? So this cost is driven by two things. One is your quantity, the other one is your duration. That's why it has to be mentioned with two cost objects, per unit per annum. Is that clear, everyone? Guys, are you all able to understand this? So now, this is what the formula says. Now, sir, how does this formula arise? Simple. They use the law of economics here. Let us say on the x-axis I have rupees, and on the x-axis I have order quantity, and on the y-axis I have rupees. Now, guys, if I keep on increasing my order quantity, what happens? The number of orders will fall down, guys, correct? And my ordering cost will be less, guys, correct? So the ordering cost curve will look like this. As you increase the order quantity, the ordering cost will reduce, guys, correct? Whereas if I keep on increasing my order quantity, average inventory will increase, hence carrying cost will also increase, guys, correct? Now, by using law of economics, we say that the best optimum quantity, the economic order quantity, will be at a point when your ordering cost is equal to your carrying cost. Is that clear? Why? This is what you would have studied in your economics also. Your optimum production level is at a point when marginal cost is equal to marginal revenue. Guys have studied that? Yes, similar, the same concept here they are using. At this point, which is the best economic order quantity, it happens at a point when your ordering cost is equal to your carrying cost. Is that clear, guys? Right? Now, at this point only, your overall cost will be kept at minimum. Right? If you deviate from economic order quantity, your overall cost will definitely be more than what you get at the EOQ level. Is that clear, guys? Now, so which means at the EOQ level, ordering cost should be equal to carrying cost. Am I right, guys? Now, ordering cost, how much is it? Can I say it is number of orders into O? What does O stand for? Ordering cost per order. Carrying cost is nothing but average inventory into carrying cost per unit per annum. Guys, average inventory means what? The inventory that I hold on an average at any given point of time. Is that clear? Now, number of orders, I can rewrite it by a formula A divided by OQ. Sir, how, sir? Now, for example, number of orders. In the first case, now, how many orders do I place? Guys, 1. How did you get this? In a year, I have to purchase 1,20,000, and in this per order, I'm purchasing 1,20,000. Divide that, you get 1. Whereas in the second scenario, in a year, I need to purchase 1,20,000, but every time I place an order, for 10,000 kgs. So 1,20,000 divided by 10,000, you get 12 orders, guys. Correct? Are you all able to understand? Which means the number of orders is nothing but A divided by OQ. Am I right, guys? Into O. So if you do this, you get the total ordering cost. Am I right, guys? This should be equal to your carrying cost. What is carrying cost? Average inventory into C. So average inventory, how can you find out? This is half of order quantity. Sir, how did this formula arise? I will give you the logic here. Let us say my order quantity is 10,000 kgs. Now, what will I do? I will purchase 10,000 kgs. Now, I will keep on consuming it. Now, the moment it hits 0, once again I will purchase another 10,000 kgs, consume it. And once it is 0, once again I will purchase another 10,000 kgs and I'll keep on be consuming it. Am I right, guys? Or in other words, at any given point of time, my maximum stock I hold is how much? 10,000. Minimum stock I hold is how much? 0. The average stock I hold is how much? 10,000 plus 0 divided by 2, which is going to be 5,000. Or in other words, it is 1 by 2 of order quantity. Guys, are you all able to understand every single logic I'm explaining in the marathon itself? Right? So, half of order quantity into C is going to be your total carrying cost. Is that clear, guys? So, now if you equate this to A by OQ into O is equal to 1 by 2 into OQ into C. If you do that, what happens? OQ, you can take it to this side, becomes OQ square. Guys, correct? And this is equal to take this to the numerator, 2AO divided by C. Is that clear, guys? So OQ square is equal to 2AO by C, or OQ is equal to, so to the power 2, if it goes to the other side, it becomes to the power 1 by 2. Guys, correct? Or in other words, so it is going to be OQ is equal to root of 2AO by C. Is that clear, guys? Right? And this is the order quantity where your total cost is the least minimum. Hence, I call it as a EOQ, economic order quantity. Is that clear, guys? This is the derivation for EOQ. Should you mug this up, guys? No. Very, very simple and straightforward. Is that clear? So now, what is the formula for EOQ? Root of 2AO by C, where A stands for annual consumption requirement, O stands for ordering cost per order, and C stands for carrying cost per unit per annum. Is that clear, guys? Right. And that's about this particular concept of EOQ. Now, shall we just go and do one sum here? So please take question number 3. Please take question number 3. Yes, please take question number 3. Shall we begin? Yes. Compute the EOQ and the total variable cost of the following. What have they mentioned? The annual demand is going to be 5,000 units. The per unit cost is going to be 20. Then ordering cost is 16 rupees per order. Then storage rate is 2%. Interest rate 12%. Obsolescence rate 6%. Now, add these three. How much you get? 2 plus 12 plus 16. 20%. Guys, this 20% represents your carrying cost. Guys, correct? Right? That is storage cost is 2%. Interest opportunity cost is 12%. Obsolescence rate. Obsolescence means the chances of it getting destroyed or not destroyed, spoiled. Is that clear? 6%. Add up all these things. This is the total carrying cost, but it is expressed as a percentage, sir. It is 20% on what? The 20% on the value of material that you hold. So what is the value of material? Guys, it's going to be 20 rupees. Is that clear? So 20% on 20, how much is that? 4 rupees. 4 rupees per unit per annum is going to be my carrying cost. Is this clear, guys? Is this clear? Now, sir, why are we applying this carrying cost as a percentage on value? Obviously, guys, because your carrying cost is dependent on the value of your product. For example, I am a diamond manufacturer. In that case, I need to have a very good and a proper sophisticated system of storage. Guys, correct? Right? I will be having, different ducts and all, and I will be having, so many lockers and all these things, and security and other things I will be having. Suppose I am a chappal manufacturer. Now, in this case, I need not actually have so much sophisticated security system and all. One small garage is enough for me. I can store it. Put one shed and a lock also. One small rod I can keep and come. No one is going to take it. Guys, correct? Are you all able to understand? Right? So no one is going to take it. If at all someone wants to steal it, they will steal only outside temples. They will not steal inside this garage. Guys, correct? No. Correct? Okay. So hence, look at this. So depending on the value of the material, your carrying cost also varies. Is that clear, guys? Hence, this 20% should be applied on what? The value of the raw material, which is 20 rupees. So it's going to be 4 rupees. What is the ordering cost, guys? Hello? What is the ordering cost? 16 rupees per order. And the annual consumption requirement is how much? 5,000 rupees. Simple. Determine the total cost that would result for the items if a new price of 12.8 is used. So first, you arrive at this 20%. 20% on 20 is going to be 4. So root of 2AO by C. A is 5,000. O is 16, C is going to be 4. Am I right? So root of 2 into 5,000 into 16 divided by 4. So it's root of 40,000. So you get 200 units. What is the meaning of this? So overall in a year, I need to purchase 5,000 units, but purchase it in lots of 200 units. Is that clear, guys? That is the meaning of this. Are you all able to understand? Is there any issue here? No. Now, if I purchase in lots of 200 units, what's going to be my total cost, guys? First, in a year, I'll purchase 5,000 units at the rate of 20. The cost is 1 lakh. Correct? Then ordering cost. How much will that be? Number of orders. 5,000 divided by 200. How many orders are there in a year? 25 orders are there in a year. Every time I place an order, it costs me how much? 16 rupees. 25 into 16. So 400 rupees is going to be the total ordering cost, guys. And how much is going to be my carrying cost? Average inventory, that is 1 by 2 into 200. Guys, correct? Into carrying cost per unit per annum, which is 4 rupees. Am I right, guys? Right? So look at this. It's going to be how much? So 1 by 2 into 200 into 4. So this is going to be 4 into 100. It's going to be 400 rupees. Is that clear, guys? So overall the cost is 1 lakh plus 400 plus 400. So 1 lakh and 800 rupees. And remember, at the EOQ level, ordering cost is equal to carrying cost. It is matching. Is that clear, guys? Right? Are you all able to understand? So we have computed the EOQ. We have also computed the total cost at the EOQ level. Is this clear for everyone? Guys, correct? Fine. Next. Now, suppose they are changing the price. Sir, price is not, currently it is 20. Price is not 20, sir. It is only 12.8 rupees. In this case, sir, how will you compute EOQ? Simple. A will continue to be 5,000. O, ordering cost per order is 16. C will change now. C will be 20% on the value, 12.8. How much is that? 2.56 rupees. It becomes 2.56 rupees. So root of 2 into A 5,000 into O 16 divided by C 2.56. How much you get? 2 into 5,000 into 16 by 2.56. Yes, 62,500. Square root of that, you get 250 units. So if the price is reduced to 12.8, now what will you do? Now it's better if you purchase it in lots of 250 units. The cost at that level, 5,000 into 12.8 gives you 64,000. Ordering cost will be number of orders, 5,000 divided by 250. So 20 orders you'll be placing in a year at the rate of 16, which is going to be 320. And average inventory is half of order quantity, 250, into carrying cost per unit per annum, which is 2.56. So how much will you get? You'll get 320 again. So the total cost in this case is going to be how much? 64,640. Is this clear, guys? As simple as that. Is that clear? It's as good as doing two different sums, but this is all it is, right? In our regular and exam oriented batch, we actually work it out in detail, right? In a marathon, I'm doing it as a discussion, right, guys? Fine, clear with this? Fine. Can we just go and update our library of adjustments? Write down calculation of EOQ and total cost computation. Calculation of EOQ and total cost computation, right, guys? Fine. So that's about the second segment of discussion, which is EOQ. Now let's move on the next important segment of discussion, called as stock levels. Now guys, in this concept, stock levels, now there are 5 different stock levels. One is called as reorder level. Then we have something called as minimum stock level, then maximum stock level, average stock level, and there's something called as danger level. So these are the 5 different stock levels that we have got. Now one by one we will see. Reorder level, that is the first thing we are going to see. The formula is maximum consumption per period into maximum lead time. Now before we get here, first we need to understand some terminologies. Now there is something called as lead time. It is also called as a reorder period. What is the meaning of this lead time or reorder period? Let us say today you place an order for a product on Amazon, okay, but you receive it only after 3 days. So the delivery happens only after 3 days, guys, correct? Now the time gap between the date of placing an order and the date of receipt of delivery is called as a lead time. It's also known as reorder period. Is that clear, guys? Right. Now let us say I'm running a company, right, and I'm having some raw materials. Let's say 1000 kgs of raw materials are there. I keep on consuming it. Now, what happens? Suddenly, I notice that the stock balance is 0, right? Now, I take the phone call and call this supplier to supply me raw material. Now, he will tell me, sir, I will supply it. It will take 3 days. Now, what is my stock balance? 0. Now, I have already reached 0. Now, if I place an order for the next 3 days, what? I will have to stop my production, guys, correct? Now, you tell me, any logical and a prudent company, will they wait for the stock balance to hit 0 to place the order, or they will be noticing the stock level? Before it reaches 0 itself, they will pick the phone and place an order. What will they do? Before even it hits 0, they will take the phone call and place an order. Am I right, guys? Right. Now, in that case, when will they place an order? That is, at what point of stock level should they place an order? That is the question, guys, correct? So, when will they place an order is called as reorder level. For how many quantities should they place an order? That is called as EOQ, right? The question is not how many quantities you should purchase at a time. The question is, when should you place an order? That is, when should the person pick the phone call and place an order? Logically, you tell me, the company knows every day exactly they will consume 100 kgs of raw material. And they know exactly this supplier will also take 3 days to supply this raw material, which means 100 into 3. How much is it? 300 kgs. Now, the moment the stock balance touches 300 kgs, now this guy will pick the phone call and place an order, right? Now, what will happen? This guy, as expected, will say, I will take 3 days, correct? Now, what happens? In each of these 3 days, I will be consuming 100. Exactly when my stock balance is 0, fresh stock will come in. So, I need not stop my production because there is no stock, guys, correct? So, in this case, so when will you place an order? The reorder level will be what? Consumption per day into lead time, guys, correct? That is ideally your reorder level. Am I right, guys? But you are absolutely right. This is the formula we need to use when we are certain about the consumption. We are also certain about the lead time. Now, in reality, every day exactly will I consume 100 kgs? No. And in reality, every single time I place an order, exactly will deliver in 3 days? Not necessary. Now, that is why I'm giving you a range. Let us say lead time. Minimum lead time is 4 days. Maximum lead time is 6 days. Means what? Even if you want, before 4 days, you will never get the stock. And I always know this supplier, he will definitely take a minimum of 4 days, but he will not take beyond the 6 days also. Max the time he takes is only 6 days. Is that clear, guys? So the minimum lead time is what? 4 days. Maximum lead time is 6 days. Or average lead time will be 4 plus 6, 10 divided by 2, 5 days. Am I right, guys? So minimum lead time 4, maximum lead time 6, average lead time is 5. Is that clear, guys? Yes. Suppose, how about consumption? Sir, minimum consumption, every single day, 4 units of raw material will be consumed. Right? Below 4, it will never go. Maximum consumption is going to be 6. Beyond 6 also, it will not go. So, I've given a range. So, minimum consumption is 4 units per day. Maximum consumption is 6 units per day. Average consumption is 4 plus 6 by 2. 10 by 2 is 5 units per day. Is that clear? Now, reorder level is what? Consumption per day into lead time. Now I have 3 figures in each of the category. Sir, consumption I have minimum, average, maximum. Lead time also I have minimum, average, maximum. So now, sir, what is the figure I will have to take? Is that clear, guys? Now, this is where we are going to see the formula. The first thing that we are going to see in stock levels is a reorder level. Is that clear, guys? Now, guys, for the purpose of this example, for the purpose of this concept, we will take an example of our mothers. right? Now in your kitchen, your mom will have a big drum to store rice, correct? Now, now she has to decide when should she place an order. Again, I'm telling you, this is not for how much quantity. How much quantity is EOQ. At what point of time should she pick the phone call and place the order? Now, you tell me, will your mom ever let you sleep in a hungry stomach? No, she will never do that. Now, she will always, provide for extreme case scenario only. She will always provide for extreme conservatism, prudence, guys, correct? Now, she will assume that every day the family consumes a maximum consumption. Let's say 6 kgs of rice, example, right? Every day the family will consume 6 units. And this guy, that is the supplier also, let us say he will take the maximum period of time. Guys, clear with this? So, what is the maximum consumption? 6 units. What is the maximum lead time? 6 days. 6 units into 6 days. How much is it? 36 units. The moment stock touches 36 units balance, your mom will pick the phone call and she will place an order for the fresh stock. Is that clear, guys? Are you all able to understand? And this decision is taken based on extreme prudence. She will assume the family will also consume the maximum every day, and she will assume the supplier also takes his maximum lead time. Is that clear, guys? Are you all able to understand? If at all he comes earlier, it's very good. I will be definitely having some balance. It will never run out of stock. Is that clear, guys? So that is the formula for reorder level. What is the formula, guys? It's going to be maximum consumption into maximum lead time. That's about it. Shall we move on to the next formula? Yes. Now what is the next one? Minimum level. What is the formula for minimum level? Reorder level minus average consumption into average lead time. Sir, what is it, sir? Logic. Simple. Now, reorder level 36 units. This was when she picked the phone call. Am I right? But she chose 36 units as a matter of extreme prudence, conservatism. But during this lead time, normally, what would have been consumed? Generally, I know average family consumes 5 units, and average lead time, this guy also generally takes 5 days. So 5 into 5, 25 units would have only been consumed during this lead time. So I place an order when I had a balance of 36 units minus during this lead time I would have consumed 25 units. By the time I complete this 25 units, fresh stock will come in, guys, correct? Which means the minimum possible stock at any given point of time will be what? 36 minus 25, 11 units. Now if you see at any given point of time, even in the worst of the worst scenario, minimum she will have 11 units or 11 kgs of rice. It will never be below that. Is that clear, guys? That is the meaning of a minimum stock, right? So it's going to be reorder level minus what happens generally, that is normal average consumption into average lead time. Is that clear, everyone? Yes, this is the formula. See how simple and logical it is. You need not mug up anything. Next, maximum level means what? Now, even in the best possible scenario, what is the maximum level of stock she will hold? Beyond this, she will not hold. Are you all able to understand? Now, what is the formula for that? Reorder level minus minimum consumption into minimum lead time plus reorder quantity. Reorder quantity is nothing but ideally it should be equal to your economic order quantity. Now, sir, what is this formula? I will tell you. Now, she picked the phone call and placed an order when the stock balance was 36. That is reorder level. Am I right, guys? Now, during this lead time, what happened? Everything happened in her favor. The family also consumed the minimum consumption every day, 4 kgs only of rice every day. And this guy, the supplier also, this time he took only the minimum lead time. So in 4 days itself he delivered, guys, correct? So which means he took 4 days. Each of the 4 days, everything happened in my favor. I consumed only 4 kgs every day. 4 into 4. How many kgs have I consumed? 16. So what has happened? 36 units. This was when I placed an order. Now, during the lead time, I consumed 16 kgs. So now what is the stock balance? 20 kgs. The moment the stock balance hits 20 kgs, now what happens? That guy is ringing their door with a fresh order. Guys, correct? Let us say every time I place an order for 50 units, now on top of the balance 20 units, what he will do? He will pour this fresh 50 kgs. Guys, correct? So the balance will be whatever I have, 20 plus the new 50, I will get a 70 units balance. This is the maximum possible stock she will hold. She will not hold beyond this also, because if you hold too much of if you hold a large quantity of rice unwantedly, then it is prone to some insects and other things. So no, she will never hold beyond requirement also. Are you all able to understand? Guys, is this clear? So what is the formula here? Simple. Reorder level minus everything happens in my favor. Minimum consumption into minimum lead time plus reorder quantity. He rings the door, he rings the bell with the fresh order. Is that clear, everybody? Is that clear, everybody? Yes, that's about your maximum level. Next, average level. Now, there are two formulas for average level. One is your arithmetical formula. What is it? Minimum plus maximum by 2. Right? Now, this is not a very good formula. This is not a very correct formula. Minimum is how much? 11. Maximum is how much? 70 by 2. So, 11 plus 70 by 2 gives you 40.5 units is the average stock level. However, formula number 2 is the most logical method. What is it? It says minimum level plus 1 by 2 into reorder quantity. Reorder quantity is nothing but economic order quantity. Now, what is the formula, sir? In this case, anyways, she will hold minimum is what? 11 units. Guys, correct? At any given point of time, she will be having 11 units with her. Guys, correct? Now, whenever this guy loads and comes with a fresh stock, how much is it? 50 kgs, no? 50 units. Guys, correct? Now, what happens? 50 units will be consumed. The moment it hits 11, once again another 50 units will come. And this gets consumed. The moment the balance hits 11, the fresh unit will come. Guys, correct? Or in other words, always she will be having 11. What averages is only this 50 units. Guys, correct? At maximum it could be 50 or at minimum it could be 0. That is over and above 11. Hence, what should average is only your reorder quantity. Hence, the formula is what? Your minimum level 11 units plus half of reorder quantity. Is this clear, guys? Are you all able to understand? Is there any issue here? Any problem here? Guys, clear with this? That's about these two formulas. One is your normal arithmetical formula. What is that? Minimum plus maximum by 2. The other one is your logical formula. Minimum level plus 1 by 2 of reorder quantity. Is that clear? Fine. That's about this part, which is your average level. Now, there's something called as danger level. Now, danger level, the formula is average consumption into lead time for emergency purchases. Now, let us say your some guests have come home, right? Some guests have come home. Now, some special variety rice. Let's say you need some biryani rice. Guest means biryani, no? So, you need some biryani rice. Now, in this case, now you can't ask the guest to wait for so long. Guys, they are staying, let us say, for 2 days. Maximum by tomorrow, you should give them biryani, no? Guys, correct? Else what will they do? Only they know. So, what you should do now, during this time, you are asking the supplier, look, I am in trouble. So, please deliver with in the minimum possible time. This is not a normal order. This is an emergency order. Now, he says, for emergency purchases, the lead time is only 1 day. Right? Are you all able to understand? And average consumption. What is the average consumption, guys? In our example, the average consumption was 5 units. Guys, correct? So 5 units into 1, it's going to be what? 5 units. Means, sir, what is the meaning of this? In this case, what is the minimum level, guys? What is the minimum level? Guys, come on, everyone tell me. Minimum level is 11 units. The stock generally will not go below 11 units. But if at all it goes below 11 units, minimum level, make sure it does not go below 5 units. That is, it does not go below danger level. Why? Suppose this is another level of security for you, another level of safety for you. Guys, correct? It should ideally not go below 11. If it goes below 11, make sure it doesn't go below 5. Because up to 5, suppose the balance is only 5, what you can do, you can immediately place an order, and 1 day you can manage with this 5 units. Suppose if it goes below 5, the balance, you can't even manage for 1 day. You will run out of stock. Are you all able to understand this? Right? Hence, danger level means what? Your average consumption into lead time during emergency purchases. As simple as that. Now, guys, shall we tell all the formulas? Let's revise this. Come on, tell me. First, reorder level formula. Everyone. Maximum consumption into maximum lead time. Your mom will never let you sleep in a hungry stomach. Right? Extreme prudence. Next one. minimum level. Minimum level, yes. Reorder level minus what generally happens? Average consumption to average lead time. Excellent. Then, third, maximum level. Everything happens in your favor. Reorder level minus minimum consumption into minimum lead time plus reorder quantity. As simple as that. Next, average level. Bifurcated into two. One is your mathematics, arithmetical formula. Maximum level plus minimum level by 2. On the other hand, you have a logical formula. Minimum level plus 1 by 2 of reorder quantity, because anyways I have the minimum. What averages is only above the reorder, the minimum level, which is basically a reorder quantity. And finally, danger level. What is the formula, guys? Average consumption into lead time during emergency purchases. As simple as that. No need to mug up anything. Everything is fully conceptual. Is that clear, guys? Right? Now, let's go and do one numerical problem here. Please take question number 7, a very good sum. Please take question number 7. It's a very, very good sum. Okay. Mohit Enterprises manufactures a special product called Z. The following particulars were collected for the year. Monthly demand of Z is going to be 1000 units. So monthly demand for Z is going to be 1000 units. The cost of placing an order is how much? 100 rupees, which means this is ordering cost. The annual carrying cost per unit is 15. So 15 is per unit per annum. Correct? No, annual cost only they have given. Next, normal usage 50 units per week. Minimum usage 25 units per week. Maximum usage 75 units per week. So they have given, it is not per day, everything is per week. Guys, correct? Minimum 25, maximum 75, average is 50. Reorder period, minimum 4, maximum 6, average will be 4 plus 6 by 2, 5. Fine. Compute from the above, reorder quantity means what? EOQ you need to compute. Reorder level, minimum level, maximum level, average level. Danger level you need not to. Now, how do you do this? First, for the purpose of computing reorder level stands for, in this case, your EOQ, your reorder quantity. Reorder quantity in this case stands for economic order quantity. How will you arrive at this formula? Root of 2AO by C. Now, O we have 100, C we have 15. Now, what is A? What is A? Annual consumption requirement. How much is it? How much is it? Come on, calculate and tell me now. You're looking at me. Come on, tell me. Now, guys, this is a place where many students commit a mistake. Now, they say, sir, monthly demand of Z is 1000. Rightfully, I found out it is monthly. Hence, multiply this with the 12 and make it as 12,000 units. Right? Absolutely wrong. Because, please read the question fully. Mohit Enterprises manufactures a special product called Z. Z is an FG. It is not a raw material. We are in materials chapter. Hence, we need to compute economic annual requirement, consumption requirement, which means you're talking about raw material. Hence, this is a completely irrelevant data for the given question. They have just kept it to confuse you. Now, how do we do it? Now, guys, here they have given normal usage. Generally, average usage is how much? 50 units per week. In a week, in a year, how many weeks are there? 52 weeks. So, 50 units into 52 weeks. How much is that? 15 to 52 gives you 2,600. Hence, 2,600 units is going to be my annual consumption. Is that clear, everyone? Is that clear, guys? Right? So now you can compute your EOQ. So EOQ is going to be what? Root of 2 into A, 2600 into O, 100 divided by C. How much you get? 2600 into 100 into 2 into by 50 now. Okay, square root of that. You get 186.18 something. So it's rounded off to 186. Is that clear, guys? Are you all able to understand? So 186 is going to be what? My reorder quantity. That is nothing but EOQ. Guys, correct? Next, we need to compute what? Reorder level. Reorder level is going to be maximum consumption into maximum lead time. Maximum consumption 75 units per week. Maximum lead time 6 weeks. So 75 into 6. Am I right, guys? So it's going to be how much? 75 into 6. It's going to be 450 units. Am I right, guys? Yes. Next one. What is the next one? Minimum level. Minimum level. How will you find out? Reorder level, that is 450 minus average consumption into average lead time. Average consumption 50. Average lead time 5. So 15 to 5 is going to be 250. It's going to be 200. Is that clear, guys? That's about it. So that's about it. This is going to be how much? 200 units. Is that clear? Next, maximum level. Recall the formula. Everything happens in my favor. Reorder level minus minimum consumption to minimum lead time plus reorder quantity. So now clearly you will see reorder level 450 units minus minimum consumption into minimum lead time. Minimum consumption 25. Minimum lead time is 4. So 25 into 4, which is 100. Plus reorder quantity. Just now we found out it's going to be 186. Correct? So it's going to be 450 minus 100. 350 would have been the balance by the time that guy rings the bell. So now I get an additional 86 units here. So how much is that going to be in total? 536. Is that clear, guys? See how easy it is, provided you understand the subject conceptually. That's all it takes, guys. That's all it takes. And finally, average level, two formulas, minimum plus maximum by 2. In that case, 200 plus 536 by 2. How much you get? 368. That's going to be the first formula. Second formula, minimum plus 1 by 2 of reorder quantity was my minimum level, guys. 200 plus 1 by 2 of reorder quantity, 1 by 2 of 186. It's going to be 93. So the overall is going to be 200 plus 93. It's going to be 293. Is this clear, guys? Are you all able to understand? And that's about this particular question. The catch here is with respect to identifying the fact that Z is not a raw material, it is an FG, and that should not be considered for the purpose of arriving at annual consumption. You need to use the normal usage multiplied with 52 weeks to arrive at the annual consumption requirement. Is that clear, guys? Right? Please go and update your library of adjustments. Write down. EOQ computation and stock levels. EOQ computation and stock levels, semicolon, tricky calculation of annual consumption requirement. Tricky calculation of annual consumption requirement. Now, let's move on to the next concept, which is stockout cost. Now, guys, this is not that clearly explained in our institute study material, but they have given one question regarding stockout cost. Now, guys, what is this concept of stockout cost? Basically, this concept, stockout cost, helps us to achieve the objective B, which is decision making. What do you mean by stockout cost? Now, guys, if I hold my inventory stock, now I will be incurring a carrying cost, that is the cost of carrying this inventory. Am I right, guys? Yes. Suppose if I do not hold the stock, right, that is if I do not carry the inventory with me, then what is the cost of not holding the inventory is called as stockout cost. Are you all able to understand? Sir, if I don't hold the stock, how will I incur the cost? Here, cost refers to opportunity cost. That is, let us say, if you have one unit, every unit can give you a revenue of, example, I am saying, let us say, using one unit, you can generate 10 rupees of profit, right? Now, someone walks in with a demand of 5 units, but you do not have the 5 units with you, which means you are losing a profit of how much? 5 into 10, 50 rupees. This is called as stock out cost. You need not pay this 50 rupees out of your pocket. This is nothing but the amount of profit you are unable to make because you don't hold the stock. Is that clear, guys? Right? This is called as stock out cost. Now, in this context, now let us go and do one numerical problem. This is a general problem which is one question which many students are generally they struggle to understand this particular question. Now, quickly, let me just read out the question for you. Of course, there is some issue with the wordings as well. I will just walk you through fully. Mrs. Tyro Tubes trades in four-wheeler tires and tubes. This is a tube company. It stocks a sufficient quantity of tires for almost every vehicle. In year end 20X1 X2, the reports of sales manager revealed that Mrs. Tyro Tubes experienced stockout tires. The stockout data is given as follows. Now, what have they given here? Stockout of tires 100, number of times of stockout 2. Stockout of tires 80, number of times 5, 50, number of times 10, 20, number of times 20, 10, number of times 30, 0, number of times 33. Mrs. Tyro Tubes loses rupees 150 per unit due to stockout and spends rupees 50 per unit on carrying out and on carrying of inventory. Determine the optimum safest stock level. Now, first of all, many students don't understand what the question says. Now, guys, what is this question talking about? Simple. If you are holding one unit, right? If you are having one unit of stock, you need to incur what? You need to incur your carrying cost. Am I right, guys? What is the cost of holding every unit? 50 unit. If you do not hold this stock with you, right? And if someone walks in with a demand, now in that case, you will lose out a profit of how much? 150. The company loses 150 rupees per unit due to stockout. Means what? Someone is having a demand, but I'm not able to honor him with this demand. Are you all able to understand? So the cost of holding is 50. The cost of not holding is how much? 150. Now, if you do not hold sufficient level of inventory, you will have stockout cost. If you hold too much level of inventory, excessive inventory, you will incur excessive amount of carrying cost. Now, which means you need to balance the two and arrive at the optimum level of buffer stock, safety stock that you need to maintain at all times, guys. Correct? Now, what is the number of units of safety stock that I need to maintain so that I don't incur too much of carrying cost or too much of stockout cost? There is a balance between the two. Is this clear, guys? Are you all able to understand? Now, sir, here one dabba they have given. What is this? I will tell you. They have used some words. Stockout tires, number of times of stockout. Now, it is ideally wrong usage of terminologies. What is the meaning of that? I will tell you. Someone walks in with a demand of 100 tires, 100 units. Now, how many number of customers will walk into your store with a demand of 100 units? 2 customers. Now, 80 customers can walk in with a demand of 5 customers can walk in with a demand of 80 tires, right? So someone walking in with a demand of, let's say they want 80 tires, right? How many such customers are possible? 5. Someone walking in with a demand of 50 units, the number of times this particular event happens is 10. Someone walking in with a demand of 20 tires, 20 customers. Someone walking in with a demand of 10 tires, 30 times it has happened, 30 customers. Someone walking in with a demand of 0 tires, window shopping, right? Maximum 33 of the customers. Is that clear, guys? Now, what is the total number of customers that can visit my shop? 2 plus 5 plus 10 plus 20 plus 30 plus 33 comes out to 100, right? Or in other words, the probability of someone walking in with a demand of 100 tires is 2 by 100, which is 0.02. Am I right, guys? The probability of someone walking in with a demand of 80 tires is going to be what? 5 by 100, which is 0.05. The probability of someone walking in with a demand of 50 tires is 10 by 100, 0.1. The probability of someone walking in with the demand of 20 tires is going to be 20 by 100, which is 0.2. The probability of someone walking in with the demand of 10 tires is going to be 0.3. The probability of someone walking with the demand of 0 units is going to be 0.33. Is this clear, guys? Right? So I should have some stock, right? It is dependent on people walking with how much demand. Is correct? Now, any of these customers can come to my shop. It is not certain exactly every day if people will walk with a demand of exactly 43 tires. I can't come up with this kind of relationship. They are taking a data and trying to analyze that. Is that clear, guys? So which means you know what is the demand that can happen, that can come, and the probability of the event happening. Is this clear, guys? Now, with this background, now let's go and do the sum. Now, guys, for you to do this sum, you need to have a template. Computation of stockout cost and inventory carrying cost. Now, what is it? The first column, you should have safety stock. Then you should have stockout units. Then probability. stockout cost, expected stockout cost, inventory carrying cost, and total. Don't worry, I will walk you through. Now, first, let us say I am maintaining a safety stock of 100 units. Means what? At any given point of time, if you come to my shop, I will always have 100 units. Is that clear, guys? Now, in this case, you tell me, if someone walks in with a demand of 100 units, will I be able to honor him fully? Yes. Someone walks in with a demand of 80, obviously yes. 50, 20, 10, 0. In all these customers, I will be able to honor any customer's demand. Am I right, guys? In this case, will I be having any stockout units? No. So my stockout units will be 0. Are you all able to understand? Is there any problem here? Hence, this probability is not there. That is, the stockout chance itself is not there. So the expected stockout cost will be 0. Are you all able to understand? Because for every unit you are running out of stock, you incur how much? 150 rupees. They have given in the question. So 0 and 150 is 0. Guys, correct? Are you all able to understand? The chances of this happening is nil. Hence, the expected stockout cost is 0. Is that clear, guys? But however, what happens to my inventory carrying cost? At any given point of time, I'm holding 100 units. Every unit you hold, you incur how much? 50 rupees as the inventory carrying cost. So 100 into 50 comes out to how much? 5,000 rupees. So the total cost you incur is what? Stockout cost plus carrying cost. 0 plus 5,000. You incur a total of 5,000. Is this clear, guys? Now, let's move on to the second scenario. Let's say I am maintaining a stock of 80 units. In this case, what happens? If anyone is walking to my shop with a demand up to 80 units, will I run out of stock? No. Guys, correct? I will never run out of stock if these customers walk in. Correct? Now, only if a customer walks in with a demand of 100 units, even to that customer, I will be able to supply 80 units. To the extent of 20 units, I will run out of stock. Are you all able to understand? Right? So in this case, only one scenario of stockout will be there, 20 units. And when will this stockout scenario happen? Only when someone walks in with a demand of 100 units. The chances of that happening is 0.02. So the probability you will put here is 0.02. Is that clear? No, don't take 20. Sir, here it is 20, sir. I will take 0.20. No. This 20 stockout can happen only when I maintain 80 units, but someone walks in with a demand of 100 units. So person walking in with a demand of 100 units, the chance of that happening is 0.02. This is why I said the wordings are not that clear. Ideally, this should have been demand. Is correct. This should have been number of times with that demand or number of customers. Is that clear, guys? Right? Are you all able to understand this? Yes. Now in this case, what's going to be my stockout cost? 20 units stockout. Guys, correct? And every time I'm running out of stock, I have to incur how much? 150. So 20 into 150 gives you 3,000 rupees. Now, so for sure you will incur this 3,000, huh? No. The chances of this happening is only 0.02. So 3,000 into 0.02. The expected stockout cost is only going to be 60 rupees. Are you all able to understand this? We are using the concept of probability, right? The chance of this event happening. Is that clear, guys? Right? So it's going to be how much? Expected stockout cost is 60. Now, what is the inventory carrying cost? I hold 80 units at any given point of time, and every time I hold a unit, I need to incur 50 rupees. 80 into 50 gives you 4,000 rupees. The total cost is 60 plus 4,000, 4060 if you maintain a stock of 80 units at all the times. Are you now able to understand? Now, the next scenario, I will say, okay, sir, now I want to maintain a stock of 50 units. Perfect. If you maintain a stock of 50 units, what will happen? Now, if someone is walking in with a demand up to 50 units, you will be able to honor him fully. When will you run out of stock? Only when a person walks in with a demand of 100 or 80. Is correct? If someone walks in with a demand of 100 units, to him you will be able to supply 50 units. Is correct? So, you will run out of stock to the extent of 50 units. If someone walks in with a demand of 80, you will be able to supply 50 units. You will run out of stock to the extent of 30 units. The chances of this happening is 0.02, 0.05. Is that clear, guys? So, what you will do here? 50, 30, 0.02, 0.05. Are you all able to understand this? Guys, have the clarity when you do this. Are you all able to get this? Yes. Now, what is the stockout cost here? 50 into 150. That's going to be 7,500. Then 30 into 150. How much is that? 4,500. Guys, correct? Now, will I incur 75? For sure will I incur 4,500? No. The chances of me incurring 7,500 is only 2%, 0.02. So 0.02 into 7,500 gives you 150. Similarly, the chance of me incurring 4,500 is only 0.05. So 4,500 into 0.05 gives you 225. Now add the 2, you get an expected stockout cost of 375. We are using probability, right? Statistics here. Probability. Is that clear, guys? Are you all able to understand, right? So this is going to be 375. Because I don't have certainty, I have to necessarily use probability. Is that clear? Now, because I hold 50 units, I have a carrying cost. 50 into 50 is going to be 2,500. So now, if I'm holding 50 units, the expected stockout cost is 375. Carrying cost is 2,500. Add the two, you get how much? 2,875. Is this clear, guys? Now let's go to the next level. Now, sir, I want to maintain a stock of only 20 units. In this case, what happens? Everybody tell me. Up to 20 units. If someone walks in with a demand of 20, 10 or 0, I will not run out of stock. Correct? I will run out of stock only if someone walks in with a demand of 100, 80 or 50. If someone walks in with a demand of 100, I will be able to supply them 20 units. So the stock out is for 80. Someone walks in with the demand of 80, I will be able to supply them 20. Stock out 60. Someone walks in with the demand of 50, I supply them 20. Stock out 30. The chance of this happening is 0.02, 0.05, 0.10. As simple as that. So 80, 60, 30. 0.02, 0.05, 0.1. Guys, clear? Now, what is the stockout cost? The respective units into 150. Guys, correct? So, 150 into 80 is equal to 12,000. 60 is equal to 9,000. 30 is equal to 4,500. But these are the costs which I do not incur for sure. Multiply them with probabilities. 12,000 into 0.02 gives you 240. 9,000 into 0.05 gives you 450, 4,500 into 0.1, remove 1 0, you get 450 here. Add the 3, 450 is 900, 900 plus 240 is 1140. This is the expected stockout cost. Now, what is going to be my inventory carrying cost? 20 into 50, that's going to be 1,000. Add the 2, you get what? 2,140. Are you all able to understand this? As simple as that, guys. Now, one more scenario here. If I only decide to maintain a safety stock of 10 units, then up to 10, no problem. So, if someone walks in with the demand of 100, 90 units stock out, 80, 70, 50, 40, 20, 10, and that's all. Guys, correct? Now, probability is 0.02, 0.05, 0.10, and 0.20. Is that clear, guys? 90, 70, 0.4, 0.1. Sorry, 90, 70, 40, and 10. Guys, correct? So, 90, 70, 40, 10. Repeat the same process, respective probability. Now, for every unit that you're running out of stock, you multiply that with 150. You arrive at the stockout cost, multiply that with the respective probability and add it up. You get the expected stockout cost. Now 10 units into, so what is the carrying cost? 50, you get 500. Add the 2, you get the total cost. Are you all able to understand? Now suppose if I'm saying that no problem, I will maintain zero stock, safety stock nil. In that case, what? You can handle window shoppers, no problem. Right? But all other scenario, you will run out of stock. Am I right? So 80, 100, 80, 50, 20, 10, 0.02, 0.05, 0.1, 0.2, and 0.3. So it completely enters your. So what will you do? So the respective stock out into 150 here. Yes, you will get the total stockout cost here, multiply it with the respective probability and add it up. This is going to be your expected stockout cost. Carrying cost is 0 because I don't hold any inventory. So the total cost is going to be 2,700. Now what will you do? Sir, so what is the amount of safety stock that I need to maintain? Go for the total cost column. Whichever one has the least total cost, you should go for that one. So the total cost is least when you maintain a safety stock of 20 units. Hence, it is recommended for the company to maintain 20 units as safety stock. Are you all able to understand? Is there any issue here? This is how you need to compute your safety stock, guys. Are you all able to understand? Perfect. And that's about this particular question. Right, guys? Fine. So, a very different question, a unique question, which many students don't understand. Right, the wordings of the question. Of course, there is also some issue in the wordings of the question. That's about it. Please go and update your library of adjustments. Write down stockout cost computation. Stockout cost computation. And that's about this particular concept, and that's about this particular question. Let's talk out cost computation. Now, let's move on to the next concept called as EOQ with price discount. Now, guys, EOQ formula we've already seen. What is that? Root of 2AO by C. But this formula holds good only when there is no price discount. Guys, correct? What do you mean by price discount? He's saying at a time, if your order quantity at a time per billing, if you are placing an order for more number of units, then I will give you more discount. So purchase cost will come down. Guys, correct? Now, in the first scenario that we saw, the price will not change based on the order quantity. Am I right? Guys, correct? But now, what if the price is also changing based on the order quantity? Or in other words, when they are offering discount, now when there is no discount, only ordering costs and carrying costs are impacted by your order quantity decision. Correct? Suppose now they are going to give me a discount. In this case, even my purchase cost will be impacted by my order quantity decision. Am I right, guys? Right? Now, if I use this formula, root of 2AO by C, here ordering cost is considered, carrying cost is considered, but purchase cost is never considered here. First of all, whenever you have a price discount, in this case, your EOQ formula cannot be used. Are you all able to understand? Sir, can you give us an example? Please take the next sum, question number 11. With the help of this question only, we will do this. Now, this is what the supplier says. If you're ordering less than 250 tons, or in other words, 0 to 249 tons, if you're ordering, price will be how much? 6 rupees per ton, right? Suppose if you're ordering 250 to 799, between this range, if you have an order quantity, price is slightly less, 5.9, because you're increasing the order quantity. Suppose if the order quantity is between 800 to 1999, cost is 5.8. Suppose if it is 2000 to 3999, it's going to be 5.7. It's going to be 4000 and above. In this case, it's going to be 5.6. Is that clear, guys? Right? This is what they are saying. Now, depending on the order quantity, my price is also changing. No, guys, correct? Now here I can't use the formula root of 2AO by C because we only consider ordering cost and carrying cost. Your purchase cost is also being dependent on what? Dependent on your order quantity. Hence, in this case, how do we do it? Are you all able to understand? That is the subject matter of discussion. Now, how do we do it? Very simple. In this case, there is no formula approach. You need to use only trial and error concept. Is that clear, guys? Now, how do you do trial and error? Now, if I keep order quantity as 1, right? What will be my purchase cost? What will be my ordering cost? What will be my carrying cost? Total it up, right? If I keep my purchase quantity, order quantity as 2, total cost, 3, total cost. Like that, try for 4000 alternatives, right? And arrive at the total cost. Go for that alternative which gives you the least total cost. Is that clear, guys? Now, this is how it needs to be done. However, in examination, can you do 4000 alternatives? No, in real life, it's easy to do. Excel, easily you can do. Formula and double click, it will automatically come down. That's about it. But in exam, it is not possible, right? Hence, for examination purpose, what you need to do, in every range, take the lowest quantity, right? For example, here, I will take 250, 800, 2000, 4000. For each of these alternatives. In first alternative alone, you don't take 0. Somewhere in between, you take one order quantity. Let us say 2000. So if 200, if you keep your order quantity as 200 or 250 or 800 or 2000 or 4000, for these scenarios, you compute what? Your purchase cost, your ordering cost, your carrying cost, and you compute your total cost. Right? Now total these 3, and whichever gives you the least total cost, that will be called as your EOQ. Is that clear, guys? But in reality, it is not limited to 5 alternatives. You have 4000 alternatives, but for examination purpose, they are not testing you on the correct answer. They are testing you as to whether you know the correct approach. Is that clear, guys? Are you all able to understand? Is there any issue here? Now, with this context, let's go and revise one particular question, which is question number 11. What are they saying? From the following particulars, with respect to a particular item of materials of a manufacturing company, calculate the best quantity to order. What are they saying? So if the order quantity is, so this range, they are given the price. The annual demand for material is going to be how much? 4,000 tons, which means whichever I pick as order quantity, at the end of the year, overall I'm going to purchase 4,000 tons. Is that clear, guys? Stock holding cost is going to be 20% of material cost per annum, which means what? Carrying cost they have given. Delivery cost per order. Ordering cost is how much? 6 rupees per order. With this, we need to compute what? EOQ for every single alternative. Shall we do this, guys? Yes. Now for this, you need to have a template. Have order quantity, right? Order quantity. Number of orders. Number of orders, how will you arrive? A divided by order quantity. What is A? 4,000. Am I right? Yes, 4,000. Then average inventory. How do you arrive at average inventory? 1 by 2 of order quantity. Guys, correct? Right? Next, what is carrying cost per unit per annum? We need to arrive at it. What is it? 20% on the purchase cost. Purchase cost, we know range wise it will differ. Hence, because of that, carrying cost will also differ range wise. Correct? Next, the total carrying cost. How will you arrive? Average inventory into carrying cost per unit per annum. That is 3 into 4. That's what I have mentioned here. Is correct? Then the total ordering cost. How will you arrive? Number of orders into ordering cost per order. 6 rupees flat. So, second column into 6 rupees. Then total purchase cost. How will you compute? Don't say order quantity into purchase cost. No, it is annual 4,000 units, 4,000 tons. All the cases I will purchase. Guys, correct? So A into purchase cost per unit. Are you all able to understand? This is where many students commit a mistake. They take order quantity into purchase cost. No, in all these cases, overall I will end up purchasing 4,000 tons only. So it's A into purchase cost per unit. Then total cost will be 5 plus 6 plus 7. Total carrying plus ordering plus purchase cost. Is this clear, guys? Are you clear with the template? Yes? Now, the different order quantities I told you. In the first range alone, you take somewhere in between, right? We took 200. For all other ranges, the lower level needs to be taken. 250, 800, 2000 and 4000. 250, 800, 2000, 4000. Is that clear, guys? Yes. Now, what is the number of orders? Take your calculator. So, it's going to be 4000 divided by 200 gives you 20. 4000 divided by 250 gives you 16. 4000 divided by 800 gives you 5. 4000 by 2000 2. 4000 by 4000 1. You got the number of orders. Average inventory, how much is it? Half of 200 is 100. Half of 250 is 125. Half of 800 is 400. Half of 2000 is 1000. Half of 4000 is 2000. Next one. Carrying cost per unit per annum. 20% of the respective prices. Calculator trick can we use? Yes. 0.2 into 6 is equal to 1 by 2. 1 second. 6 is equal to 1.2. Then 5.9 is equal to 1.18. Then 5.8 is equal to 1.16. Then 5.7 is equal to 1.14. And 5.6 is equal to 1.12. You got these figures? Yes. Now the total carrying cost, what is it going to be? So average inventory into carrying cost per unit per annum, 100 into 1.2 gives you 120. 125 into 1.18 gives you 147.5. 400 into 1.16 gives you 464. 1000 into 1.14 is 1140. 2000 into 1.12 gives you 2240. Is that clear? What is the total ordering cost? Ordering cost will be 6 into the number of orders. So 6 into 20 is equal to 120. 16 is equal to 96. 5 is equal to 30. 2 is equal to 12. 1 is equal to 6. Right? And the total purchase cost is going to be 4,000 into the respective purchase cost here. Guys, correct? Price here. So 4,000 into. So these respective figures, if you do, you will get this 24,000 and it keeps on going. Guys, correct? Right? I'm not getting into the calculation since this being a marathon here. Right? So now what do you do? Add these three. You will arrive at the total cost for each of the alternatives. Now, choose the one which has the least total cost. The least total cost happens when your order quantity is going to be 800 tons. Hence, 800 tons should be the order quantity. So, this 4000 tons you are going to order as a whole. Yes, place the order in number of 800 tons, which means the total number of orders has to be 5. Is that clear? So, 800 tons you purchase at a time, right? Like that you purchase for 5 times. You will make sure that you will purchase totally 4000 tons. Is that clear, guys? So EOQ with price discount, there is no formula method. You only need to do using what? You only need to do using your trial and error method. Is this clear for everyone? Guys, that's about this particular concept of EOQ computation with discount. So please go and update your library of adjustments. Write down EOQ computation with price discount. EOQ computation with price discount. EOQ computation with the price discount. Is that clear, guys? Fine. Now, guys, there is a next concept called as issues valuation. Now, guys, this particular concept, I am not going to do it in the marathon because this is something which you would have already studied in your CA foundation, right? And as well as CA or CMA foundation, you would have already studied this particular concept. What is this? Basically, this is nothing but your FIFO, LIFO, weighted average, simple average method and all. Now, direct, they ask you to prepare some stores ledger. This is something that you would have already done. Date, particulars, your receipts, issues, balance, under that quantity, rate, amount. First in, first out means what? The first lot should be utilized against the issues first and then go to the next lot. Guys, correct? LIFO means first completely exhaust the last lot, come in the descending order. Guys, correct? And weighted average means the total value divided by total units. Simple average means take only the price and arrive at an average of that. Now, these are things which you would have already studied at your foundation level, which is very much there at the intermediate level, which we see in detail in our regular and exam oriented batch. But for the purpose of marathon, since it is a direct area, so I am just giving you a bird's eye view of that. This is very much easily manageable, right? Now, let's go on to the next concept called supplier selection. One second. Yes, let's go on to a next concept called as supplier selection. Now, please take question number 16. Please take question number 16. So all these things we have done in our regular batch. That's why, it's all annotated here. Yes, question number 16. Now, a very good question. Now, after inviting tenders, 2 quotations are received as follows. Supplier A is saying for every unit, you will have to pay how much? 4.4. Supplier B says, sir, you pay me only 4.2 plus flat 4,000. You are required to calculate the order quantity for which the purchase price per unit will be the same under both alternatives. Number 2, select the supplier if the purchase department wishes to place an order for 15,000 units. Now, guys, which supplier is better, A or B? Now, guys, this is ideally a concept of indifference point which we have seen in our marginal costing chapter. Sir, how's our indifference point? Now, if you notice here, now there is a supplier A. Now, how much does he charge? 4.4 per unit. Does he charge anything flat? No. Whereas supplier B, he says, per unit you pay me 4.2 plus you pay me a flat 4,000. Or in other words, these two guys, right, they have a variable component and a fixed component. Am I right? In this case, A's fixed component is 0. Now, the advantage of A is that he has a low fixed cost. In this case, no fixed cost. Is that clear? The advantage of B is that he has a low variable cost. Is that clear, guys? So now you can't come to the conclusion and say, sir, always A is better, always B is better. No, each of them have one advantage and one disadvantage each. Hence, it is not as simple as saying who is better always. No. Are you all able to understand? Now, this is where the concept of indifference point come in. What do you mean by indifference point? The point where whether I purchase from supplier A or I purchase from supplier B, the overall cost remains to be the same. So how many number of units should I purchase exactly so that the total cost under A is equal to total cost under B? This is called as indifference point. Now, what is the total cost under A? 4.4x. Let x be the number of units. 4.4x plus 0. Guys, correct? Hello? Yes, this should be equal to 4.2x plus 4000. Am I right, guys? Right? So now bring x onto one side. Right? So this is going to be 4.4x minus 4.2x is equal to 4000 minus 0. Or if you take x out in common, x the whole into 4.4 minus 4.2 gives you 4000 minus 0. Or x is equal to 4000 minus 0 divided by 4.4 minus 4.2. This comes out to 4000 divided by 0.2, which is going to be 20,000 units. Is that clear, guys? Now, if I exactly purchase 20,000 units, the total cost, if I purchase it from A, and the total cost, if I purchase it from B, will be exactly the same. Is that clear, guys? Are you all able to understand? This is called as indifference point. Sir, with this indifference point, what am I going to do? How will I arrive at a decision? I will tell you. Now, guys, let us say you are a person who is dealing in very less volume. Okay, you are a person who is dealing in very less volume. Let us say you want to buy only 1 unit. Okay, you rationally think and tell me whether will you buy it from A or will you buy it from B? Huh? Will you buy it from A or B? Huh? From whom will you buy? A or B? You will obviously buy it from A. Why? Just 4.4 rupees you need to pay. Whereas, if I have to pay buy it from B, sir, 4.2 rupees only per unit, no? Plus flat, you should pay 4,000. Guys, correct? Or in other words, when your volume is low, the overall component of your cost, the total cost, is predominantly driven by your fixed cost. Guys, correct? So you will go for that alternative which gives you the lower fixed cost. Are you all able to understand? Guys, clear? Because variable cost is very less when my volume is low. Guys, correct? Suppose if I am purchasing it from B, 4.2 only per variable cost. But fixed cost is going to be 4,000 rupees. So the significant component of my total cost will be fixed cost. Hence, when my volume is low, I will go for that option that gives me a lower fixed cost. Suppose you are planning to purchase, let's say 1 lakh kgs, like 1 lakh kgs. In that case, your overall cost will be predominantly driven by variable component. Hence, you will go for that alternative that gives you a lower variable cost. Is that clear? In that case, you will go for B. Are you all able to understand? Now, sir, now, where did this indifference point come in? Don't worry. Now, at the indifference point, you will either go for A or you will go for B, because both will give you the same result. If you want to purchase units which is less than the indifference point, you should go for that option that gives you a lower fixed cost. Is that clear, guys? In this case, it is A. If you are planning to purchase units which is more than the indifference point, you'll go for that alternative which gives you a lower variable cost per unit, which is in this case going to be B. Is this clear, guys? Right? This is the reason why we compute indifference point, and based on the indifference point, we can arrive at the decision directly. 15,000, 20,000 units is the indifference point. Now, sir, I want to buy 10,000 units, sir. Go for A. Just like that I can say, because you try and calculate, it will always be less. Sir, I want to buy 30,000 units, sir. Then go for B. So, I will clearly have a demarcation as to when to purchase from which vendor. Are you all able to understand? This concept is called as supplier selection. Is that clear, guys? This is basically a decision making area. The second part of the question they have asked, select the supplier if I wish to place an order for 15,000 units. From whom will you purchase? Yes, sir, it is less than 20,000. Hence, I will purchase from A. Are you all able to understand? As simple as that, guys. So, the concept of marginal costing is being mixed in the concept of material cost. And this concept is called as supplier selection. Is that clear, guys? Fine. That's about this particular area. Of course, indifference point, directly if you want to apply the formula, it's going to be 4,000 minus 0 is nothing but difference in fixed cost divided by 4.4 minus 4.2, this is nothing but difference in variable cost per unit. We have already seen that in marginal costing. So difference in fixed cost divided by difference in variable cost per unit, it gives you 20,000 units. Is that clear, guys? By the way, marginal costing has already been uploaded in part 1. So please watch that in case you want to get more clarity on the concept of indifference point. Fine. So now with this, we have completed this particular question. Please go and update your library of adjustments. Write down supplier selection. That's about it. Supplier selection. That's all. Now guys, let's move on to the next concept called as ABC analysis. ABC analysis. Now here ABC does not mean activity based costing. It is completely a different concept as a whole. Now guys, you guys generally do this ABC analysis. What is it that you do? During your exam, you'll say A category means most important, B category means somewhat important, C category, omit category. Yes, so you guys do that, no? Right? So never omit anything. Now, prioritize, that is okay. Now, similarly, now that ABC, that is the order of importance, is what this particular concept talks about. And guys, this particular concept helps you achieve objective C of our subject, which is control. Is that clear? Now, what is this? Now, this ABC analysis is based on the concept of Pareto rule. What is Pareto rule? There was a guy called Pareto. He invented this rule. It's popularly called the 80-20 rule. Now, what he says, 80% of the population, global population, controls 20% of the wealth, which means the remaining just 20% of the population control 80% of the global wealth. So if you are the income tax department, now you will give more focus on the 20% of the population. Why? If you give focus on 20% of population, you can get control on 80% of the wealth. Guys, correct? For example, let us say the total wealth in the entire world is 100 crores, right? And let us say 100 people are living in this world. Example I'm saying. Now, what Pareto says is 100 crores the total wealth. Out of that, 80 crores are being held by just 20 people. The balance 80 people put together control only 20 crores. Is that clear? Which means, what will you do? You will give extreme importance to this 20 people. Let's say you are income tax department. You want to get control over significant component of the wealth. You will focus on these guys. Guys, correct? Are you all able to understand? And the balance 80, it's okay. Though they are more in number, in value they are very less. Are you all able to understand? Now, this is exactly what happens in a company also. What they are saying, there are so many different types of raw material that we have, right? But understand, there are certain raw materials which are less in number, but more in value. There are certain raw materials which are more in number, but less in value. For example, I'm a car manufacturer. In a car, I need only one engine, guys, correct? Which means engine, in terms of quantity, is very less. Only one engine per car is required. Whereas, if you look at the same car, I need so many nuts and bolts. No, I need 1,000 nuts and bolts. Now, nuts and bolts are huge in quantity, but in value, it is nothing. Guys, correct? Now, what this ABC analysis says is, look, you categorize your raw materials into A category, B category, C category. Now, for A category materials, give a very high level of control, very important. Now, A category are generally low in number, more in value. Example, engine. Guys, correct? Next, moderate B category items, you give a moderate level of control. They are moderate in terms of, medium in terms of number of quantity, and moderate in terms of value. C category, they are high in terms of quantity, nuts and bolts, but very low in terms of value. Give them the low level of control. Now guys, when it comes to control, we saw the concept of stock levels, reorder level, minimum level, maximum level, average level, and we saw reorder quantity, EOQ formula, everything. Now I have 25,000 different types of stocks. Now you tell me, Can I exercise the same level of control for even a nut and bolt and the engine? No, it is really not possible for a company to exercise the same level of control. Hence, what they do is they categorize their raw materials into A, B, and C category. A category, there is no shortcuts, 100% control they will do. B category items, moderate level. C category item, least level of control. Are you all able to understand? Is there any issue here? Right? This is actually called as selective inventory control. What is it called as? Selective inventory control. Means what? I select the categories of inventory based on the category and rating. I actually give them control. Is that clear, guys? Right? This is actually this stems out from a concept in your business studies, right? In your MBA, they will be seeing, of course, even in your school days, you might have seen in your business studies, is a concept called as management by exception. Right? It means you take the exceptional items out and you give more control on them. This is called as management by exception. Now, sir, how do I carry out ABC analysis? Let's go and do one numerical problem. With the help of that, we will be seeing it. Shall we get started, guys? Right. I'm just going to share the procedure of doing it. Computation part, let's not get into it right now. In our regular and exam oriented batch, we do the computation in detail. In fact, whatever notes I'm sharing here, there's all these things. I did it manually along with the students. That's how we do it. In a marathon, since there is a limitation of time, so we will quickly understand the concept and the structuring of these questions. Now let's get started with this question number 70. Now, from the following details, draw a plan of ABC selective control. What have they said? Item number. So there are 12 different types of items, means raw materials, right? Now, raw material 1, physically how many units are there? 7,000 units. Per unit, what is the cost? 5. Like that, for every type of raw material, physical units they have given, and they have also given the per unit cost. With this, you need to chart out your ABC selective control system. How to do that? Very simple. First, we need to prepare a statement of total cost and rank it. How do you do? So, items 1, 2, 3, 4, 5, 6 till 12. Units, all these are physically given. Now, what you need to do is, you need to compute percentage of total units. What is this percentage of total units? Now, all the units you add up, physically I have a total of 2,19,000 physical quantity units with me. Now, item number 1 is 7,000 divided by 2,19,000. It comes closely to around 3.1963%. Means what? Item number 1 contributes to 3.19% of physical value. I mean, of physical units. Is that clear? Not in terms of value. Overall, in terms of quantity. So, this item number 1 contributes to 3.19% in the physical quantity. Is that clear, guys? Like that, item number 2, 24,000 by 2,19,000. Physically, if you see, 10.95% of the total units are coming from what? Item number 2. Like this, for every item, you need to arrive at the percentage of total units. Is that clear? Then, have the unit cost. Copy paste from the question. Total cost will be units into unit cost. So 7,000 into 5 gives you 35,000. 24,000 into 3 gives you 72,000 and so on. So what you need to do, item wise arrive at the value. Now the total value of inventory that I hold is going to be how much? 3,55,770. Now calculate each item as a percentage of the total value. For example, item 1 is going to be 35,000 upon 355,770. That's going to be 9.83%. Item number 2 is 72,000 upon 355,770. That's going to be 20.23% and so on. Now calculate this in terms of the total value, percentage on the total value, total cost. Is that clear? Now we need to do the ranking based on the percentage of total cost. Means what? So the highest will be actually item number 11. How? It contributes to 22.95% of the total value of raw material. So 22.95% of the total value of raw material comes from item number 11. Is that clear, guys? So you can mark it as rank number 1. Rank number 2, the next high category item. So item number 2, it contributes to 20.23% of the total value of the raw material. So item number, the next ranking is 3. This is for item number 5, 16.0216%, right? And then 4 is going to be 9.8378%. This is from item number 1. So based on the percentage of total value in the descending order, you will actually do the ranking. Is that clear, guys? Highest contribution percentage will get the first ranking and then go to the next, and so on. Is this clear, guys? Right? Now, once you do the ranking, now you need to get into another table. But before that, there has to be a basis on which you need to segregate your raw materials into A, B, and C. Generally, this will be given in the question. Now, if a raw material is 50,000 rupees or more in value, I will categorize it as A category. And for A category, I'll give high control. If it is between 15,000 to 50,000, put it under B category, moderate control. Below 15,000, put it under C category, low control. Is this clear, guys? Now, generally, this will be given in the question. In this question, it was not given, hence we took assumed, but generally it will be given in the question. Without that, you can't do. Is that clear, guys? Now, what will you do? On the basis of rank, you need to put it up here. So, rank number 1, 2, 3, right? Rank number 1 comes from item number 11, guys, correct? Now, item number 11, if you see, what is its contribution to the physical units? 5.85, correct? 5.8512. 5.2512. Sorry, 5.2512. This is its contribution in terms of physical units. Now, what is the value of this? 81,650. Put it here. And what is its contribution as a percentage? What is the contribution to the total value? It's 22.9502. Now, the value is how much? 81,000, more than 50. Guys, correct? Hence, I will give it as A category. Similarly, if you notice, rank number 2, rank number 3, these items are also more than 50,000. Hence, it comes under the first ranking. Is that clear, guys? Now, if you total the percentage and see, now what we are saying, approximately just 3 items contribute to 60% in value. However, if you look at it in terms of physical units, it only comes to about 33% in physical units. Guys, are you clear with this? Just being 33% in physical units, it contributes to 60% in value. Pareto analysis comes into picture. Are you all able to understand? Hence, A category items, if I just control 33% of my overall physical inventory, I will get a control on 60% of the total value. Is this clear, guys? Hence, these 3 takes the topmost priority. Next category is 15,000 to 50,000. Guys, correct? So anything between 50, less than 15 will come here. Anything between, more than 15, less than 50 will come here. Guys, correct? Right? This is B category. If you add up, you will find moderate level. That is, it contributes to 26% of value. And in terms of physical units, it comes close to around 24%. More or less, the value and the number are more or less matching. Guys, correct? It is moderate level. Is that clear? And then C category, if you see, 42% in physical units contribute to only roughly around 14% in value. Hence, we give it as a C category, least level of control. Is this clear, guys? Are you all able to understand? This way, this manner of presentation is called as a ABC analysis. Are you all able to understand? Right? There is no specific calculation in terms of arriving at the answer. This is how you need to do and leave it here. So, first step, do the ranking based on what? Percentage of total cost. And second one, based on the range, arrive at the category and arrive at the total of percentage of total cost and percentage of total units. So 33% of units will contribute to 60% of value. 24% of units will contribute to 26% in value, and 42% of units will contribute roughly to around 14% in value. So physically they are huge in number, like nuts, bolts, screws, spares, all these things, but value wise it is nothing. Hence only C category I give them. Are you all able to understand this, guys? Right? And that is the concept of your ABC analysis. Are you all able to understand? So this also gets tested then and there. In case this comes in your exam, you now know how to handle it. Please go and update your library of adjustments. Write down question number 17, give all the cross-referencing and write down ABC analysis. Write down, guys, ABC analysis. And that's about this particular segment. Now let's go on to the last segment of discussion in this chapter, which is inventory turnover ratio. Now guys, inventory turnover ratio. So what is the formula to calculate inventory turnover ratio? Ideally, this inventory turnover ratio is there in your financial management paper, ratio analysis chapter, right? But in this chapter also, they have kept this concept of inventory turnover ratio. The formula for calculating inventory turnover ratio is cost of materials consumed divided by average stock of raw material. Here, by inventory, there are three types of stocks. No, what are the three types of stocks? RM, WIP, and FG. Am I right, guys? Now, we are in which chapter? Material cost. Hence, we are only talking about raw material. What is the formula to compute this? Cost of materials consumed during a year or a period divided by average stock of raw material. Average stock means what? Opening stock plus closing stock divided by 2. Is that clear, guys? Now, sir, why do we compute this? Why do we compute this? Let us say, guys, let us say I have a raw material A. In a year, I consumed total raw material A. The annual raw material consumed was worth how much? 12,000 rupees. Let us say on an average, I maintain the stock of raw material of how much? 1,000 rupees. I always maintain 1,000 rupees worth of raw material. Is that clear, guys? Now, as per this formula, inventory turnover ratio is how much? Raw material consumed divided by average stock of raw material. I get it as 12 times. Now, what is the meaning of this? What is the meaning of this? Very simple. In a year, I consumed raw material A worth 12,000 rupees. And generally, I maintain a stock of how much? 1,000 rupees worth of raw material. Or in other words, I will say, I first bought 1,000 rupees worth of raw material, right? It got emptied. Once again, I purchased 1,000 rupees worth of raw material. It got emptied. Once again, I purchased 1,000 rupees of raw material. It got emptied. Like this, I purchased my raw material and it got emptied. Once again, I purchased and it got emptied. Like this, it happened 12 times in this year. Guys, are you all able to understand? This is called as stock turnover ratio. Are you all able to understand this? Are you all able to understand this? So what is the meaning of this stock turnover ratio? It represents how many number of times your stock got refilled and emptied, refilled and emptied, refilled and emptied. Are you all able to understand? So in this year, it got over how many times? 12 times in this year. Guys, correct? Huh? Guys, correct? 12 times. Now you tell me, which means, can I say, once a month it gets over and I will actually replenish it once again. So, and once again, after 1 month, it will get emptied. Guys, correct? How long does it take for me to empty this one batch? It actually takes me 1 month. Guys, how do you get this 1 month? Very simple. 12 months divided by the inventory turnover ratio, 12 times. That's how you did it, no? Guys, correct? So, 12 months divided by 12 times, I get 1 month. Now, 1 month is what? This is called as stock holding period. What is it called as? Stock holding period. Or in other words, if I purchase a raw material A today, it will take 1 month for me to empty it. Guys, correct? Right? Are you all able to understand? And once again, if I purchase another lot, it will take 1 more month for me to completely empty it. Are you all able to understand? Guys, are you all able to understand? So, what is the formula for inventory turnover ratio? Raw material consumed divided by average stock of raw material, right? Then with this, what will you do? You can arrive at the stock holding period. How will you do this? 12 months or days if you want 365, or if you want it in weeks, 52 weeks divided by inventory turnover ratio. With this, you can calculate how long you are holding the stock, or in other words, how long it takes for you to empty the stock. Is that clear, guys? Yes? Now, so with this, what are we going to do? I will tell you. Let us say there is another stock, raw material stock called B. Okay, inventory turnover ratio 12,000 divided by 2,000. How much is it? 6 times, which means in this year it got emptied, refilled 6 times, which means how long does it take for me to empty it once? So 12 divided by 6, it takes 2 months. Is that clear? Now with this, what can I do? I can analyze and find out. Look, raw material A gets emptied quickly in just 1 month, whereas raw material B takes 2 months to actually for me to consume. Are you all able to understand? Or with this, I can make one analysis. Raw material A is a fast moving stock. Raw material B is a slow moving stock. Is this clear, guys? Are you all able to understand? Now, if you go to a shop and all, now they will give some discounts, no? They will give discounts only on products which are slow moving. They will never give discounts on fast moving stock. Why? Because anyways they know it will be sold. Only to push the sales, they will give you discount on slow moving stock and all. Guys, are you all able to understand? So with the help of this particular stock holding period, you will do something called as FSN analysis. What is it called as? FSN analysis. Full form: fast moving, slow moving, non-moving stock. Is that clear, guys? Based on this, you can categorize which stock is under which category, and accordingly you can take corrective actions. Is that clear? Suppose in this case, raw material B is in slow moving category. Now immediately what will I do? I will try to dig out the reasons and find out why is it slow moving. Then I will try to push it and convert it into a fast moving category. Is that clear, guys? Are you all able to understand? Right? So I should know where I stand, guys. Correct? For that purpose, I compute the inventory turnover ratio. With the help of inventory turnover ratio, we can compute the stock holding period, and with the help of that, you can do FSN analysis. With the help of FSN analysis, you will know whether your stock raw material is fast moving, slow moving, or non-moving. If it is non-moving, means it is not all moving. Now it's got dead stock. What will you do? Don't keep it with you. Immediately scrap it off, realize some income and close it. Are you all able to understand? But slow moving, if it is there, try to improvise certain measures, bring it under fast moving. Is that clear? If it is fast moving, try to maintain it. Are you all able to understand this? This actually gives you to exercise control over your inventory. Are you all able to understand, guys? Yes? Fine. That's about this concept. Let's go and do one sum. Please take the next question, number 18. Right? The last concept in this particular chapter. From the following data of the year ended 31st of March, calculate the inventory turnover ratio of 2 items and look, put forward your comments. No comments, huh? Right? You will have to write your comments. For you to write the comments, first you should understand the concept, guys. Are you all able to get this? So you can't directly jump to the conclusion or comments by just mugging up and doing something. No, it doesn't work that way. Are you all able to understand? Now, how do we do this? Now, raw material wise, they have given opening stock, purchase, closing stock. Now, what is the formula for calculating inventory turnover ratio? Everyone, raw material consumed divided by average stock of raw material. Guys, correct? Average raw material is what? Opening plus closing by 2. That you know. Now, in this case, what is the raw material consumed? Now, raw material consumed is not purchased. It is opening plus purchase minus closing. Recall, raw material you have opening raw material, opening stock plus purchase gives you the total raw material available. Out of this, partly you can consume, partly will remain in your closing stock. Now, with this, how can I find out raw material consumed? Opening stock plus purchase. This is the total available. Out of that, how many kgs I have not consumed? The balance will give me what? The raw material value of raw material consumed. Are you guys able to understand? Hence, it will be what? 10,000 plus 52,000 minus 6,000. How much is that? 56,000. This is the raw material consumed. Are you clear with this? A. B is going to be 9 plus 27 minus 11. How much is that going to be, guys? 25. Guys, 25,000. So 56 and 25. You got the raw material consumed. Numerator, denominator. 10 plus 6 by 2. That's going to be 8. 8,000 here. And here it's going to be 9 plus 11 by 2. 10,000. Right? So now 56,000 by 8,000. How much is it? 7 times. 25,000 divided by 10,000. How much is it? 2.5 times. By looking at this itself, you can say material A has turned over 7 times. Means what? Means what? So many number of times it has got over and we replenished it. Got over and we refilled it. So which means if it means it is fast moving. No, guys, correct? Now, how will you arrive at the stock holding period? Simple. In a day, in a year, how many days are there? 365 divided by 7 gives you how much? 52.14. Round it off. 52 days, or in other words, if I purchase raw material A today, it will take 52 days for me to completely empty it. Guys, correct? How about B? 365 divided by 2.5. So it will take 146 days for me to actually empty raw material B. With this, what can you conclude? You can say raw material A is relatively fast moving as compared to raw material B. Don't say this is fast moving, this is slow moving. No, we do not know. It depends on the industry also. We can only say between these two materials, this is fast moving. Material A is moving faster than material B. for you to write this comment, you should know that you should arrive at inventory turnover ratio. That is anyways given in the question. The next one is what? You need to arrive at the stock holding period, inventory holding period. Based on this only, you can arrive at the comment. Are you all able to understand, right? And that is about this particular question. Please go and update your library of adjustments. Write down inventory turnover ratios with comments. Inventory turnover ratio with comments. We done? Yes. And guys, with this, we are done with this particular chapter. So literally, guys, we have seen components of material cost. Guys, correct? We saw EOQ without price discount, root of 2 AO by C. EOQ with the price discount. We saw stock levels. What are the different stock levels? Reorder level, minimum level, maximum level, average level, danger level. Guys, correct? Then issues valuation. We see that in detail in our regular and exam oriented batches, right? But right now, for the purpose of this marathon, since it is a foundation level area, so I didn't do it here. Then stockout cost, we did the sum. You remember tyro tubes and tires, right? ABC analysis, we did inventory turnover ratio. This is also we did. In fact, we did one more concept called as this one. Supplier selection, indifference point. Good. Supplier selection, that also we did. Treatment of losses, that is normal loss, abnormal loss. Ideally, it is a part of discussion in process costing. So that's a technical area in process costing. Hence, that also I have just reserved it. It's not for this purpose of marathon. So that's a detailed discussion which we generally do during our process costing area. But in this chapter, generally, if they test, it comes only from the areas which we have discussed till now. Is that clear, guys? Right? A comprehensive coverage for around 2 hours. Literally the entire chapter with the numerical problems we have done. Guys, now, one last time, I want you all to tell me stock levels. Come on, guys. Come on, everybody, online folks, whoever is watching this, come on. Tell the formula. Assume I'm standing in front of you. Tell to the screen it's okay. Come on, guys, everybody. First, reorder level formula. Maximum consumption into maximum lead time. Your mom will not let you go to bed with a hungry stomach, right? Next one. Minimum level formula. Reorder level minus normally what happens? Average consumption into average lead time. Next, maximum level formula. Reorder level minus everything happens in my favor. Minimum consumption into minimum lead time. Now that guy rings the bell and yes, plus reorder quantity. Next, average level formula. Two formulas. One is normal mathematical formula, arithmetical formula. Minimum level plus maximum level divided by 2. But logical formula. Minimum level plus half of reorder quantity. Next, finally, danger level formula. Average consumption into lead time during emergency purchases. Excellent, guys. Very good. That's all it is. And inventory turnover ratio formula. Raw material consumed divided by average stock of raw material. That's about it. EOQ formula. Root of 2 AO by C. Literally, you guys have told all the formulas in this entire chapter. And that's about this chapter. And whatever formulas that you can find in this chapter, guys, I have neatly put it in, a different, ink, not only this chapter, throughout the subject for both costing and FM in our concept decoder. Literally, this itself is your main source of preparation, and this itself can be acted as a revision book also for you, right? You can revise from the same book which you used to prepare initially. Literally all the formulas are mentioned, and logic also we have seen. In fact, in our regular course and all, we actually spend more time and we spend more detail on the logics and detailed sum solving. But here, due to a shortage of time as well as for revision purpose, we are condensing the discussion, and that too, guys, in a span of just about 2 hours. This entire chapter, which is important from an examination perspective, we have covered. Is that clear, guys? Fine. So with this, we have completed this chapter called material cost. So now let's move on to the next one. So now let's get started with the revision of the next chapter called service costing, right? So this chapter is also called as operating costing, right? Service or operating costing, not operation costing, operating costing. Now guys, once again, this chapter is a common chapter for CA and as well as CMA student. If you're doing CMA also, then this chapter is there in your paper 8 cost accounting. Now guys, coming back here. Now this chapter, once again, gets tested every single attempt. At times for 10 marks or at least for 5 marks, it gets tested. This is how this chapter is, and the importance of this chapter is all other chapters revolve around the production and manufacturing of goods, whereas this is the only chapter that deals with your service sector. Hence, this chapter is important both from an economy perspective, real life, as well as from your examination perspective. Now guys, in this chapter, as per the syllabus, we have different service sector costing. Transportation sector, under transportation sector we have goods transportation, passenger transportation. Then we have hotels and lodges, hospitals, information technology, IT companies like Cognizant, Wipro and all, toll roads, educational institutes, insurance, financial institutions, and or electricity related companies, powerhouses, right? Koli powerhouse, right? Now guys, most important sector is this transportation sector. This is the most important sector for us, right? And apart from that, hotel and hospitals, these two are also important. Generally, your exam questions will come from these areas. It can also come from other areas, but other areas are nothing great. They are not that difficult and all. They are very direct. The biggest challenge is with respect to these areas, more specifically to the transportation sector. That's where you have different varieties of problems as well. Fine, guys? Right. Now, in this chapter, the most important and the crucial point in service costing is that now, in case of a manufacturing company, right, I will compute the cost per unit. Let us say I am a pen manufacturer. For me, what do I sell? I sell the pen, right? So I compute the cost per pen, right? Arrive at the profit, add the profit, arrive at the selling price, guys. Correct? I know what is my cost object. What do you mean by cost object? The object for which I am computing the cost. For example, I am saying 20 rupees. So 20 rupees, what is 20 rupees? 20 rupees for what? 20 rupees per pen, which means here pen is the cost object. The object for which I compute the cost is actually called as cost object. If I am in the manufacturing sector, the cost object is easily identifiable. So the product that I manufacture is called as a cost object. Whereas in case of a service sector, now identifying the cost object is the first major challenge for us. For example, I am in a transportation business, right? Now, Ola, Uber, you guys book. Now, here, Ola, Uber, what business are they into? Selling car? No, they use this car, they provide a service to you. They only transport you from one place to another. Guys, correct? Right? In this case, what is their cost object? How do they arrive at the cost? How will they fix the selling price? On what should everything be calculated is the question, guys. Hence, in transportation, in our service sector wise, my cost object will be different. Is that clear, guys? That is the first and foremost important thing here. Are you all able to get this? Yes. Now, guys, let me take an example. Now, in this chapter, the most important thing is find out the cost object. Now, how many of you have gone to IRCTC website? Almost all of you, right? Now, if you go to IRCTC website for booking your train tickets, now, two things they will ask you for sure. One is your starting point and destination. The other one is your number of passengers. Right, guys? Yes. Now, why do they need these two data? Now, I will tell you. In case of your transportation sector, in this case, passenger transportation, now, what they do is their charges are arrived on the basis of per passenger per kilometer. It's popularly called passenger kilometer. Let us say they will have a tariff. Now, for one passenger to transport that one passenger for 1 kilometer, let us say I will charge 1 rupee. This is how they will actually, here the cost object is passenger kilometer. Sir, why sir? I will tell you. Now, they ask the starting point and destination. With this, they can arrive at the distance. Let us say I'm traveling from Chennai to Hyderabad, right? Let us say approximately the distance is 800 kilometers, right? Now they will know per kilometer they will charge 1 rupee, which means you're going to travel 800 kilometers, they will charge 800 rupees. Guys, correct? Now, you said, okay, sir, very happy. Suppose they are saying the tariff is 1 rupee per kilometer. That's all. They're saying, what will you do? No problem, sir. What is the distance? 800. 800 into 1, 800. So you will pay 800 rupees and you will take 100 people with you. Now, is it fair? No. What is the meaning of that? Sir, the charge is 1 rupee per passenger per kilometer. For us to transport one passenger for 1 kilometer, the charges are 1 rupee. Guys, correct? Now that's the reason why they ask for the second detail. How many passengers are there? Are you all able to understand this? Right? Which means, suppose 800 kilometers are there. 2 passenger you are booking the ticket. What will they do? So, per passenger per kilometer, it is going to be 1 rupee. So, 1 into 800, it is going to be 800 rupees per passenger. Into 2 you need to do, only then you'll get the total ticket value of 1600 rupees. Are you all able to understand? Or in other words, they are transporting 2 passengers for 800 kilometers, right? 2 into 800 is going to be 1600 passenger kilometers, right? Per passenger per kilometer, the charge is 1600 into 1, 1600. That way also you can arrive. Are you all able to understand? Or in other words, in service sector, you don't have a single cost object, you have multiple cost object. This is popularly called as composite cost object. Composition means what? More than one. So composite cost object means there is more than one cost object together that drives my cost. Are you all able to understand? This is one uniqueness about service sector. And another uniqueness about service sector is there is no concept of closing stock, opening stock. You can't stock service, no, you're not dealing in a product. Are you all able to understand? Hence, the stock valuation issue and all is not there in this sector at all. Are you all able to understand? These are the 2 major issues in our service sector. Is that clear? Now, let us take an example. Hotel sector. Now, let us say you want to book a hotel room. You have gone somewhere for, let us say you have gone for, a vacation, right? You want to book a hotel room. Now, how will they charge you? Now, if they say 1000 rupees per room, sir, what will you do? What will you do? You will pay 1000 rupees, right? You will pay 1000 rupees and stay in that room for 1 month. Will they accept? No. They will say, sir, 1000 rupees per room per day. So here room days per room per day will be the cost object. Clear with this, guys? If they just say, sir, 1000 rupees per day, sir, then what will you do? You will pay 1000 rupees. 1 day only you will say, but you will take, sir, entire hotel, there are 50 rooms, no? I will take all the 50 rooms, so only 1000 rupees I will pay. Why you say 1000 per day only? You wouldn't say whether it is per room and all. So it is very clear, 1000 rupees per room per day. If you want to take 1 room for 1 day, the cost is 1000. Is that clear, guys? Hence, it is also driven by composite cost object. Are you all able to understand? This is one very important thing that you need to get it. Is that clear, guys? Fine. So now, similarly, if I am in goods transportation, they will say per ton per kilometer we will charge you so much. So to transport 1 ton for 1 kilometer, so much is the charge. Is that clear, guys? So if you want us to transport 50 tons, multiply that with 50 and number of kilometers you multiply. Is that clear, guys? Are you all able to understand? Here, the ton kilometers is going to be your cost object. Are you all able to understand this? This is a very, very important understanding in service sector. Is that clear, guys? Now, with this background, let's get started with the first sector called as your transportation sector. Under the transportation sector, now we will do one sum under your goods transportation and one sum we will do under passenger transportation. Shall we get started? Yes. Now, guys, in goods transportation, right, let us take an example of goods transportation. I told you what is going to be the cost object? Ton kilometers. Am I right, guys? Now, this ton kilometers can be calculated either using weighted average method or using simple average method. Weighted average method is also known as absolute ton kilometers or absolute method. Simple average is also known as commercial ton kilometer or commercial basis. Is that clear, guys? Now, the manner of computing my ton kilometers, for example, let us say, guys, let us say I'm a pen manufacturer. I incur a total cost of 1 lakh to produce how many pens? Let us say 10,000 pens, 10,000 units. The cost per unit is how much? Rupees 10, guys, correct? Now, in the denominator, I have units, no? This is my cost object. Now, in case of a service sector, what is the cost object? In this case, that is your goods transportation. The ton kilometers is going to be your total ton kilometers is going to be your cost object. Am I right? Now, what will I do? So, the total cost incurred divided by total ton kilometers, I will arrive at the cost per ton kilometer. Right? Now I know for every unit that I am dealing it, in this case it is ton kilometer, what is the cost? Accordingly, I can charge my customers, guys, correct? Or in other words, the ton kilometers is nothing but your denominator computation. Am I right? Now, how do I compute the denominator? There are two ways in which you can compute it. One is weighted average method, also known as absolute basis. The other one is simple average method, also known as commercial basis. What are these two methods, sir? How do you compute? We will see this with the help of the first question. So please go and take. This is in volume number 2. The page number is continuous only, but this is in volume number 2. Right, guys? So if you notice, this is in our volume 2 of our solved question bank. So please take this. Right? If you notice, in your first volume, these chapters are there. Second volume, service marginal standard, budget, and all these things, MCQs and all are there. Fine. Now let's go on to this first question. Look at this. A lorry starts with a load of 20 MT, stands for metric tons, of goods from station A. It unloads 8 tons in station B and the balance goods in station C. In return trip, it reaches station A with a load of 16 metric tons loaded at station C. The distance between A to B, B to C, and C to A are 80, 120, and 160 respectively. Compute absolute metric ton kilometer, commercial metric ton kilometer. What are they saying? Now, there are 3 stations, A, B, C. Now, distance between A to B is how much? Given here, 80 kilometers. Right? Next, distance between B to C is 120 kilometers given. Distance between C to A is 160 kilometers given. Now, A to B, I transport how many weight? What is the weight I transport? How many metric tons? 20 metric tons. B to C, I transport how many metric tons? I transport 12 metric tons. Am I right? It's given. How do you know 12? Now, they have given here, lorry A, it starts from A, it goes to B, at B, it unloads 8 metric tons. Means what? So, out of the 20, it unloads 8 here. The balance weight is 12, and the balance goods, it drops at C, which means from B to C, it is carrying a weight of 12 metric ton. Now, on the return trip, it reaches station A with a load of 16 metric tons loaded at C. Here, once again, it gets loaded with 16 metric tons and it comes back to A. Is that clear, guys? Are you all able to understand this? Now, how do you compute the total metric ton? That is the total denominator for you. I would have incurred some total cost. Leave that. Divided by total metric ton. Only then I'll get the cost per metric ton. Am I right? Sir, what is the total metric ton handled? 2 ways of computing are there. One is called absolute basis, also known as weighted average basis. In this case, what will you do? Simple. Sir, for each of this 80 kilometers, what is the weight I carried? 20 metric tons. So 20 into 80 plus 12 into 120 plus 16 into 160. Now, the respective distance multiplied with the respective weights, if you do, this method of computing your denominator is called as absolute basis, also known as a weighted average basis. Is this clear, guys? Right? So, this is what they have done. 20 into 80 plus 12 into 120 plus 16 into 160. If you do that, you arrive at 5,600 metric ton kilometers. This way of computing the denominator is called as a absolute basis, also known as a weighted average basis. Is that clear? Now, there is another method called simple average or commercial basis. How would you compute that? Very simple. First, sir, I am not bothered about for which stretch what was the weight I carried. No. First tell me, what is the total distance? 80 plus 120 plus 160. How much is it? 200 plus 160, 360 kilometers. Overall, I traveled 360 kilometers. On an average, sir, what is the total weight I carried? First journey I carried 20. Second journey I carried 12. Third journey I carried 16. Simple average is going to be 20 plus 12 plus 16 divided by 3. Is that clear? How much is that? How much is that? How much is that, ma? 16. So on an average, the weight I carried was 16. So I am not taking the respective routes into respective weight. I'm taking the total distance and multiplying with a simple average of the weight I carried on an average. So we get a total of how much? 5,760 metric ton kilometers. This method of computing your denominator is called as simple average or commercial basis. Is this clear, guys? Now obviously the answer will be different under the two alternatives. It will not match. That's what the method says, right? Depending on the method asked in the question, you can use the appropriate method. Is this clear, guys? So in simple average, what will you do? Take the total number of kilometers, right? Multiply it with simple average weight. Simple average weight is what? Total weight divided by number of journeys. Here 3 is number of journeys. Is that clear, guys? Are you all able to understand? Are you all able to understand? There are two ways in which the denominator can be computed. And generally, there's no hard and fast rule. Generally, in goods transportation, they use metric ton concept. I mean, they use absolute basis concept. In passenger transportation, they use commercial basis, simple average concept, right? Generally, they use it. There is no hard and fast rule, but generally, that's how the sums are framed. Is that clear, guys? Fine. So that's about the first question. Please go and update your library of adjustments. Write down computation of composite service cost units. Computation of composite service cost units hyphen simple average and weighted average. Hyphen simple average and weighted average. So that's about the first question. Now let's go to question number 3. A very good sum and a very important sum as well from an examination perspective. Shall we get started? Yes. Now a very, very important question. Mark this as important. You can expect this kind of question in your exam. SMC is a public school having 5 buses, each plying in different directions for the transport of its school students. In view of larger number of students availing of the bus service, the buses work in 2 shifts daily, both in the morning and in the afternoon. The buses are garaged in the school. The workload of the students has been so arranged that in the morning, the first trip picks up the senior students and the second trip plying an hour later picks up junior students. Similarly, in the afternoon, first trip takes the junior students and an hour later, the second trip takes senior students home. The distance traveled by each bus one way is 8 kilometers. Fine. Now, the school works for 25 days in a month, and it remains closed for vacations in May, June, and December. The bus fee, however, is payable by the students for all 12 months in a year. The details of expenses for a year are as under. Driver's salary given, cleaner salary given. Salary is payable for all 12 months for the driver and the cleaner, and one cleaner is employed for all 5 buses. Means what? I have 5 buses, but only one cleaner is enough to clean all 5 buses. Now, how about driver? Can I have one driver? No. Parallelly, every day 5 buses need to function. I can't have one driver. So it is understood that 5 drivers are needed, but only one cleaner. How one cleaner can clean? Guys, when the bus is stationed at the garage, only then the cleaning will happen. No. Guys, correct? Yes. Next, license fee, taxes is given. Insurance, repairs and maintenance, purchase price, life of each bus, scrap value. Why are these details given? With this, you can compute depreciation. Very good. Next, diesel cost is given 45 rupees per liter. Each bus gives an average mileage of 4 kilometers per liter of diesel. Right? Now, how do you compute the total diesel cost? Simple. If I put 1 liter, right, I will get how many kilometers? 4 kilometers. What is the cost of 1 liter? 45. If 45 rupees is the cost for running 4 kilometers, how much will be the cost for running total number of kilometers which we need to compute? Is that clear, guys? Next, the seating capacity of each bus is 50. The seating capacity is fully occupied during the whole year. Now, the students picked up and dropped within a range up to 4 kilometers of distance in the school are charged half fare, and 50% of the students traveling in each trip are in this category. Now, what are they saying? The school has a method of arriving at the tariff. What they are saying, look, if the student is staying within 4 kilometers from the school, I will charge him only half ticket, half fare. If the student is staying beyond 4 kilometer, I will charge him full ticket. So here we need to arrive. First we will read it. Ignore interest, fine. Since the charges are to be based on average cost, you are required to, number 1, prepare a statement showing the expenses of operating a single bus and a fleet of 5 buses for a year. This easily we can do. Prepare a statement, arrive at cost for running 1 bus, cost for running 5 buses. Very simple. Collect all the cost. Next, work out the average cost per student per month in respect of students coming up to 4 kilometers, means half ticket student, and beyond 4 kilometer full ticket student. We need to compute how much amount we need to charge for half ticket student, how much amount we need to charge for full ticket student. This is one issue in the question. Is that clear, guys? Right? Now they are saying in this case, you need not compute passenger kilometer and all. No, directly they have said, because if you compute passenger kilometer based on the kilometers you travel, we will charge. Here they have a different policy of computing. What? Less than 4 kilometers if you're staying, right, we'll charge half fare. That's all. Means what? Whether you are staying 1 kilometer, 2 kilometer, 3 kilometer or 4 kilometer, half ticket. If you are staying within 5, 6, 7, 8 kilometers from the school, you will be charged full ticket. So here we can't do it based on passenger kilometer. So total cost divided by total number of students, you will get the cost per students. Guys, correct? But there is a catch here. What catch? Now there are some students, half the students are half ticket, half the students are full ticket. I can't add the half ticket students with the full ticket students directly because they are dissimilar items. Hence, what should I do? Convert all the students into equivalent half tickets, or convert all the students into equivalent full ticket students and then do the calculation. Only then you will arrive at cost per equivalent half ticket student or cost per equivalent full ticket student. If you compute the cost per equivalent half ticket student, then multiply that into 2, you will get the cost for one full ticket student. Is that clear? Suppose if you are computing the cost for equivalent full ticket student into 0.5, half of that, you will arrive at the cost per half ticket student. Is this clear, guys? This is the approach to this particular numerical problem. Right? Now, with this, shall we get started? Shall we get started? Yes. Now, let's get started with this question. A very, very good and an excellent numerical problem. Right? Mark this as important, guys. A very good sum. Now, first thing, what we need to do here is, guys, understand, always in transportation sector, we need to prepare that statement of cost. No? Simply add all the costs, total it. You can do it like that. But institute expects you to actually present it in a certain way. Now, they want you to categorize the numerator, total cost, into 3. One part is called as standing charges. What do you mean by standing charges? Those items of cost which are fixed in nature. Then you have something called running charges, which are variable in nature. Then you should have maintenance charges. Basically, this is neither fixed nor variable. Maintenance cost. For every 1000 kilometers, once you should do maintenance. Is correct? It is not variable, but it is also not fixed. Once the 1000 kilometer reaches, you need to maintain. Is correct? Hence, they are expecting you to present it like this. That's all. The manner of computation will be given in the question. Don't worry about that. They expect you to present the answer like this. Is that clear, guys? Now, for that, first, now, one of the components of cost is diesel cost. Am I right, guys? Now, diesel cost, how will you find? I told you. For 1 liter, what is the cost? 45. By incurring 45 rupees, I run 4 kilometers. What will be the cost for total number of kilometers? Now, for the total number of kilometers, right? First, we need to calculate total number of kilometers. Now, how do you compute total number of kilometers? Read the question, an excellent adjustment. Now, what have they mentioned? Every bus travels for a trip of 8 kilometers. Am I right, guys? Now, understand I travel 8 kilometers. Correct? Now, once I go, obviously I have to come back to school, which means into 2. One round trip is 8 into 2. Am I right? Now remember, in the morning itself, the same bus will first go and pick up seniors. Once again, it will go in the same route, pick up juniors. Am I right, guys? So, once again into 2. Are you all able to understand? Why this 2? Senior, junior. Now, all these things that we did right now are only in the morning. Once again, the same thing will repeat in the afternoon for dropping them. Am I right, guys? So, once again into 2. This 2 is for what? Dropping. Pick up plus drop. Guys, correct? Now, like this, in a month, how many days do I work? 25 days. Like that, in a year, how many months are there? Not 12 months. Read the question. Yes, May, June, December are holidays. Bus will not function. So, into 9 months. This is the calculation for total number of kilometers. The first step is to calculate the total number of kilometers. Is that clear, guys? That's what you need to do. So, 8 kilometers one way, into 2, one round trip, into 2, senior plus junior, like that into 2 for morning and afternoon, like that I have 25 days in a month, like that I have 9 months in a year. If you multiply, I get a total of 14,400 kilometers. Every bus travels 14,400 kilometers. Are you clear with this? Yes, guys. Now, what will be the diesel cost? 45 rupees is the cost for running 4 kilometers. How much will it be for 14,400? 45 by 4 into 14,400. It gives you 1,62,000 rupees. Are you all able to understand? Is that clear, guys? That's about it. That's about it. With this, now we can prepare the statement of expenses for operating a single bus and a fleet of 5 buses. Shall we get started? Yes. Now, what do? First, take up all the standing charges. Now, what are the standing charges I've got? Driver salary. How much is it? 4,500 per month per driver. So, 4,500 into 12. How much is that? 54,000 is the driver cost per bus. For 5 buses, it will be into 5. Guys, correct? It's going to be 2,70,000. Next, what is cleaner's salary? 3,500 into month. So, 3,500 per month. 3,500 into 12. How much is that? 42,000 is the cost for 5 buses. Single cleaner, 5 bus. Guys, correct? Hence, fill this here. That's why I have marked this as a red ink. Many students will commit a mistake. Now, what is the cost per bus? Divide this by 5. You will arrive at 8,400. Are you all able to understand? Look how beautifully they have drafted this sum. Right? Next one. Next one. License fee. Fixed only, no? 8,600 per bus per annum. 8,600 into 5. You will get this figure. Any problem? No. Next one. Insurance fixed. So, 10,000 per bus. 50,000 for 5 buses. Done. Next, repairs and maintenance, separate line item we have. Semi-variable. Depreciation, that's fixed. Purchase cost, 15 lakh. Scrap value, 3 lakh. So 15 minus 3, 12 lakhs divided by 12 years. Per bus depreciation is 1 lakh rupee. 5 buses, 5 lakh rupees. So 1 lakh and 5 lakh. Total, you get the total standing charges. Is that clear? Running charges, only one line item, diesel cost. How much was that? We calculated 1,62,000 per bus, 5 buses into 5. You get this. Is that clear, guys? Are you all able to understand? Yes, once again, I'm telling you, in our regular batch and Evo batch, we do it fully, right? That solution only I'm taking right now. This is all hand done. I mean, worked out in the marathon. Fine, I'm quickly discussing. It's more to do with a revision. That's the reason we are doing it like this. Next one, maintenance charges. How much the maintenance charges, guys? Now, I think it's given in the question, 35,000 per bus per annum. 35 into 5 you get for 5 buses. Is that clear, guys? You get the total cost here. For running a single bus, it's going to be 3,78,000. For running 5 buses, this is the total cost. Is that clear, guys? Into 5. Are you clear? Or you can subtotal this. Now, per month, what is the cost? Divide this by 12. How much is it? 3,78,000 divided by 31,500. I mean, 378,000 divided by 12, you get 31,500. 18,90,000 divided by 12, you get 1,57,500. Now guys, why are we dividing it by 12? The bus is running only for 9 months, no? Why are we dividing it by 12? Yes, you said something. Tell me, ma. Yes, you are right. Yes, excellent. They have mentioned clearly. However, the fee is payable in 12 installments. That is, it is payable for all 12 months. Am I right? Which means the total cost divided by 12 per month. The total amount I need to recover from every student, I mean from all the students put together, is going to be 31,500 for one bus. Are you all able to understand? Is that clear, guys? Now what do we need to calculate? Second part of the question. Tell me what is the average cost per student coming within 4 kilometers, that is half ticket student. What is the cost I need to charge for full ticket student? Now first of all, one thing you tell me guys, how many students travel in one bus, use one bus facility? One bus is being used by how many students? How many students? 100. How did you get 100? How did you get 100? 50 juniors pick up, drop. Once again 50 seniors pick up, drop. First senior, then junior. So literally the same bus is being used by 100 students. Remember that. Is that clear, guys? 50 at a time. But in a day, morning first I pick up a senior, then I pick up junior. Once again, first I drop junior, then I drop senior. So a single bus is used by 100 students. Like that, each of the 5 buses are used by 100 different students. Are you clear with this? Maybe totally there are 500 students overall availing the bus facility. Per bus it is enough for me to calculate. Per bus, how many students avail the facility? 100 students. Guys, correct? Now 31,500 divided by 100 can I do? No. Why? Now out of this 100 students, now half of them, right, are what? They are only half ticket students, half fare students. Half of them are full fare students. If I divide it by 100, I will be charging everyone the same amount. I can't do it like this. First of all, half fare students and full fare students, I can't actually add them as such. So what will I do? Now in this case, we need to compute equivalent full fare students, or you can compute equivalent half fare students. That is, convert everyone into full ticket or convert everyone into half ticket. We will convert everyone into half fare students. So first we need to compute the equivalent half fare students per bus. Now what is the seating capacity of the bus, guys? 50. Now out of this 50 students, now half of them are half fare students. They have mentioned in the question, no? 50% traveling in each trip are in this category, half fare category, guys, correct? Which means 25 students are half ticket students, balance 25 are full ticket students, guys, correct? Are you all clear with this? Now how many full ticket students are there? 25. Can I say one full ticket student is equal to 2 half ticket students, guys, correct? The amount that I need to collect from one full ticket student is equivalent to the amount I collect from 2 half ticket student, or the amount I need to collect from 25 full ticket student will be equal to the amount I should collect from 50 half ticket students. Am I right, guys? Hence the equivalent half fare students, the full fare students converted into half fare will be 25 into 2. How much is it? 50. Plus already I have half fare students. How much is it? 25. So in a trip, that is juniors alone, I have how much? 75 equivalent half fare students per trip. Are you all able to understand? Similar 75 I have senior students also, guys, correct? Because a bus is used by both seniors and juniors. Hence total equivalent half fare students per bus is going to be 75 into 2. It's going to be 150, or you can say senior plus junior, 75 plus 75, it is 150. Are you all able to understand? Is there any issue here? No. Which means now this 31,500 rupees need to be borne by 150 equivalent half fare students. Am I right, guys? So 31,000 divided by 150. So every half fare student should pay how much? 210 rupees. Then how much should a full fare student pay me? 2 times this. So 210 into 2. Every full fare student should pay me how much? 420 rupees. Are you all able to understand this? Is everyone able to get this, guys? Are you all able to understand? Now, such a beautiful concept, provided if you understand it conceptually and crack it, this is going to be a cakewalk for you. As simple as that, guys. That's all it takes. Is that clear, everyone? Is that clear, everyone? You guys got it? So in this sum, we saw the concept of equivalent service cost unit. Is that clear? So please go and update your library of adjustments. Write down transport costing hyphen students transportation with students traveling multiple distances, multiple distances with students traveling multiple distances within bracket concept of equivalent service cost unit within bracket concept of equivalent service cost unit. So that's about this particular transportation sector. We did one sum under goods transportation and we did one question under passenger transportation, right? For the purpose of marathon, in a regular batch we do it fully, but marathon for revision purpose, I want to take one concept from this area, respective area, and do it. Now guys, let's move on to the next sector called as hotel costing. So please take question number 8. Please take question number 8. So please take question number 8. Yes. Once again, guys, this is also another important question. You can expect this kind of question in your exam. Now, guys, I'm talking about a hotel sector. In the hotel sector, what is going to be my service cost unit? What is the cost object per room per day? That is, room days is the cost object. Am I right? Perfect. Have this in mind. Let's do this. A company runs a holiday home. For this purpose, it has hired a building at rent of rupees 10,000 per month along with a 5% on total taking. What do you mean by a total taking? The total revenue on the sales value. Now you need to pay how much? 5%. So rent is going to be fixed 10,000 per month plus 5% of the turnover. Now it has 3 types of suites. This is not suit, this is suites, right? Suit means coat suit. Suites, basically, that's how they call it. Suites means different variety of rooms for its customer. Basically, single room, double room, and triple room. Now, what have they mentioned? Single room, they have 100 single rooms. Every single day, occupancy is 100%. Means what? All the 100 rooms are fully occupied every day. Double rooms, how many rooms they've got? 50. Only 80% of the double rooms are occupied every day. Triple rooms, they have 30, and only 60% of these 30 rooms are occupied on an average every day. Is that clear? Next, the rent of a double room is to be fixed at 2.5 times of the single room, which means the double room's rent is 2.5 times the single room rent. Guys, correct? Correct? Fine. And what have they given? And that of a triple room as twice of the double room. The rent charged by triple room is 2 times the rent charged by double room, or 2 times into 2.5, it's going to be 5 times the rent charged by a single room. Is that clear, guys? Are you all able to understand? Why do we need this? To convert all the rooms into equivalent single rooms. Are you all able to understand? Because we need to compute room days. I can't add the room days of single with double with triple. So I need to convert this double and triple into equivalent single room days, and only then I can do the calculation. Guys, are you all clear with this? Right. Now what have they given here? All other expenses, staff salaries, room attendant wages, lighting, heating, power, repairs and renovation, laundry charges, interior decor, and sundries are provided. Provide the profit at 20% on total taking. Total taking means revenue. And assume 360 days in a year. You are required to calculate the rent to be charged for each type of suite. Right? Bloody sweet, huh? Yes. So now we need to do this sum. First, how do we do? Simple. Total cost, right, plus required profit gives me the total takings. Total takings divided by total number of room days. I will know how much to charge per room per day. Now, the denominator, room days, I have single room day, double room day, triple room day. Now, I can't add them as such. So, what do? I convert everything into equivalent single room day, and denominator I take it as a equivalent single room day. I arrive at the rate I need to charge for a single room per day. That into 2.5 will give me the tariff for double room, and into 5 times will give me the tariff for triple room. As simple as that. Is that clear, guys? Shall we do the sum right now? Yes. Let's get started. Let's get started now. First, this was I think question number 8. Okay, just a minute. Yes. Now the first thing we need to do is to calculate the room days. Now guys, tell me, single room, 100 rooms are occupied 100%, which means every day how many rooms are occupied? 100. And how many days are there in a year? 360. So 100 into 100 percentage into 360. So ideally I have 336,000 single room days. Guys, correct? For every room per day. Do I have 36,000 rooms? No, no, no. I have only 100 rooms. All the 100 rooms are occupied for 360 days. Guys, correct? Which means, look. Per room per day I generate revenue. But this room per room is occupied on all the 360 days, which means one room will generate me 360 days revenue. Guys, correct? Like that I have 100 rooms occupied. So which means I generate revenue from 36,000 room days, single room days alone. Is that clear, guys? And one single room is equal to one single room only. Guys, correct? 36,000 into 1, 36,000. Is that clear? Now, how about double room days? How many double rooms do I have? 50. All 50 are occupied. Now, only 80% of that are occupied, right? And how many days are there in a year? 360. So 50 into 80%, you get 40 rooms. 40 rooms are occupied for 360 days. How many double room days you get? 14,400. Now, I can't add the single room with double room. What should I do? This double room, convert it into equivalent single room. How will you do? Sir, one double room will give me revenue that 2.5 single rooms will give. Guys, correct? Which means 14,400 into 2.5. How much is that? 36,000. Can I say 14,400 double rooms are equivalent to 36,000 single rooms? Guys, correct? Now these two can be added right now. Are you all able to understand? Next, I have triple rooms also. How many triple rooms? Totally 30 rooms are there, sir. But only 60% occupancy, which means 18. Yes, only 18 rooms are occupied every day. Like that, it's occupied for 360 days. 18 into 360 gives you, it's going to 6480. Now, one triple room day is equivalent to 5 single room days. So, it's going to be 6480 into 5. You get 32,400. Now, these can't be added as such. Whereas, now all these are equivalent single room days. So, 36,000 plus 36,000 plus 32,400. It's going to be how much? 1,04,400 equivalent single room days are there. Are you all able to understand? Is that clear, guys? Now we need to prepare the statement of total cost. Guys, correct? Now, statement of total cost. Here in a hotel sector, you need not bifurcate cost into those three segments: standing, running, repairs and maintenance. No such concept. That is only there for transportation sector. Now what do? Whatever figures you think they have given, all the figures you copy paste. Right? The sum total of this, how much does it come out to? 14,25,000 plus 4,50,000 plus 2,15,000 plus 123,500 plus 80,500 plus 74,000 plus 153,000 gives you 25 lakh 21,000. 25 lakh 21,000 is going to be my total cost. Am I right? Guys, correct? But remember one thing. You have missed out. What? You have missed out building rent. How much is building rent? Not 10,000. That is per month. So into 12, how much is it? 1,20,000 is the building rent plus 5% on total takings, means revenue. So now the total cost here comes out to how much? 25,21,000. To this add 1,20,000. How much you get? So total cost is 26,41,000 plus 5% on sales. That is total takings. Is that clear? That's what I have mentioned here. 26,41,000 plus 5% on total takings is my total cost. Are you all able to understand? Now, can I say total takings revenue is equal to total cost, that is 26,41,000 plus 5% on total takings plus profit. How much is the required profit? 20% on total takings. Am I right, guys? Now, let me take the total takings as X. Can I say X is equal to 26,41,000 plus 0.05X. That is your variable component of rent plus 0.20X. What is this? Profit. Or 0.05 plus 0.2 gives you 0.25X. This 0.25X goes to the other side. X minus 0.25X gives you 0.75X. 0.75X is equal to 26,41,000. X is equal to 26,41,000 divided by 0.75 gives you how much? 35,21,333.333. This is going to be the total amount of revenue that you should generate. Are you all able to understand? Now Now, what will be the single room rent? Simple. The total revenue that you should generate divided by total equivalent single room days, 1,04,400. How much you get? So 33.729. So round off to 33.73. So for a single room per day, how much the tariff I should charge? 33.73. If it is a double room, what should be the rent I should charge? Into 2.5 times. So into 2.5, how much you get? 84.33. If it is a triple room day, so what is going to be triple room rent? It is going to be 33.73 into 5. So how much is that? 168.65. Is that clear, guys? So with this, we have found out what should be the rent that should be charged for every single type of room. Are you all able to understand? Here, how do we do that? First, we use the concept of equivalent room days. With that, what we do is we arrive at the total equivalent single room days, take the total cost, and of course here you had the rent as some 5% on takings and all. So you keep the total takings as X, reverse work, arrive at the total amount of takings, divide it with the equivalent single room days. You will arrive at the rent per single room day, and multiply that into 2.5, arrive at the double room rent, into 5, you will arrive at the triple room rent. As simple as that, guys. Are you all able to understand? Yes, here these room days are nothing but the units I produce in a production, in a manufacturing entity. I call it as units. Here I can't call it as units. Depending on the industry, I use ton kilometers, passenger kilometers, or I will use room days and all. Are you all able to understand this? Right? And that's about this particular question. Right? Please go and update your library of adjustments. That's about this particular question. Write down hotel costing hyphen multiple types of suites, SUITES, multiple types of suites, semicolon, calculation of room rent to be charged. Calculation of room rent to be charged. Is that clear, everyone? Right? So that's about your hotel sector. Now, let's move on to the next sector called as hospital sector. Shall we? Yes, guys? Fine. Now, in hospital sector, basically, guys, now what happens in hospitals? Now, basically, patients are admitted, right? Now, if you notice, hospital has now become more like an hospitality sector. Okay. So, yes, really. So they have all this fancy, it looks like 5-star hotels and all, right? Now, there also, how they charge is, they have this room rent and all. There also, you guys are aware, similar to hotel, only they have a tariff, right? Separate over and above their medical charges, medical bills and all that. The main thing for them is they also charge room rent, guys, correct? How they will do is per patient per day, this is the amount we need to charge. That's how they arrive at it. Or they will say per bed per day. Bed or patient. One patient will take only one bed. Guys, correct? So per bed per day, how much is going to be the charge is how they will compute. Is that clear, guys? Are you all able to understand? So there, the cost object is going to be what? Bed days or patient days. Is that clear? Are you all able to understand? Now, with this background, let's go and do one question from your hospital sector. A very important question. A very, very important question. Shall we begin? Yes. Now, question number 10. Right? Mark this as important. Now, ABC Hospital runs a CCU, means a critical care unit, ICU, CCU, in a hired building. Now, guys, read the question carefully. The CCU consists of 35 beds. Means what? The CCU has a capacity of having 35 beds. And they have some space where if you want, you can add maximum 5 more beds. Now, they have clearly given the cost structure of this hospital. Rent per month, 75,000. Supervisor, 2 people, 25,000 per month each. Nurse, 4 persons, 20,000 per month each. Ward boys, 4 persons, 5,000 per month each. Doctors are paid 2,50,000 per month. They are paid on the basis of number of patients attended and the time spent by them. Other expenses for the year are as follows. Repairs, fixed, 81,000. Food to patients variable, figure is given. Other services to patients variable. Laundry charges variable. Medicines variable. Other fixed expenses, admin expenses allocated. Now, it was expected that for 150 days in a year, 35 beds are occupied. And for 80 days, only 25 beds are occupied. Now, the hospital hired 750 beds at a charge of rupees 100 per bed per day to accommodate the flow of patients. However, this does not exceed more than 5 extra beds over and above the normal capacity of 35 beds in any day. You are required, number one, calculate the profit per patient day. So, per patient per day, what is the profit? So, here, profit per unit. Unit is patient days. So, total patients into number of days gives you patient day. Correct? Now, calculate the profit per patient day if the hospital recovers on an average 2000 per day from patients, which means they have given the selling price. So, per patient per day, I recover how much? 2000 rupees. Next, calculate the break-even point for the hospital. We have seen this in marginal costing, right? Calculate the break-even point, right? This is what they have asked. Now, guys, first, for you to do this, the first thing you need to do is you need to calculate totally how many patient days are there. Is correct? Or bed days or patient days. Tell me how many bed days are there? Patient day or bed day, both are same. Can anyone tell me how many patient days are there? If you want, read the question, pause the video, read the question, and then continue back. Now, guys, how do you compute the patient days here? Sir, for 150 days, 35 beds were occupied. So, 150 into 35. And for 80 days, 25 beds were occupied. Plus 80 into 25. This is what you think? No. No. Read the question carefully. What have they given? What have they given? This hospital consists of 35 beds. 5 more beds can be added if required. Now, what have they given? It was estimated that for 150 days in a year, 35 beds are occupied. And 80 days, only 25 beds are occupied. Correct? Guys, correct? Now, you guys tell me, 150 days, how many beds are occupied? Everyone, 35 beds. What is the figure? 150 into 35? Yes, you get 5250 bed days. Next, for 80 days, how many beds are occupied? 25 beds are occupied. How much is that? 80 into 25? 2000 beds. Now, guys, read this properly. The hospital hired 750 beds. Wait, what is the meaning of the 750 beds? Can anyone tell me how they arrived at the 750 beds? 750 beds. 5 into 150. What is that calculation? Excellent. Very good. Now, look at this. On 150, how many fixed beds they have? 35. If they want, they can take 5 extra beds at any given point of time. On 150 days, all the 35 beds were occupied. But number of patients, maybe it could have been much more. Now, on these 150 days alone, they would have needed that 5 extra beds. Is correct? So, they did not hire 750 beds. They hired only 5 beds for 150 days. Ideally, this is 750 bed days. They have confused it. They deliberately wanted to confuse you, right? So, 5 beds were hired, additional beds on 150 days. So, which means 5 into 150 is 750. Literally, that is the breakup here. That is also bed days only. Are you all able to understand? So, only 5 beds were hired. For how many days? 750 days. Hence, that is the breakup of this. You need not mention this. You need not mention it. But for your purpose, I am just mentioning 150 days alone. I am having what? 5 beds extra. How do you know, sir? On this 80 days, I don't need extra beds. No, I have 35, but only 25 are occupied. If someone comes in, I can accommodate in the balance 10 beds I have. Is correct? They first forget that they only 25 beds are occupied. Why will I take extra? Existing beds are itself not filling. Are you all able to understand? So, only on these 150 days, all my beds were filled and I had to take additional beds here. Very good. Excellent observation. Is that clear, guys? Hence, the bed day should also include this 750. Now you total up how much you get. 5250 plus 2000 plus 750 gives you 8,000 bed days you've got. That is the first part of this answer. So you should first know that the total bed days are going to be 8,000 bed days. Is that clear? Now every bed day I will generate a turnover of how much? 2,000. So total turnover for them is 8,000 into 2,000. How much is that? 160 lakhs. 1 crore 60 lakhs is going to be my total revenue. Is that clear, guys? Now, since they had asked for break-even point, what is the formula for break-even point? Fixed cost divided by contribution per unit. So it is going to be fixed cost divided by contribution per unit. Now here, 1 unit is what? 1 patient day. Guys, correct? So now, for this purpose, I need to prepare this under marginal costing income statement. Marginal costing income statement is what? Sales minus variable cost gives you contribution minus fixed cost gives you profit. For this reason only, they had categorized which expenses are variable, which expenses are fixed. Is this clear, guys? This is something that you need to identify. They have linked marginal costing with the service costing and they have tested. Is that clear? Only one sum is there with respect to hospital sector. Is that clear, guys? Now what do? Sales 1 crore 60 lakhs. Now from this, subtract all the variable cost. What are all the variable costs we've got? Yes, go in the same order. Yes, sir. You have food to patients, 8,80,000. Other services, 3 lakh. Laundry, 6 lakh. Medicines, 7,50,000. That's all. That's all. That's all. Salaries are fixed, ma. Which salary you want? Huh? Now, very important, doctor salary will come under variable. Sir, how, sir? Why should we do it? Read the question. They are paid fixed. No, sir. It is not fixed. They have done some back-end computation. They have given it is computed on the basis of number of patients attended and the time spent by them. So this should also be considered as a variable. That's all, right? No. Any other cost? No, Bed charge is there, no. Bed is variable. Guys, correct. So, 750 bed days into 100 per bed per day, 75,000 rupees. This is another variable cost which you will miss out. Clear with this? 2 catches. One is doctor fees considered to be variable. Reason given in the question. Number 2, higher charges. Bed higher charges. Is that clear, guys? So, predominantly students will forget this and bed hire charges this. If you add up, you will get the total variable cost. So sales minus variable cost gives you the contribution. From the contribution, subtract all the fixed costs. What are all the fixed costs you've got? Rent per month, so 75,000 into 12. Supervisor, 25,000 into 12. Like that, I have 2 supervisors. Nurses, 20,000 into 4 into 12. Ward boys, 5,000 into 4 into 12. Is that clear? Then repairs, 81,000 given per annum. Next, 10 lakh 80. Other fixed admin, it's going to be 10 lakh rupees. Is that clear, guys? All these items should come here. Are you all able to understand? So total up the fixed cost. So now contribution minus fixed cost, you will arrive at the total profit. Is that clear, guys? And what have they asked in this particular question? Arrive at the profit per patient day. Am I right? Is correct? So by profit, they mean variable profit. They refer to contribution because only contribution per unit can be calculated. Guys, correct? So now, how much is it going to be? 1 crore 3,95,000 divided by your total number of patient days, bed days. How much is that? 8,000. So 1 crore 3,95,000 divided by 8,000. So per patient per day, what is the contribution that you get? 1299.375. Is that clear, guys? Now you arrive at the break-even point. What is the break-even point? Total fixed cost 48,61,000 divided by the contribution per patient per day. It's going to be 1299.375. So you arrive at 48,61,000 divided by 1299.375. You get 3,741.0 something. You can't have decimals. So 3,741 patient days. Means what? If you are able to achieve 3,741 patient days, you will be able to recover your entire fixed cost. So if you are having any patient days beyond this, you will have that is going to feed your profit. That's basically your margin of safety. Is that clear, guys? That's about this particular question. Once again, a good question. where you had marginal costing concepts involved in your service sector. So now service costing, please go and update your library of adjustments. Write down hospital costing hyphen computation of hospital costing hyphen computation of, write down hospital costing hyphen computation of contribution per patient day, computation of contribution per patient day, and break even point, computation of profit per patient day and break even point. Right, guys? So that's about this particular sector. The other sectors are pretty much straightforward. In terms of complications, these three are the major sectors where you can actually face a problem. Right, guys? Fine. So that's about this particular chapter.